And we're back. Wednesday morning. Holy smokes, it's only Wednesday.
Yeah.
What's going on, Paul?
Not much, man. Not much. Enjoying the summer. A little rainy this morning. Had to walk up some stairs to get to the office today.
Yeah, it was, I was running late. I ordered an Uber to the Starbucks, which I don't want to make a habit of because it's like a pretty costly morning.
Oh, yeah.
And then, walk like 2 coffees for you and me.
Mm-hmm.
We're here together.
Yeah.
Balancing act trying to get through because the door is locked this early in the morning.
Mm-hmm.
And so I balance the one coffee on the other, and it's only a matter of time before, like, I've done this now like maybe 40, 50 times over the course of the last like year or so. Got girlfriend I live with now, friends here at work, finally after 10 years, having 2 coffees at a time and then having to open a door, I balance the one on the other. And it literally is like, I wonder what the error term is on this, because at some point these coffees are going down.
Yeah.
And they haven't yet. And there's no way that I'm that good. So I don't know if it's 1 in 50 or 1 in 100, but I'm due. Didn't happen. And then like I get to the little corridor thing where we flash our card and then it tells you what elevator to get into. And I'm like, all right, awesome, I made it. No elevator shows up. And then, they're like, oh yeah, the elevators are broken. We're going to have to get you a pass to get up to the stairs. That takes like 5 minutes. I'm just sitting here holding these coffees. Multiple people that we work with kind of like come in. Beth comes in and she's just like, oh, Frank's like being like I'm like not talking because I'm like in my head, I'm just like, I just need to get these coffees upstairs. They're so hot and I'm going to drop them. And then we have to walk up the 6 flights of stairs and I'm in a long sleeve shirt. I'm like sweating. Pretty rough way to start the day, but it's only up from here, man.
That's a good way to think about it. I mean, the white shirt, maybe when you get coffees, might not be the
trust
best
me,
move.
Thankfully, Starbucks technology, what they have done has made it pretty hard for the coffee to drip out of the top. The top is like some kind of newfangled plastic-like technology that really gets on top of that cup. And then they have the stopper in there. But I'm wearing a white shirt and white shoes. Yeah. And I'm just like, if this thing goes down, the whole thing's over with. Yeah. Like, I'm just going to go home.
Yeah, we're
But like, 2, if these things, like if I squeeze too hard and they start to drip all over me, like it's going to, like, I'm going to have to change. Like, it's not going to be good. But we made it. Mm-hmm. It's Wednesday. That is definitely the most stressful thing that has happened maybe in America this whole week. Is Frank trying to get into the office. It's definitely not the war going on. We resolved it. We didn't resolve it. A couple of head fakes throughout the last 48 hours. But Paul, looking very much like the Middle East, Israel, Iran, U.S. volatility has subsided, at least for now.
At least for now. I mean, I would always say there's a potential that could kind of reignite. You always kind of have to play these things by ear. I was talking with a couple of friends kind of over the weekend, like, what do you think's going to happen next? And I was like, I have no idea.
No clue.
I'm going to keep paying attention to it, especially with moving markets. I mean, the oil open shocked me.
It's shocking. It's crazy. I'll say that, like, Saturday night into Sunday I've been likening it to like early like right before the pandemic. I had like concert tickets for some concert, and the dude was playing 2 nights in Chicago. I had tickets for the second night. He played the first night, and the second night got canceled. And I was like, oh man, like, okay, like I guess I'm not going to this concert. And then like it was whatever day that was, like March 15th or 16th, whatever it was. And it's like, oh, like I have no clue what's going to happen next. Yep. Like, am I supposed to go to the office next? And that Saturday into Sunday was a little bit like that of like, oh man, like we just, I mean, I'm not like a military expert, but like we just attacked Iran. They're threatening. I have no clue what's going to happen next. Obviously, everything has, the market being the first place that'll kind of tell you how much fear and risk is out there. Since then has pretty much subsided pretty consistently, aside from like one head fake. I think it was on like Monday afternoon. That was like, oh, actually, Iran has more nuclear weapons, and they're threatening with those. Whatever that news story that was that came out Monday late afternoon, big swing, and then since then it's been pretty consistent in the opposite direction. But it is interesting, Paul. We're going to dive into some crude oil correlations in a second. But these markets in high volatility times, Tasty Trade has proved this so many times throughout the years. When vol goes up, and it goes up in a way like it is now, people might be saying, what vol is Frank talking about? Is he talking about equities? Is he talking about crude oil? Vol and everything is up the last couple of weeks, heightened with this geopolitical risk. When that vol goes up, the correlations between a lot of these markets go to 1. And not always positive, but like the relationships get very binary in a way. And you could see that with crude oil being kind of a negative correlation to equities and crypto and more risk on markets, and the US dollar also being a little bit of a negative correlation to those risk on markets. And yeah, it was interesting. Sunday night and into Monday morning, you saw pretty much the high prints for those fear markets, VIX, crude, US dollar, in this particular case. It's not always that way, but in this particular case. And yeah, I think crude's high print, same as last week. So I don't know if we go 3 in a row here, this weekend is the same as the last 2 weekends. We'll see. But the last 2 weeks, it's been high print in crude on Sunday night, and then a pretty precipitous fall throughout the week. But this has been a crude oil crash. I mean, there are people around the office joking that it's going back to negative at this rate, because we've gone from, I mean, where'd they open it at, like 75 bid? And they were looking like they were going to hit 60 yesterday. Yeah. Like, it was crazy.
Yeah. Yeah. I mean, we were talking about potential limit downs on Monday, as like we were at kind of a stone's throw away from it, but we didn't get there. But yeah, the dollar market was interesting because on Monday, really Sunday night, you had really the dollar strength, but also the Swiss franc yen strength as kind of a corollary market where you saw basically euro dollar down, cable down, and then you saw dollar yen, dollar Swiss about flat, which tells you that basically there's kind of strengths on both sides of that of those markets. But yeah, that's kind of where we were. I mean, that's where you get in a true kind of risk off mode, where you have that dollar strength and also yen and Swiss strength.
Yeah, I was gonna try to draw. Maybe we should start drawing stuff on this show. This right here is that Sunday night area where you have the immediate. This is the first 30 minutes of Sunday night where you have that knee jerk dollar higher, VIX higher, crude oil higher. Like I say, those kind of, in this particular instance, flight to quality, risk off, whatever you want to call it. It doesn't really matter. Those moving higher. And then, like you say, there was some dollar give back that I wouldn't say was necessarily correlated with like risk coming off the table immediately. To your point, there was some dollar give back in here and that dollar Swissy market, because yen and Swiss franc are kind of risk, like they're risk off markets in their own right. And so there was some battling back and forth there. But yeah, what was interesting is you saw the dollar strength build throughout the rest of Monday going into the first U.S. session. This is the U.S. Open right here. And maybe should I just grab my thing and bring it over here? This is the U.S. Open on Monday now. And obviously you have a much higher U.S. dollar at that point. Crude and some of these risk off markets are starting to come off at this point already. Like I say, last 2 Sundays in a row, if you want to take a look at it, go look in your platform, that the high print for crude the last 2 weeks is right on that Sunday open. And then they pretty much annihilate it from there. And the annihilation this week has been wild in that market. But then you started to see a pretty high correlation between, okay, crude is getting whacked, VIX is getting whacked, US dollar is getting whacked. And then throughout yesterday, Paul, it was a dollar bloodbath. And now I can get rid of this guy. Do I just delete it? Look at how easy this platform is. It was a bloodbath throughout yesterday, up until yesterday around 10 or 11 in the afternoon. a little bit of a dollar bounce, but really closing this dollar market on its lows, whether you're looking at dollar yen here, or you're looking at this euro dollar market back, not just a 115, Paul, 116. We'll do you one better. And here around the U.S. Open, looking like they wanted to get up to 117 yesterday. But a lot of interesting dynamics now going into the mid part of this week, and some interesting stuff that we still have to unravel. I mean, Fed Chair Powell spoke yesterday. We saw some decent volatility around that. Speaking again today, obviously Trump, and the geopolitical risk on the table can go in any direction, completely unknown there. But interesting to see that throughout all of this, you have here in the all FX pairs, you can see a lot of unches across the board, but this yen is getting killed. It is it's one of those things, Paul, that this week you've had multiple stories that are pro US dollar and anti US dollar, just in terms of price action.
Yep.
And no matter which way you swing it, the yen is getting killed, not necessarily just against US dollar. You might say, oh, well, it got back under 145. I mean, here with this euro yen, we're back close to the highs. We're within 100 points of 170.
Can you back out on this chart on euro yen? How high did we get on this one? This is the one I can never remember. Okay, so
this is the highs for the last year, pretty much. And yeah, last summer they got up to 175, but we're pretty much there with this euro yen market.
Yeah, I mean, the yen continues. When it gets weaker, obviously they're not. Seems like they're not going to be raising rates like they said they were earlier in the year. They obviously have some more risks out there now. They have a kind of geopolitical risk as far as energy. Japan imports lots of oil, so that's where you kind of get that. And then the euro's kind of continuously sneaky stronger all year, obviously with some dollar weakness and also some dollar losing favor as a risk-off market. That's kind of been a dynamic. I've heard some stats out there, and I won't be able to quote them, but people are most short the dollar they've ever been. It's it's almost became a crowded trade, and smarter people will talk to you about what that means, but
could unravel quickly, could have a lot of volatility to it. Yeah. But yeah, it seems like people are loading up long euro and sterling and loading out of their long dollar, which has been obviously a strong trade for the last couple of years. But yeah, this is just kind of crazy to me. Pretty much any way you swing it, the yen seems to be weakening against a lot of these major pairs. And yeah, obviously the historical extreme here with euro yen may be a little bit more interesting for those people who like extremes going with the trend. Obviously breaking through 170 would be interesting. You can see last time they did that, it was just like a straight march. You got like one or two down days in a stretch of like a month here where they just marched right up to 175 and then killed it. So these are really interesting markets with this cross. And thankfully, this is one of those crosses that is decently non-dollar crosses, that is decently liquid. I mean, it's the euro and the yen, two of the biggest currency markets in the world. And so something definitely to keep an eye on if you like those extremes. But man, if you like day trading and just back and forth volatility, the dollar yen this last week, I mean, this isn't the last week. This is the last 2.5 days of action here. And it looks like the most aggressive all trails map that you could look at. This is like, climbing freaking, I don't know, Colorado, Wyoming, Montana type mountains here, man. This is crazy.
Yeah. I mean, we're about 350 points in 3 days is kind of the ground we've traveled. All to say that we're back at about the 145 level again, and we're just kind of...
They love it.
Yeah.
They love 145.
Yeah.
But yeah, interesting to see here this morning, yen getting weaker, even though there's, like I say, no real sustained action anywhere. The only other thing worth mentioning is the dollar Swiss franc market got killed yesterday. I don't know if anybody noticed this, but we got right back down to what are in here. Let me scroll in. This is, did we break 80 cents? We did not, and we still have not.
Yeah.
But we got down to the lowest prices that's the lowest prints that we've seen in the data set I'm showing you right now, which is the last few months. But keep that in mind, because 80 cents and change, as I scroll out and show you more data, we aren't going to get any lower prints than that, my friends, going back to 10 years ago.
Swiss franc crisis, yeah.
Swiss franc crisis.
It's when they depegged from the euro right there.
There's a name for it,
Yeah.
and we're down to those prices.
Yes.
Pretty crazy. Obviously can keep going, but again, if you like extremes, it's an interesting one. Also keep in mind, it's Paul's favorite day, the T+2 Wednesday roll, and so you're getting some heavy rolls here. If you're on the short side of dollar, you're paying a good amount to take that through, what is it, 4 p.m. Central?
Yes.
5 p.m. Eastern. If you're long dollar, the indicative values right now showing that you would get, this is crazy. The euro dollar 3-day roll is up to 2 points.
Yeah. Yeah.
That's pretty wild. We probably haven't seen that in years.
It got up pretty high during the 2022 when the Fed was kind of ahead of everybody else. It was pretty.
There was maybe like a month or two.
Yeah, it was pretty aggressive there. Yeah, there was a month or two. That kind of summer of 22 was interesting for the swaps.
Well, hell yeah. The swaps are interesting. The price extremes are pretty crazy when you're looking at that dollar Swiss franc and that euro yen. And like I alluded to earlier, we've got Powell set to speak this morning. We don't even have to wait till the afternoon. It's in 2 hours, my friends. They'll be asking him, I think they ask him questions.
Yeah. They asked him about supply and demand yesterday. It was funny. It was a funny clip I watched.
Did he talk about, like, what is the economics thing, like butter and guns or whatever? Like, did he draw that graph?
I would hope he didn't have to do that, but yes.
You never know.
Guns, yes.
All right, let's try to get into some slides for just a second. Our good friends Glenn and Twitter Mike talked about some of this stuff yesterday, but I figured, why not let some of the old heads go through this stuff? That's you and me now, by the way.
I'm old now?
Relatively.
Yes, yeah.
We are.
Yeah.
Interesting study from our FX researchers looking at currency correlations to crude oil in different vol environments. We're going to start doing more and more of this stuff, Paul, because the people want it. They want the studies. They want the math.
Give them what they want.
They don't want opinions and biases from us.
Okay.
But just looking at this, given the fact that crude oil is trading in weekly $10 plus ranges at this point,
yeah,
why not take a look at when crude is volatile, like it has been? What do the typical correlations to currencies look like? We'll look at it in all environments, those correlations. We'll look at it in heightened volatility environments, and we'll look at it in low volatility environments. And if you want more details, this is the study. Glenn analyzed USO, the crude oil ETF, which you might say, well, that's not the real crude oil. But when we're analyzing stuff like volatility and correlations, it literally, the math shows a very small error term for like if you were going to use the futures or the spot market. Like USO is very liquid. It moves in the same direction as the crude oil futures or spot market. A lot of the time, there can be wonky stuff, like when crude traded negative, crazy stuff. We're not there yet. I think the research will be fine here. Looking at the last few years and the 6 popular USD pairs, combining some of those major currencies. And let's just look at it. Who cares about this stuff? Let's look at the actual numbers. Starting with all vol environments, that top row there, Paul, you're seeing a couple of things. One, crude and US dollar don't play nice, negative correlations. But are you surprised by how weak the correlations are, or which ones are showing the strongest correlations? What pops out to you?
Yeah. I mean, so you expect CAD to have the strongest correlation, dollar CAD to have the strongest negative correlation. It is weaker than I thought. I think it's weaker than it has been historically. And I bet you if we look back at this, 3 or 4 years ago, it might be a different story as far as that goes. There's obviously with these correlations, there's other things going on in these markets that cause the correlations to not work perfectly. But yeah, that's the kind of interesting one. I was surprised Oz USD has a positive correlation with crude. But it's a commodity currency, so it's got some relative kind of correlation.
One of those like
there.
knock-on effects maybe of like, how like in the NASDAQ there's like a couple different sectors of stocks, and you might like pick two of them out and be like, well, like why does this AI stock have anything to do with like this financial stock? And it's like, well, they tend to move in the same direction, and if the NASDAQ is moving up or down, those two are probably going to have a high positive correlation. Same here, where it's like Aussie maybe has little to nothing to do with crude, but since it's correlated to CAD and CAD's correlated to crude, it gets like dragged along. But yeah, it's that one is pretty solidly correlated to crude. It's not like dollar CAD is showing like a 0.5 or 0.6 correlation, and Aussie is showing 0.2 or 0.3. There, it's pretty neck and neck. So those two providing the best correlation. Obviously, again, U.S. dollar, crude oil, historically negative correlation. And so if you're trading Aussie USD as a crude proxy, long crude would be long Aussie USD, short crude would be short Aussie USD. On the USD CAD front, long crude would be short USD CAD. Again, the short USD being the long crude proxy and vice versa. Now, when we look at high vol environments, what I was alluding to earlier of, when vol increases, correlations pretty much across the board, across asset classes, go to 1. They don't all go to positive 1, but they just get stronger historically. And you see that here, Paul.
Yeah, absolutely. I mean, you saw that. I mean, your dollar CAD gets way more pronounced now, right? Even like the yen and Swiss, I think it's a little interesting that they have that negative correlation. Obviously,
going from essentially unch to like a little bit of a correlation there.
And it does make sense because when you think about crude oil being priced in dollars, that's how I like to think about it. I talked to Glenn on the way out yesterday, and I want him to do some more of our cross pairs, take out the dollar effect and see what the correlation. So that's coming. Hopefully the oil volatility keeps up so we can keep talking about these correlations. The one that I really am interested is CAD yen or CAD Swiss franc would be a very. You take basically the uncorrelated with the correlated. Obviously, there's some covariance. You guys are better at math than me on that piece, but that's kind of where we're headed. But it's interesting to see how strong some of these correlations get as soon as you add in the high vol.
And last piece here, in low vol, you might have seen this coming, but these correlations do drop off pretty significantly. Just get closer to unchanged. When crude isn't moving around very much, there's not really a rhyme or reason to the relationships between different currencies and crude oil, so your pairs trading and everything might get less interesting. Here are some takeaways for you. In the long run, individual U.S. dollar pairs are fairly uncorrelated. A lot of unchanged you saw there with your yen and Swiss franc versus dollar versus crude oil. In high volatility, U.S. dollar correlation to crude oil is slightly elevated, especially that dollar CAD as a good proxy. High vol environments, the correlation among U.S. dollar pairs also increases. So that's an interesting side piece, I guess. Going back to this chart, you can see the greens and reds between the different pairs get more pronounced in high vol. And we're just looking at high crude vol. So again, vol gets heightened. Those correlations pretty much across asset classes tend to get more pronounced no matter what you're looking at. Low volatility environments allow other currencies to move more independently, less correlations. The last thing here, though, if you're saying, well, that's good numbers, Paul and Frank, what the hell am I supposed to do with it? For an environment like right now, let's say crude is getting smashed, U.S. dollar CAD is actually not moving that much. You're not seeing a huge rip in U.S. dollar CAD. Well, it sets up potential pairs trades if you wanted to, let's say, buy that crude oil and you wanted to hedge against it with a dollar CAD trade. You could look at long crude, long US dollar CAD as a potential hedge, given that inverse correlation there. That's just a little bit get the gears turning. And same with, you could think of it in Canada as well, right? Like crude oil is getting hit. Canadian dollar is not getting hit that much. So I could buy the underperformer and sell the Canadian dollar vis-a-vis long US dollar CAD. Pairs trading tends to be the thing with correlation. Or you're just looking at your currencies here and you're saying, oh man, I think crude oil could continue to go. US dollar CAD actually hasn't rallied that much. Maybe there's a value long in that US dollar CAD, or vice versa. Crude oil is going to bounce. I'm going to short dollar CAD. Just a couple of ways to think about what you use these correlations for.
Yeah, no, I mean, that'll be interesting to see how that plays out, where oil goes, where CAD goes. It's
wild market.
Yeah, wild market, and there's a number of other factors than just kind of oil going on. So
awesome, man. Well, that'll do it for today's episode. You've got, I don't know if it's Liz and Jenny or Tom. It's a surprise coming up next. Stay tuned. Peace.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Woo! Get tasty, free market. Come on, you know it, can you feel it? We got some things to talk about. Free market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Hello, everybody, and welcome to my favorite day of the week. I've got two gorgeous brunettes. Fools to the left of me, fools to the right. Welcome, ladies.
Good morning, everyone.
Good morning. Good morning, Liz. Good morning, Vanetta. Thanks for joining us again on a Wednesday morning.
I saw you guys. How was doing the opening bell from the floor of the SIBO yesterday?
It was a lot of fun. It was a lot of fun. Wasn't it, Jenny?
You know what? I loved it. And what another thing we loved besides being there for the opening bell, and there was a group ringing the bell, which was so much fun. We were in a different spot in the pit. So we actually made some new friends because the guys in the pit usually don't talk to us. So we were in a different section. We made some new friends. We might have some new people to come on
Who
here.
wouldn't want to talk to you lovely ladies? But it was actually cool because there was a company there, or a group of people to physically ring the bell. I didn't know that was going to happen.
Yeah, and they when we were doing it, the production crew said it's not as exciting. And Jenny and I were trying to talk about that. In the beginning, there used to be opening rotations when we were there a long time ago. And now it's a little bit more of a subdued opening unless you got a bell ringer. We wanted an aggressive bell ringer and we got one.
We were worried they would just barely ding it, but they really rang that bell.
Yeah, they did.
It was fun.
It was so funny.
Dude, that's cool. That's cool. And you guys are back today or tomorrow?
No, because we're here.
Oh,
We're
that's
doing a
right. That
morning
makes
show,
sense.
so-
I don't know what the schedule is.
No, it does get confusing. And we are here today, and then I'm leaving immediately following this. And then Jenny's got, who do you have tomorrow? Glenn. So you're in the studio tomorrow with Glenn for the FX show, and then you've got TP on Friday.
Yes, Glenn tomorrow, TP Friday. And I'm excited to have Glenn again and to go over FX because, Vanetta, did you start at all? Did you start looking at FX?
I have not started looking at FX yet, but I hear good things about it from Tom, and I talked to Nikki Bat and Mike Butler about it, and they say it's really easy. It's very intuitive. It's just so funny because Glenn, who works here, he has the babiest of baby faces.
Oh, he's the cutest.
But he knows his shit. He knows his shit for FX, but he has such a baby face.
Well, that's what I said. I was like, did you grow up wanting to be in FX? And he's like, no.
It's so funny, Vanetta, because he's not much older than my son, and I'm working with my son on practicing for interviews, trying to eliminate filler words, and I keep using Glenn as our example. I'm like, there's this kid Glenn, and he doesn't use any filler words. He's so professional. I love that. I love Glenn. He's great. He's so impressive.
So funny.
That's
so
funny.
impressive. So impressive.
But it's great to have
so maybe
experts on to help everybody, get up to speed with the new features and everything like that.
And it is easy, like one click to close. That was the easiest thing to close. One click, you're closed.
Okay, the chat is asking, and I want to put this to bed. How old is Glenn?
I'm gonna guess 15. No, I'm just kidding.
Okay, so he went to Northwestern. And he started with Tasty FX as an intern. So he just finished college, started as an intern, and now he's full time. So he hasn't been out of school long.
Okay.
Yeah, he hasn't been out of school long. Oh, Vanetta, we have a question for you. This is a very serious question because Johnny and I's memory, we're old. Keep in mind, Johnny and I old. Okay, but we have a vague recollection of you ringing and opening bell. Can you confirm or deny?
Yes, because we were the Chicago Innovation Award winner in maybe 2012, 2013, I don't know, 14. I was a while ago, over 10 years ago. And as the Chicago Innovation winner, we were allowed to ring the bell at the NASDAQ. And at the time I was doing the Tasty to Go series. And so they let me go and film it. And so we had a film. I had a camera guy in New York, and I got to ring the bell at the NASDAQ. And I was actually using that photo. I was using that photo on Tinder for a while. Because I looked hella cute. I had a pink blazer on, like a Elle Woods Legally Blonde moment.
You always look hella cute, but I thought it was NYSE. I knew it was in New York. I didn't think it was the SIBO, but yeah.
Yeah, it was in New York at the NASDAQ. Yeah.
Very cool.
That's awesome. And I do remember the Innovation Awards. For some reason, we had pictures together with C3PO or R2D2. Do you remember that, Liz?
Oh, that I don't remember.
Yes.
I think we went to the Innovation Awards or went to something, and all I remember is getting my picture with one of the Star Wars characters.
It was R2. It was R2D2 because C3PO is the tall one.
Okay. He's the tall British guy.
Yes. So that is pretty funny. I don't know if that was the Innovation Awards, but that was in Chicago. We did not get. They wouldn't let us. Vanetta, you could travel back then. They kept us reined in.
To be fair, I had to fly Spirit Airlines most of the time.
No, did you really?
You've met Tom. Come on.
Yeah, I only flew Spirit once.
We've done our fair share of backseat middle on the hump flights too. There was one flight where we were all the way in the back and Jenny's seat didn't recline. That didn't end well.
No, well, once he sent me to Vegas just for the day because we were sponsoring the signage at McCarran Airport. And so they sent us out to film it. and it was also in like the taxi line. It was cool, but I was like, yeah, I get to go to Vegas. They're like, no, you're coming back the same day. And I did fly Spirit Airlines.
And you went there and back in one day.
Mm-hmm.
Did I ever tell you the story? One time I was in Vegas, standing under that sign waiting for a taxi, and the worker there looked at the sign, looked at me, looked at the sign, looked at me, and he said, he's like, I have nightmares with this, like, because he hears it all day, every day.
Yeah. He doesn't get a break from that. That's funny. Well, what were you guys up to last night? What kind of shenanigans do suburban moms get into?
Shenanigans. I don't know if you know this about my house, but I have 50 kids in there at all times between 3 o'clock and 6 o'clock because my daughter is hosting her own production this year, and so they rehearse at my house. So it's
wait, is this for a chorus line?
No, a chorus line is going to be in, that's through another company, and that's a little bit later, but she is going to be in a chorus line too. But yes, this is Grease.
Oh, Grease. Oh, I love Grease. Those
I
summer nights.
Nailed it, Vanetta.
I cannot sing. I know this about myself, but I love musical theater.
Nailed it. That's awesome.
Yeah, that was great. We needed you yesterday. I was trying to sing September yesterday, and it didn't get very far. We didn't get very far. I had my son home from college, so every night he wants to watch a movie. I'll take any recommendations. Last night we watched Mickey 17.
You watched what?
What?
Mickey 17.
I don't know what that is.
I've never heard of it.
With Robert Pattinson, and they're like trying, it's kind of like, and Vanetta and I was talking about you because it's where they're trying to colonize, like, and it's not Mars because they call it something else, but they're getting people to sign up to go colonize another planet. And don't you remember when all this was going on, I remember you talking about this on air, like who would sign up to actually go colonize Mars?
Oh, sure, I would. There's nothing left for me on this planet. I've exhausted all of my resources here on Earth. I mean, my parents would be deeply sad because I am their only child. But I mean, after they, pass on or whatever, like, what am I going to do? I'll go to Mars.
And I was trying to tell him that didn't this actually happen? Didn't they put something out and ask for people to sign up, or you could join a waiting list?
I think maybe, and they do like tests in like biodomes or biospheres in like a desert somewhere. But yeah, I mean, eventually we will need people to sign up because it is a one-way trip.
Yeah, right, exactly. So that's kind of what Mickey 17 is about, and it has Robert Pattinson. But he wasn't that cute in the movie. He used to be cute in Twilight.
I've never heard of this movie.
It's on. You can stream it now. I can't remember which streaming service, but you can stream it now, Liz.
I know things get weird because like things don't have like traditional like movie theater releases. You're right, Liz. Like you're like, how have I never heard of this movie? But okay.
Listen. I owned video stores in the 80s. So any 80s movie I'm up on. I stopped watching movies legitimately when I went to college in like 1994. So if it's not before 1994, I don't know it. True story.
That's funny. But
then I'm leaving this weekend for Carmel. Now I'm pronouncing it correctly, Carmel, Illinois, which I hear I've never been there, but
Indiana.
Oh yeah, Carmel, Indiana, which I hear is like the Hinsdale of Illinois. Is that correct?
It's very nice. It's consistently ranked as one of the best places to live in the country. It's a suburb, I guess, of Indianapolis, I guess you would call it, but it's really nice. My high school would compete against Carmel High School for all of the things, and so we'd go to Carmel High School for like track or band or debate or whatever that I was involved in. And
did you kick their butt in debate? Did you kick their butt in debate? You did, didn't you?
I kicked everyone's butt in debate.
Nice. So I made my reservation for the cake bake shop, and I'll take any other recommendations.
There is. Yeah, I don't know if I have any good caramel recommend. I haven't been in a while, but there's like a cute like neighborhood that's like north of Indianapolis called Broad Ripple that is super cute. And there's a pizza place there. I can't remember the name, but it's like my favorite pizza place, and like tons of cute little shops. And
okay, well, I'm actually looking forward to it. I hear it's wonderful there. And the cake bake shop that became famous. I think Oprah made that famous.
Maybe. Good.
I think
She used to have a farmhouse in Indiana.
Oh, and so she would talk about it on her show.
Yeah.
Or yeah. Okay. Got it. Got it. Ready for the cake bake shop.
It is riveting content there. Do you guys do any interesting trading overnight? Do you guys trade overnight at all, or you just look at your screens, or do you guys just power down?
No, I do. I trade. I look at the SPOOs overnight, and sometimes I will be trading those. I like trading the SPOO options early in the morning.
Okay.
That's my go-to move. But I mean, other than that, I mean, I don't do much scalping at night. Do you, Jenny?
Oh no, I look before I go to bed. First thing I look at as I'm going to bed is where are the SPOOs, and when I wake up, same thing. They weren't doing too much. Right now, SPOOs are up 9. When I went to bed, maybe they were up 6. There's not I didn't see too much going on. If wild action happened while I was asleep, I have no idea.
I know. I was just curious because no one right now on air has a prostate. And that's what gets Tom up in the morning. So I was just curious because when he gets up to pee, he trades, because like Bat can see his trades and everything that goes out. And so we like to tease him because he's just trading at very odd hours of the night. And I was wondering if it was the same for you guys.
No, it is not. It is not the same. We do not have. I am an addict. But I'm an addict during the day. It's not typically at night. I can sleep through the night.
I think those FX now and correct me if I'm wrong. Is FX all the time? Is it like 24/5, 24/7?
Yes.
So that is something I almost want to have. I almost want to have. Be able to like open up my phone and just see my FX positions because they could move quickly and then an hour later they've moved. It's not a winner anymore, and we've seen that with our FX positions.
Sure.
So I wouldn't mind having that on just in case. It's so easy with the one-click close. You see one of your FX positions going your way, hit it in the middle of the night, you're out of it. In the morning, it might not be in this winner like it was at night.
Put this on the list. Ask Glenn how to put an order to take profits.
Oh, you can do that. You can do that.
Yeah,
you can do that. So with Glenn tomorrow, I'll work on it, and I'll talk to him about because that's what I don't know. That's what I haven't figured out, how to take a look at my FX from my phone.
Yeah, that would be good. That would be good to figure out.
Yeah, right. Like other than physically going on my computer and clicking the FX tab, I haven't figured out how to do it on my phone. So we'll talk about that tomorrow. And maybe it's coming. I know everything with our FX is we've got a lot of things coming.
Yeah, like we wanted to roll it out to as many people as possible, but they're continuously making updates to the platform. So
I would just like to state for the record that we are fully in support of America right now with our red, white, and blue attire.
I was like, we look like the French flag.
I know.
I was like, Vive la France.
So I cannot stop buying this color. I have an entire wardrobe in it because it's Kentucky blue because my son's going to college in a couple weeks. So I keep buying it. I'm glad it's a color I like and it's not,
Yeah, are you gonna be just like head to toe with like the UK crystal hat and like the UK like Lululemon like yoga jacket and
already got it. I'm already leaning in.
And I hear, and I know you were there once or twice, but I was just talking to a mom whose daughter goes to Kentucky, and she loves Lexington, loves it.
Oh, Lexington's awesome. It's fun.
Oh my God, you got to do the Bourbon Trail.
That's what everybody says. I think Liz on Bourbon might be mean, is what I'm thinking.
Yeah. Yeah. No, I think, but Buffalo Trace flooded like a little while back. It was really sad. Hopefully they are in the recovery process. But if you ever can get to Kentucky, it's just beautiful rolling hills, lots of horse farms. It's so pretty.
That's what I like is when you fly in, it's 10 minutes to the college and you're just going by horse farm after horse farm, which is beautiful.
Yeah.
That made me happy.
And my favorite thing, there's bourbon.
I know you love bourbon. I'll bring you some
bourbon drinker? Are you a bourbon drinker, Vanessa?
I am a bourbon drinker. I am. I love Kentucky straight bourbon. There is nothing better. Something about the water in Kentucky and the limestone and the way they're able to just make it, and it's so good. But they give all the tours are free. I think you can schedule them. Obviously, have a designated driver. But there's lots to do, and it's a fun part of America, I guess.
I will bring you some bourbon.
Yeah, I want 4 roses.
You done.
All right, what's going on? What's going on with the news today, Vanetta? I know yesterday we had a couple earnings. Carnival was up big on earnings. I don't know.
FedEx had earnings last night. And
I have that for news, but I guess, did you hear? I think Carnival changed some of the parameters of their loyalty program. You guys are the 2 biggest cruisers that I know. What is your favorite cruise line?
Disney. Disney's my favorite, but I am loyal to Royal as well.
Oh, you're an RCL girly.
I'm an RCL girly.
She's an RCL girly. Disney has been, our favorite with the kids, but we're going to try to transition to celebrity. That's our plan, transition to celebrity. My husband's friends have been going on celebrity and they're just raving about celebrity.
Celebrity is Royal Caribbean. They're under the same blanket.
Oh.
Right. So it's like, Royal Caribbean, celebrities like their, higher end cruises, just like Carnival has Holland America, and I think they have another Costa. I think there's like a few different cruise lines within the company.
Okay.
And my parents only cruise Holland America, and I believe that's under the Carnival bucket.
I've never been on a cruise, and because there's just things about my introverted personality that I think I would struggle on without a way to fully remove myself from I like to be on my own schedule to do things or whatever. But in January of 2026, there is a true crime cruise with the host of all of my favorite murder podcasts. And I am so tempted because, of course, someone has to get murdered on the true crime cruise.
You got to go.
And then we have to solve the murder. No, I don't know. But
you should go. You should go.
You would like it.
I'm not a cruise person, but
well, but if you love true crime and it's a true crime cruise, you should go.
I know.
Now, Vanetta, I will tell you, I was very much in the camp of Tom. I was like, I'm never getting on a cruise. This is the dumbest thing I've ever done. I'm not going to get on a cruise where it's just buffet food. I loved it. I got on one Disney cruise and never looked back.
Wow. All right. Well, yeah. Hopefully that's not contagious. Hey, we got a great show for you today. A lot of really good content. And join us on our socials. We are testing some stuff out. So we are streaming live on our social platforms. So make sure you're following Tasty Live on your social platforms. But at the top of the 8 o'clock hour today, we have an options jive, forming a directional bias. Key consideration for trade entry. We're going to break down just what you need to look for when you are entering trades and what's the basis of if you have a directional bias and how that breaks down when you're trying to structure a trade. And because it is Wednesday, we have What's Your Assumption? So Liz and Jenny are going to do viewer submitted trades that have a directional bias. Speaking of directional bias, and the lovely ladies are going to try to do as many viewer submitted trades as possible. That's at 8:40. 9 o'clock, we have the Skinny on Options math. Jacob in the house, the square root time magnifying glass of 0 DTEs. What in the Lewis Carroll? What?
Can you repeat that? Can you say that sentence one more time?
The square root time magnifying glass of 0 DTEs. I don't know what I just read.
I just can't wait to see Jacob. We do a study from Jacob every Wednesday from the SPX pit, and we've been doing it for a year. So for a year, we've been doing Jacob studies, and we've only communicated via chat. So to see him in person after a year of doing his studies, I can't wait.
I don't think we're going to talk much about this market measures. This is going to be a directive where we're going to ask for what we want to in additional market measures.
I'm going to give Jacob a big air hug.
Oh, that's funny. And live from the trade desk, we got big boy Scott Sheridan back in the house. He's going to be counting down the top trending tickers over at Tasty Trade. And Nikki Bat is here with his Johnny trade. So if anyone has a smaller account, we've got trades structured for you. Nick Batista will be in breaking those down. But hey, in the meantime, in between time, you guys want your daily dose?
Sure.
Yeah. All right. Hit me with my theme music. Let's go.
Our leading story. Breaking news.
Coming
across the wire. Leading story. Top stories. Jump in.
In today's headlines. This just in.
Breaking news.
All right, everybody. Today is a wonderful Wednesday. It's June the 25th. It's a part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
I think Micron is the only thing that really has earnings after the bell today. Maybe MU.
Yeah, I think it's the only thing I saw on the list. And it's tough. I don't know what we're going to do in Micron. Micron's had a big rally over the last month or so.
It has. It really has. Yeah, I mean, earnings are kind of coming to an end, right? So it's just Micron. The list is it's a sad list.
Yeah,
now.
and then I think Nike tomorrow, and then that Nike normally rounds out the earnings. So.
Yeah.
But what do you think of Nike? Because Nike stock has really been beaten down. Do you still see, I mean, you're on the cutting edge of fashion. Do you still see lots of people wearing Nike? Do you still think is relevant?
Yeah, I mean, I think that they are trying to retool their business. They pulled a lot of their stuff from like third-party online sites like Amazon, which was like, okay, why are you making your stuff harder to get? But then they walked that back. They brought in a new CEO, just trying to innovate and turn things around. So hopefully they are on the right path. But of course, they have a lot of tariff exposure. But I don't know anything. No one knows anything. So.
Well, I do know when I go to the outlet mall, the Nike store has the biggest line.
Oh, interesting. Okay. Right from Michigan City, live from Jenny right there. Hey, getting to the first headline of the day, because otherwise I will go over. Jerome Powell on Tuesday said he expects policymakers to stay on hold until they have a better handle on the impact tariffs will have on prices. The Fed chair just went over that he wants to see the effects of inflation and tariffs. And he's like, look, it's going to take a couple of months to figure out how this is affecting. He's like, we're not going to move faster than we need to. The cautious tones could further antagonize President Trump, who has ramped up his long-standing criticism of Powell, calling him a numbskull. What are we doing? What are you guys doing in treasuries? Let's talk bonds. That's relevant.
We've been looking at bonds. So every time they hit the 113 handles, when Jenny and I like to dip a toe in the water, where are they at today? Bonds are
they're just trying to take a look.
114. So, they bounced up a little bit from their lows, the recent lows in the last couple of days, but.
So we're out of our longs, just kind of waiting for them to get back down a little bit. So I don't think at 114 we're going to do anything today. Just
we still have our TLT position in, so but that's we might take a look at that today.
In other news, the biggest U.S. lenders are expected to clear the Federal Reserve's annual health check, showing they have ample capital that can be used to boost dividends. The results of the central bank's so-called stress tests, which will be on Friday, will determine how much cash lenders would need to hold to withstand severe economic downturn. Sometimes these bank stocks do move on this news, but everyone's expected to pass. I just didn't know that it was coming up for this Friday. So if you have something in a JP Morgan or Goldman Sachs or Morgan Stanley or XLF, then just know that bank stress test is Friday.
And I'm glad you brought that to, because that's almost like an event risk, right? Because it could move on that news depending.
Yeah. But everything's supposed to be, it's a yearly exercise. It was introduced following the 2007-2009 financial crisis. So just something to keep an eye on.
We got it. We'll keep an eye on that.
Yeah. Hey, in other news, the current administration's rapid pullback of the U.S. Consumer Financial Protection Bureau has cost Americans $18 billion in higher fees and lost compensation. This came out from an independent analysis. basically these are things like capping late fees at like $5 or overdraft fees at like $8. These were settlements that were previously established for lenders or financial institutions that had done shady things and had been found to be negligent, and they're supposed to pay out compensation to consumers. And then the new administration was like, no, you don't have to do that. So adding all of this up to excess fees and lost compensation, Americans have lost $18 billion. And I don't understand why we're doing this.
I'm not going to lie to you. I don't know anything about this. So, but I mean, on paper, it makes sense. They should have caps and people shouldn't be paying those fees.
Right.
But I can't imagine it just turned off like that.
No, it did just turn off like that. Like Wells Fargo had some pending litigation. Bank of America had some pending litigation, and they're just like, yeah, it's fine. Don't worry about it. And
I don't, like I said, okay.
But people were adversely affected, and then it's just like, okay, LOL, never mind.
It is sad, though. It is sad because it's like the people who are stuck paying these high fees are people who can't afford to pay off their cards or can't pay it on time, and they're having these late fees. It is kind of sad. It's just like just keeps piling up. Right.
Yeah. No. Agreed.
Right. And then forces people into a worse situation.
Yeah. Agreed.
Yeah.
Hey, Bitcoin is back at good levels as it looks like the ceasefire is holding, and the U.S. Senate is unveiling a major crypto bill. The new framework introduced by the Senate Banking Committee, it would basically lead to more regulatory clarity about what is declared a security and just give, more structure to the crypto industry. Of course, everyone is embracing stable coins right now, but it would also just help organizations more freely offer Bitcoin or blockchain. And it would also allow crypto exchanges to register with the CFTC, and it would reduce the SEC's overall regulation of digital assets, and that sent Bitcoin higher. What's Bitcoin doing this morning?
Bitcoin's wrapped around 106 right now. I mean, it did get under the 100 level 2 days ago, right?
Yeah, that was over the weekend. Oh, like
yeah,
it did. It
did break under that level. So it did break under that level, but it's back. It's been within this 100 110 range for a while now.
I think Coinbase is moving around pre-market. What's that doing?
Oh, that was up. When I was looking this morning, it was up. Let's see if it's held its rally. Coin has
been on fire. So has Circle.
So has Circle. Yeah, that was going to be the next thing that I brought up. I think Circle went down yesterday, so got to buy those dips.
Coin looks like it's up about $14 pre-market.
That's a lot.
Yeah.
Yeah.
I know.
I think it's because this legislation is very favorable to.
Well, it's a $350 stock, so $15 is not that much. I mean, when you're watching, so it's up, but it's not.
But it was a $240 stock, a few weeks ago.
I know. Yeah.
And I think relative to the S&Ps, though, only being up like 9 or 10, like that does seem kind of like a lot.
Yeah.
Yeah, it's really moving. And I don't know if Circle's up today because that was actually down yesterday. You got
to buy those dips in Circle.
I think it was down almost $40.
Circle is sharply unched right now. It closed at 22.23 and it's opening at 2.23.
Okay.
The prediction market site Polymarket is close to raising $200 million in a funding round that would value the world's biggest prediction market at more than $1 billion. Founded in 2020, Polymarket has helped popularize event derivatives trading. What are your guys' thoughts on event sort of trading? And have you ever looked at any of the markets on Polymarket or like a Kalshi?
So I love it. I think it's fantastic that it's happening. Do I look at it? No. I think anytime you can get people engaged in any level of trading at any parameter, I'm all for it.
Well, we were all looking at it during the election. Like,
Sure, during the run-up. Yeah, during the run-up to...
Yeah, but it's not like on a daily basis. I'm in there being like, who won the New York election? Do you know what I mean? Like,
sure, but they did make markets for the Pope. You're right,
Yep.
for the New York City election.
The papal market, yes, that was funny.
But anyway, worth $1 billion. So good job, Polymarket, I guess.
I think this is great. I think it's a lot of people are going to use this, and it was fun. It's fun having it when there's something big going on in the world. I don't know, when is the next big thing? What's the next big thing coming to Polymarket?
But don't you
the
think it's pretty
NBA draft is tonight. I don't know if people bet.
Yeah.
I don't know.
But don't you think it's pretty efficient when you get a lot of people playing in that sandbox, for lack of a better term? Then it becomes more efficient. So even like the New York mayor thing that this Polymarket was saying that 33-year-old was going to win, and he did.
Yeah,
so,
he did.
And that came out of left field. Yeah, that came out of left field.
Yeah, it is
So it's
eerie.
pretty
It is eerie how the market knows things, you know. Like, hey, here's a blast from the past. And I'm not trying to be snarky, but I did not even know that this company was still in business. But now they're filing for IPO. Robo-advisor Wealthfront has confidentially filed for an IPO. I was just surprised by this. Are robo-advisors still a thing? Do you have friends or family that use them? And should this be a publicly traded company?
What is their ticker symbol, and can we short
It is not. It's not yet. They just filed. For IPO. So
I don't know anybody. I don't know anyone that uses a robo-advisor. Do you?
But no, because our circle is traders. So
Right,
we're like the anti-robo advisor.
yeah. But remember, we had the whole thing, brains over bots. Like, I just didn't even know that robo-advisors were still a thing. So, okay.
Apparently they are.
But eToro just went public. I don't know if you guys have traded. It's ETOR. I don't know if you trade it.
Let me take a look. ETOR. eToro.
You might have just done something.
Yeah.
I love IPO. So that's been out for a month or so?
Yeah, it hasn't been public long.
Mid-May, and now it IPO'd close to 68.70, and it's trading 63. So it's some of these IPOs, they come out and you see some crazy moves. This one has stayed in a range since it IPO'd.
Yeah. I was just curious and also Webull, I think, also public.
Oh yeah.
Hey, I love selling puts in Webull.
Oh, you do?
Oh yeah, I'm always selling puts in Webull because it's only $10. It doesn't use a lot of buying power. So I just sold some 10.5 puts yesterday in Webull.
Okay.
That was one of those, Vanetta, where it opened at 14, skyrocketed to 80, and then it's now back down to 10.
Let me take a look. Webull, how high did it get? Got
80. 70. It got to 79.56. So it IPO'd at 14. Next day it's at 79.56, and then it just came back down, and $10 around 11 seems to be its range.
Yeah, it's 11 right now.
Yeah.
Getting to the earnings play from last night, FedEx reported better than expected quarterly earnings and revenue. The company announced that they had achieved its $4 billion cost-cutting goal, and they will aim now to trim another $1 billion in their upcoming fiscal year. The company offered current quarter profit guidance that came in just slightly below what Wall Street was expecting. I think the stock is down $10, $11.
Yeah, it's 218. Market's like 218.05 at 218.65, and it closed yesterday around 229. So it's down about $11.
Did you guys trade it?
I did watch last call. We did not trade it. We did not trade it yesterday, but I did watch last call, and I will tell you that Mikey was bullish and Nikki was bearish, and so they said one of us is going to win and one of us is going to lose.
Oh
so
no!
We'll have to congratulate Nikki.
That's funny.
Yeah, they were funny yesterday.
NVIDIA CEO Jensen Huang sold 100,000 shares of the chipmaker stock on Friday and Monday, according to an SEC filing. That's worth a cool $15 million based on Tuesday's price. The sales are the first in Huang's planned adopted in March to sell as many as 6 million shares of the chip company through the end of the year. That would be worth $873 million. Be so for real.
It didn't do much to the stock. When did he do it? Yesterday?
Friday and Monday. It was 100,000 shares. So
yeah, it didn't do much to the stock.
It didn't move that much. I wonder what he's doing. What he's planning on doing.
And it was planned. Again, I guess this had been announced way back in March. So everyone knew.
I wonder if he has a new project he's going to be investing in.
I don't know, but his net worth is $126 billion, ranking him 12th on the Bloomberg Billionaire Index. Come on, Jensen, you got to get that top 10. Are you guys doing anything in NVIDIA?
We do not currently have a position in our show account in NVIDIA. Okay. I do have I sell puts in NVIDIA because, since it's a lower price product, I usually keep some type of position in there.
It's where is it now? 147.
Yeah.
And it's tough though, Vanetta. Everything has had a rally. Everything's had a run. Most products that we trade have had a rally, quite a run. And it's always easier to trade them when they're not at highs.
Right.
So we're that's kind of a struggle that all tasty traders are having now. We still have so many products at their highs again.
Yeah.
And the vol is coming so much.
And volatility sucks. Yeah. In a landmark ruling, a federal judge in San Francisco ruled that Anthropic's use of books without permission to train its AI was legal under copyright law. Siding with tech companies is a pivotal question for the AI industry. And he says, and the judge ruled that Anthropic made fair use of books that were ingested to train its Claude large language model. What are your thoughts? One, as content creators on one hand, and then maybe as users of AI on the other.
So it's kind of crazy. I didn't think books were off limits for AI. I thought all the books were on the table for AI.
That's what the AI companies say. But if you were the author who wrote that book and Anthropic is not running you a check.
But if your book is for sale, like if your book's for sale on Amazon and I can go out and buy it and read it, why can't they buy it? And
they're not buying it though, Jenny. They're not paying anything. They're just they're just scooping it up.
As a content creator, legitimately, you're not going to get anything. And Vanetta's an author. I've got your book behind me right here. your book that you wrote by AI.
Yeah.
But buying one book isn't going to get them, and then it's all of a sudden in the AI.
Right.
You know what I mean? It's not going to get them much of anything.
Right. And then also too the longer ramifications, because you can literally ask ChatGPT. You're like, hey, write me a short story, in the style of Colleen Hoover. I don't know why you'd want to do that, but like you could just say, but you can have AI mimic the style of like Hemingway. I mean, he's dead. He doesn't care. But like, it's so scary how fast it can write in an author's voice or tone or, likeness. And there's nothing authors can do.
No, that's going to be a hurdle that is above my pay grade because I understand where you're coming from the content creation side, but you also want AI to be able to grasp everything. It's
sure, right. And so if you're looking up something, you want it to have accurate, repository of information, because if you're looking something up, you want it to be based in fact. So I don't know. It's interesting, but this is like the first big legal ruling that we have on this, so we'll see where it goes. Yes.
Vanetta, can I ask you a question? When, these new kids coming out of college or going into college and trying to pick majors, in your mind, are there certain majors that kids shouldn't go into because you think it's going to be taken over by AI or just
I have no idea. I don't know. But the one thing, I guess, like the next story that is interesting is now, it's kind of like the battle of AIs. So the resume is dying. So on one hand, everyone is using AI to write their resumes right now. And every single company is using AI to read resumes. So now you just have AIs talking to AIs. But I guess it's really frustrating because thousands of applications are flooding job posts, but it's creating this hiring slop because there's no actual people involved.
Yeah.
And I don't know where we go. Again, I'm not like looking for.
That's interesting. I never would have thought about it from that perspective, but that is pretty interesting.
Yeah. Yeah, so it's like a bot versus bot standoff that's spiraling out of control, and I don't know how you break through that. Like I was talking to Casey, who works here, and she was in the break room, and she looked like she had been through war, and we're trying to hire for like a software developer, and she's like, there's over 1,000 applications, and some of those are just like bots, you know, and so she's an actual person, and so now she's on the back end, and she's having to go through everything and trying to figure out, is this a real person? How do I follow up with them? How do I call? Like, it was like a nightmare for her because the volume of applications that she gets is now like 10x of what she used to get.
And that's true for the colleges. The colleges are getting 10x the applications than they used to get because it's all online and kids are using AI to write their essays and they can't even sort through them. There's too many.
Yeah. I don't know.
I don't know what the answer is.
Amazon is going to spend over $4 billion to expand Prime delivery to rural communities in the U.S. Amazon wants to expand same-day and next-day delivery services to 4,000 small cities and towns. What are your thoughts?
I can't imagine not having Amazon Prime. There are so many packages delivered to my house on a daily basis, and it has become so easy to order things.
I love it. I love when I can get it in a day, same day, next day, and I couldn't imagine not having that now. So I'm happy for the people in rural towns.
Yeah, good job, everybody.
And sometimes I can order on Amazon and it's here in like 2 hours. You're like, I just ordered this.
And sometimes it's like a totally obscure item where you're like, why do they have this in stock?
Yeah. The new report has discovered that systemic failures led to a door plug flying off a Boeing 737 MAX. You think? The Alaska Airlines Flight 1282 had the door plug panel fly off the plane shortly after takeoff, leaving a gaping hole. But the NTSB investigation over the past 17 months found that 4 bolts securing what is known as the door plug were removed and never replaced, which is what we long suspected. And that's because there's a combination of work between Boeing and Spirit Aerosystems. But again, they were just like, yeah, this was systemic failures. I was like, we already knew that, girl. But what are you guys doing in Boeing?
Boeing's up $1 on the news. Up $1.
Oh, okay.
It's
so. But Boeing is also in that, and correct me if I'm wrong, because I know, Jenny, you're a little bit better at this than me. Boeing's also bucketed into that like kind of defense-ish category, which has had a pop and then a decline since everything that's been happening as well.
Sure.
Right, and that maybe not as much as I was looking the other day at
Northrop Grumman or whatever.
Right. So like Raytheon and Lockheed, like those are, the companies that make the missiles, they have had more of a jump. But Boeing a little bit.
It's just adjacent to that. Them.
Sure.
So
and they're the largest U.S. exporter. So, do with that to what you will. Hey, Target is exploring a factory direct shipping model, talking about Amazon. Target, stock's been beaten up. They are trying to catch up, and they want to explore the delivery of shipping products directly to consumers' homes from factories, similar to Temu and Shein. The big box retailer has been struggling. But what are you guys doing in TGT?
Target.
I don't know if we have sold puts in Target. They may have recently come off. I'm usually selling puts in Target because it's at year lows or recent lows. But I kind of thought this would happen with Walmart. I thought Walmart would kind of like creep up on Amazon, and I don't know that's happened. I don't know if Target's going to be able to do it either, because anything you want, you can just get on Amazon, and everyone has their membership. So are they going to stop ordering on Amazon and order from Target instead?
Sure. Yeah, I don't know, but Target has to do something.
But to your point, Jenny, Target still has a decent enough when Ivy ranks have fallen into the abyss. This still has a 24, 25 rank because it's lower than everything else. It's not at the top of its range. So it's a decent premium selling vehicle.
This is funny. Apple customers are a little bit miffed that they were getting an ad from their Apple Wallet app for the Apple film F1 the movie. iPhone owners are complaining on social media that the Wallet app sent out a push notification. People are like, what is that? Why is my Apple Wallet app trying to contact me? And they're like, hey, you can get $10 discount on Fandango. And people are like, Apple, that's not cool. The feature film starring Brad Pitt explores the world of Formula One and was actually shot at Grand Prix races. It also showcases the use of Apple technology from custom cameras made from iPhone parts that were put in the cars.
Yeah, I think my wallet should not be able to send me at targeted ads.
No, I like my Apple Wallet to be clean and full of only what I need in there. I don't like this idea of it sending ads.
I mean, to be fair, I'm going to be an Apple defender right now because I'm an Apple fan girl. Because Apple's not like selling your information.
I like Apple too.
Like
I'm
actively.
an Apple fan girl. I'm an Apple fan girl too. I just don't like the ads.
Yeah, I know. I was like, it is what it is. So,
but I am very excited for F1.
Oh, are you?
Yes.
Do you watch F1, like the actual races?
The series, like in my house, my son, my husband, they're all very into watching all the F1, all the F1 shows. So I just kind of have it on. I might be in the background, and they are watching it. So last night, my son and I were talking about going to see F1, and my husband's out of town. He said we have to wait for him to get back into town to see it. But it looked good.
So this is a targeted ad for Jenny and her family.
That's right. Are you guys doing anything in Apple?
In our position, we currently do not. Apple's been stuck in the mud. That's one of those products that we could look at too. It's got a 17 rank, and it's been at that 200 level for quite some time. It has not had the meteoric rise like all the rest of the tech stocks have.
If I had to do something in Apple, it would be a Jade Lizard.
Okay. Sad news to report, McDonald's and Krispy Kreme will end their donut partnership next month. The company said the deal has not been as profitable as expected for the donut chain. McDonald's at one point planned to roll out Krispy Kreme donuts nationwide. But you would think this would be a slam dunk. Go get some McDonald's coffee, get an Egg McMuffin, get a Krispy Kreme donut. But I don't know how McDonald's managed to screw this up.
I'm only laughing because when we were doing the opening bell yesterday, we were standing in front of a massive screen, and the massive screen had this headline just right in front of us. I was like, we don't have anything else to say. We'll talk about how McDonald's and Krispy Kreme have broken up.
That is so funny.
I don't know. I've never been a huge fan of Krispy Kreme donuts. I like the cake donuts.
Oh, you got to get them hot. You got to get them hot.
Do you remember when Jenny, were you on the floor or were you already gone when Krispy Kreme was that like corner building on the floor? And so the sign would say, so it was right like kitty corner from the SIBO and the Board of Trade. And they would have that sign that said hot. And so like all the traders would be like, the sign's up, and the floor would empty to go get the hot donuts.
No. Oh my God, so good. Finally today, because I can only do this story because you guys are here, I am super happy to report, because if you're new here, my name is Vanetta, and I am a Taylor Swift reporter. Taylor Swift and Travis Kelce made their red carpet debut for the opening night of Titan University in Nashville yesterday. The timeline lost their damn mind, and by timeline I mean me. She's never ever been on a red carpet with a significant other. I will say that, but she's never ever walked a red carpet with a significant other. This is the first time. Yes, it was a smaller red carpet, and we're like, we did not think her first red carpet would be sponsored by Dude Wipes, but yet here we are.
When are they getting married? Vanetta, when are they getting married?
My theory, I think they're already married, but that's like my crazy theory. Like, I think they're already married.
That's what I was going to say. I think they're already married too.
But it doesn't matter what I'm glad that she's happy. I'm glad it seems like a secure, loving partnership that's equal, and that's, whatever. Yes, I'm crazy, but she is my best friend. I am not her best friend, but she is my best friend.
You just imagine being Jason. I love the Kelce family, but Jason Kelce's daughters. So like there's 4 girls now. And
yeah, and your
aunt
is Taylor Swift.
Yeah, and you just got like Taylor Swift is coming to dinner. You're just like, what?
What is happening? Anyway, no one else cares about this news, but I do, and I'm super happy about it. So good job for everybody. Hey, finally today for my viral video of the day. You guys are dog owners, and I don't currently have a pet, but if I were to get a dog, the dog I want is like the Navy SEAL of dogs, and it's a Belgian Malinois. I wouldn't actually own one because you need to work them and they need a lot of exercise. So I'm obviously aware you need to be a responsible owner, but I do like to watch videos of Belgian Malinois because there's just a light of chaos in their eyes that I deeply respect. But look at this dog. When you buy a normal dog toy for a Belgian Malinois, this is what happens. So it's supposed to go flying, but he just catches it.
Right out of the chute. Oh no. For your service.
He's not getting any exercise.
Look at his breathing. That's amazing.
But
I was going to say, we better cut the video. Both my dogs, I don't know if you heard them, both my dogs started barking when they saw that dog catching the ball.
Oh, that's funny. That is funny. Anyway, this has been super fun. Liz, safe travels to you.
Thank you very much. I'm excited. I'm leaving immediately following. I'm going to get this. I'm going to come back with this eye fixed. That's my
Yay! Yay! I love that for you. But we're going to take a quick break, and when we come back, the ladies are going to maybe answer some questions from the chat.
We are. We're going to answer some questions from the chat. So, and Frank the Great's up there. We're also, because Jenny and I do this on a daily basis, if you want to post something, we're also going to be popping back into Twitter. So put the hashtag LIZJNY. Just put that hashtag on and we can see it. Thank you, Vanetta. We love you.
I love you guys too. You're watching Tasty Live. We'll be right back.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
The beauty of Thinkorswim was that we were different. From the name to the front-end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. You know, that's what I do.
Coming up on Bad Money with Jim Blamer, Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Everybody, welcome back. This is actually a Tasty Extra segment, but Jenny and I are doing something a wee bit different. Throw the hashtag LIZJNY if you want to see yours on Twitter. Throw it in the chat. I've actually got the chat pulled up, and we also have some other exciting things to talk about.
I know. Before we get into that, I want to talk about Dr. Data, how amazing he is. He made the amazing backtesting program that we have on our platform, and he keeps improving it. So yesterday he spoke a lot about the new features, and he added quite a few features, Liz. And he's going to go over more today. Option strategy, backtesting, and assessing portfolio risk. This is happening today, so don't miss this if you're interested in the backtesting tool.
Yeah, don't miss this. This is, and it's really good stuff. And this is what I love about Tasty, and this is insane to say, everything's free. So we did, the research team has done backtesting for forever, right? Like the research team has done backtesting, and they do all this stuff, and they put everything together. And now if somebody wants to tweak it or put their own little spin on it or anything like that, they can do it all. They can do it all in this backtesting.
And now, so Liz, we've been talking about this. We look at studies, backtesting studies every Wednesday when we get our we get our research from Jacob. But and I'll run some tests. We've done them for some of our road shows. And I used to say, oh well, you have to put in a certain delta. You have to put in sell this 50 delta by the 30 delta. Not anymore. Those are updates to the backtesting. Now you could put in a certain spread width, or now you could put in a certain dollar amount. So maybe for the Jade Lizard, if you're looking for 70 cent puts. Yeah. Like if you want a 70-cent put instead of putting in just the delta. So these are all updates that he's made to the backtesting tool, which is amazing, and it's required a lot of work, and he's wonderful.
That is a game changer, because a lot of the things that we do are credit based versus delta. Although I got to give you props, Jenny, when we were doing a lot of the videos, because we would put videos of certain strategies up. They'd be like, what delta, what delta, what delta? I was like, it's not delta based. And Jenny just rattles off some deltas, and they were close to being accurate.
Close, and yeah, you can get it close, because everyone wanted to know what delta.
What delta.
And you can get it close, but it's nice now that you could also put in a dollar amount, or you could put in an exact spread width. So that I think is a game changer in this backtesting, because I would try to backtest Jade Lizards, and for the call spread, I would say like, oh, maybe short of 30 delta, long of 27, or
and you're just guessing. You're just grabbing, right?
Yes. Instead of being able to put in an exact width. So so this is nice, a nice new feature. Everyone should watch it, or if you miss it today, find it in the archives, because the backtesting feature is nice for everybody. We get questions of like, hey, how's this trade working out for you guys? Well, run it and backtest it.
Yeah, and it's so funny because Johnny, you and I were doing that same thing on the train yesterday. We were looking and adding up things that we've done, and I was like, but we aren't doing it every day. Like if you're doing it every day, you can go in and backtest it, because you can put in your parameters of what you're going to do, which is a fascinating tool. So I'm excited about it.
Yeah. Okay, Liz, do you want to pop into Twitter? If you see anything coming up on chat, I'm going to pull up Twitter.
I'm laughing at the chat because everybody was giving their favorite type of dog in the chat, which is wonderful. We love you guys. Thanks for your type of dog.
Vanetta, that surprised me, because Vanetta had her sweet little Chihuahua who was so tiny. So I was surprised to hear Vanetta wants this big dog now, but Vanetta loves all animals.
She loves all animals. And if she wants a dog that needs to be moved around a lot, I can let her borrow Will Ferrell. He needs a lot of exercise.
I was going to say, if I ever hear anyone wants a dog, I've got one sitting right here that I'll happily give away.
They can borrow Will Ferrell anytime they want.
They can just have Sophie.
Oh my God, that's so funny.
All right, so let's pop into Twitter because we have a regular tweeter, Keaton, who was in London. Glad I met Bat in real life in London. So here we get to see him and Tony out and about in London. So nice.
That's amazing. I love it. I love seeing the faces with the names. He got to meet Tom and Tony. Okay, now here's my question. What is going on with Tony's glasses? Are those new?
They look like the old racquetball player, like the old, like, you know, that
But
era.
those are the new style of glasses. I will tell you, Tony's up on the style. Like he's hip, he's happening.
New style, old style. It reminds me of a movie, I want to say with Russell Crowe, and Russell Crowe had, I don't know. What era were those from? I know they might be popular now, but they were popular back in the
70s. What's old is new again. Tony's hip. Look at him though.
Hey, he's hip. I'm not. I have no idea. I need someone to come and just say, like, get rid of these clothes, only wear these clothes. I have no idea. Sometimes I'll see those videos where it's like how to update and, you know, this old 90s look or 2000 look. And then I look at the outfit and I'm like, that's exactly what I wore yesterday.
But I love seeing Keaton. He's a normal tweeter, or he's a usual tweeter. We love everything that we get from him. So it's great to see the face of the name. And it looks like they're having fun.
Yeah, it looks like they're having a great time.
And then Frank the Great, we love him. He's the man on the YouTube chat. That's Frank Walsh, and he always comes in with our economic indicators, which is amazing. I don't know if we have anything today, do we?
Today, mortgage applications data, new home sales, weekly DOE inventory. Nothing too crazy.
It's a slow news day. It's a slow news day. And so far, we're just watching the SPOOs grind higher. And I say grind higher because the SPOOs are up 10 right now. So this might be a slow day.
But yesterday they were up 70 by the end of the day.
I know. It was a crazy day. And then Mikey, our Polish warrior, comes in. We love Mikey too.
Good morning, ladies. It's so great to see you all together. Such a different vibe than the boys.
I mean, we do miss the boys, and they will be back. So they'll be back on Monday, right?
Hey, today is our last day doing the morning show, which we've had fun. We had fun Monday. Yesterday we had fun doing the opening bell. Had a lot of fun today. But I am not a morning person. Like my body physically doesn't really kick in until like 8 a.m. And so that was 3 minutes ago, Liz. So
welcome to the party, Jenny.
I'm awake now.
Welcome. No, I actually thoroughly enjoy the mornings. I like to get up early.
Hey, you know what? If Tom ever wants to retire or Tony ever wants to retire, I know who a great replacement is going to be, and her name is Liz. Starts with an L.
I like the mornings, but I like to work out in the mornings, Jenny. Usually I'm walking my dog about 3 miles every morning because he needs it. Otherwise, he's a jerk. So he's looking at me like, what the heck, lady? What is going on these days?
When my alarm went off at 5:30, the dogs had lifted their heads and were like, lady, you crazy.
I'm going back to bed. Okay, so Mikey comes in. It's great to see us. And then he's got another one. If you opened up your Tasty FX account through the Tasty Trade app, you can only access your FX positions from the desktop or web, not the phone app. Okay. Thank you very much.
Okay. So I'm going to talk to Glenn. I'm going to talk to Glenn Freiberger tomorrow. And isn't that funny? Like Glenn Fry. Did you his last name is Freiberger? Do you think his parents like Glenn Fry?
I don't know who Glenn Fry is, Jenny. So your references are not my references.
Okay, he was a famous singer, and I'm not imagining this. I don't think. I'm going to look it up right now. Glenn Fry.
Is a famous singer?
Yeah, American rock musician. Yes, American rock.
What was he in? What band was he in? Sing me a bar of his song.
He's from the Eagles.
Okay, then sing me a bar that Glenn Fry sang.
No. He was from the Eagles, founding member of the Eagles, the lead singer and frontman.
Okay. Of the Eagles. Okay, so I have a disconnect in my brain. I can sing you songs. I never know who the singer is, ever.
Okay, so Glenn Fry, I'm not saying one of the founding members and leads of the Eagles.
Oh, so
ever hear of him?
You think? No, I have never heard of him. So you think Glenn Freiberger was named after Glenn Fry?
I think his parents' last name was Freiberger, and his parents really liked Glenn Fry. Oh, I guess and said, "Oh, we're gonna name our son Glenn." after Glenn Fry from the Eagles.
This is going to be exhilarating content when you ask a 22-year-old tomorrow if he's named after a person in the Eagles.
I will find out tomorrow. I'm going to update this. I want to make sure that we get to everyone. You know what I did love? This, talking about how IVR dropped 5 points. It says IVR dropped 5 points. That was yesterday. I mean, we saw the VIX take a real spill. A real spill yesterday.
So the VIX, and if you want to pop in the platform real quick, because we can do that, can't we right now? Yeah. So if you want to take a look, let's take a look at the platform very, very quickly. I know we're going to do opening bell after this, but the VIX, I wanted to see if it's touched the 16 level. That's where my eye line was going, and we're pencil thin mustache away.
I think it's going to hit it today. It might hit it at, like, my prediction is going to be like 836. We're going to see 16 handle.
Yeah, I mean, right now with the SPOOs up 8, I think we're gonna inch into the 16 handle, and that is insane. It is just insane.
I know. All
and
right.
I'm gonna give a huge shout. I want to give a huge shout out to the chat. Thank you very much. I did not know he was an Eagle in Hotel California. Thank you very much. That's all I needed to know. If she would have said Hotel California, I would have been like, okay.
I think we should take a break. We're running a little behind. We've got a big options drive coming up. So what do you say?
Let's do it. I'd like to see the options drive. I like doing all the content with you, Jenny.
All right. Quick break. We'll be right back with an option drive. Stay tuned.
In
the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
So I started trading in the equities market when I was 18. Real basic ETFs, mutual funds. I didn't discover options and really Tasty Live until about 2012. It made sense to me from a risk perspective. And so I started trading and never really have looked back. The people you see that's who they are. They're trying to be as open and clear as they can with the trades that they're putting on. Teaching a methodology, like teaching the logic behind things. It is tried, true, and tested. They back it up with research. They share that research. It's not just trust us and do this, which is a very dangerous thing in the financial world. But learning about that in the Tasty universe, it starts to prove itself out, right? When you follow the methodology, you'll see those profits and you'll understand why a position did what it did. Sometimes the market wins and sometimes you have a 90% winner and you don't know, why don't I do this every day, right? This is easy. But you kind of have to reset that and just go, okay, close the trade and move on to the next one, which is really what Tasty's about.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
It's options. Jive.
Hello, everybody. Welcome back. Jenny, I think this is our first live option jive. We do the live option jive recap, which we're going to do on Monday, and we're going to talk about how we did this today.
And I don't know if I've ever really, because again, when I hear the boys in the morning, I'm listening to them. I'm not watching, so I don't know if I've ever seen that video. And it's cute. I like the option jive intro video, and I wonder how many takes it took Tony to get that down.
So I know Cassie is standing right by my mouth right now, but all I know is that Cassie just, we get told to do random stuff sometimes. So all I know is Cassie brought Tony into the microphone studio and was like, say it like this. And he's like, all right, said it once and walked out.
Oh, really?
I think so, yes.
So
she's like, that's perfect. So
funny.
We'll see.
All right, this is a big one today. So let's jump right in.
Yeah, it's a long one, which is good. And now, once again, we got it in advance, but I didn't read through it. Did you?
I took a look at it. We got this yesterday, and I honestly, when I saw the email come in from Baby Shark, I was so excited because I know he's helping us work on some of our content for our risk management convention.
That's what I thought this was. When I saw that.
Yeah, so when it came in, I was like, oh my gosh, Baby Shark got it done. And so I opened it up. I was like, oh, it's just the option jive for tomorrow.
It's the options jive. That's pretty funny. Okay, but this one is forming a directional bias. Key considerations for trade entry. Okay?
All right.
Got it,
all right. Fire it up. Here we go. Okay, traders tend to default to neutral strategies due to their lower risk profile and ability to make a profit regardless of which direction the stock price moves.
However, learning to form directional assumptions is an important skill as well. I like that.
And so go, talking about the first line, when you talked about FedEx and like Nikki was bearish and Mikey was bullish, the move was within the expected move. They could both be winners, even though it went down and one was bullish, one was bearish. It didn't really go beyond its expected move. So the nice thing about options, you could be wrong and still be a winner.
I know what their trades were. One won, one didn't.
Okay. Well, all right. In order to form assumptions about the trades we place, we need to develop our market awareness. This refers to our ability to assess the entire stock and option market to determine our personal assumptions. It's
interesting because this kind of springboards off what we were talking about with Dr. Jim yesterday.
Yes, and market awareness and how important is that and how valuable is that? And do you think your performance is better when you have better market awareness or more experience and a little more market awareness?
I mean, I think so, but that's just me talking my book. All right, next slide. Our only hope is to be able to make these decisions quickly and efficiently without dwelling on our decision, good or bad. We only have 100% control of one thing, trade entry. That's true.
And making decisions quickly is helpful, but quickly, sometimes I think when you're trying to make decisions too quickly, that's when you might make a rash decision. Like yesterday on the bell, at the bell, it was like 2:59, and I was like, 2:59, I gotta get one more trade in. And then I put in a trade that I immediately regretted at 3 o'clock.
What was it?
I bought some triple Q's puts because I thought, how can we be up this much? How can we be up this much? Factors to consider when forming assumptions: market awareness, liquidity, recent price action, and volatility and IV rank. And when you're trying to look real, when you're on the spot and you have a short amount of time, you might not be taking into account all of those things. So it's good to have a little bit of time.
No, but I do think that making decisions quickly is extraordinarily important. You have to be able to make those decisions. But you had made that decision, I will tell you, you had made that decision well before. Like you knew you wanted to short the market because it has gone up so much. So that's why you could make such a quick decision.
No, it was literally like I was going through my positions, tweaking them, and then I saw, oh my gosh, it's 259. And my P&L for the day was good. So it's kind of, the question was, if I didn't take off a lot of positions, how do I protect or this P&L from losing it tomorrow if the market's down? And so just like quick in a flash, bought some triple Qs puts, right or wrong. It's not working. It doesn't look like it's working out this morning. And they were just for today.
Yeah. Well, I figured as much because you're not going to spend too much on those. Let's go to the next slide. Let's go to the next slide. Okay, futures drive the underlying equity markets. True. Okay, so there's your first tier and then there's your second tier, right?
Okay, so first tier, ES, NQ. Now all of these,
and then they have the corresponding ETFs, yes.
Yes, and so as far as the first tier goes, you can trade those. You can trade those before the second tier is open.
You know what I find fascinating? The only thing I'm saying with second tier is they have McDonald's in there. which threw me off to the point where I was like, is that something am I wrong on the symbol for McDonald's? That's McDonald's.
Yeah, it is McDonald's. I mean, maybe Baby Shark just had McDonald's on his mind when he was making this.
Yeah, so there is true. So the futures do drive the underlying equity market. So that is good to be aware of. And Jenny, my question to you is, with your understanding of the markets, and I ask my son's friends this all the time, what is the first thing you look at?
In the morning?
In the morning.
Where the spoos are.
Where the spoos are. And that's that first thing on that list, that ES. That's the top of our mind. And the funny thing is, I mean, I do trade them sometimes, but they're not all that I trade. I'm doing it sometimes when I'm in a pinch, but that's where I want to know where those are because that tells me what my entire portfolio is going to look like by that one number.
In my eye line kind of goes ES, NQ, ZB, CL, that's kind of Bitcoin, that's kind of my order.
Which is ironically the tasty default list within so many things.
Well, I don't really care that I don't focus too much. I'm not like, oh, where's the Russell today? And I don't really watch gold too much either, but that's because I don't have a position in gold. So
yeah. Okay.
I mean, so day to day. Yeah. But as far as the second tier, I rarely pull up McDonald's.
I know we're kind of kidding about this, but so then it says develop an awareness of what's going on in the market from a broad perspective and in different industries. Futures and major stock equities can be a part of your watch list.
Okay. Love it. Next slide. All right. Since the current market is in a low implied volatility, traders with a strong directional bias and limited capital should become well acquainted with spreads due to their lower risk and smaller buying power effect. When volatility increases, you can increase your capital allocation. So very good point. Very good point.
Yeah, that is a very good point. And the two most used spreads are credit spreads and debit spreads. So yes, this is kind of a recap for everybody there. But we talk about this on a daily basis, Jenny and I, because we have larger accounts that are our own accounts, but we trade kind of handcuffed with a bite-sized show account, right? So a lot of times you'll see us spreading things off or saying no to certain trades because it's going to use too much capital, and especially when implied volatility is low.
Right. And from our research, when implied volatility is low, that's when you should have more capital on the sidelines. How do you have more capital on the sidelines? More defined risk trades. How do you have less risk? With those defined risk trades. So it makes sense. It makes sense. And then if we get a movement in the market and increase in vol, then we could, put more capital in.
We ramp it back up. It's kind of funny. I love having these things that are given to us because we've done that naturally because of what we choose. And I like having the research edifying it, right? So we kind of have always naturally had less positions on when the implied volatility is low. Not less positions, less capital use because your positions are different. You might have calendars or spreads or things of that nature instead of selling puts in aggressive stocks.
And I was going to say, with earnings season coming to an end, market nearing highs, vol hitting lows, and we can be back to earning setup calendars.
Oh yeah, it's going to be a glorious time in our lives. All right, let's go. Let's go to the next slide. Okay, our convention for implementation is as follows, right? Our convention, we use this protocol because it affords us the best risk-reward relationships when acting on a bias. There you go.
So credit spreads, put spread or call spread, ideal high IVR, and you're either bullish or bearish. Bullish, bearish, sell your credit spread, sell a call spread if you're bearish, sell a put spread if you're bullish, and ideal in high IVR.
And it's interesting because we kind of talked about this once again with Dr. Jim, and this is your decision tree, but there's so many nuances with this. And then it says, if you're bullish or bearish in low IV, you're going to do a put spread or a call spread debit-wise. So that's just a generic, if this, then that. If the vol is low, you're going to go with a certain type of trade. If the vol is high, you're going to go with a different type of trade. But there are so many nuances throughout this whole thing.
And the reason for this, I mean, someone might say, oh, buying a put debit spread is the same thing as selling a call credit spread. And I get that with synthetics. But the reason for the debit spread is our mechanics with the debit spread is you wrap it around and you pay 50% the width of the spread. So the difference in low IVR, you're risking less, right? You're 1-to-1. You're risking $2.50 to make $2.50. You're risking $1 to make $1. So your risk is less in low IVR. And in high IVR, your risk is more. You might be collecting $1.50 and risking $3.50. So you're collecting less, risking more when IVR is high.
You know what? I'm glad you said that. There should be an asterisk on this because it isn't apples to apples. It's not just the credit spread or the debit spread. Because if you're using the same strikes, that's the same trade. It's a different strike selection throughout this process with your implied volatility.
Yeah, it's almost like the debit spreads are like the chicken, where you're risking one to make one, versus in high IVR when you're risking much more to make less, but that's
you're going to be out of the monies when in high IVR.
And that's what makes it a high pop trade. So in low IVR, they're not a high pop trade. They're 50-50. In high IVR, they're a high pop trade.
That's an excellent point. You get a gold star, Jenny Andrews. That needs a little asterisk. Okay, next slide.
All right, we like credit spreads in high IV since it gives us the largest credit for the spread width or risk that we are using.
I want to see what this is. So the SPY 20 delta, 10 delta. Okay. Credit as a percentage of width spread. So if the IV, and this is the IVR bucket. Oh, look at the IVR of 75 to 100 in SPY. Woo. So you're getting less of a percentage with the same width of a 20 delta, 10 delta if you have a lower IVR.
Right. So you're risking more, and why, and the IVR is low. So that's why we like these spreads more, these out of the money credit spreads more. When IVR is high, you're collecting a larger percentage of the width of the spread.
I will be very curious what they think about the debit spreads if they are going to be wrapping them around the at the monies. You almost need to, right? So let's go to the next slide.
And they should all just be, okay, debit spreads are initiated in low IV due to the cheaper option price and thus larger proportion of potential to profit debit paid.
These should all be the same, in my mind.
Call spread max profit versus width, 60-40. So they're not doing like, it's pretty wide, 60 delta, 40 delta.
They're also making it directional. So they're making this a directional spread.
Yeah. Well,
60-40. Because usually
call spread, call spread, 60-40 call spread.
Yeah, so when you are when I'm doing a debit spread, in my mind the mechanics are wrap it around the at the monies. Wash extrinsic value is all we're looking to do.
I mean, if you change these delta slightly to like 80-30, then that's a poor man's covered call.
It is a poor man's covered call.
So these are directional. It is, I don't want to call this a poor man's covered call because you're not so deep in the money, but these are directional call spreads, bullish trades, but defined risk in case the market turns around. If the market keeps grinding higher, you'll make money. If the market turns around, you're not gonna. Your risk is defined.
Do you know what's funny though, Jenny? This goes into that same bucket, kind of what we were talking about with Dr. Data. You got to give them deltas, so they're giving them wrapped around. You know what I mean? They're wrapping it around 50-50 with this. They got to give them deltas instead of saying I want to wash extrinsic value, because that's what I would be doing to a debit spread. You know what I mean?
Right, or we're just wrapping a $5 wide right around where the stock is trading, or wrapping a $10 wide right around where the stock is trading.
Yeah, so, this is a good option, Jive.
All right, last slide, because then we got to get to opening bell.
Oh, God, I didn't even look at the time. Takeaways. Having market awareness is a foundation of success in trading, informing directional assumptions.
Small account traders can more efficiently use their capital when acting on a directional bias by using put and call spreads.
And we use credit spreads in high IVR and debit spreads in low IVR because of the risk-reward relationships in place, which I do agree with.
All right. Excellent option, Jive. Thank you very much. That came from Baby Shark. We're going to take a quick break, and we'll be back with the opening bell. Stay tuned.
Stay tuned.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Hello, everybody, and welcome back. We've got about a minute and a half before the opening bell, Jenny Andrews. So
Yes. Oh, I was going to say, yesterday we were at the SIBO for opening bell. I found this SIBO cup here, and I thought, I'm going to recreate it. We really want to one day ring the opening bell. I'm going to recreate the opening bell, ding the SIBO cup at 8:30. We need that countdown clock that they have on the floor.
I know, with the seconds on it, which is amazing. Yes. But so like pre-market before this, I mean, spoos have been staying up 9 most of the morning, between 8 and 9 and 10. The only thing that I'm seeing not really moving around, but I wanted to see what oil was doing. Oil had a little bit of a pop last night, Jenny. So, I mean, it got in the 64 handle, but it's when I say little pop, it's up 48 cents right now, CL futures.
Here, let's go to the platform. Let's go to the platform because we can have everyone watch. We're going to watch the opening bell and we're going to watch the VIX and we're going to see how long it takes for the VIX to dip into the 16 handle.
Oh, yeah, we'll see. What are the VIX futures doing right now before the bell?
Oh, and maybe they are. I don't know. I don't have those up.
Yeah, change it to the VIX. Let's take a look at it.
Well, we're going to.
They're 19. All right, go back to the VIX. You can do it. Because I know we look at the VIX. I know the boys look at the VIX futures.
But
markets are open. VIX is open. I mean, the spoos are staying right there. Spoos are up 8. The CL, like I said, CL is catching a little bit of a bid after its monster move down yesterday. Other than that, the bonds are in the 14 handle. We can take a look at our TLT position.
You could see with CL having a little bit of a bounce, maybe some of the vols coming in on. Yes. Okay. So when we put on this Jade Lizard, crude was much higher, but the rank in crude was in the 80s, 84.
It was 89. It was crazy.
89.
Yes.
Yeah. And now it's only 49. So even though we're all the way down at our put, we're making some money back today, and it's not terrible. That's because so much vol has come in.
Yeah, so much. I mean, we're not in that bad a shape. There's nothing we're going to do.
No.
We're going to sit on our hands with that. We've got 22 days left. We'll roll that in perpetuity. You know what I'm noticing with my eye line, Jenny? That Costco. Didn't we try to get out of it yesterday?
Let me take a look. Costco. Yeah, we have just a put spread, 23-day put spread.
I thought we had an iron condor. I thought we tried to close something in there yesterday, but let's close that. Let's get out of that because I see 50%.
Yeah, we closed so many positions. Whoa. Look at this market, 82 cents at $1.68.
Yeah, okay, just keep that. Oh, that doesn't, I mean, that needs to be closed, but it doesn't, not yet.
Right. I'll let the market shake out a little bit and see. I'm just going to put in 50%, close for 50%, GTC, and see what happens.
Yeah.
And see what happens. And FedEx was, that was the earnings trade yesterday, and we don't have it. A lot of people do. It's down 12.50.
You're right. That is within the expected move for the cycle.
I think so. 217. What if we would have done the 217 calendar?
What if we would have? We would have been in the money.
It would have been a huge success. It was right there.
So the only other thing that's got earnings today is Micron. I don't know if we're going to take a look at that because we really won't be trading much of anything else. And you're going to have Glenn on. So I kind of think we put a pin in it. We do have What's Your Assumption coming up next. And Jenny, you did a great job on the SIBO yesterday, freeing up capital. So you're going to put it all to use today.
Yeah, well, yeah, we do. We have some capital on the sidelines. But as you mentioned Micron, I know Jack JT. I'm happy for Jack JT. He's usually long Micron. It had such a monster move. It's doubled. It has doubled in the last 2 months.
Well, have a lot of those other, what is kind of parallel with this? Have your NVIDIAs and your Metas. Like, take a look at all those, all the ones that are in that tech sector. They've all kind of popped up like that.
Yeah, but Micron, I mean, I don't know that I'd like bucket Micron in with Meta and NVIDIA. I don't know.
And they're not as high. I mean, don't get me wrong, we've had a monster move, but Micron has surpassed its moves in the past, where your Metas and everything else are not at all-time highs again.
So trying to, like Intel, like I was looking at, some of Micron's competitors and Seagate, other competitors, Seagate, Texas Instrument, Intel. It's, that's why them doubling seems crazy to me in such a short amount of time.
Well, I want Intel's to have it. We talked about this yesterday, the day in the sun. Who is the one who started the saying day in the sun? I want them to have their day in the sun.
I don't know.
I like it.
I don't know. Did that all start when the Beatles? I'm not sure. Day in the sun? No idea. I'm sure someone on Twitter might tell us. It's very hard for me to trade Micron at these levels. Very hard.
Oh, and I think so too. And I think I would do an after earnings trade, especially with it up that high. And we're not, I mean, don't get me wrong, I'm not going to be here tomorrow. And it's harder to manage trades when you do not have people with you. I don't think it's open yet.
I was going to say, it's not moving.
I mean, the spoos have not been moving either. I swear to God, we've been just sitting here up
it's like
8.5, 9.
This is like a repeat of our SIBO opening. Do you know how long it took yesterday to actually get the first opening print of the trade?
And we were directly in front of the screen. And when I say screen, I mean, it was massive. It was this big. You couldn't get past it if your life depended on it. We're like, where are the trades? Where are the trades? And the traders that were right behind us, they're like, we're pitching a shutout right now. Nothing is traded yet. It was probably 6 minutes before a trade went through?
It was very interesting. Slow day.
It was.
Day. With the NASDAQ up 100, I'm sure my puts are worthless. Ooh, we're out of Costco.
Good job. Costco. Why don't you go ahead and push that through? Just because we like to do it live on air so everybody can see, it's going to go to the follow page. So all we're doing here is taking 50% off of things. Now, our positions are very light in this account. Very light right now, Jenny. And I don't think anything else needs to be managed, good or bad, right?
No, it's nice. We've made $142 like overnight. We put this trade on in Oklo yesterday.
Yes. Oh, it's only up 98 cents right now. Before the opening and at the break, I was like, Jenny, Oklo's up $3.
And it might have rallied a little bit on after, by the end of the day, but there's a lot of profit potential in this trade. The only thing I'll keep an eye on with this trade, if we get a big up move, we may take a look at taking off that put spread.
This was an interesting trade. So I mean, I know it says 7%, but let's talk about this. This is a buffer trade, right? So it was saying we want to make money 1-for-1 to the upside, but we didn't mind getting long it at a certain downside because it is cash secured. We had to buy something.
And this is what this buffer trade looks like. We put it on here where the stock was, here, right around where the stock was trading, to have profit potential to the upside. But if it fell a little bit, we had room before we started losing, and that's a typical buffer trade. And they don't always set up. And so this looked like a really good setup of the buffer trade. That's why when we pulled it up, Liz was like, push that button. And I had to give up quite a bit to get into this trade.
They didn't set up. But that's what I'm saying. When you take a look at this, there's when we're looking at the buffer trade, there is no profit target here, right? So when I said it says 7%, that means nothing. This percentage should mean nothing. It's, hey, are you taking the bump? Do you want to take, I mean, when it was up $3, it would have been a better takeoff instead of up, 36 cents, because we assumed I would have been up, $300 on this trade. But right now, there is no profit target taking. And I think this might be a little bit of wide markets.
So hold on one second. Oh yeah. So I was going to say, like, why do we have all puts? But we used all puts. We used all puts, but you could set this up, and that's the delta. Like, you could buy the call spread and sell the put spread, and then that essentially is like
the reverse delta
buster.
Correct.
Yeah.
We used all puts because we wanted to buy something.
So basically, we have the 60-80 put spread. If it's above 80, we took in $20 credit. That's what we can make.
If it's above 80, but like I said, there is no this in my mind is very similar to the zebra. If you're happy with your target, if you're happy with your profit, take it off.
60-80. So we basically bought the 60-55 put spread.
Correct.
And then whatever we paid for that, we wanted to cover that extrinsic value. We sold the 80 put, it had that much extrinsic value. And so that's kind of the buffer trade. And that 40 put was just to release capital because it was using a lot of buying power.
So yeah, the 80 in the money put is a synthetic covered call. We kind of went over all this yesterday.
I have someone emailed me about another nuclear stock, SMR, which is NuScale, which was another nuclear stock, and I looked at it yesterday, and you think like, geez, it
looks like Oklo.
It doubled. Did I miss the run? If people want to get in on this, I did sell puts in here yesterday.
It kind of looks like Oklo. I think they're going to move probably together if it's another nuclear stock.
So we had a big nuclear discussion at home because a friend of ours, their daughter is working for General Dynamics this summer, and they are, it's a lot of things on the sub. The sub is, I think, powered by nuclear power. So she's an engineer working on the subs, and she's like, nuclear power, it's the wave of the future. And then my son, he's a computer engineer, started having the conversation of nuclear power, it's the wave of the future. So I didn't feel too bad selling these puts in SMR, even though it is up so high. I thought, I don't want to buy it here, but.
Here's my question. Is it like Oklo where it's cash secured? Because Oklo still is.
No, it's not. It's not.
It's not. So it's a more cost effective way to be in then from that perspective. So, a little bit wide of markets though. You've got 241 at 299, 282 at 310. Those are a little wide.
Now, how far can you get and just get, this is only the 23 day, going down to the 34 put here, you can get $1.20 for $1,100. It's like a 10% return on capital.
It's not bad. That's not bad. And the problem with Oklo, we do like Oklo because it was your brother that brought it to our attention, but the problem is how much capital it requires. So it always requires spreading off.
Yeah, for certain size accounts.
Hey, this is dumb. I know we don't have time for this because I know we want to stay on schedule, but put the buffer in this. I bet it'll fit.
That's what I was wondering. Would the buffer fit?
And you don't need to buy anything with this.
So let's say you buy the 42.37. That's $5 wide. It's not as good. Then you sell a put for $230. No, it's not as good, but it's not terrible. We're taking in $450 using $1,500.
It's not bad. That's what I'm saying. You can make $450 using $1,500 instead of $1.
And your break even's 37, which it's up here. Yeah,
that's what I mean. I do like putting in the buffer trade. I like the buffer trade when you don't have to spread it off, because this is exactly what it is. You're using a debit spread as your downside protection, but you still get the profit potential of that if it goes up.
Yeah, so I do like the P&L of a buffer trade. I do.
Mm-hmm. Yeah.
So we've got this upside profit potential if it goes up, but to the downside we have some room. You want me to ship it?
I kind of do. Is $1,500 too much for us?
I don't know how many trades we have for what's your assumption.
So maybe
honestly, you could give up. I could use that 40 cents. Here.
Jenny, go to the VIX.
And now I'm using 800.
There you go. Give up 40 cents. And ship it.
Yeah. Then we have two similar trades on and two similar products.
And then go to the VIX, please. And we will take a short break because we're going to come back in with
$16.99, $8.41.
It was just $16.99. Did you see it?
Yeah, $16.99. So today on June 25th, the VIX was back in the 16 handle, and it was there last week. But then we had that, that pop. Oh,
I know.
Okay. All right. Let's take a quick break because we have what's your assumption to get back to, and we've got 10 trade ideas. Hopefully, 10 trades. Stay tuned.
Hopefully 10 trades. Stay tuned.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at tastylive.
If you missed the live show, here's our cherry on top weekly recap.
You became Chicago's most eligible bachelor. What year was that? That was the debate we were having earlier while you weren't on the show to defend yourself.
1988.
88? So Vanetta was right. Late 80s, early 90s.
You mean when I was on the Oprah show?
Yeah.
Yeah. Well, 88. I had flowing locks like Tom.
Oprah just made it.
Oh, here it comes.
I mean,
she felt bad. She felt badly for him. You couldn't get a date.
You get a car. You get a car. You get a Scott Sheridan. You get a Scott Sheridan. I want the car.
That's right.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Hello, everybody, and welcome back. This feels just like the Liz and Jenny show, and we have a What's Your Assumption, Jenny Andrews?
I know. It does feel like our show. It feels like a Wednesday. And it is a Wednesday. It actually is a Wednesday.
True story. True story.
All right. What's your assumption? Are we on schedule? Pretty much. I'm not going to miss. I'm ending this on time because I'm not going to miss 1 minute with Jacob today, Liz. Not one.
Oh, I know. Me too. So let's hit us with slide number 1.
All right, Amazon, this is coming in from Dave from Cleveland. Hey guys, I'm looking at an iron condor on Amazon, 185, 190 puts, 230, 235 calls. This is easy. It's not an assumption. He actually gives us the trade.
Just pop in and do it. Let's see what it is.
All right, I'm going to pull up Amazon. We'll go into the platform and I will pull up this trade from Dave from Cleveland.
So it is the 185, 190 puts, 230, 235.
He's in the 23 day. He's 23 day. Yeah. So 185, that seems, well, you know what?
185, 190, 185.
Okay. But
and it's done 25 days. So this was 2 days ago. So it might be pretty far. And then go to the 230, 235.
I think Amazon rallied. Yes. Amazon had quite a rally yesterday. So all these should be shifted up. Everything on this trade would be shifted up, and I'll shift it up a little, 195, 190, and then go to the 235 through 240. Well,
they wanted an 82-cent credit. What do you got there? That's 71. That's not bad.
I guess it's about right. I mean, to me, like TP wouldn't love it because you're not collecting enough of the width.
TP would hate this trade, but that's okay.
Sorry, Dave from Cleveland. But I do. I think if we did anything, we would bring both sides in and collect a little more. So here's $1.34.
Beautiful. Ship it. We need to get through these to get to Jacob. Let's go.
All right. So we tweaked it a little bit, just brought it in and collected a little more. Okay.
And when we get filled, I'll push these through. We haven't gotten filled yet. Alert me of those. Okay. So then next up, number 2 is SPX neutral, 0 DTE. Looking at selling a wide iron condors here, thinking 30 to 40 deltas with $30 wings. Thoughts?
Okay, Jake from San Francisco. I'm gonna pull up like a Jack Tucker because our viewers have been doing these 0 DTEs, going with about a 20 delta, $20 to $25 wide. I'm going to start with $20 wide, 20 delta, 25, 35, 45, $20 wide. You're getting $380 and risking $1,600. This is very similar to what a lot of our viewers put on every day with these 0 DTEs.
Yeah, that is a Jack Tucker.
Now, Liz and I don't want to risk $1,600 for the day.
Well, because we're not doing it every day. So that's when and Jacob studies have all kind of showed that. That's how it all comes out in the wash, right?
Mm-hmm. If I make this a $10 wide, what are we getting? If I make it a $10 wide, we're getting $250 on $10 wide. That's not terrible.
That's not bad.
Should I do it?
Sure, ship it.
All right, I shipped it. 20 delta on either side. We made it more of a baby trade and collected $250 on a $10 wide. So we're only risking $750. I'm going to real time get all of this pushed out. So
you know what I was just doing? I was signing in over here. You stay doing what you're doing, and I'll push them out over here.
Okay. All right, then next after SPX, what do we have? We have HIMS. My HIMS positioning is growing and growing. August monthly stocks look like it'll trade in a wide range for the next month. Iron Condor or Strangle or better. This is from Derek from Denver. So Derek from Denver, I can't sell the call side. I am just short puts and long stock in HIMS, hoping for a little rebound. But again,
do we have a HIMS? Do we have a HIMS position right now? We don't, right?
No, we don't. It had a big fall. Now it's come back a little bit. Why does this say no options?
In HIMS?
There are
options, yeah.
Let me see. Let me adjust this. HIMS and hers help. Look at your platform, Liz.
Hold on one second. I just wanted to make sure I was pushing those out. That is bizarre. I'll look at mine right now.
And sometimes if I see if something like that happen, I'll log out and log back in. But
I've got options.
I just have short puts in HIMS, and if we got them, they're trying to stop us from doing something real risky, selling puts in HIMS.
Scott's in the back going, turn that machine off.
Let me see something. If I change the symbol.
Yeah, you got SPX options. Wait, you're typing in some weird. You said like spelled Sphinx. Like
here they are.
Okay, good. There you go.
All right, and I don't even mind going out to August.
No, I don't
either.
Let's
take a look at the buying power. 38 put for 320. 3-0. Mind blown.
Hit it, sister. Hit that. And get out of that SMR. Let's get back into this.
372. Now we talk about let's try to be careful about where we spend our buying power. So here I can make $335 using 372. Makes a lot more sense than trying to get $1 and risk, 900.
1,500. I know.
Yeah.
That's insane.
Yeah. So I'm going to sell these HIMS puts.
Yeah, you are. I've got both. You should see how many computers I'm running right now, Jenny. You'd be so proud of me. So I can push this through once we get filled.
All right, so I'm working that, and I like the buying power in HIMS. I like it, and it had the big drop down a couple days ago. We've bounced back a little bit. Could it go down again? Sure. But what did we sell? The 35 put? What are we working?
Was the 35, I think, right?
HIMS working the working 38 put.
Oh, that's fine. So our break even's 37. All right, let's get to the next one.
Okay.
Slide 4 of 10.
Triple Qs.
Triple Qs, neutral, July, August, considering a neutral calendar spread on the triple Qs at these new highs. July, August calendar. Neutral. So that's at the money.
Neutral calendar spread. Neutral calendar spread. I might just shift it down a little because how could we get out of a calendar spread quicker? A slight boost in vol. And so that won't happen if we're just at the money. Can I shift it a little, like 40 delta?
Sure. But that's still neutral, I would say.
Yeah. August, July, 40 delta. If this is too expensive, I'm not doing it. Let's see. I have to shift it because we have $5 wide strikes. So
go to 40. Go to 540. And we'll take a very slow percentage.
Okay, so that's very neutral. That's just assuming we're going to stay.
That's what they wanted was neutral, right? Oh, that is neutral. That's too expensive.
It's expensive. It's expensive.
Listen, Brian from Reno. I'm just kidding. No, these are honestly though. This isn't bad. Look, if you're neutral in triple Qs, this is the same thing as doing an iron fly, doing an iron condor. Butterflies and calendars have the same effect. That's just a very neutral trade. We just don't want to spend $500 on a calendar.
Yeah, we'll pass. But sure. You're right. Iron Condor, Iron Fly, a calendar.
Yeah, if you wanted a neutral trade in there, you could do an Iron Condor in there. Now, granted, there's only an 11 rank, so I get why he's saying calendar.
Okay, next up, because we're going to pass on that. Next up, we have IONQ from Keaton from London.
Oh,
so now we know why he was there, seeing Tom and Tony. He's actually from London. I didn't know Keaton was from London. Continues to move sideways. I want to say we got out of our IONQ puts yesterday.
We did.
So let's jump back in and sell more.
What were the puts we did yesterday? Do you remember? We can pop out the side.
Let me see.
No, you know what? We weren't just long the stock.
I don't know why I'm having these loading issues. Do you see this?
You are having loading issues, yeah.
So here, this is what we would do, Keaton. We'd sell puts in IONQ for sure.
Yes, and you know what? I'm just going to do real quick.
IONQ in the last 7 days, we had sold the 35 puts
in the 23 day.
Oh, and it was a roll. So how long have we been rolling this? So we sold the 30 puts for $1.60, rolled it for $1.88, and then bought them back yesterday for 96 cents. So
that's pretty good.
In IONQ, I would definitely sell puts again if I weren't having such loading issues.
Whoa,
over here.
Jenny, you would love IONQ puts, not to rub it in.
Hold on.
So I just went to the August 15.51, went to the expected move. It's the 30 put for $1, and it's only $1.58 in buying power.
Oh, I got him. Okay,
good. Don't just go to August 15th. I was just going, it doesn't matter if you're going through earnings there. Go to the expected move. Just hit the August 30th. I just want to see what the buying power was. It's $1. You're putting up it's 300 there. That's not bad, though.
That's not bad at all. Using 300 to make 100. See, we need to take off some positions that are using too much buying power, replace them with positions that don't use much buying power. But again,
load up on IONQ.
If you're in something that the margin looks really good, be mindful of the risk. I don't want to say like, oh, let's go and sell so many of these. Just be mindful that if it does go down, to take 100 shares of IONQ at $30 would use $1,500.
And she's trying to stop me because I was like, we're going to load up on IONQ.
After the show, I'm just going to load up on these puts. All right. What's next, Beth?
Oh, okay. That's good.
Enphase Energy, Alex from Pensacola, high IV rank, but low stock price, put play or covered call. Enphase Energy.
Enphase Energy. We've looked at all these energy stocks. I think we have FSLR. Do we have an energy stock in?
We've looked at these. I don't know if we got filled. So we don't have FSLR. We don't have Enphase. I don't think we were filled, but it is low price. These have gotten beaten down. I have not jumped into this, like you jump in front of these, solar stocks and all the news and down move. I don't know if you have, Liz.
I have not. I do not have a solar stock in right now. I'm going in, and as far as energy goes, all my money's in nuclear.
I'm kind of staying away from these, but we're filled in HIMS.
Okay, I'm on it. You keep going into the platform.
All right, so we're just gonna pass because we don't. If I wouldn't personally put it in, I don't like to put it in on the show. I don't have a problem with Enphase Energy, but I'm not in it.
I'm not in it either. Let's pass.
All right, next.
Number 7. Ooh. Rocket Lab, neutral, 45 days. I'm neutral to slightly bearish on Rocket Lab. And this is Matt from Fort Wayne, Indiana.
Matt from Fort Wayne.
I've logged so many hours in Fort Wayne, Indiana at basketball tournaments.
Oh, really?
Yes.
Okay, Rocket Lab. Let's see what neutral to slightly bearish. Ooh.
Neutral to slightly bearish, yes.
Let's go with the platform. I'm gonna pull up something and see what you think. I'm going to pull up
a reverse big lizard with a fat tail.
Yes, 33.31. 33.31. Here we're getting 387.
Ooh.
This is a reverse big lizard. So I'm getting 330, maybe just $3.
Perfect. Yeah. You're putting up $400 to get $300.
And to the downside, if it stays right here, I have, $1.60 a day in theta decay. If it drops down, I've collected $1.08 over the spread width.
Yeah, that's pretty good.
We're only risking $4.98. I could risk a little less.
No, I mean, that's okay.
And I didn't change my credit much. It didn't change my credit much.
Yeah, I was going to say you're fine with that. The $400 is a good buying power.
Okay. Bracket Lab.
Yeah, thank you.
This is
Thank
probably,
you, Matt from Fort Wayne.
This is probably one of the only bearish positions we have in our account, so I'm happy to add it.
Currently, it is, I think. Okay, let's go to the next one. 8 of 9. And this is Delta Airlines, neutral, July 18th. Good IVR and earnings in 16 days. If they have earnings in 16 days, I don't know that I'm going to do it for a neutral trade.
Yeah. Oh, and we have it here. I don't know if you do it, but we have it. We've got the.
Well, I don't mind puts. I mean, I say puts are neutral too, but if you're just going straight up neutral, meaning an iron condor, if earnings are in 16 days, I might wait. And that's what they say. Might need to wait a few weeks. Oh.
And look at this. We sold the 45 puts in Delta 14 days ago, and they haven't come in yet. I'm going to put in the GTC for 50% and hope we get filled before earnings, but my guess is we won't unless Delta has a big run up.
Well, I mean, we put it in so long ago. Now, Delta might have come down a little bit, but that's what we say about it's like running in sand. You are fighting the implied volatility increase.
If you're neutral, it's most likely not going to come off till after earnings.
Yeah.
Okay. We have two more to get to. And I know it's 9 o'clock, so I don't want to run into too much of Jacob's time.
Okay. So what's up next? Google.
Yeah. Jeff from Miami.
Okay, so let's go. You jump in the platform into Google, and I'll rate it for you. Really bullish on Google here. That 150 support has been rock solid. Jeff from Miami. So let's go to Google.
Really bullish. Now, are we going to go through earnings? Or are we going to keep in the 23-day?
Well, if I'm Jeff and I'm really bullish, which you and I are not, I'm going to August and I'm putting in a zebra.
Oh.
I mean, but I'm not, we can't, it's going to be expensive. But if Jeff's assumption is really bullish, that's what I'd be doing.
And I'm just for kicks, since we've been on the buffer bandwagon, the buffer here, this should work. Okay. The buffer here gives you $1,522 in profit potential and gives you about $5 in room to the downside.
It does. It gives you room to the downside for sure. It's using $3,400 in capital, but if you're really bullish, you're capped out at 185. I'm fine with the buffer there because that's the expected move for the cycle. But with your term, really, you have unlimited profit potential to the upside using $2,100 instead of $4,000.
Here's the zebra, and I understand why he's bullish in Google. It hasn't had the run that a lot of these other stocks have had. The zebra, $2,100, you'll make money 1 for 1. So if we have the zebra on yesterday, it'd be up $290 today. Every dollar Google goes up, you make money 1 for 1. I don't hate it. I don't hate it.
I don't hate it either. But I'm just jumping off his assumption, saying really bullish.
Now, we can't afford $2,000 because we don't have a lot of buying power. So we might have to go with something like a put spread. or a diagonal, or we could make
a expensive.
Here's a $10 wide diagonal. Nah, it's $920. No, it's the higher price product, bigger accounts. That's the. Okay.
Okay, Jenny, the last one. We made it. Micron.
All right. Ooh, Micron.
Micron, I don't know weeklies, MU earnings coming up, and I'm leaning bearish. Jack from Philly. This is not Jack Tucker Jack JT, because he's bullish.
So we've said it a few times today, with the huge run that Micron's had up, I'm going to wait. I'll do an after earnings trade.
Agreed. You did it, Jenny Andrews. You did it. And everything we're filled on has been pushed through. And then, do you want to take a quick break?
Yes, I can't wait. Let's bring in Jacob.
Stay tuned.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Craig in New York City, what's up?
I just want to say, I've been with you since the very early days of Thinkorswim, and traded all kinds of markets here and there. And I got to say, I could be off so much worse if it wasn't for what you guys have sort of drilled into me over years and years and years. And so I just want to thank you, because you could have easily just taken the money and run when you sold Thinkorswim, and you didn't, and you started this. And you basically have just given me this full education in this thing that was completely foreign to me many, many years ago. And so even though I've lost money in the last few days, you've saved me a lot at the end of things. Like, losses could have been catastrophic, and they're not. So I appreciate you.
I hear you.
I appreciate you guys. Thanks so much.
Thank you, man. And I appreciate
Thanks.
you holding on the line to say that to us. So thank you.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options, profit, and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here.
And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast.
Option Trades Today. Are you listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
One I've made, I'll give you guys next week. Nick and Mike can have your one from last week tomorrow.
You're live.
It's all easy for me.
Oh, perfect. Yeah, that works out great. Yeah, just because we're doing the morning show, we're not down at the studio.
Yeah, it seemed impractical.
Going, Jacob, I was with you.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Hello, everybody, and welcome to what I was looking forward to all day long. We have the amazing Jacob Perlman in the house.
Oh, thank you so
It's
much.
so much more a warmer welcome than I usually get on this show.
Well, Jacob, I want to say thank you from the bottom of our hearts, from us and our viewers, because they love your SPX studies. Every week we've been doing them for a year. We appreciate them. They're great, and they're changing people's trading. People have had their set trades, and they're tweaking them and adjusting them, basing them on your studies.
And Jacob, you'll be happy to hear this. My 18-year-old son, who just got his trading account, is now doing one of your trades every single day.
I live on the West Coast, so it's a little bit harder for me. But when I get up early enough, I also do one.
Oh, okay. So if you get up and do one, what is your SPX 0DT trade of choice?
The Ironfly.
That's what I'm having my son do. I taught him one trade. It's his first complex options trade. I was like, at 9 o'clock every day, give or take 5 minutes is what Jacob says. At 9 o'clock every day, put this in.
The give or take 5 minutes is because our data collects every 10 minutes. So like I have to find the closest timestamp. You know, sometimes it's 8:57, sometimes it's 8:04 or 9:04. It is what it is.
Okay, and if you're doing that Ironfly, you're doing the $10 right Ironfly where you're collecting about $8.50 and risking about $1.50. What is the profit target? Because here we're getting it from the expert. What is the profit target you're setting?
I do 10 or 15.
Okay.
I've got him in at 10. So I've got him going in at 10. I'd rather baby
you know, it's nice, it's consistent. You know, you get a lose every once in a while, but the losers aren't that bad.
It only takes 2 days to make up for the losses, 2 to 3 days to make up for a string of losses. So
Right, because a loss is 250 and a win is like 70 or 80, so it's not that bad.
Yeah. Right, it's not bad. And I like that trade, and we've been doing it on our show, but when we go back and add up on our show, it's a little tricky because our show starts at 10 a.m. Central Time, and I think that's almost a little too late. Like, I like that trade. I like it for, 8 o'clock, like closer to 9 o'clock. But at 10 o'clock, I think it's almost a little too late because oftentimes, if you put it on early enough, you're all getting close to getting out of it.
Yeah, you're out by 10.
Yeah. So these are great for the open, or 9 between 8:30 and 9.
Yeah.
Long ago, I did a piece on if you slept in, what was a good trade, but I think it's worthy of an update because that was done on back when the data set was only like 6 months of data.
Okay, yeah. Just to put a pin in this, if you want to do a trade that can be done every day at 10 o'clock, or your girls,
the next couple of studies, we'll focus on 10 a.m. instead of 9 a.m.
Right. What should you sleep in?
Yeah, sleep in or live on the West Coast or.
Yeah, there you go.
Yeah.
Anything like that.
Oh wait, I do have one very important question. When is Burning Man?
Burning Man is the end of August, though. Actually, this year I may skip it.
What?
Mm-hmm.
Why?
Partially because I dislocated my shoulder a little bit ago, and I don't want to have to go and either baby it or re-injure it or.
Oh no.
Yeah, it is getting much better, but it's like it aches in the morning, and I can't do anything with strength that's out here.
Yeah.
Okay. What were you doing? What were you doing when you hurt your shoulder?
I was getting our cat out of a tree.
Oh no.
Yeah.
Well, good job being a hero getting the cat out of the tree.
Yeah. I had a little slip. I fell. I didn't fall to the ground. I fell a few feet and then caught myself. But in the catch, it just yanked.
That'll do it. That'll do it.
And it's tough. Shoulders are tough. It took my husband. He hurt his shoulder when we were docking the boat, and it took 12 months before his shoulder was back to normal.
Yeah, the orthopedist was like, well, at your age, 6 months or so probably to expect. I'm like, oh, thanks. Great. Thank you.
Yeah, it's long. It's long.
Uh-huh. But, well, and it also, the x-ray people got all scared because 10 years ago I broke my clavicle, and you can see that break on the x-ray. And so they were like, oh, no, it's all ruined. And then I saw the other piece. He's like, "Oh, okay, no, that's something else entirely. You're fine. That's just a heel scar."
Okay, so no surgery is required for this, right?
No. I'm good. It's healing. It's just gonna be a while because I'm not as young as I used to be.
Selfishly, we're happy to have you. I thought we were gonna miss you for a month when you were.
Yeah,
I'll take some time off because I still want my vacation, but.
Darn it, Jacob!
It'll be a more relaxing beach type vacation.
Okay, good.
Okay. All right, what do you have today, Jacob?
So today we're gonna also think about the zeros because I knew I had you two on, and I want to talk about zero DTA options and what I would call the square root time microscope, and how as much as zero DTEs feel very different to how people are used to trading, in a theory sense, they're really not. They're just the same thing, but zoomed in and sped up. And in that sense, it shouldn't be that different. And even in one particular sense, I think that the longer dated option markets are probably more changed by the zeros than the zeros are.
It's fascinating. I know we
So yeah, I'll see if I can make that a little bit more clear and explicit as we go. But so long ago, you only really had a couple of expirations in underlying, right? You had your monthlies, you had your quarterlies.
In the dark ages, that's when Jenny and I traded.
Yeah, exactly. I'm used to having Tom and Tony, who I make fun of them for being old.
Well, we started in the 90s. We were in the pits in the 90s. So back then,
the 90s is fine.
It was the dark ages.
The 80s.
It was. We accept the dark ages.
Anyone before to me, the dark ages of options markets was before 87.
Okay, there you go. We're after 87.
But before 87, before put skew, when things were just sort of, Black Scholes is probably exactly correct.
Yeah.
But people get more active. There's a lot more demand, and then the weekly started getting good activity, good liquidity, and now just every day we've got expirations that have really good markets and really good trading. And this you can do it every day. And so I want to get into today about sort of just how the theory treats these differently and why we would think they might come up. And sort of in some sense, the zero DTE's exploding popularity shouldn't be a surprise. And we'll think about that on the next slide, probably.
All right, perfect.
Yeah, Brownian scaling. So here we've got a picture. So what's going on here is this is a simulated Brownian curve. And then and it's a GIF, so at some point it is looping. But the point is that as we zoom in, it doesn't really look any different. And there's a technical sense in which this is the case. And it's called Brownian scaling. And it says that if you shrink a Brownian motion, right? If I take a big C, like a 1,000, so I shrink it. I have a 1 over 1,000 factor. I make all of my motions smaller and smaller. But I speed it up. I make it run faster by C squared. So if I shrunk it by a factor of 1,000, I'm speeding it up by a factor of 1,000,000.
Okay.
But if I do that, there's no change. That has the exact same distribution as the initial Brownian motion, right? What it does specifically, because it's random, won't necessarily be the same, but the probabilities of it doing any particular thing are identical. And so what this means, this is like the fractal self-similarity property. So as we zoom in, and then I have here just sort of a thought that if we were zooming in by, instead of a 45-day trade, we're doing a 1-day trade, that means you're zooming in by a factor of like 6.7. So right, that means that you bring in all your strikes by 6.7, you move your expected moves down by a factor of 6.7, and all of a sudden the model says that these 45 DTE trades and a 1 DTE trade are no different. Right, the Black-Scholes model is going to come out with the same pricing, where you have to bring the strikes in and such, but there's no otherwise any differences between them. And that this is not like particular to the Black-Scholes model, right? The Black-Scholes model is the simplest and oldest of them, but there's not really a way to get away from Brownian motions because we have this memorylessness and symmetry, and those are the only things that will fit with the efficient market hypothesis, right? The efficient market hypothesis says how you got here doesn't matter, only where you are. And the symmetry says you don't know if it's going up or it's going down, right? If you did, we wouldn't be doing math. And between those two things, you get that it has to be Brownian motions at the base of whatever your model is. The underlying randomness has to come from Brownian motions, and because of that, it has to obey this scaling factors. And so, oftentimes when we were doing our longer dated options, we'd say we want to get out at 21 DTE or early or something, right? We want to avoid this end chaos that happens, right? The Greeks explode, everything as the sensitivities get big. And that's because in a lot of the formulas, there's a factor of 1 over the square root of the time until expiration. That's just like, it's a thing that crops up in the factors. In fact, the reason it crops up is this Brownian scaling reason. That's why the square root is there. But so those continue to apply. And it's just that what the blow up means is different, right? If you were in a 45-day option and you thought that the blow up was happening 21 days into the trade, well, then if you're trading a 1-day option, and those are your new standards, right? You've divided everything by your 6.7, everything's working out okay. Well, you're still going to get a blow up, but the blow up isn't now right when you started. The blow up is now, 3 or 4 hours in, at noon, 1 p.m. right? And so we can really.
And Jacob, we say that all the time in the middle of the SPX pit when we're looking at those options. You know, if you're supposed to manage it at 21 days, that's probably a couple hours in. If you just take the whole time scale and shrink it down instead of 45, you need to be out 50% of the way through the day.
Exactly, right. The 6.71, right? So there's a square root factor, so it's not quite 50%. Isn't where you want to do it. It's like a square root of 2, but it's very similar, and you know, in a sense of the art of trading, you're not going to notice a difference. Right? If you're trying to do it scientifically, there will be a difference. But if
so
you're
what time in your brain would be 21 days till expiration?
So I've done a couple of studies on this, and I think that it's sort of 1:30. It's closer in. Yeah.
Okay.
It's going to be closer in because of the square root factor. It takes a little bit longer to pull up its effect. That's cool. But so in that sense, the theories and the models are all the same, right? We can just, because they're so much faster and so much more frequently, we get more occurrences. And so if you're an active trader trying to, thinking about your, return on capital per day, well, then the zeros make a lot of sense because you just don't have to wait as long for anything, right? If you're trying to make money over time and you're able to structure your risk in a way that's acceptable to you, then the zeros are very popular, right? It makes sense that why you would want them because they give you the same thing, but in less time. And
now, with some of your studies, we'll see a very big negative. If you no management, if you don't manage it, if you don't close it early, if you're not closing it by that 21-day mark or even earlier, it's almost like the 18-day mark. You'll see some big losses. Do you ever personally flip the cards and think if this is over time a loss, maybe I'll buy it instead of sell it?
Maybe I don't like the right. They wind up with a low win, right? You do have these big winners because right, but those big losses are because of the occasional really like large move rather than the like serial failures.
Mm-hmm. So you're waiting for like one big move. You're going to have loss, and one big move will bring back your losses.
Right, you'll have a big win to make up for all your losses, but to me, I don't know that emotionally that's a much less pleasant way to like look at your account every day, where it's like down. Oh, I hit a good one. Finally.
Emotionally, I like that. Emotionally, it's a bad way to look at it. Jacob, real quick, only because I'm getting a lot of these questions coming in from the chat. When you say 1:30, you're assuming our time zone. I'm assuming you're talking.
Yeah,
yes. Thank you. I just want to clear that up. Okay.
New Yorkers and Californians can adjust.
To me, 1:30 almost seems like too late to leave these on.
Yeah. I mean, I don't know exactly when it is, but it's certainly somewhere between noon and 1:30 might be pushing it.
Well, and it's funny because when I do the Ironflies and the zero DTEs, I'm usually out between like 12:30 and like 1. That's usually when my GTC hits.
Yeah.
But if you're doing the 20 deltas, or you're out much quicker. If you're doing the 20 delta, $20 wide, you're out much quicker. You can be out in an hour or 2 hours. Depends on the day.
Well, and the wider you're willing to be, the faster it'll come in too, right? Just because you're giving up less on your wings.
Yeah.
So what are the differences, right? I've just said that, in a theoretical sense, there's no differences. You look at the initial state of the options, you can zoom in and you'll see the exact same paths and it should work out the same. So what is different? And actually, I think this was an ironic, surprising result when I started thinking about it. But actually, the zero DTE options and the proliferation of more and more expirations changed the longer dated option markets more, right? It turned the zero DTE option markets into sped up, zoomed in versions of the old long dated option markets. But now the long dated option markets have a lot more flexibility in time rolling because, right, back when you only had a couple expirations, things worked by you put it on and then you had to wait until the expiration hit, right? And there was nothing in between.
Right.
And zeros are sort of the same. Market opens and there's not going to be an expiration until market close. So you've got this same period of just the market's playing out and you can adjust, you can manage, but nothing is expiring as we go. Whereas when you trade a 45-day option, all of a sudden, if you want to roll it out 2 days, you can roll it out 2 days. If you want to roll it in a couple of days, you can roll it in a couple of days. With your zeros, you can't roll in a couple hours. You can't roll out a couple hours. You can't say, I'd like to do a 1 p.m. expiration, please. And so in that sense, the zeros are now like a faster sped up version of what the old option markets were. And the longer dated option markets are changed in that they're much more liquid in a time sense than they used to be. You have a lot more flexibility in how you want to change your adjustments there, which I think is a really neat effect, right? You take in some profits, and rather than just closing it out and having to wait for the next expiration cycle, you can put on a fresh one, just a couple, move it out a couple days.
Yeah. Yeah.
So I have a question about individual products, because you do the SPX 0DT studies and they're wonderful. And we have all these strategies now for the 0DTs, but we have a lot of people trading options on equities, and those only have, and I say only have weeklies, but now they have weeklies. So they have the weekly expirations, and we have a lot of viewers who like trading the weekly expirations on these equities and not going out as far, but trading, weekly. And I'd be curious to know, if there could be any studies on, if you're going to trade weekly, when is the best time to put them on? When is the best time to roll? Should you put them on the Friday before the week, or wait till Monday? What's
idea.
better with these weeklies?
Yeah. That's a good idea, right? We have all these 45 monthly studies, and we have all these 0 studies. I should add in some weekly studies. You're right. That's a good question. I don't know. My guess would be that they are sort of, obviously they'd be some sort of splitting the difference. You get your faster speed, more occurrences, but also you don't have to spend, every 10 minutes checking in on your position. A nice idea. The other problem is it's not a problem, but if you guys see Dr. Data around the office, you should pester him, because I want more underlyings in our 0DT data set.
Okay. We love pestering people.
I'll see you tomorrow.
Well, I'm long distance, so all I can do is type at him. All right, Beth has moved us to takeaways so you guys can get to the good job. So the explosion in available and liquid expirations for options contracts has drastically altered the market, both for the 0DTEs and our sort of traditional contracts. And this is despite the fact that in the theory, because of Brownian scaling, there really shouldn't be hardly any change. It should just be zoomed in and sped up. But otherwise, like the probability of success, the profits, the return on capitals, all these things should line almost exactly. And we've had years and years of studies and arguments and telling people that what they should really be doing to try to get up is have more occurrences, that you can get more consistently get these long-term results with less variation if you just do more independent trades. I thought that the answer was we needed more underlyings, more uncorrelated underlyings, more foreign markets, that this was going to be how we were going to help people get this. But it turns out that the answer is we could just have 0DTE options every day. And now we've got occurrences all the time for people, which is a really interesting development. But it does require that you keep pace.
And we meet a lot of people on the road who, they only trade SPX. And they like to get in and out. And Liz and I talk about this. You're out at the end of the day and you don't have overnight risk going into the next day.
Well, it was funny, too, because even before the 0DTs, we'd meet people who would just wind up in the SPX. And now we've got I feel like the SPX 0DTs have exploded the market again.
Yes. Absolutely. Well, right, because this was the other, one of the things about why we liked IBR and these sort of normalized across underlying things is because otherwise the only real way to be a informed trader was to have an underlying that you were well versed in, right? If you don't have where you could know, this volatility is high volatility and this volatility is low volatility.
A very large market awareness of a certain individual product.
Right, which required, developing specialization and knowledge about these specific things. And our technique up until, or our educational approach up until now, is to try to help people translate your understanding of one underlying into another underlying by filtering your IVR or something like this to have them be more apples to apples, your beta delta risks, right, to try to have this comparison. And that to seem like the best opportunity, and still is a good way to get your occurrences up and have less correlation in your portfolio and diversify. But now there's this new alternate method of just trade things right as they expire every day.
Yeah, there you go. I love it.
We love it. And it's bringing so much business to the pit. We heard the other day, which people used to think the pits were dying. SPX pit is very busy. And we heard the other day that the firms are all hiring down there again for more traders for the pit because it's getting busy. So it's really nice to see this happening.
It is nice. All right, well, Jacob, thank you very, 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 very much for everything that you do. It was great to see your face. We'd love to chat with you again. And we're going to try to come on this segment again just so we can talk to you.
Yeah, kick Tom Tony out. This is better.
Thanks so much, Jacob. We really appreciate you. Have a great week. Have a great week.
All right, we'll be back in 90 seconds. Stay tuned.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Every day I do God's work here.
From the smart mouths at tastylive.
If you missed the live show, here's our cherry on top weekly recap.
You know, my first concert was when I was very young. It's quite embarrassing.
Anson.
How'd you know that?
I mean, I feel like everybody.
How did you know that?
Because who else was popular then in like the late 90s?
Oh my God, that's amazing. That was cringe. There it is, the song, yes.
Yes. All right, good luck, good trading. Let's go eat some roost.
Peace.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Tony Bat Batista, the John Jay College of Criminal Justice. Number 69, because it's one standard deviation plus one. And you know, I'm the Bat.
John McLaurin, Wisconsin, number 2, because I'm Beth's right-hand man.
Vanetta Logan, the Indiana University. Number 3, because that's how many shots of bourbon it takes to make it through the first hour.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Hello, everybody. Welcome back. I'm very, very, very excited for this segment. You know him. You love him. It is Scott Sheridan in the Scott Sheridan Studios. Ladies and gentlemen, please bring him in live.
Live from the trade desk. Here he comes. Hi, Scott.
Good morning.
Welcome.
I have to tell you that when I knew I was coming on with you guys today, I had to remember the most important comment of the day. When
the
referring
10.
to my wife, it's the 10, not the 6.
The 10.
Correct.
The 10.
Correct.
We love the 10. She's beautiful.
Right. So, and I
Tony.
haven't told her of the change that when I'm talking to the lovely women that I'm talking to today. So I'll have to explain to her later. I'll say she gets to watch the show and she's a 10 when you guys are.
She's a 10. I'd give her a 12, but it's only on a scale of 10.
But, so she shouldn't feel bad. We know how Tom is. When we were in Vegas, he told us we were a Bally's. What did he say? We were like a Caesar's 3, but a Bally's 10.
Throwing stones in the glass house.
Yeah. And Tom being the looker that he is.
So the other thing that, this is facts. We couldn't make this stuff up if we tried. We were on a flight with him one time, and Jenny and I were sitting directly behind him. And so the guy next to him, he winds up talking to this guy next to him, and he's talking about us while sitting in front of us, saying that, yeah, they're good looking enough that maybe they can do this for 7 years. 15 years later, we're still here.
Those are bad, but the worst one, he denies this, but I was sitting at the table when he did this, but he flat out denies. He says this never happened, and I'm not going to name the person who he was talking to. So there's a woman having breakfast with us. So when we originally started, we were over Wishbone, on Lincoln.
Yeah.
So we're having breakfast at Wishbone on Lincoln, and the waitress comes over, and she looks at us, she looks at Tom and said, "It is amazing how many beautiful women that you have working for you. Don't you have any ugly women?" And Tom says, "Yeah, her." Now, I'll tell you later who this person was. You don't want to mess with this person. I'm surprised she didn't flip her entire plate of food onto his lap.
Oh my.
As Tony would say. 100% factual story.
That is awesome.
Is Tom going to be able to pass the harassment test that we have to do?
Absolutely not. He won't even take it. Somebody will take the anti-harassment test for him. Not going to happen. Now, I would like to say what I think is really funny about our conversation from Monday when you guys asked me, I think, Liz, you asked me what I thought about the market. And I said, this doesn't make any sense to me where we are right now, given everything that's happening. Now, some people might say the news doesn't matter. And to me, at some point, it obviously has to matter, depending on, what it is. And then I asked you guys, I said pot odds to the downside. And I asked you guys, and you both said that, you think that we're going to have a down move. And I said that guarantees that we're going higher. And where are we now? We're like 30 points away, 35 points away in, SPX and the ES from all-time highs.
Vol getting smashed.
Vol getting smashed, but it's not 12.
No.
It's not 12. It's still, it was 17, 18.
VX is at 17.
Yeah, 17.
And I got to pause this for one quick second because I am remiss here. And I got to give a big shout out to Nikki because I apologize. I thought we were going to reveal you later. Otherwise, you would have gotten a big intro as well.
Yeah,
I thought there was going to be a big reveal.
Well, you could save his reveal in fairness because I'm going to leave and you're going to bring in the real talent and do Johnny trades. So when he does the Johnny trades, then you can say play some music and then you get the Johnny trades.
So I really thought you were going to be sitting quietly in the corner and we were going to reveal you later. Otherwise, you would have gotten a good intro too. So I apologize.
Nikki, I think you're the best on the network. I always say when Tom and Tony retire, when they're ready to go, I hope you take over for the morning show. We love you, Nikki.
Thank you. I appreciate that. It's okay. You didn't have to give me the props. It's like what my dad says, as long as I'm here, you'll always be second best. As long as Scott is here, I'll always be second best. So it's okay. It's all right. I appreciate it, though. Thank you, ladies.
So
yeah, we were sure. Sorry, I just had to interrupt because I realized Nikki was in the square. We're now like, what is it? Where there's the 4 boxes?
I'm usually supposed to like stay on the sidelines and not chime in, but I had to when we were talking about Tom insulting all the ladies of Tasty here.
Batistas can't stay quiet.
No,
Yeah,
but it is
that
hard
too.
for Batistas to stay quiet.
It
but
is
that's
really
okay.
hard.
And it's also hard for Tom. And the funny thing is, if he was here, and you know this to be true, if he was here, he'd say, "What'd I say? I didn't say anything wrong."
Yeah, exactly.
What'd I say?
Right.
You're like,
Because
Tom,
we
we were
called him
sitting
out.
behind you on the airplane. He's like, I didn't say that.
Yeah, no, he's like, yeah, that was good. I said you have 7 more years left. That's good.
There you go. There you go. The positive spin. All right.
Yes.
Well, why don't we do the top symbols, and then I will exit stage door right, and I will leave the real talent. You guys can go over Johnny trades.
Beautiful.
And then tomorrow, Johnny, I look forward to sitting down as your travel guide.
I'm very excited.
I
for
have
it.
the
Very
number 1
excited.
pick. I just hope you like it. If not, I got backup.
I'm
Okay,
gonna guess,
I'm ready.
Jenny. I'm just gonna put my 2 cents in. I'm gonna guess it's gonna be very cost effective.
Well, I'm not a billionaire. That's what you need to know, Scott. I'm
Wait a
not
minute. You
billionaire.
told me money was no issue.
Yeah, come on.
No, I didn't say so.
Oh, maybe. Wait, maybe I heard that. Okay.
This is gonna be Travel on a Budget by Scott Sheridan.
Listen, I dialed in on it. We'll see. We'll see what your response is, and then we'll announce it on air if you're willing to, if you agree.
If you're willing to.
Okay, yeah.
And then
yeah,
he's just
that's
gonna slide a piece of paper across the desk to let you know how much it's gonna cost.
There was actually talking about sliding a piece of paper. Great story with that. Somebody was telling a story to me about Bob Parsons. It was somebody who actually works at it. So Bob Parsons is PXG Golf.
Oh.
So it's Parsons Extreme Golf. That's PXG.
Okay.
So Bob Parsons is a Marine who then went on to start GoDaddy and, billionaire.
Yeah.
I mean, made a bazillion dollars. So he wanted to start PXG, but I guess getting golf club designers to come over is a really difficult thing because like your business isn't going to make it. So why would I leave Titleist or Ping or, whatever the big names are?
Yeah.
Callaway.
Yeah.
So he knew the guy he wanted. He got him and he said, well, look, if you want me, you need this other guy. And he said, I don't think he's going to come, but he was able to convince him. Then he knew that he needed a pro because you can't make it on tour. You need
You got to be
players.
a sponsor. Yeah.
Yeah, you got to have tour players to do this. So, oh my God.
My God, you're doing the Tom thing.
No, I'll think of what the guy's name
He's
is.
sitting in his seat, and now you're
I'll
banging.
think of what his name is. I'm drawing a blank to his name right now. He's from Iowa. This pro's from Iowa.
Okay.
He's a little bit older. Zach Johnson. So I think it's Zach Johnson. So anyway, he caddied at the club that Bob Parsons was from. He's Iowa. He's like, okay, he's going to be my guy. So the story, as I'm being told from somebody that works at PXG, was Bob Parsons asked him to go to lunch and said, look, I'm starting this. I need you to come over. You're my guy with this. He's like, look, I'm hitting whatever I'm hitting. And golfers superstitious. Like you don't change anything. If it's working, you don't change.
Mm-hmm.
And he's like, I'm sorry. Really appreciate everything you've done for me, whatever he's done for him in the past. He's like, I can't do it. Allegedly, Parsons went like this, a piece of paper, slid it over.
Blank check.
He looks at it. He's like,
I'm in.
I'm your guy. Yep, I'm your guy. So get me a set of these things and let me see what I can do with them. So,
That's a good story.
all right. Slight change today. See if you can figure out what it is.
Ooh, new graphics.
Ooh, I love a good mystery. Hit us with it.
Top 20 symbols going through the system. First 40 minutes of the day. No broad-based indices or futures. On the off chance that Tom has internet where he is lounging right now and he is watching. I hope he's not.
Oh,
Number
he's
20 for Tom, Netflix at a 39 for everybody else. Tesla at a 29. NVIDIA at a 1. The LTR at a 15. FedEx at a 24. AMD at an 11. Coin at a 27. HIMS at a 39. Hood at a 16. Apple at a 16. Amazon at a 7. Circle at a 79. Google with an L at a 28. SMCI at a 12. TSLL at a 37. IBIT at an 8. MSTR at a 6. MU at a 34. Microsoft at a 1. GLD at a 27. And number 20 for Tom, Netflix at a 30.
What is TSLL?
It's a Tesla leverage. I forget if it's short or long.
Why would there ever be anything short?
2x long.
Why would there ever be anything short?
You can't sell anything. Come on. I've been trying to tell you guys this for the entire V bottom.
More from you that you would say, of course it's a long, because you want extra leverage, because just a bull market isn't good. You need to have
you need to. Why have 1x when you can have 2x?
Or 3x.
Or 3x, 4x,
there
5x.
There are 3x's. You got to go for the 3.
Come
on.
Go
for the 3.
It's easy.
Did you ever see Brad Pitt? What was the he was in World War II where he's
Fury, or no? Are you talking about?
He's going into Germans and they're trying to get in World War II and they're in the bar and he's
Inglourious Bastards. That's
Inglourious Bastards.
classic.
And then he signals, but he did it. I think whatever
with the 3 like this, and
they knew that he was. But Liz, I'm with you. You know a traitor when you see this.
No trading. That's a 3.
Right.
That's a 3. That's right.
All right. Thank you, Jenny. I'm looking forward to our meeting tomorrow.
So I have a meeting with Dean at 9:45, and then the show 10 to 11. What time would you like to meet?
Ooh,
come grab me whenever.
But this is a good.
I will move my schedule.
Good answer, Scott. Good answer.
Enjoy the rest of the show. Now you go. Now play some music. Bring in the real talent.
Play some music for me. The Johnny Trades. There we go. Good morning, ladies.
Now this is the segment we've all been waiting for.
I know. I'm excited.
You love him. You're doing a great job. You might be tanner than your father right now.
I did get a little sun this summer.
Amazing Nikki Batista. You do get tan, don't you?
I'm excited for this one because I got to give you guys 2 crab trades here. My favorite trade. Nice. So we're going to set these up. I got one that'll play into, if Tom is listening, he might be interested in the first one. The other 2, we're going to get into the spicy trades, a little bit of my favorite trades, the crab trade. So you guys ready?
Love it.
I am ready, and I'm happy to see the crab. Sometimes we forget about it, but we haven't done the crab in a while.
Good. Well, I have 2 for you. The first one, though, Delta Airlines, you got a position yet?
We're short puts, but we could change it.
No, that's exactly what I'm looking at here. United, Delta, both of them are kind of the highest IVRs on the board. You got a 37 IV rank in UAL. I did a trade in there last week. In Delta, you've got 37 right now, too. So they've had some nice price action here. I'm selling the 50 strike puts in July. In the July monthly expiration, you have earnings coming up on the 10th, so it is something to consider. But this is kind of like a synthetic covered call type position. Only uses about $900 in buying power versus buying stock, selling the 50 strike call. So a little bit more, a little better use of capital in our Johnny Trader accounts here. So if you guys already got this on,
we have the 45 put. I know you're a little bit more aggressive with the in the money, the in the money. So it's a synthetic covered call. But we're great minds.
I like more buying. I like more credit potential, more profit potential. I kind of like that better. We need to move our put up.
Yeah, you could roll it up. I figure into earnings, take a little bit of a directional shot here. Why not?
Sure.
Stock's kind of lower end of where it's been trading. 52-week low in Delta is sitting around 34 and change. We're trading at 48. The high at 70-ish. So we're right in the middle there. I think buy the dip a little bit.
I like it.
Very nice. So I'm 1 for 1. That's it. This already starting off better than a normal Tom and Tony Johnny trades here.
Well, we have it on. So I'm dying to see the crab trade again because I forget about it. We've kind of foregone the crab and gone with diagonals recently.
That is, I don't blame you. The diagonals are great too. This is just a spicier way to get it. To get some directional
if you move too
exposure.
much, you make money on the diagonal, where the crab, you could end up just kind of a scratch if it goes too far.
Yes, you have the upside or down, depending on if you're doing calls or puts. You're essentially selling the upside tail. So if you get that big move to the upside here, I'm looking at an upside call crab trade here. If you do get a huge move to the upside, you give up some of that profit potential. But if you think the market's going to continue higher, or maybe even if it stalls out but stays at the higher end of where we've been trading, the 6,000 mark, you gotta figure Apple catches a little bit of a bid. This stock has been just a pig for most of this year, trading around 200. This has kind of been a magnet. I think if you play this to the upside, the 205 call in August, so you buy that call, that's your upside gamma play here. You sell the 212.5 calls in the July 18th monthly expiration. So you're selling about $2.50-ish cents of premium there. If you go and buy the 222.5, you cap the risk on the upside at about $250 extra, other than the $5 that you're buying this for. But you're selling about $2 of extrinsic value here. So you got some positive decay in the short term, some short volatility. Even though IV rank is relatively low here, it's kind of a play for an inside/up move in Apple, for it to break out of this kind of 200 to 205 range, maybe see 210 or 215 in the next 20 some odd days.
So I like the crab in Apple. I like the crab in Apple because Apple hasn't gone anywhere. It's not like we're looking at Circle that's like up 40 points every single day, right? It's stayed around this range. So that makes sense because you're getting it less expensive than a diagonal.
And I like the crab as a durational trade as opposed to earnings. You know, earnings, you're not having that risk of like, a 2 times move and it's going through your crab. I like it for a durational trade, which we should start bringing the crab back for durational trades. They're nice.
I agree.
Yeah.
What cycles are you using? You're using regular July and August, right?
Yes. So you got a little bit. The short term, the July expiration is kind of your buffer, right? So if you get a week or two where Apple goes lower or maybe chops around, that part of the trade kind of it offsets the decay that you see in the long option in August. So you have kind of a 1 or 2 week buffer here for the stock to start moving a little bit higher.
And can I tell you what else I like about this? Because I actually just pulled up the trade, which I don't even think this is in your vocabulary. This is almost, Nikki, an earnings setup crab, because the one you're buying is in August, and that's got the earnings cycle in there. So the 1 year long should actually continue to inflate.
Yes, and at least stay bid, because volatility will probably increase.
Yeah.
You have volatility, IV rank at 16, so that's another piece that's kind of working in your favor. Yes, exactly.
All right, Nikki, nice. 2 for 2.
Sweet. So my last one is for earnings. I know you don't like the earnings ones, but this one's pretty interesting. Because you have Micron. Earnings after the close today, the stock has had a really nice rally. It's basically doubled from the lows in the tariff tantrum, as we've been calling it. I'm going out to August. I'm buying the 130 call. I'm selling 2, and if you could do this naked if you wanted to. I'm selling 2 of the 140 calls in the weekly expiration. So you're selling about $2.50 of extrinsic value into the earnings expiration. So this week, you've got about a break even that's at around 152-ish, just based on the $2.50 of premium plus the $10 of potential extrinsic value that you're getting on the upside. So you're kind of buffered if there is a huge move to the upside. Obviously, you know, we've seen those before, so there is that sort of risk. If you want to cap that risk, you buy the 150 call, and it gives you, max risk is probably, $100 to $200 into earnings if you have an absolute explosion to the upside. I think this is an interesting one.
I was going to say, Nikki, it's interesting. I'm glad we're talking to you about this, because I just pulled up your short strikes that are in the 2-day, and you're significantly outside the expected move for the cycle in that. It's saying 137, it's expected move, and you're selling the 140. So you're 3 or 4 strikes outside the expected move, which puts us as a high probability trade.
Yes.
I have a question. So it says 556 credit, but you're actually paying 556 debit.
Yes,
right?
I'm sorry. That's my fault. It's a debit. 556 debit.
So your risk is 556 on this if you want a bullish trade in Micron, but I have a hard time putting in a bullish trade in Micron when Micron has literally doubled in the last 2 months. I'm a little more, I may put on a crab to the downside. I don't know.
You certainly could. So this trade, it is bullish, but if you get kind of a sideways move here, that's almost your best case scenario. Like an inside up 5 points would be like the perfect setup. If you get a 5-point down move, this is probably like a scratch, maybe a small losing trade. The risk is really an expected move to the downside, like your 10 or 15-point downside move is where the risk is here.
We've had so many bad earnings in Micron, right? Like down on earnings, and now the stock has doubled. It'll be curious to see what kind of earnings they have to have in order for it to keep going higher.
I like it. If you want to do the downside, you could do the similar setup. You go, the 125 in August, you buy that put, and you can sell like the 115s twice. And then if you wanted to cap your risk, you buy the 105. It trades at about $6, $6.10. It's the same sort of setup. And certainly, if you think it's an inside/down move or even at the expected move to the downside, this will be a home run trade for a relatively small amount of risk.
Right.
And if we get an inside move, like $4 or $5 to either side, we probably both make money.
Right.
Yeah.
The crabs are nice because you have, greater profit potential. It's tough. Liz and I talk about this all the time. If you're just, selling puts for $1, selling puts for $1, selling puts for $1, and you make $1, you make $1, you make $1, and then you lose, 10. 10. Yeah. It's tough on earnings. So these crabs are a nice alternative.
That's my thinking exactly, ladies. I'm with you.
Okay, so my question to you, Nikki, is because I watched last call and I was watching you and Mike. Mm-hmm. So you had the downside in FedEx and he had the upside, right?
Yes.
I know. How'd you do on your FedEx trade?
I still have it open. So I have a butterfly into the end of this week. And this is probably a good question for you, ladies. If you had this on, so I am long in FedEx. I have the 225, 220 long put spread. I'm short the 215, 210. So this is it's a butterfly that's like
skip strike.
Yes.
How much have you made? How much are you up?
So I'm up $135. It's currently trading at $2 right now. I'm in it for a small debit because I started as a broker wing butterfly, bought in the risk, and so I have this on for like a 60-cent debit. So I'm up like $140.
He'll be worth $5 at the end of the week. He'll be worth $5.
You have the 25, 20, 15, 10 skip strike.
Yeah.
Downside. So you need it down a little farther. So it didn't go down.
He needs it to stay right between the 20 and the 15.
Yeah, the 20 and the.
It's trading 2023.
So it's rallied a little bit here.
Yeah.
Because we opened down like 10, 15 points. Yeah.
Yes. I kind of think sometimes when we see these down moves on earnings, we get a little continuation the next day.
Yeah. That's what I thought, but the stock is up $5 from the open today.
So how much is it to buy back your short put spread? How much is that short put spread?
Oh, I could do that for 30 cents.
Yeah.
It's a tough decision. You got $100 on the table.
And then you have $100 you can take it off, or you're just going to dump more money in it with the hope of making more.
Yes.
So I like to let it ride. I'm just kidding.
I like to let it ride too. I want the $5. I don't want the $1.
I know.
I'd probably buy back the short put spread for 30 cents. That's probably what I would do, and leave the long.
All right.
Yeah, the short put spread is cheap.
All right, I'll do that. I'll buy back the short put spread.
Yeah, because
it's at like 20 cents.
You don't have to. Yeah, for 20 cents, why leave it on?
Yeah, I agree with that. And then hopefully tomorrow and through the end of the week, we get a little bit of like a 5-point down move back to kind of the low.
So yeah, it's going to go straight to, it's going to pin 217. Do you know why it's going to pin 217? Because that's my favorite number. Anytime I see a 217, I trade it.
Okay, perfect. I'll take that.
That's where it opened. It opened
That's where it opened, 217.
Did you guys play it or no?
What'd you say? We did not. Because we were on the trading floor yesterday. It was hard to put an earnings trade in. But
how was that? Was it fun to be on the floor for the open? I was expecting more like craziness, but I know it's not the same.
We can't even explain this, Nikki. We were in front of the massive screen, and the guys behind us, we were like, "Where are the trades? Where are the trades?" They're like, "We're pitching a shutout. No trades came in for the first 6 minutes."
Wow.
So, but I will say, Nikki, like there are plenty of SPX trades going on, but if they're less than 250 contracts, they just pair electronically. The only orders come into the pit are bigger orders, and it took maybe a minute or two for the bigger orders to start coming in. Minute in, we start hearing the brokers yell the big orders, but then they're divvying them up, dividing them out. The trades are getting posted, so that there was a little delay. It wasn't like 8:30 wild with the big orders from the brokers.
Well, and they had kind of warned us of that. The SIBO Crude kind of warned us, being like, because on the trading floor there used to be an opening rotation, and it used to be wild. Like things would open and each strike had to open, and that's what Jenny and I are used to. Here, it's pretty much automatic, and it's not as crazy as you're picking the market for each strike. So it is a little bit more subdued down there, but there is a lot of action. I mean, normally, like when we're there during it, the opening bell is a little bit more subdued than it used to be.
Damn.
I want to say the first trade that went through, maybe it was a 700 lot. So when you've got one broker dividing 700 contracts between all these traders and then trying to get it posted, it took a while. It took a few minutes.
It took about 4 or 5 minutes. Yeah. Yeah.
Damn.
Anyway, thanks so much for coming on today, Nikki. Liz, it's almost 10 o'clock.
I know. I'm out of here for the rest of the week. All right, everybody. Nikki, thank you so much. You're doing a great job on the morning show. I will be tuning in tomorrow.
Thank you.
So say nice things.
I will.
All right, everybody. Good luck with your earnings trades. And I do like the crab. I'm glad we brought it back. Should we end our show how we usually do, Jenny? So Nikki,
sure.
we say at the end of each show.
I want to say good luck, safe travels. I'm having Glenn on tomorrow, TP on Friday. We are all thinking about you. We want updates from Mayo Clinic.
I will let you know.
I want updates.
You'll get updates, whether you like them or not, Jenny. You get them. All right, everybody, remember to trade small, trade often.
Laugh with us, learn with us. And watch the Liz and Jenny show. Thanks so much, Nikki. We'll see you all. I'll see you all tomorrow.
Peace, ladies.
Hello, everybody. We are back. It's another Rising Star session. Looking forward to this one today. Jim, welcome.
Thank you, Tom. I'm glad to be here.
To give everybody a little bit of background, Jim's been trading for 44 years. So that's my, that's what I started.
Not the first rodeo.
Yeah, I know. 44 years is kind of the beginning of my career too, and kind of 1981-ish. And you are a physics professor at Boston University. And as you were telling me before, you've been there 36...
I've been there since 1988.
Okay, so 36 years.
I was hired as a tenure professor, and I was the youngest one in physics at the time.
I love it. And before that, you were at Harvard and blah, blah, blah. And so the tie-in there, and the only reason I bring that up is the tie-in there is that we're always promoting Tasty as this a little bit different approach to finance, more probabilistic, more quantitative, more statistical, and I think kind of it.
I would say a lot different approach. There's a lot different approach.
A lot different approach. And you've been a Tasty trader now probably over 10 years.
Yeah.
And we have a lot of similarities in the sense that, we both traded during the 1987 crash. We both learned a lot about markets and trading, over that period of time. I think we've changed a lot of our methodologies and things like that. But what does first of all, as a physics professor and for doing it for as long as you've been doing it, you told me before, some of it's teaching, but some of it's research.
Yeah, so we are a research institution, and I live for that kind of stuff. I work at the CERN Large Hadron Collider. We're colliding protons, looking at the smallest distance scales that have ever been probed. We discovered the Higgs boson, right? That's the origin of mass in the universe. And
I only know what I know from Big Bang Theory, so you have to be. So I'll give you a couple of grades here.
And so I just have to say this because I'm so excited about it. Now I'm working on the dark energy spectroscopic instrument. We're in the process of measuring 50 million galaxies to make a 3D map of the universe and figure out its equation of state. Why it expands the way it does.
That's
against the pull of gravity. Very excited.
That's very cool.
Yeah.
I don't think I fully understand it. I think, I kind of wanted to go down the quantum computing path with you, but then again, I don't feel like I'm ready to have that conversation yet. But super interesting. So how much time do you have to actually trade?
So I try to streamline. As you know, it could be a full-time thing, and I'm immersed in my research and teaching, so I have to kind of pick and choose. So this is part of the reason I wanted to have some disciplined approach where I would do the same thing on each trade and not have to think about strategy. Just why I just want to make it routine. And that's why I decided to concentrate on one product, and I wanted something that is around us all the time and we think about, and that's energy, and it seems to be always volatile, which the option trader
Well,
wants.
let's go back a little bit in time and think about kind of before we get into your current story. Talk to me about like what have you been doing for the last 4 decades as a trader, investor? How have you been?
So I was trying different things. It reminded me once of a story I heard you tell when you were on the floor. And the story was, I don't remember the detail, but you would do something regularly with a friend of yours. And you said it worked and worked and worked. It always worked until it didn't.
Yeah.
And so for me, I ended up selling puts, very low deltas, and it worked, right? Until it didn't, right? And I learned, very quickly that it's far more risky. It's a little bit counterintuitive. It's far more risky to have a greater number of contracts at lower delta than a small number at high delta.
Size kills, basically. Size kills. And it always comes down to the number of units. And I think that is a lesson that every trader learns.
And CL is big. It's $70,000.
No,
contract.
Yeah, you're talking about futures. We're not there yet.
Okay.
But we're just But I think every trader at some point early on in their career learns that, how we like to say on the network how big small really is.
Right.
And it is getting through that challenge, making it through that hurdle, whether it's the crash of 1987 or 2000 or 2008, whatever it is. Learning that because most of the time puts their schmutz and that's it. So you go through this process and you're trading. I mean, you've pretty much been trading derivatives going back for almost 4 decades.
Yes.
Yeah. And so, I mean, the complexity of derivatives, the models behind it is, I would assume that part's relatively simple.
Yeah. So I mean, think back to the old days. It was pretty hard. So I had to go and buy the Wall Street Journal, and there were the tables of options in the back, and they couldn't print everything, but only the big ones were there. And by the time I got that information, it was old, read up. So it was hard.
Yeah, yeah. And then we start building pretty cool technology in the early 2000s, and then obviously Tasty comes along, and all of a sudden, at your fingertips is very cool technology, really simple to use, and all the data and everything is right in front of you.
Right.
So now that kind of opens the floodgates, so to speak.
Right.
And you can pretty much do anything you want to do.
Right.
And in the end, most of your success has been since you gravitated towards futures and futures options. But before that, you were mostly equities, you think, or no?
Yeah, mostly equities and options on equities. I would say is I started out like everybody would, dabbling in stocks, and I chose stocks that I felt I knew something about, like computer companies, for simple, products that I use.
Right, sure.
And high-tech things. And that was fun. And then I quickly learned that, there's something called an option, and if you own that stock, why not sell a call, and boost your return a little bit.
Right.
And, from there, it just got deeper and deeper into options. And now that's all I really do, except for some things maybe in the retirement account that are more conservative.
Right.
It's all options.
Primarily, your trading now is, I mean, obviously you're indifferent to options on equities or options on futures, but you're primarily trading options on futures, and you're also trading the futures contracts when you need to when you need to flatten out from an assignment or a settlement.
Exactly.
Okay.
And especially if I come to something that's in the money and I'm rolling it at the last minute, there might be a spread of even a couple pennies that I don't want to pay. I'll let it expire, and at the second expires, I'll zero that position by buying or selling the contract.
Sure. I'm just going to guess, but I'm thinking the challenge of being successful as trading was really important to you, because you've been kind of pretty passionate about this for a long time. Is it the competition? Is it a game? What is it?
it's the competition, and it's the the motivation, really strong motivation to succeed.
So the last 2 years, you've kind of honed in and moved your strategy to really focus on trading strangles in /CL, which is crude oil.
Correct.
Crude oil is probably one of the top 3 most active futures options contracts.
The /ES and /NQ probably.
/ES/NQ, and at this point, sometimes you get some pretty decent volume in 10-year notes and ZN and ZB and gold.
Yeah.
But among those, depending on how hot crude oil is, it could be number 2, it could be number 4. It's in the team picture, okay? And you've decided, like, what's the reason?
And amongst those that you mentioned, crude oil is subject to so many world events that can shake the volatility, and that's what we want as a trader. We want to see volatility.
Yeah,
because that creates opportunities.
Yeah, I've probably said that.
That's what I learned from you.
I've probably said that 10,000 times.
No, you have.
And crude oil's been, I mean, let's face it, for the last couple of years, crude oil's been in a relatively narrow range. I think, after the kind of the whole meltdown crash in 2020 when it went negative and all that stuff, I mean, we've essentially, or was that 2021? It was 2020, I think.
It was the first year of COVID.
First year of COVID, yeah. Ever since then, crude oil's pretty much been in that range between, let's call it high 60s to low 90s. And so it's been relatively range bound for almost 3 years now. But first of all, why crude oil? Liquidity?
Liquidity and volatility.
Yeah.
And it's, every time I drive by the gas station, right? If I'm holding, there's a gas station, gas pump prices seem to react very fast. If I drive by the gas pump and I see the price per gallon has gone up and I'm holding a long position, I don't even have to look at it. I can just smile. That makes me happy.
Well,
but it's all around us is what I'm trying to say.
Yeah.
And energy is so much, and it seems that no matter how much oil there is, we will find a way to use it, and there's, the demand will never dry up.
So you're trading CL, mostly options, but the interesting thing about what you're doing is you are trading almost exclusively Monday, Wednesday, and Friday short-term options.
Right. So part of the reason for this is if I zero in on one product, I can't trade it once a month, right? Because there's just not enough trades in the year. So I need to do every trade. Now I got 150 trades.
150 trades
a year.
A year.
3 times a week. Okay.
Yeah, 3 times a week times 50 weeks. Yeah. Or you have 150 expirations. You could have a lot more trades than that, technically. Yeah.
Yes.
Yeah.
150 expirations.
150 expirations. Yeah.
Counting some that aren't there for holidays and.
Yeah. Futures. Only the index options have a daily expiration. All the other ones have. I mean, not all the other ones, but some have Monday, Wednesday, Friday, like crude oil.
Right.
And futures options are a little bit different than, let's say, like cash settled SPX options or something like that, because they settle into the future.
They settle into the future, and they expire at 2:30 Eastern.
Right.
And the platform is not going to reflect that until the next day, probably at 5 o'clock in the morning. So you have to know what has happened at 2:30 to know your position.
Right. The 2:30 Eastern is 1:30 Central. Yeah. And so it's a little bit different than you're used to. Like these are what we call these, like the know-how, nuanced know-how.
Right.
With trading futures that are expiring that day.
Right. And then if you look out at subsequent months, they will have some different price, right? There could be Fandango or whatever.
Yeah. I mean, the most of the time crude oil's in contango, but sometimes, which just means that prices go up into the back months, but sometimes it's in backwardation, which means prices go lower. But Monday, Wednesday, and Friday usually it's pretty close to the same day.
I think we're in backwardation right now.
Oh yeah?
Yeah.
I don't really look at Monday, Wednesday, Friday type stuff. I mean, how's the volume in there?
It's good. Sometimes when I go to set a position, say, at Sunday night at 6 o'clock when they open. I'm picking Eastern all the time.
Yeah.
So they open at 6 o'clock. Sometimes the spread on the options is a little bit wide for me. Then I'll just wait.
Yeah.
Either do it before I go to bed or just wait until the next morning.
Yeah. Have you had any difficulty with fills?
I have not. So if I'm in, when I go to do a roll, if I'm in the money and I have to roll, I'm patient with it. And if I don't get the trade, I'll let it expire in the money and then I'll correct that with a future purchase.
Jim's trading a $50,000 account. We're just going to approximate a $50,000 account. And for the last, I think it's been the last little over a year, you have not had a losing month.
No.
Yeah, it's actually longer than that. I can't.
Right, it goes back, but I only kept a real detail of it last year. The previous year was a positive net, and over the 12 months.
The reason he's on the Rising Star segment is because the last 12 months, and 12 months is a pretty good. There's a lot of statistical significance to that. I mean, 150 expirations on Monday, Wednesday, Friday over a 12-month period is something that's important to us, and because it's statistically significant. And essentially, you've been trading naked short strangles.
Yes.
That's it.
Yes. And the only adjustment that I would make on that is you mentioned the range 60 to 80 or 60 to 90, whatever. When we get in the lower portion of that, I will skew the strangle, right, so that...
Give it a little long deltas?
Yeah.
So,
so not symmetric anymore.
Okay, let's get into details now, because people are really interested in the details. So, first detail, what delta do you start with?
Okay, so I have set up my routine such that when I take the trade, I want to pick a strike plus and minus, which is $1 per day to expiration. So if it's a half a day or 3/4 of the day, I have to kind of interpolate that a little bit.
Yeah.
As you know, the strikes are because in quarter units. But typically if I'm doing Sunday night for the Monday expiration at 2:30, I'll take the strikes plus and minus $1. Now what that does for me is I don't have to pick the delta. The volatility is picking the delta for me. If the volatility is low, that's a very small delta. But if the volatility is high, that's a big delta. And that's just exactly what I want.
So if you're doing it on Monday afternoon for Wednesday, you'll go 2 wide. If you're doing it on Tuesday for Wednesday, you'll go 1 wide.
Exactly.
And if you're doing it on Wednesday for Wednesday, you're probably like 3/4.
Right. And if I didn't get around to do it until Wednesday morning for Wednesday, I might do a half, right? Because it's expiring in a
So what does 1 point out of the money usually bring you? Because I'm just not familiar with the zero.
Yeah, so one point out of the money is typically going to bring $200 per
1 lot.
Yeah, that's both sides together.
Yeah.
So that's $600 a week. That's $30,000 a year.
That's $1 on each side.
Yes.
Okay.
But it might be asymmetric.
It might be asymmetric. I got
$1.25 and 75 cents.
Got it. So you don't care about that. You're just going to go your $1 on each side.
Right.
And if you feel like it's really cheap, really expensive.
But when I say $1, it's a coincidence that $1 in strike price is approximately $1 in premium. Okay. That doesn't have to be. There's $2 that are on the table here.
Right.
One is the strike price, and the other is a premium collected.
Right.
And those are two different things.
Right.
Coincidentally, they're about the same.
And we're talking about the full options, not the micros. These are the minis, and these are the regular standard, most actively traded options. And you're doing them day of or day before. The max you can be is technically 2 days.
Yes.
Right. So we won't talk delta because you're just talking the distance. And you're talking the amount of money you take in. And then, in general, now you said, well, I take in about $2. And what have you been able to keep of that $2?
So that $2 would be $30,000, right? That's
Well, all you're doing is $2.
So let me tell you the answer. So $2 Monday, Wednesday, Friday is $600.
600.
That's 50 weeks is $30,000. I don't take in 30. It didn't work every trade.
No, of course.
Okay, but I took in about $18,000 on the year.
Okay.
Of that.
So
there's
that's about a 40% return.
Yeah.
A little less than 40.
No, it's more than 50. Or return on the 50.
On the 50, on your net lit.
Exactly, 40%.
Yeah, exactly, 40%.
But that 50 was never at risk.
No. Okay. But how much capital are you using on a per trade basis?
So, as you know, that's dynamic. You know, it depends on. Okay, so but it's roughly $5,000 to $7,000 per.
So this is a one lot then.
Yeah.
One
One lot.
Yeah.
So this year I'm probably going to go. I'm thinking about going up to two.
Two contracts. Yeah. See, what's interesting about that is that your win percent is much higher than would be normally for other type of trades that we do. Tell me about what's your worst loss in the last year?
A few hundred, I would say.
Yeah.
But not thousands ever.
Yeah. I saw the results. They're really interesting. And what would you do if there was some kind of an outlier?
If there's some kind of an outlier, I would keep rolling for credit and keep going, right? I think with somebody like,
when you say keep rolling,
okay, so let's say
like you're gonna roll on Monday and Wednesday.
Let's say I have my strangle.
Yeah.
Oil shoots up.
Yeah.
Penetrates me on the upside.
Yeah.
I roll a little bit higher, and out 2 days, it does it again. I roll again, it does it again. I roll it again.
Right. So you're gonna
eventually I catch up with it.
You're gonna roll from Monday to Wednesday, then from Wednesday to Friday if it keeps going against you.
Yes.
Okay. But are you gonna move when you roll? Let's say oil's going higher, so you're rolling. You're protecting. You're worried about your call. That's why you're rolling. What do you do with your put side? You roll it up too.
Yeah. So I roll that up. So the roll is a net credit, but that credit is from something that was in the money, which by definition, if I kept the same strike, it would be worth more further out in time.
Yeah.
So usually I can go up in strike.
You can always roll for a credit in the situation you do it. You're always rolling for a credit.
But the credit I count is both sides because the put has expired worthless in this example. And so now I can put on a new put. And so the credit that's important to me is the new put plus the new call together has to be better than the old call that was in the money.
Yeah, as long as you stay really disciplined about moving that put so that you're controlling that. Otherwise, you're just going to be making short a future a lot.
Right.
Either up or down. Because the one problem with zeros is that your delta is going to go from, basically 50 to 0 in like 2 ticks.
Yeah.
And so you're going to have to move,
I mean, it's a fair question to ask, how could this go wrong? Right? That's a type of question we should ask all the time. The way it could go wrong is if oil kept moving very deeply in one direction.
Any extended move.
Yeah.
Any extended move, any day of the week in oil.
Yeah.
Like where it goes wrong is when you get like the average daily expected move in oil. I'm not sure what it is, but it's less than a point, isn't it?
Far less.
Far less.
Yeah.
So what is it? Then what is it? About 60 cents or 65 cents or something like that?
So if you look at the crude oil chart of the last year, and look at the steepest parts, the steepest part might go up $10 in 14 days.
Yeah.
Okay, but the average is, so that's 70 cents, right? So that's on a steep part of the curve, the average is much less than 70 cents.
Yeah, but we've seen moves of, $2.50, $3,
On a single day?
Yeah.
Sure.
Yeah.
I think the biggest one last year was something like 3 and change on one day.
Yeah.
And that kind of looks dark for a little while, but then it fixes itself.
Yeah. That's the risk in this particular trade.
Yeah.
But what you found over the course of last year, even including the $3 move, is that the majority of time it stays within, within a reasonable range. So, kind of, is there a profit target to close it early, or is it always just let it expire?
I just let it go because, this to close it, if it's only $200, right, in that strangle, to leave 20 cents or 50 cents on the table is a big percentage of that.
Right.
So I don't want to do that.
But I would say that the majority of times that you put out a position, one of the sides is going to be in the money. Is that true?
No, majority of the time is not in the money.
Oh, really? Okay.
That's because in those 2 days,
yeah,
I got $1 of cushion per day, and oil doesn't move that fast.
Okay. So you're saying the majority of days you don't have to do anything?
Yeah. I would say roughly, we could count them, but roughly a half a dozen days, there were moves that were bigger than that, where I was in the money and had to do something.
That seems like it's such a small percentage. That's kind of crazy. I wonder if that's like historically the way it's been, or if it's just that way for the last year or so. But either way,
okay. So I'm the first one that would be very cautious about saying that just because oil behaved that way last year and the year before and even the last 5 years, doesn't mean that it's going to behave that way next year. Right? We have to understand that risk.
So you have to be available at 1:30 every day.
I have to be available now.
Right. So you've got your schedule so that at 1:30, when there is when the crude oil market closes, you have to flatten out that position.
Yeah, but most of the time I just have to look at it and say, oh, I'm within this triangle.
Sure.
I'm done.
But you have to flatten out the position if one side's in the money.
Yes.
And then when do you put the next trade on?
I'll put that next trade on. Usually I'm busy that afternoon, and it closes at 5. As you know, I keep talking Eastern, 4 your time.
Okay.
And then that closes for an hour, and then it opens again. Okay. So usually it'll be.
And when you put the trade back on, the same rules go into effect.
Yeah.
And you are very disciplined. So you've made that trade the entire year.
And every time I put the trade on, I get to recenter it.
Of course.
Yeah. And so I actually hope that oil moves to almost touch my strangle, right?
Yeah.
Because that's good. Now I can recenter it and be comfortable that, okay, and not be caught in that trend.
Does anybody think you're crazy with this?
Yeah, probably.
Yeah. I mean, does anybody else watch you or know what you're doing?
Some friends of mine, say, the friend, dear friend, that got me interested in Tasty Trade, I in turn got him interested in options. He was a conservative guy that was dividend stocks.
Yeah.
So I got him into options. At least started off by you got your positions, you're collecting dividends, at least sell some calls. Okay, so we started out that way. Then he went into the usual things. He got me into Tasty Trade.
Yeah, so you talked to him about what's going on.
Yeah, and so the first thing he said was what you said. I said if you wanted to follow, I said okay. If you want, I'll tell you each trade I make, and you can follow along, and maybe one share into the game. And then he quickly said, "You mean you got to check the position every Monday, Wednesday, and Friday at 2:30 Eastern?" And I said, "Yes." He said, "Well, I can't do that."
So yeah, well, the way you're doing it, yes, that's correct. Yeah. Do you ever adjust the untested side? So, like, if your calls are being tested, do you ever move up the side?
So interesting that you said that. So on Monday, I was holding 75 and a half call. Excuse me, put.
You're short the 75 and a half, but yeah.
And stock went below that.
Yeah.
And so I had to roll.
Yeah.
And I rolled into a pretty big delta with my $1 rule.
Okay.
And as it happened, I had to get up at 2:30 in the morning to make my flight here. I had to get to the airport by 5 o'clock. I had to leave my house at 4.
Okay.
So if I work backwards, I didn't want to rush. I would have my coffee. And it turns out that oil had spiked. And I got everything back. So, okay, I'm not going to take the risk when I'm riding the plane on you. I'm just going to close this now, and recenter. And so, yes, I do make adjustments like that.
Okay.
But not
good.
Typically.
That's interesting. See, I feel I'm almost like forced, I'm compelled to make those adjustments.
Because you want to have deltas balanced.
Yeah.
Yeah.
Yeah, because I want to deal with it.
I mean, that's the strategy.
Yeah. What other little tidbits, nuances with this strategy can you tell us? Is there anything else?
I just think one, I said I looked at this range, that's how I came up with the dollar, and I like the fact that it compensates for volatility automatically, so I don't have to think about deltas. That's already automatic.
Yeah.
And I think that, when I look at the crude oil graph, it reminds me of the statement that I think Charlie Munger said. You know who Charlie Munger is?
Sure.
Yeah. Okay. I think we'll do it here. He said, when the markets hit a high, things aren't as good as people think. When the market hits a low, things aren't as bad as people think either. And so what I'm trying to say, the other little nuance is that oil curve will turn around. It's not going to go to $1,000 a barrel. It's not going to go to zero. Although we saw that exception once. Okay.
Yeah.
Don't never say never.
We've seen some weird exceptions, but yeah, we've seen some weird exceptions, but I
mean, look at the crude oil here. It turns around. The chart is.
Yeah, we have seen some weird exceptions, but I mean, what difference does the chart make to you? What difference does it make?
No, I want to have some guideline that $1 a day is a big move.
I know, but you just want to know that something is maybe oversold or overbought, but your strategy has no technical or there's nothing fundamental about it. There's nothing macro. There's nothing geopolitical about it. Nothing.
I thought once about devising the strategy, and I don't think at all about playing, right? There's a rule that I have, but I just do it.
Yeah, because if you started to think about it, it would not work.
Right.
Because then you would hold off on certain trades and you wouldn't make it. Yeah.
Start second guessing yourself, doubling down, all the mistakes that.
So you're going to expand outside of oil?
I have to get something that I'm really comfortable with.
I think my takeaways are that, that you found something that you feel is tradable because it's range bound, it's tradable because it's liquid, and you've simplified it to make the fewest amount of adjustments that you can, and so far by staying small enough, it's worked.
Yeah. And it's fun.
Jim, thanks so much. That was great.
Thank you, Tom. It's fun getting here.
Thank you.
My pleasure.
All right, hello everybody. We are back. It's another Rising Star segment. Today, I think you guys are going to love this one. Azar, welcome.
Thank you, sir.
I know you've been to Chicago before, but welcome back to Chicago.
Thank you so much.
I'm going to call you Doc because
yes, sir.
That's what you are, and that's your nickname, and I found that out, so I feel good about that, and it's easy. So Doc, welcome, and to the Rising Star segment. And your story is fascinating because you're kind of you're a trading junkie, but you're also a serial entrepreneur,
right?
And so you're kind of like a little bit of man after my own heart, and I love your story, and I think people are gonna they're really gonna think this is amazing, and we're gonna throw some numbers out there today that are going to freak you out a little bit. Because it's good, and I like the fact that you're not scared to share everything with us.
I'm not.
In the last 2 weeks, the markets have been crazy.
Right.
When you see markets like this that have been choppy, a pretty decent sized sell-off, 6-7%, what kind of strategies? What's the first thing that goes through your head strategically? Like, what kind of strategies are you employing?
Right. So it is a good time to sell premium. Mm-hmm. Of course, the call spreads are like a much safer strategy, I would say, in this market. But of course, also cognizant of the fact that you can get a melt up pretty quickly, like tried to happen last Friday. Mm-hmm. It probably happens somewhat the Friday before. So you have to be careful, obviously. But I think selling premium, obviously, that's what I do. And in this market, especially when we have the markets dropping, you can sell premium on the call side, but you have to be careful, very careful.
What underlyings do you use?
So I do two kinds of trades. Mm-hmm. I do the SPX trades for the daily trade.
Yeah, the zero DT.
Right. That's probably majority of my trades on an active basis.
Okay.
I also follow all the liquid, the top 50 that most of the Tasty Trade, people use, mm-hmm. which are the most liquid. They have the like the tighter markets, like the Mag 7, crude oil, some of the futures.
How many positions do you think you have on at any one time?
I have the total different kinds would be like 100.
100.
100 at one time.
100 different underlyings.
Yes.
And multiple positions in those.
Some of them have multiple positions.
So that sounds like me. And multiple positions in those. Some 60, 70% equity and maybe 20, 30% futures and futures options?
Yes, that's
and you're
about right.
Pretty indifferent to product,
Yes,
as long as it's liquid?
Yes, as long as the liquid and there's a market for it, tight markets.
How much of your capital do you use?
Well, I'd like to do the effective money management now.
Okay.
And now that the VIX is higher than 25,
yeah,
I like to leave at least 30% dry powder at all times.
Okay.
I like to keep it less, I like to keep more than that. I feel better when I have 50% open.
50%, you mean you're using 50%?
Right.
Okay.
Or I have 50% available.
Yeah, sure.
But sometimes it is less than that.
Okay.
But in the higher VIX environment, I think 40 to 50% dry powder is what I think we should have.
Right. So let's say you kept about 50% of your buying power. Now, here's the fun part, because as we're talking right here, I'm just trying to kind of set the stage, but 50% of your buying power is still right now, about $14 million.
Yes.
Okay. So now you get a sense of the size of the positions that we're talking about, because you're using, almost $14 million for 50% of your buying power and put over 100 different positions. So this is a large account with a lot of trades, and a lot of capital committed, and a lot of risk. Right. How much of these positions is how much are defined risk positions like call spreads and stuff?
Sure.
And how much are naked?
I think more than 50% is naked.
Okay.
I would say 60% is naked.
Yeah, that's probably what I would figure. So 60% naked. So this is a huge commitment to the market, which would all make a ton of sense given the success you've had. But I first should preface this by saying the last 2 years with these kind of numbers, which the account has obviously grown a lot, you're up 40% a year in 23 and 24. And I don't have the 25 numbers yet, but we'll get into that a little bit. But I'm even going to go one more wilder step. You have a full-time job.
Yes, sir. I am a full-time pain physician, and I still work full-time. But
by the way, to traders, that's a very difficult thing. Full-time pain physician can mean you're taking care of your own trading pain,
right?
But your back pain,
right?
Yeah. Okay.
Yes. Yeah. So, but I have my own practice, and I can use time management, which I use around the market. So we start early, but I can always manage my cases in a way that I have time, like in the mornings before market opens for 15, 20 minutes, half an hour sometimes. Then I have some time at lunch. Of course, I'm watching the market. Even when I'm doing procedures, after procedures, I do procedures which are short in duration.
I don't think it's good to do procedures with the market.
No. Well, I can't legally do that.
Okay, good. Thank God.
Right. But I don't, most of the time, I don't need to watch it all the time. But I do time management, and I also keep some time towards the end of the day. I also have this routine that in the evening, I can review all of my orders which I executed that day, and do like a back test, sort of replay in my head of, what I was thinking, why I did this trade and how it went. And then, I'm doing like the 45-day strategies on my options, and I know that I have to roll some of the positions. Some of them I can queue up at night, which can execute the next morning when market opens.
Just give me a little background. You went to med school in Pakistan.
Yes.
You moved to the U.S. 30 years ago.
Yes.
Became a U.S. citizen. You've been an anesthesiologist and now a pain specialist.
Yes.
You're obviously been crazy successful in your professional career, and own car dealerships and lots of other things. I don't even need to get into it, but and then all of a sudden, you kind of have this, either you're a crazy workaholic or you have this appetite for risk that's a little outsized. Which is it, both?
I think it's fair for both, but probably is because that I like to hold myself to a higher standard, meaning that I like to see if I can accomplish something. So whether it is a skill, and I think of trading as a skill.
Sure.
So when I first stumbled into it, I made some initial mistakes and I lost some money. And the two choices then were that I could quit. And, a lot of people do, which is fine. But I was lucky enough that I had some capital that I was able to deploy after I had the bad experience. And then I went back and I wanted to work on developing strategies that would be successful, not necessarily for the account size or the profit loss, but to prove to myself that I could do it in a way that it made sense.
So you're just somebody that loves challenges.
I really do.
Okay. Yes. Got it. So let's give a little history to everybody. Even though you made your first trade when you were in med school, by hand, paying cash, in Pakistan, which I don't really know anything about the exchanges there. But you really started to get involved in trading in the U.S., let's say almost around like 2020-ish, 2021.
Yes, sir.
Yeah.
21.
Which is a little bit later in life.
It is.
You're almost 50.
It is.
Right. At the time. Sure. And so you're thinking, what was I missing out on? Or, this looks interesting.
Right.
I mean, you're obviously a numbers geek, very quantitative, very mathematical, but was it the math challenge? Was it the probabilistic challenge? Was it the risk challenge? What was it that brought you into trading when you're almost 50?
Right. So almost everything else that I do,
yeah,
I have to depend on other people to do their job, which is, there's nothing wrong with it. It's
sure.
a team sport. All businesses are teams. But I realized that this was the only thing in which the only person who could mess up would be me. So with that comes the responsibility, but also the sense of the accomplishment that if you're successful, you can give yourself the full credit.
So you own everything. You own it. I mean,
right. You own the bad and the good.
You own the good and the bad. Right.
So that was part of it.
Okay.
And then, with the Tasty Trade platform, being so easy to use on your cell phone, it is so handy. You can be on vacation, you can be on a cruise, anywhere. You still are able to check on your accounts, execute your trades, and
So you start in 2021, and you're kind of messing around with, I don't know what you originally started with money wise, but you're testing you're putting your toe in the water and testing things, and you're mostly just trading stock.
Right. I was just doing stocks.
Yeah. You survived the pandemic,
right,
or you might have started after the pandemic,
right,
and you survived it all. You make a little money. You think, hey, you know what? This is like it was back in Pakistan. Like I just go buy some stocks. They go higher. It's easy. This is a piece of cake.
Right.
And then 2022 rolls around, and now that's just because I want to get the numbers right, because this is kind of important. You start with a couple $1 million.
Sure.
$3 million. Sure. You're a confident soul. That's a good, I'm getting in. That's no excuses. That's a real number. Right. So you start with a couple $1 million, and you trade really well, and you whatever you were doing was working, and you get the number up to $6 million. You make $3 million. Sure. Basically doubles your money. At that point, you think you're a freaking genius.
I thought it was too easy.
Too easy. It wasn't fair. How is everybody not doing this?
Right. And obviously, I was not following the money management and the risk techniques.
Why should you?
Guys teach.
Why should you, though?
Right. I thought I had it figured out.
Right.
I had a technique.
Right. So then what happened in the end of 2022? You said it was around August, right?
Right. It was a Fed speech day.
Mm-hmm.
And I had a very big outside position on the market.
Okay.
And I actually went to do a procedure, And half an hour later, I came out and the market had dropped, I think, 1.5%. And I was just paralyzed. I could not believe it. And I did not use preemptive, defensive techniques that I would do now.
And your position was too big.
It was too big. It was too big.
So genius failed.
Big time. It was spectacular.
Yeah. Genius failed spectacular. Yes. Got it. So at that point, you lost, you were up 3 million and then you lost 4 million.
Yes.
Okay. So now you're back down you're down $1 million.
Right.
We always have a saying in this business when we were floor traders, and it was make $1 million, lose $1 million, down $1 million. Like nobody can figure that out, but it's like, that's how this industry works. So you make 3 million, you lose 4 million, you down $1 million, but you're really down more than that because of course, yeah.
Psychologically.
Yeah. Oh yeah. It's brutal. So at that point, you have to build your confidence back.
Right. Well, I had a choice to make. I could have walked away, but I just thought about it and said, I am otherwise blessed. So even though I lost some money.
Sure, but why do you want to torture yourself? I mean, you're a successful physician. You own a bunch of car dealerships. You got all this stuff going on. Like life is good. You are living the American dream.
I am.
Yeah.
And I'm very blessed, but I also believe that the biggest risk is not taking any.
Sure.
So I wanted to be successful at this.
And it bothered you that you lost a little money.
It really bothered me.
You're very competitive. Yeah. Yes. Yeah. So you did what?
Well, I had the opportunity, I was liquidating some other businesses and I had some capital come in.
Okay.
And against all advice from family and friends, I just doubled down on my trading.
Were you married at the time?
I was.
Okay. And how'd that go over?
Actually, I have to give credit to my wife. She's my biggest supporter.
Oh, good.
When I was really upset, and she said, "No, I trust you. I believe you. I think you can do it."
Love it. That's great. And then so you deposited about $10 million.
Right.
And so now you're at 12 million.
Right.
And you're like, I'm going for it. By the way, this is like the craziest story I've ever heard because there's no reason to put that much money in, but you did.
I did.
And you committed that much money to the markets, that much money because you obviously believed in yourself. That's a lot of confidence. And that's 2023, the beginning.
Right. But I was very cautious though in my trading after that.
Yeah, because you had the rest of 2022 to kind of figure things out. And and in 2023, being a little more cautious, being a lot smart about things, you made 40% return, which is like, $5 million.
Right.
That's impressive.
Thank you.
Because 2023 was the year that we started to bounce back a little bit.
Right, we did.
22 was the sell-off, and 23 we started to bounce back a little bit.
Right.
So you must have leaned a little long delta.
I did.
Yeah.
I did because what I learned from the past was that I cannot expect the market to do what I think it should do. I have to recognize what's in front of me.
Right.
The market was going up, so I had to go long deltas at that time.
Right. So you long a little bit of delta, and most of your long delta came from short put spreads?
Yes, sir.
Okay. And were you doing any longer durations? They can't just all be 0 days. It had to be some.
No. I was doing 45 days strategy.
Okay.
That you guys teach, and
were you managing early?
Yes.
Okay.
I'm guilty of managing too early.
That's okay.
Right.
That's a high class problem.
Right. But no, the 45 days and even longer sometimes gives you a little bit of flexibility and there's more time to be right. So that helps.
A lot more wiggle room. And I'm just kind of fast forwarding here. So that's an amazing year. What's 2023? You make $5 million. Your investment obviously paid off, 40% return. You're thinking to yourself. Now you also have a successful practice, which you're still full-time doing. But now you're fully bitten by the bug.
I am.
You're locked in.
There's nothing else.
Okay. So 2024 rolls around and so now your account goes from 12 million to let's say 17 million. Now you add some more money to your account because you sold another business to whatever. And at that point in 2024, now, it gets harder. The more money you have in your account.
It is.
So when you make $5 million on a $12 million account, but on a $20 million account to make, 40%, you have to, it's even more challenging.
It is.
Because you got to put on more positions, you got to scale up your size, and then somehow you made almost, $8 million or whatever the number was exactly, but it was close enough the next year in 2024.
Right.
Those are amazing returns.
Thank you.
It's crazy.
It is. It is mind-boggling. I try not to think about it that way.
Does anybody else in the world know this?
They don't know now.
They don't know how, that's right. But did you tell your kids or anything?
Well, they're finding out now.
Oh, that's kind of got to be just an incredible feeling, because it's not easy. I mean, I can't even begin to stress how hard this is. It's not, none of this is easy. They don't give you anything. There's no edge. There's no negative edge, but there's no edge. You have to earn every dollar of that 8 million, or every dollar of the 2 years, whatever it is, 12, 13, 14 million total, whatever. You have to earn every single penny of that.
Yes, sir. And I try to think of like every day is a new day.
Yeah.
So when the market opens at 8, like 8:30 for me, like for you guys.
Yeah.
It's a blank slate, and you just gotta prove your worth that day to do what's right, to make the right decisions. And when the things go against you, you have to use your risk management strategies to mitigate it and to get out sometimes. Sometimes you just have to take a loss.
First of all, how's 2025 going?
2025 is going really well.
That's great.
Yes.
But even this down move, you're okay?
Yes.
Okay. What's been your worst drawdown in the last 2 years, since the beginning of 2023?
Not very significant, because I've been really lucky the last 2 years, and it's been, like I've had very positive returns. So I may have had a couple of 100,000 here and there, but overall it's been very positive.
Do you know what percentage of your trading profits have come from like the 0 DTs versus the 45 days?
Right. I think it's 60% 0 DTs.
So it's very high.
It is high.
So when you do the 0 DTs, how have you been so successful?
Well, it may seem counterintuitive in this, like the bull market that we had.
Yeah.
But what I seen in my observation is that the market can drop 100 points in 5 minutes sometimes.
Sure.
But it normally does not melt up 100 points in 5 minutes. So even in a positive day when the market is going up, if I look at the appropriate resistance levels, expected move, and some of the JEX levels and like dealer flow, you can do call spreads out of the money or like at the appropriate levels, and you can like I put my trades in the like at the first minute when the market opens with the max volatility to get the most of the premium.
Mm-hmm.
And most of the time I'm able to close them within 2 hours. So I don't hold anything to.
No, because it wouldn't.
Right.
Yeah.
Because it gets so risky as you guys teach. So I think that if you just play the volatility crush, you can you can be profitable on call spreads even.
How wide are your call spreads?
I normally do 10 wide.
10 wide.
But I try to go, like above the resistance level and like above the expected move for the day.
Now, is this mostly SPX you're talking about?
Yes.
When do you do this? Mostly SPX.
SPX.
Yeah. How many contracts are you trading?
I'm doing a few thousand contracts total, but I don't do all of them at the same time.
Okay, got it. Yeah.
I kind of leg into those. Leg into those, but I also have learned to follow the like the dealer flow and the volume indicators in real time on SPX. In that way, you can get a good idea of what, at what levels the open interest is and the big positions are.
Okay.
And then, as you know, that, the big levels, if there's a lot of activity at like 6,000, and even if the market gets to 6,000, all of those calls are now in the money. So, the people start selling those. And then the dealer has to stay neutral, and then they have to sell the underlying. So those at those big levels with the major open interest, they can act as the resistance.
So it's a kind of a classic old pin risk game with, I mean, it's an age-old approach to.
Of course.
Yeah.
It's nothing new.
No.
But it's new to me.
Yeah.
But the idea is to just sell into volatility at the start of the day, and to try to get out for whatever you can get out of the market and not hold in the air.
I mean, you can't argue against the success that you've had. So, the challenge is that as you continue to, as your stuff continues to grow, your account continues to grow, it just gets a little harder and harder.
It does.
But that's, again, a challenge for you, which is what you seem to like the best. So that's the most fascinating part. Are you trading any equities? You mentioned before that you traded, you have 100 different underlyings on,
Right.
but when you stick with the equities and the most liquid ones, is it the same approach? Like if you're trading, for example, NVIDIA or Tesla or, whatever else it is, Google,
Right.
Amazon, are you taking kind of the same approach? I mean, obviously not in the dailies, but is it kind of the same approach? And if you do something like, for example, crude oil or nat gas or bonds,
Right.
are you the same approach?
Yes, it's the same approach. I have an account in which I have a charitable LLC, in which it is like the trust account.
Yeah.
So I can only do covered calls and buy and sell stocks in that one because we have to have a certain amount.
Yeah.
So on those, I find the most, I'm finding the most liquid of the stocks.
Yeah.
Like the major ones that you described. And most of them have, they have good volatility too. So I can sell premium.
Yeah.
So even if they're not dividend stocks, I can set cover calls. Of course, that does limit the upside sometimes. But that's a good way to, I can generate income in that account with those.
So what now?
So I opened a small hedge fund.
Okay.
Like a family office.
Yeah, that's cool.
Yes. So, mainly myself and my family members' money.
Sure.
And I'm doing that as a challenge that I want to be able to show that if it is formally set up as a hedge fund, what kind of returns I can show.
Because you want to do what? Because this is something you think that, this is the next stage of your life, possibly, or, it's always just going to complement your medical career.
No, sir. I think I enjoy this more now. So I'm thinking about possibly, closing my medical practice at some point when I'm ready.
Mm-hmm.
And when I can prove to myself that I can do this full time.
Uh-huh.
And then I would like to manage the hedge fund and do this full time.
You're young. You got a lot of time left. You've got a lot of, I could appreciate the ambition and the independence. I kind of think the same way, It's such an interesting story because a lot of times when we do rising star segments, people come on and they're like, everybody always asks me, well, how much money are they trading with, or how much money they make? Because, when you make 40% on a big number, it's very meaningful about what this business, what opportunities are out there.
Yes, sir. It is I think this is very profitable, and even if people are trading smaller amounts, if they can follow the right strategies, the tasty trade way of trading, I think everybody can really, they can really augment their income, even the work.
Well, they can definitely try. It doesn't work for everybody, but they can definitely try. And it's such an inspiring story because it's, because you're kind of a hardcore, very independent, hardcore entrepreneur. And I love the story because you absolutely put your money where your mouth is. I mean, you walk the walk, that's the whole thing. Talk the talk, walk the walk. And you did it. Thank you so much, Doc. That was just, that was a lot of fun. It's a great story. Hope everybody enjoys it. Thanks, Kate.
Yes, thank you so much.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
In road trips, my family, it was like whoever could get the captain seat was it.
That's great. I'm having a great time.
Me too. But, stay a while. Take your jacket off.
No. I'll stay, but the jacket's not
Come
good
on,
enough.
take your jacket off.
Nope.
Come on,
No.
take it out.
I'm sorry. I didn't mean to.
No, I'm sorry.
You hopped on this cowboy's horse, so I guess you got to hear his tale. In '87, I took it off. There was the market crash. In '92, NBC canceled Blossom. A couple of years ago, I lost it for 2 days, and the Lakers won the NBA Finals. Bottom line is when this thing comes off, bad things happen.
You've got to take it off sometimes.
Never do.
How do you shower?
The jacket's kind of gotten used to it. In fact, every few days it needs it.
No matter what, you keep it on.
I can take my shirt off if you want, but I'm not taking the jacket off.
I just don't know if that's something that I could deal with.
It'll be like a teal tornado. Just endlessly washing up on your short. This is moving so fast, and I like it.
Yeah.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Tony Bat Batista, the John Jay College of Criminal Justice. Number 69, because it's one standard deviation plus one. And I'm the Bat.
John McLaurin, Wisconsin. Number 2, because I'm Beth's right-hand man.
Vanetta Logan, the Indiana University. Number 3, because that's how many shots of bourbon it takes to make it through the first hour.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Good Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batiste. I got my man, Mike Butler, and of course, our special guest, Tasty FX, Mr. Glenn Freiberger. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because it helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever, just come hang with us for the next hour of the day. My favorite hour of the day. Get to spend it with my buddies, Mike and Glenn. Glenn, good morning. How are you, sir?
Splendid. Thank you for having me. Question for you guys.
Yes.
Vanetta this morning was giving me a little flack. It was lighthearted. She meant well.
Okay.
For my particular baby face.
Yes. You are young.
Just question for you guys, because I look up to you both so much in many areas of life.
This is the kiss.
How much of your success, I don't know, financially with the ladies, do you attribute to having facial hair? Is it something I should work on actively?
Ooh. See, the thing, I can hear John laughing out there. See, the thing is that, you either have it or you don't have it. And
all right.
You just don't.
I could put together a pretty gnarly neck beard right now.
Yeah, but that's not the, you got to have kind of a full, it just is, some are blessed with these things.
Whatever. If I have it or don't have it, what percentage of your success?
A lot.
In confidence?
I mean,
is it a confidence thing?
Yes.
Do you feel better doing this?
Yes. I mean, come on. It's a manly thing. But
the last time I shaved my face, it was to dress up as Sting for Halloween. Like Sting the wrestler.
Okay.
That's
I
way
shaved my
before his
face.
time.
I had the full white makeup on. But yeah, if I shave my face, I look like I'm...
That's aggressive.
Yeah.
We can ask the chat. The chat can give you some advice as well. They can tell us if...
My dad has a very nice beard.
Does he?
So maybe it's coming.
Perfect. Hey, you still got time.
Okay.
Yeah. But yeah, I would say I've had people tell me not to shave my face.
Yeah.
So like the baseline is my face has stuff on it. If I shave my face, then there's problems. So
Well, my dad can't do the beard either. He used to say no, he's got like he's kind of got the baby face, but he says I got it from my mother, the hair.
There you go.
And what would he say to you, saying you either got it or you don't? Are you saying it's better to have it?
Well, yes, but you can't force it. Like you can't, you just, it doesn't seem like you have it.
No right now. Let's say right now.
Yeah.
I don't have
Try
it right now.
Hey, what you should do, and this will be because you do it for a good cause, but you do a no shave November.
Okay.
You make your Movember profile.
Okay.
You raise money for men's mental health and men's health in general. I did that one year, which was great.
Was that
Raised
your
like $3,000?
Impetus of you growing it out, or you?
I had this mustache. It was
strong mustache.
Yeah, it was a '90s porn mustache. It was a
go.
Ron Jeremy type.
I've got a poll
Okay.
in the YouTube chat.
Okay.
So we're gonna ask the people.
Yeah.
All right. How is it phrased?
Facial hair, yay or nay?
Okay.
Very simple.
Yeah.
I like it.
Keep it simple. Yeah. Okay.
Yeah, we'll let the people decide.
But yeah, that's
on
all.
your-
That's all
on
I
your
can think
future
about today.
laws.
So
I appreciate that. Thank you.
We'll get an answer for you.
Yes.
thank you. How are you guys?
Great,
All right.
man. Great. E-mini S&P 500 futures chopping around doing nothing. This is boring. This stinks.
Yeah.
I mean,
You guys got strategies for that, though, right?
we try.
Staying agile.
Yeah, we get a little bit of everything.
I did close some stuff today.
Yeah, we had
Which was
that.
fun.
Are you
It was
guys
really fun.
zero DTEing at all?
No.
No, but we do have some research tomorrow that we will be covering on zero
Yes.
DTE strategies. So-
Okay.
'cause we're
That
taking
could
over the
change
morning show.
everything.
Yeah, it could. It just might.
All right.
But yeah, this market is boring today.
Yes.
Not much going on. However,
it's been a rocket ship.
it has been a rocket ship.
So you can't go up every day 50, 100 points.
Correct. Speaking of things not going up, FedEx
Did not
had
go up.
earnings, did not go up. It's down just a little bit, definitely inside the expected move.
It opened down
More.
216 was the low.
Yeah.
So about 13 points, which I think was around the expected move.
Mm-hmm.
I ended up closing my little butterfly that I had.
There you
Took
go.
$148 out of it.
Perfect.
So
yeah, I converted my diagonal into a calendar, so I have the 240 calendar now. If we get a reversal of this, it'll be just fine.
We knew one of us was going to make some money.
Correct.
So
yeah,
it was
It's a great approach.
Yeah,
you know,
one of us.
It's a hedge.
Yeah, but I'm surprised it hasn't, gone sour. But
well,
one team, one dream. I love it.
Well, the thing is I'm out of my position now. So now Mike,
all in.
Yeah,
Rooting
Mike has an opportunity to get out for some profits. So we could both theoretically. His has a little bit more duration on it. He did diagonal spread, so he's got some time left.
Gotcha.
To be right. Mine was more shorter duration, so I took the money and ran.
Yep.
All right, so we could all win.
So it's all right.
But yeah, I closed the crude oil iron condor.
Oh yeah,
nicely.
yeah.
So that was a $70 winner
Nice.
after all is said and done, which is kind of crazy considering if you just fell asleep for a week, you would be like, oh, nothing's happened in crude.
Well, volatility has come in significantly.
Yeah.
That's certainly happened.
Yep.
So that's a nice little.
Yeah,
win.
you've been slithering around that one. Do you still have your long contract on? That's all. That's all.
MCL. No,
I
that
don't.
was-
Yeah, unfortunately not.
Yeah,
I
that would've-
converted to an iron condor a few days before the massive rip to the upside.
Yeah. It's tough timing.
But still made
Okay.
money on it. It's
Yeah.
fine.
Never lose.
And then IBIT, I rolled from July to August, picked up another $2 in premium. I mean, this is like the best trade. Selling premium in IBIT has been the best trade of my 2025
Yes,
for sure.
I been having some nice movement. Two-sided action.
Yes.
Yes.
Yeah, so I've got the 60-70 strangle now with $2,000 of collected extrinsic value.
There you go.
I mean, you'd love to see
Fantastic.
it. Break evens
Leaning-
at 40 and 90.
Yeah, leaning a little long. I like it.
Always long,
Yeah.
never short. I will not accept short delta in IBIT, as I've stated many times. But yeah, that's pretty much it. Micron earnings after the close today.
Yes.
For those that are
Unreal.
fiending for some volatility.
Did a little crab trade in there for the Johnny Trader account.
Upside?
Yeah.
Yeah.
Stock has, I mean, it's gone nowhere but up. So
Yeah.
I figure if it goes down, I'll lose a couple bucks, but playing it to the upside. We'll see.
Fair.
Quick little market update, and
Please.
then we could take a look at some other things. E-mini S&P 500 futures, they've gone absolutely nowhere today. We've had a 22-point intraday range. Big old nothing burger. They're down a point right now. It's just been nothing moving. NASDAQ up 22. You got the Dow down 90 and the Russell down 15. So I guess the Russell is really the only thing moving today, down 0.7%. Oil futures catching a little bit of a bid, /CL 65, 64, but they've come down significantly. Volatility in oil, OVX colon CGI is how you can pull it up at the platform. Significantly lower. It's been halved in the last week or so. Volatility futures themselves down 10 ticks. They've basically gone nowhere. The VIX itself at 1734, so on the lower end of where we've had it for the last year or so. Bonds down 14 ticks. Gold up $7. Silver up 22 cents. And Bitcoin, Mr. Always Long, 108 and change on the futures. Spot at 107. Nothing really moving, which is why I had Glenn join us today, because maybe something in the FX space is interesting to you, which I have. If you haven't opened your account, you just click the Tasty FX button on the menu bar there. It'll prompt you to open the account. If you have the account, you'll have this screen. It's US only for this product. If you're international, you can use the IG products themselves. But I have had quite a lot of fun trading the FX products. And not recommendation, but the last time you were on, you talked about the Swiss franc with us, which I took a little trade there. These are fun to trade.
Where are you at with that Swiss franc? 'Cause
I took that one off.
Okay.
Took the money and ran.
Good man, because that one's been it's your only flash of red there on the screen. Got a whole lot of green today.
What happened?
Dollar, bad. Finding its bottom right now, leveling out, but start to the week, got a bid in the morning and then taken all of it out. Now we've got euro dollar back at its highs above 116 in the spot market. British pound, same thing. Dollar Swiss franc back at its 10-year lows. When we were on last, it was, hovering around there. Yesterday, just found a new one. But looking, if you look at that daily chart.
Which one?
Dollar Swiss franc or dollar chef. You can call it dollar
The
chef.
chef.
Yep.
Yeah.
You're
See, I need
like that.
need the description here. I've
We've
talked
got our
to you
best guys on it.
Can I tell you guys something?
Don't you talk back to me. Don't you talk back to me, buddy, okay? Yeah, I will come over there.
So I'm short the Aussie dollar.
Me too.
That's a loser.
Yes.
I'm
You stink.
long
Just
the
kidding.
dollar franc. Loser. I'm short the dollar yen. Loser. Somehow
Impressive.
I'm long and short the dollar in both ways, and I have losing trades on all three of them.
Yeah.
So this is the anti-beginner's luck. I have somehow found a way
I have the beginner's luck.
to get long and short at the wrong times perfectly to where now we're seeing moves in the opposite direction.
And the annoying
So
part.
I'm having fun.
But you're not out of it yet, right?
No. It's very small, which is nice. I can just hold these forever until one of them is a winner, and then the next one's a winner, and then the next one's a winner. I can take it off.
And so, the nice part, or maybe in your case, now much more annoying part, is all of those from the prices you're at right now. You did see some green at some point.
Yeah.
We did have a little dollar comeback. I mean that Australian dollar, U.S. dollar, sank to start the week here. If you just pull up a daily chart or an hourly chart, and that Australian dollar starting the week, we got all the way down below 64 cents there, and now a really strong bounce back. So you had opportunities to get out, but really interesting because the only thing weaker than the U.S. dollar right now, the Japanese yen. That's been, if you're kind of scalping these markets, maybe dollar Swiss franc hasn't given you all you're looking for this week, but that dollar yen this week, we had a significant run up. Go over to the hourly chart just by hitting the daily right there.
1 hour.
Yeah, and then zoom out a little bit. You'll see how this from the Sunday night open went all the way, blasted through 147, touched 148, an immediate bounce off of it, skid almost 2%, I think over 2%, and now it gave back a little bit. So this one, real roller coaster this week. So if you're trading intraday, this has definitely been the mover this week so far.
If I was to buy this, I'd be long U.S. dollar versus the Japanese yen.
Correct. And you can kind of validate that Japanese yen weakness because if we're looking for movers of the day from a net change percentage, we go right back to that popular non-USD. We have the most liquid, the most traded markets that are non-US dollar will be that euro yen and that pound yen. And so that euro yen, pull that chart up, there you're getting some yen exposure, no dollar exposure. That's been a wild ride as well. But if you zoom out to the daily on that one, here you're getting a price extreme that you're not getting in that US dollar Japanese yen. We're at highs all the way back to October. So a lot of European currency strength, but definitely some Japanese yen weakness.
So the nice thing about these trades is that they're
I short this?
You can do whatever you want.
I can short this.
These trades are so small that I was able to just double down on the same positions for every single one I'm in. And it's still an extremely small trade, but it's nice that you can get into very small sizes and then just like dollar cost average as they move against you if you want to. But I do like the way that it's organized as well. So you have the one could close for all of their positions. You can see them separated by line item.
Yeah.
It's pretty nice.
So the only, handcuff there is if you're trading positions of the same size, it's subject to the FIFO rule. So first in, first out. So you won't be able to close, that price level one before the other. But the platform will tell you that. And if you use distinct sizes, then you are able to have that kind of granularity or optionality with closing those positions.
Perfect.
But yeah, this is you're getting some action here. And just a reminder that in the FX space, because of the leverage you're getting, when you're looking at that net change percentage column, anything over 0.5%, I'd say is noteworthy. Or a moving market in
Because currencies, usually the volatility is much, much lower. So it's a big move.
Yeah, and so we've seen 2% swings already in that dollar franc, dollar yen. And so I'd say it's hard to have an opinion on, or people have very long-term opinions on dollar strength, but you're getting a lot of different markets here to, depending on your time horizon, get in and out. And
What are some fun ways to get long the dollar? I'm gonna be short this. I'm gonna short the euro again, which I already have some short delta in the euro futures on the CME futures side. So this will be sort of a double down here with my euro short. What would be an interesting way if I want to get long the U.S. dollar in one of these currency pairs?
I mean, it depends what you're looking for. You've got
No. That's you can't give me that.
How about shorting the New Zealand dollar? Because that's up 0.32% today.
That is up, but what I would say is a factor in that one is risk sentiment. And so you see in a completely risk-on environment, you'll see New Zealand dollar get a lot stronger versus the U.S. dollar. So with the backdrop we have right now of maybe still some risk-off tensions, I would say getting long U.S. dollar there wouldn't be kind of your purest dollar bounce back, because if you look at historic levels, New Zealand dollar is still cheap relative to last year, whereas you have those European currencies are completely taking it to the U.S. dollar right now. So if you're talking mean reversion, the European currencies give you a lot more.
So I got the euro. You think like pound is probably the other one to do, or
I'd say the Swiss franc is an interesting market, just because interesting call out here. You got me on a Wednesday. Good day to do it. Head back to the watch list tab real fast.
Okay.
Because what you'll note is those swap bid and swap asks. Those are pretty elevated for today because we've got a 3-day roll. So what these tell you is your overnight funding charge indicative. And so right now, this swap bid and swap offer is denoted in pips, and it's encompassing the weekend roll. So if you hold a position overnight, or if you hold a position past 5 p.m. Eastern time today, then you're subject to these overnight funding charges. And if you look at that dollar Swiss franc market, if you were to be long U.S. dollar in that market, you're getting almost 3 points there in positive overnight carry. So you hold this past 5 p.m. net, if this market doesn't change, you have no price action risk, and you get out at the exact same level, you're still benefiting from that positive carry. So that's definitely, it's not the biggest deal, because, the price action risk can absolutely wipe all of that, positive theta, if you will. But it's definitely a variable to consider when you're picking markets, because the Swiss interest rates are 0% right now. So here you're getting a 10-year extreme. Whether that has momentum or if you're betting on a reversion, it's an interesting market nevertheless.
Okay, so I mean, I like 10-year extreme. It sounds nice to me.
And the last time,
I like to buy dips, sell.
Last time it was
buy
there.
low, sell high.
Yeah, last time it was there was the Euro DPEG. It had a name. That event had a name.
Okay.
For the last time. What are we calling it now? Just dollar no good?
Yeah.
I don't know.
Sounds good. Dollar no good. No dollar, no holler.
Okay.
You have a back of the hand just for, because I admittedly do not watch all the currencies all the time. But, and I know these are very, very leveraged. When you look at the leverage, do you have like a back of the hand, like pain relative to the leverage? Like if I put this on $150 in margin, what do you think's like my pain, my max pain?
It's a good question. I'd say
I know anything can happen. These are not exact, but like when I look at here, I'll put it into context. Like I sell a naked put in whatever stock. It uses $1,000 in buying power.
Mm-hmm.
I usually look at that and I say $1,000 is realistically, what I'm comfortable risking. That's kind of like a worst case scenario, so to speak. Of course, it can get worse than that. When you look at a margin requirement of $150, like $1,000.
Yeah.
Is that a realistic pain on this in a volatile event?
Yeah, because
we're talking about 2 times of the volatility, let's say.
Yeah, because how I interpret it is when you have your position size here, you can see in this market, francs per pip.
Yes.
And so if you have an expected move in a day of 50, 60 pips, then you're talking about, what is it? It's like...
I'm 50 cents per pip, so...
Right, so...
$25.
Yeah.
On a 50 pip move.
Exactly. And so if that's tolerable for you, it depends on your time horizon.
Yeah.
But yeah, the expected...
I got gray hair. I don't have that long of a time horizon, okay?
Exactly. Yeah, I mean, it would take... I'd contextualize it with around your margin, but the daily moves in this market would be 50, 60 pips.
Yeah.
In a normal one standard deviation. So you take that out, maybe 90, and we've definitely seen that.
Mm-hmm.
And so it's not ridiculous, but that's how I'd think about it, is that movement per pip.
Okay. Thank you for that. I'm in.
And just like that, I'm in.
Just like that. I mean, they're small. They're little fun little things to have on.
You,
I just don't want to wake up. I got Rob, calling me.
Yeah, you don't want that.
Hey, Johnny, you're blowing things up here.
Yeah. I agree.
Yeah. Thank you.
One interesting market to watch that I don't have answers on really, but you go all the way down to back to that U.S. dollar Israeli shekel.
Ooh,
that one will surprise you.
Shekels. All right, so where is this? Other?
Yeah, I think it's under emerging all the way down.
Scandinavian, emerging.
Yeah, there you go. USDILS.
Okay, the shekels. Let's see what we got here.
Shekel so strong.
They're strong? Yeah.
Look at that. Extremes back to 2023. So not only if you zoom in there a little bit.
Do you want to do a daily?
Yeah. We had a big pop in the U.S. dollar's favor on the onset of the conflict over there.
Yep.
And now not only are we back to where we were, we're through that. I mean, a full another 100 pips. So, no, another 1,000 pips. So a big move in the Israeli shekel's favor. Not sure really where this market will settle, but I don't know. What do you guys think? What would the fundamental analysis be around?
I'm trying to get long the U.S. dollar across the board.
Okay.
I mean, it's at lows. It seems like the consensus trade is to be short the dollar, which means that I got to be long the dollar.
So yeah,
that's
you could either do that in one of the most popular traded markets, like a euro dollar, or you could get.
I got the euro dollar already. I mean, I want something funky like this.
That would be this. Just note that these are slightly less liquid. Doesn't mean you can't get in or out of it with the same trading hours. But that spread there, here a 30-point spread. So when you put on the position, immediately a little more in the hole. Need some more price action to go in your favor.
I'm in the hole, or I'm in the hole. $1.80. 0.02. That's my size. 0.02.
All right.
So maybe sometimes
micro
0.03 if I'm feeling crazy.
If you're layering.
Yeah. I'm layering
we're
in
doing
the
like little micro.
Little micros, yeah.
What do they continue? Is it 0.1 to be a micro lot?
0.01 is micro. 0.1, you could say mini.
Mini.
And then 1 would be a standard lot.
So I'm like between a mini and a micro.
Yeah.
I like that. All right, beautiful. So we got a couple trades on.
Yeah. I've doubled my exposure and everything, and then I got long the dollar shekel.
Yeah. I mean, his motto is trade once, trade huge.
Yeah.
All in.
All or nothing. That's how we do it.
Yeah,
That's how we do it. Had a question real quick for you, because you're an insider.
Uh-oh.
Mobile, FX on the mobile.
Yep.
Coming sometime soon?
It's coming soon. Yeah.
I like that.
We've it initially was scoped to be a much bigger project. We found some tech efficiencies. So we're trying to get that out. That's priority number 1 for phase 2 of this integration.
Beautiful, beautiful.
Because you gotta get FX on the go.
Yeah, you gotta keep going. You gotta keep
be able to
innovating,
check.
making new stuff, doing, get to work, as Tom would say. Is there anything that's coming in the near future that you're excited about or that you can talk about in relation to FX?
In relation to FX,
The platform, features, anything like that, new pairs, anything like that? If you say no, you don't get lunch today.
Okay.
That's wrong. That's risky.
Yeah, we're working. The 2 biggest things, definitely mobile, and then getting more of these columns in there, more data columns.
Good.
Like description.
Yes.
All the things that you guys have been so graciously asking for.
Awesome.
Getting a lot of good feedback, so we've got a lot on the plate. And yeah, I mean, it's nice that this integration's been so smooth. I think people are liking it. People actually like the one-click close, I hear.
It's the best.
Okay.
I really
Less
like
is
it.
more.
Nice.
Yeah.
Less is more.
That's when we were worried that people would accidentally close. But I think calling it one-click close.
It's pretty clear.
Yeah, it's pretty
Very
clear.
good. All right,
If
awesome.
you're misclicking that, I mean, I don't know what to tell you.
I thought there was another click.
Oh, it's easy.
One click.
One click.
Thank you, boys.
Yes, thank you for coming and hanging with us, Glenn. It's always a pleasure.
60-40 for facial hair.
Okay.
Got some good some good tidbits.
All right.
I think you give it a try.
Okay.
Beards are like the sweatpants for the face that mask any imperfections.
Yes.
Okay.
So
is someone saying I have imperfections?
No, you are
Indirectly, yes.
perfect.
Yeah.
As your mommy will tell you, you are perfect, Glenn.
All right. Well, I think let's aim for November.
Okay.
Because then I think I'll have probably at least 3 more. I don't know what the growth rate is. 3 more hair follicles, maybe.
Yeah.
A better shot of getting it all in there.
Yeah.
All right, but I appreciate your input.
Clock is ticking.
Check out Glenn in the mornings before the main show starts.
6:30.
6:30
Me
a.m.
and Frank tomorrow.
Bright and early.
A-team.
The A-team. You can check out tastytrade.com/Forex to learn more about the Forex products. You guys do a newsletter, right?
Yep. That'll be hosted from the Tasty FX site. Just
Okay.
head over there.
Sign up for that for free.
Yeah.
Get it once a week. When does it
Once
come
a week.
out?
Yep. On Sundays.
Sundays.
A little week recap, week ahead.
Very nice. Well, thank you for joining us, Glenn.
Thank you, guys.
Please go enjoy lunch while we continue to work, okay?
Thank you, Mr. Batista.
Thank you.
Your kindness.
Save some for us, please.
Yes.
Please.
Everybody in the chat, if you got some trade ideas or something you want to talk about, please send it in the chat for Mike and I. E-minis have gone absolutely nowhere. We got a couple trades on in the FX product, so had something new. I am long the U.S. dollar versus shekels. I'm long U.S. dollars versus the Swiss franc. I am long euro versus the Japanese yen. I'm short euro versus the Japanese yen. I'm short Aussie dollar versus the US dollar. So got a couple trades in the FX space. Hopefully I don't get my face ripped off.
Yep.
They're all losing right now, but small.
Yeah.
But I've made some money in the FX space, so I'm enjoying it.
Perfect.
Trades for today, I want to go through a couple of those too because I didn't mention them this morning. Had a couple trade ideas for Johnny Trades this morning with the ladies, which was really, really fun. I sold a put in Delta Airlines. You might like this one. I sold the 50 strike put. It's a synthetic covered call.
Mm-hmm.
Delta has earnings coming up. Volatility is relatively high. Stock's kind of mid-range to where it's been trading over the last year or so. Pretty high amount of premium. Only used about $900 in buying power. Sold it at $271. You could probably do it better now because the stock's down about 80, 90 cents from there. Got a little long Delta in Apple, and then I did my crab trade in MU, closed out of my FedEx trade, butterfly that we had, and in Robinhood, I had to roll up puts because that stock does not go down. The hood.
The hood. Yeah, I think there's definitely some movers underneath the surface. So yeah, if you got any trade ideas, you can throw them in the YouTube chat. We're streaming live there.
Yes.
Pop over to tastylive. But yeah, I like the trade ideas.
Mm-hmm. Google catching a bid. You got a lot of the semiconductor stocks are moving today. You got obviously Micron earnings after the close today. That's a big one there. SMH basically at highs or past highs. Yes, we busted through highs today.
Busting through highs.
Yep, every day.
Yeah, it's crazy. It's crazy until something crazy happens.
Yes.
But yeah, let's see some volatility here. This dollar range, 1 point range isn't working for me. Brandon's looking at AMD.
Okay.
Straddle at the 125 strike in July. Rolled a bunch, taken in $4.80 in credit.
The 125 strike.
125.
Ooh, that's a tough one. I mean, you could roll it
up to the 130.
Yeah. Or you go like the 135, 130. It's a tough one. You got earnings coming up in at the end of July here. Volatility is relatively low. You got to imagine that it has some sort of sympathy move with Micron after the close today. So maybe you take that shot. But in the next couple days, I would consider rolling out to August if you intend to stay in this position, because you're really just short the stock. You know, your put is a nothing put. Like maybe you do the kind of conservative middle ground here and you roll up your put to, you know, the 135 and you play for Micron to have a little bit of a downside move. Maybe you see the space as a whole kind of sell off a little bit, given that they've had such a nice run, and then you roll out tomorrow. The roll up isn't going to hurt you really, unless there's like a 20-point down move. If you get a $5 or $6 down move, the intrinsic value you make back relative to the 50 cents or $1 that you lose on this option, this roll up, you're not going to worry about it.
Yeah. And the nice thing is, if you're rolling from July to August, there's so much premium there that you can keep the same straddle and pick up a good value, or you can go to the 125, 130 inversion, 125, 135 inversion. Like you can make a 10-point inversion, pick up $8 in credit, which will bring you to $12 in premium overall, $13.
In half.
Yeah, you'll still have the ability to make a profit if AMD kind of trickles back down as you get closer to expiration in August. But yeah, plenty of premium there to adjust the trade if you would like to. But yeah, don't mind going inverted, rolling out to August, or if you're keeping in July, I think you'd go inverted and just play for a lesser loss.
Yeah. Tough one.
Yeah. FedEx, 250 strangled, worked, took 50% profit. I will heed your guidance regarding defined risk around earnings moving forward. Yep. Yeah, I think it makes sense. I mean, you still would have gotten paid on an Iron Condor, but
yeah,
I have run into some steamrollers with undefined risk earnings. It will happen. If you're selling strangles on everything for earnings, eventually you're going to get a big loser. So I would rather reserve those for big market events like the tariff stuff if I'm going to have a big loser on my hand.
Yeah.
But that's just me.
Yeah, I think over time we've tried to avoid the binary risk of earnings.
Yeah.
Or at least lessen it.
Yeah.
It's just like,
even with diagonal spreads that are very directional, your risk is defined.
Yes.
So like even my FedEx call diagonal is a loser right now, but it can become a winner pretty easily here. Yeah. If we rally to 230 or 235, like this will be a winning trade. So plenty of time for it to work too. Theta traders looking at URA and NLR, little uranium nuclear play.
NLR, I haven't seen this.
These are just stonking.
Yeah. Sarah. Julia favorite. This one doesn't, the NLR doesn't look all that liquid. Yeah, when you see When you see bid-ask spread, I mean, obviously when you look at the options, and we're in August here, you look at volume and open interest, it's basically zero across the board. But when you're seeing bid-ask spreads where it's $1 at $4, you're just better off not messing around with these. It's going to be a tough in and out. URA does have weekly options, which is usually a good sign. I mean, liquidity is not great. I imagine you probably can get filled here. But it is, it's certainly not the most liquid ETF. It is trading today, shares though. So if you're trading those, certainly could. I think you probably just go into like CCJ or, some of the other ones like Oklo and, SMR, which is one that we traded, one of the smaller nuclear plays here.
Mm-hmm.
I've got a little crab trade here. Let's see if I can do this in CCJ. All right, you got earnings coming up. So we do the 75. We'll play for like the neutral / up. See, can I sell on the 77? $1,100 in buying power, kind of expensive. Let's see what a strangle. 65.80, $4. How does that sound to you, Mikey? $700 in buying power. The Ivy rank is relatively low, but it's got 47% monthly implied volatility. 65 down here, 80 on the upside. Maybe buy the wings. 10 points wide, still the same $700.
Yeah, getting a boost from earnings.
Mm-hmm.
But yeah.
65. This
thing
has gone just straight up.
It's nuts.
I don't know. I don't know if I could do the strangle here. We do like a call ratio spread.
Ooh. That could work. That could work.
Do I do it in July? Let's see what the July looks like. Can't really.
A little tougher.
Yeah. Could do like a cheapy 3 points wide. I think I'm going to go to August. Do the 75.80 at 60 some odd cents.
Yeah.
$860 in buying power.
Yeah. A little fade of the move.
Yeah, and you got a lot of room to the upside relative.
Yeah.
Break even at 85 and change.
I like it. Stewie, looking at
65.
Your Google trade from yesterday.
Sure.
You opened a Google call you paid for. I think you bought back your call yesterday.
Yeah, so I had a call diagonal spread, and we can actually see where the stock was trading at. So I did the diagonal spread when the stock was at 168. We dropped down to 163 when I bought back that short call. So where did that go? There we go. So when I bought back this short call for 68 cents, the stock was trading at 163 yesterday. Into the rally, I sold out the 175. We can look at this one too. So we got to bounce back all the way to 167.5-ish. So back to where I originally started with the trade and sold out that 175. So now I have a call diagonal spread where I'm long the 170 out in August. I'm short the 175 against it. They're two separate transactions because I just sold this call outright in a different transaction, but I've got this on for a net $6.10 debit. So you can see I did the original at $7.89. I sold this one at $1.79. So I've got, small little profit on this trade, 50 cents or so in profit on this trade. $6 for a 5-point wide call diagonal. It's a little bit more than the width, but assuming we don't explode to like 190 or 200 in the next 20 some odd days, there's always going to be a little bit of extrinsic value there. So That was a trade.
There you go.
Mm-hmm.
Can you please explain?
I wish I waited.
Yeah.
If I had waited today for the $4 up move to 171,
great.
Then I could sell this out for $2.90. I wouldn't be losing the $100 on the sale, but I'm making more than that $100 on the long 170 call in August.
Yeah.
Still okay.
I had a similar upside Google trade. I didn't do anything with it yet, but
now might be the time.
Yeah.
With it moving.
So yeah, the nice thing is I can still roll the short option. I have the 170, I have the 175, 190 diagonal, long August, short the 23 day, which is before the earnings announcement. So I can roll the 90. I could buy back the 190 and roll it into the weekly earnings cycle and pick up some premium, but I think for now I'm still going to hold on to it because I'd rather get out for a net profit and then redeploy it.
Roll it down to like the 180.
Yeah, you could do that too.
Make it more of like a calendar. You collect $1.
Yeah. My basis on this is 920, so I'd have to roll it. If I did anything, it'd have to be like to the 185-ish. So I'm just not going to do anything with it right now.
All right.
It's fine.
Cool.
Can you explain your Micron crab trade? Still not familiar with the setup, adjustment, etc. What happens if the trade goes against you? Do you just roll the short option component front month into something else?
Yeah, so you can do that. So in this account, I'm long the 130, and then I sold 2 of the 135s against it in the weekly. So I did this it's basically at the same price. I did it at $1.37. It's actually a little bit cheaper with the $1.60-ish down move. But essentially, your risk is a tail sort of upside move. So we flip this over to the Theo. I will take off my existing position. So when you move this out in time, the evaluate day here, you can see if you at expiration, which the shorts expire at the end of this week, and we can even go further, but at expiration, this $4 in extrinsic value is realized. Whether it has intrinsic or not is really the situation. So if the stock were to rally at or above 135, it would have some sort of intrinsic value. That's when you'd have to manage it. Obviously, because I have that 130 long call, that's going to hold a lot of value and buffer me to the upside. If we get to 135, that call is going to be worth at minimum $5 plus whatever extrinsic value it has 23 days out in time, which is going to be something. And so you can see my break even is roughly at like 140-ish. So you have a lot of buffer to the upside. You also have some downside profit potential because you're selling $4 of premium. You've got this long option, which is going to hold some sort of value. So it's not going to go to zero at the end of this week. So your risk and your management, I should say, where you're managing the trade is much higher from where we are. We're talking about like 2 times the expected move. At which point you'd want to roll your short call out because you'd take profits on the call spread part of the trade. You roll the short call out, and because you're naked a call, you have the opportunity to sell a put. That would be the likely adjustment depending on where the stock is. The stock's at 135 or 140, you're probably taking profits. The stock's at 145, I'd probably be rolling the 135 call out to August, and then I'd be selling like the 135 or the 140 put against it. I'd turn it into a straddle or maybe an inverted strangle, something like that for this position.
Yeah. So lots of adjustments that you can do for sure.
It's hard to plan it now.
Yeah.
You gotta see what happens.
But yeah, if it's an out of the money downside move, you can easily just convert it to a diagonal if you wanted to.
Yes.
Also.
Yes.
So yeah, manipulation is possible here because it's a smaller price product. Like you can turn this definers trade into an undefiners trade and hold it if you want to. Considering an LLY Iron Condor 30 points wide, July 18th.
Okay, what are we thinking?
30 point wide bullish Iron Condor. So that means you're probably a little bit inside the expected move on the downside.
Mm-hmm.
And then you're at the expected move on the upside, I would say. So maybe something like a 750, 720, 850, 880 for $10. Or maybe a little higher.
Yeah.
But yeah.
They're all going to have very little delta to it, even though it's 30 points wide. There's not a ton of with a $700 or $800 stock, 30 points wide is relatively tight.
Yeah, but collecting $1,000 or so will still get you 60% pop. But yeah, if you're doing this in July, you'll still need to hold this for a couple weeks here, unless you're trying to take it off for like 20% profit, which is still fine, still a sizable monetary value.
I think if you want to lean bullish, you just do the put spread. I think I'm routing the 750, 740 short put spread. We'll see if we get filled here.
There you go.
Markets are not great. 210, I'm in.
Just the put spread.
Just the put spread. Little shot.
Sean's got a straddle on shop at 115 for July.
God, shop is my kryptonite.
115 is good, right at the money. Would you hold on and let decay work, or is there a smarter course of action? $8 of credit so far. So yeah, you're pretty much there. I mean, you could certainly hold on to this. You can absorb. Yeah, you have $8 in credit, so you can absorb a move down to 107 and up to 123-ish. So you basically cover the expected move. If you roll into August, you're rolling into the earnings cycle. So that is something to consider.
Yeah.
I might just hold on to it if you're trying to squeeze more out of it and you intend to roll into August. If you don't get anything out of it, then I think you can press on the offense here and see if you can get this down to sub $8 and close it for a winner. But also nothing wrong with closing it for a $150 loss if you had been seeing much bigger losers.
Yeah,
it's a tough one. It's a coin flip for me.
Hence the 50-50 probability.
Yeah.
You know, it all works out like that.
But yeah, you have a decent enough room if you want to hold it for a little bit. But I would say you're probably looking at a week or two before you get some value out. And you can see that here. Like if you just throw up the same 115 straddle in the 8-day cycle, that's trading for $6. So with that said, you'd have to hold this for 2 weeks to get the $9 and change down to $6 and change.
Which is why if you've been managing this, you could consider doing a buy the guts, sell the wings. Yeah, you buy your strangle back and sell an out of the money strangle, and you do that for, you do it for $4. You have a $4 strangle on, and you can see in the 16-day, this is trading at 386. So you make back your $100 if you're further out on the curve.
Yeah.
But I think it's not a huge difference.
Yeah.
Rolling to, an out of the money strangle versus straddle.
Yeah. I think if your intention is to hold it and roll it into August, regardless of what happens, then I think you hold on to your current one, or you make this adjustment and you stay in July, because you're intending to roll to August anyways. So you have no problem with being aggressive in July to see if you can get out of it prior to earnings. URA, looking at the August 38, slightly in the money short put with a 25 strike to limit buying power. 38, 25. So the 25, I would roll up. You can move that up to the 32.
Yeah.
Because the 25 has a zero bid. The 32 is 30 cents, but you significantly reduce buying power there.
And there's more.
And you can sell out of it in theory. The zero bid, you're not going to be able to sell out of.
Yeah.
So.
And you cut your buying power by $700.
Yeah. So yeah, I think you move it up to the 32 because that's where the bid is, but up to you.
I agree.
Tesla taking on the chin. Maybe throw on a put spread.
I kind of have it on. I can just close out of this call spread for 50 cents. I'm going to do that. Let's see if I can get filled below.
300, 290 is interesting.
Yeah, I have
in
the
July.
305. 305, 295 in that iron condor from 2 days ago.
300, 290. I think I'm going to get that on there. 350. I'll do it in August in the earnings cycle.
There you go.
Filled 350 in premium.
I now have the 305, 290 short put spread. I just lagged out of the call spread part of the iron condor. I have this on for $2.48 and it's marked at 285. So I'm out about $37 net on the position. Now I'm looking for a bounce to the upside or stay here, not go below 300.
When you have an inverted strangle on for a small debit and the stop keeps soaring, would you roll to make the spread wider, increasing the debit? So this is I think we're confusing the credit versus debit here. If you make an inverted strangle more inverted, you're collecting a credit and doing that.
Yeah.
But to answer the question, when do you give up and close this kind of position? If it's got like no extrinsic value and it's just intrinsic value and you don't want to have the short stock position, then
or the buying power. Or, I mean, sometimes the stock wins.
Yeah. If it has decent amount of extrinsic value, and let's say you have a 10-point inversion and you have $15 in credit, and moving it to a 15-point inversion gives you another $2 or $3, like that's fine. But if we're keeping it on and trying to defend it, we want to make sure the options have extrinsic value. Sometimes we can control that, sometimes we can't. But if it's on a stock that's just like ripping to the moon and you're deep in the money with 90 delta or something like that, then if you're uncomfortable with the short delta risk going forward, then maybe that's when you throw in the towel, unfortunately.
Yeah.
But hopefully it's a large credit you have, or a credit you have versus a debit. If you have a net debit on with undefined risk, there's no way to make money on that. And you're just holding in that cycle.
You'll have to roll it.
Yeah. But it's tough.
Yeah.
Palantir, 100, 185 strangle for $5 in credit in August.
Yeah, I have a short call spread right at the money. I'm out about $150. What are they looking at? The 100, 180?
100, 185.
Yeah.
In August.
I mean, look at this call skew. It's just
crazy.
So when these are both 40 points out of the money. The 100 strikes at 9 delta at $1.80. The 180 call is a 21 delta at almost $4. It's wild. You go out to the 200.
Yeah.
And that's a 60-point up move.
Yeah.
Let's see if we can do them. Let's see.
But yeah, the reason this is a big IV boost because you're in the earnings cycle. So I like the idea of going further out of the money to get some of that decay. That's more IV based decay. But yeah, you're still gonna have to hold this for quite some time if you're trying to get 50% profit, because the IV boost in the earnings cycle is quite substantial. Maybe you just do one side, like a call ratio.
Yeah, that's what I'm looking at, like doing as wide a, like even for a tiny little debit, you can do the, 175, 200. And this gives you a break even at 225. You could sell the put as well. Like you do the 100 strike put and you net this out for a small credit, but I gotta think of something to do on the upside here. Even a crab trade.
Yeah.
And it's only got an IV rank of 15.
Yeah.
Crazy.
But that just, it just goes to show that even with an IV rank of 15, the actual implied volatility is 50% prior to earnings, 70% in earnings. So like you can sell any premium you want here, regardless of IV rank.
160, 175 at $1 in August.
Sure.
Oh man. All right. This is kind of a double down because I already have some. I have some short delta via the call spread. Let's do that. This gives me a break even just under 200.
There you go. For Micron, that has earnings after the close.
127.
There you go. I wrote an earnings preview on this one. I'll put it in the YouTube chat if you want to check that out. But I'm just going to do something small here. I'm just going to do a little Johnny calendar spread on the upside. Long the August 135, short the weekly 135.
Ooh.
So if you get any kind of rally, even if it's through 135, it'll be a profitable trade because the long option's in August, which will have a lot of extrinsic value still. And the short option, $220, it accounts for a third of the value of the long option in August that has 51 days. So 370 debit, small. Because I don't know. I mean, I think they'll crush numbers, but I don't know how the market's going to react. Because look at this.
It's had a nice
stock.
move.
I mean, it's nuts. Got it. That's it for us. Thanks for tuning in. If you got any further questions, you can reach us on Twitter. I'm at Trader Mikey B. Nick's at Trader Nicky Bat. We got lots more content coming your way on the YouTube channel as well as tastylive.com. I'll be back for overtime today, 3 o'clock.
Ooh. And we're doing the last call.
And last call. And we're doing the morning show tomorrow and the morning show Friday.
Somebody needs to pay you overtime.
I'll request that on overtime. How about that? 3 o'clock.
Yes.
But yeah, stay tuned the rest of the day. We'll be back same time, same place next week.
Yes.
Because we're doing everything.
But we'll be on. We'll be on tomorrow and Friday for the whole show.
You'll log on. You'll be on.
We're here.
But yeah, enjoy the rest of the trading day. Hopefully we get some volatility here.
Yeah.
Someday. But yeah, time to go eat lunch. Peace.
Peace.
We are back. It's still Tuesday, June 24th, 2025. This is Futures Power Hour, brought to you by CME Group. And apparently the color green. I'm Chris Vecchio. He's Jamal Chandler.
That's right.
We didn't plan this. How are you?
Not only did we not plan it, we're coordinated with the market too, by the way, Chris. I mean, since you're going to go there, it's green. It's green all over, baby. I'm great, man. It's good to be back in the studio. I was out all last week. It feels like 2 weeks since I've been in the studio. It's great, man. I'm excited to be here, talk to you. It's a busy day for me. I mean, this is a 3-show day for me. I mean, that's just, every day for you. That's every Tuesday for you, right? But for me, I got a 3-show day. This is show number 1, Engineering the Trade Later. Got a guest on, and then with you again, overtime today. And I'm going to be different on all 3. You watch. That's right.
Outfit changes for Jamal Chandler coming up here this afternoon. Jamal, you haven't really missed much. I mean, the S&P 500 has been trading sideways for the past month, and today it just broke out to a new high. Oil prices are basically where they were 2.5 weeks ago. So is gold. Did you see anything in the news that caught your attention?
There's been a lot in the news, honestly. And, I don't know if you know about this about me, but when things really get crazy news-wise, and there's a lot going on sometimes, I have the tendency to just kind of wait till the smoke clears, especially, though that probably wouldn't have been the case with all this discussion of Iran-Israel normally, because again, I mean, it infiltrates our job, but because I was essentially off last week, I really wasn't paying attention to every little kernel of news, honestly. So I don't necessarily know if that's good or bad, but
good.
Yeah. Well, the one thing, because I do have a couple of iron condors in oil, for example, and again, I know we're going to get to oil, but this just pertains to the news. I did buy oil futures like on Sunday night, 75 and change. So that kind of sucked. I got rid of them yesterday, but that kind of sucked. I was just buying them as honestly just more of because I'm short the 82, 84. So I was a little worried about upside. Did I think that was, the right move? No, but I just kind of felt like I was compelled to do it. So that was the only thing newsworthy wise I did. But other than that, I'm glad to see this breakout happening. It's good for one big position that I have.
Well, stocks are certainly getting going here. Fed Chair Powell's on Hill today, testifying in front of Congress. First of 2 days of testimony coming up here. Has he said much of anything that we care about? Not much. One thing. There is one thing. He's been crystal clear about one thing. In fact, John, we can go to the slides, and it's been the timing of when the Fed's going to cut rates. This week, we've heard from two different Fed governors discussing their desire, or at least open-mindedness towards a July rate cut, which I think is worth contextualizing by the fact that both of those Fed governors were appointed by none other than one Donald Trump. So perhaps early jockeying to be in the pool of contender for next Fed chair because Trump himself has been calling for rate cuts. But one of the many questions geared towards Fed Chair Powell today during his testimony was about the timing of the rate cut. How come the Fed is not cutting rates when everyone else is? We're being outflanked by the Bank of Canada, the European Central Bank, everyone else. They're already cutting. How come we are not cutting? He was peppered with. And he pointed to the tariffs. And he said that given the inventory cycles that businesses face, he's expecting to see the impact of inflation come in June, but really July and August, which sets up a funny timing with the calendar because in that window, we only have one Fed meeting in July. And right now the market's saying that we'll call it just under a 1 in 5 shot that we get a Fed cut there. But let's reframe this in a different way, Jamal. Powell said he thinks we're going to get inflation in June, July, August, which means in September, by the time the Fed meets, they'll have enough data in front of them to substantiate whether or not this is simply a little bump in inflation or whether they really need to back off and can't cut whatsoever. But the Fed's next move is likely going to be a cut. So if you think that the Fed is going to be able to make a move on rates, you might as well lock in September for now. This is perhaps the view with which I'm going to view markets for the next few weeks. The Fed is really uninteresting to me, quite frankly, at this point in time, because it seems like it's on somewhat of a preset course.
Yep.
But this speculation around July, I think, is dead, barring a collapse. If you are a stock market bull who's enjoying this breakout, you do not want to see a July cut because it means something bad has happened. And for now, there is ample room to squeeze it out. And squeezing this out would be for ultimately a good thing. It means that we're still biding time, waiting for something bad to occur, when ultimately it's just another brick in the wall of worry.
Yeah, I mean, Fed PCE comes out later this week, right? And last we saw, that's still above the 2% inflation target that the Fed has set. And so I even with that, I'm not necessarily sure that happens soon enough that we get a rate cut in July. So I think you're right. I think at least certainly the expectation is pushed out to September. Whether or not it happens, I mean, who knows? I thought I also saw that he said, if not for a lot of the change in expectations earlier this year, the Fed possibly would have cut already. I thought that's what I saw he said. So, that kind of makes sense too, because let's not forget, just a few months ago, we were worried about the inflation that was going to come as a result of tariffs. And a lot of that has changed, at least the thought process around it. So you're right. I really haven't paid much attention to the Fed. I wasn't paying attention, obviously, last week. I don't remember the move. If so, clearly, I mean, it wasn't some major move in markets as a result of the meeting. And I think that just lets you know the market really hasn't been focused on the Fed. The market has been focused on, obviously, tariffs more than anything. Until today, I would say a lot of this Iran-Israel talk, the only thing it really led to was big moves in oil and not even so much in the markets. But, yeah, I mean, rate cuts really just seem to be a potential thing later this year. If we get them at all, the market doesn't seem to be worried about them either way. It's going to do its thing.
The market doesn't seem to be concerned, even about Iran, Israel, right? We were contextualizing this yesterday. If you add up all the revenues in the high end of estimates for companies that have business related to Iran, maybe $575 million in 2024. That's 0.003% of S&P 500 total earnings. So barring something like the Strait of Hormuz shutting down, disrupting global oil supplies, which of course pushes up energy costs, and then that's an input factor for all businesses. You're unlikely to see a significant knock-on effect here. And then we went through why the Strait of Hormuz unlikely to be closed, given how Iran's shipments aren't going to the West anymore; they're going to China. So mining the Strait of Hormuz would just piss off the Gulf states. Okay. We're now here higher, 22,401 in the NASDAQ. It's up 1.49% right now. It's a fresh high here for the month of June. It's a breakout of what's been perhaps a multi-week trading range. Jamal, volatility is falling off a cliff, which I think was your observation earlier. At 11.7 IVR right now, people are packing it in. Are you surprised by how quickly vol has fallen off here in the wake of this ceasefire, which if you were watching overtime yesterday, folks, we did start off overtime saying that the war was over. Trump did declare a ceasefire 3 hours later. So you got the news here first.
I don't know. I honestly, I wasn't really paying much attention to the market last week, and I really wasn't. I was trying to, not on purpose. And, I should say trying not to on purpose. And I, as much as this was talked about, I never really got this true sense of fear. So I'll be honest with you, I was a little surprised that VIX was as high as it was. I mean, it seemed a little bit much. I don't know. I just was a little bit surprised by that. So when you ask me, am I surprised that if this thing was undone as fast as possible? I mean, not really. No. Am I surprised that the market is moving this much on the ceasefire? I guess maybe this move, but whatever it takes, whatever the story, Chris, at the end of the day, when you talk about the NASDAQ, this is kind of what we had been planning on, right? When you go back to the time when we put that call spread on in the NASDAQ, and this is what I was basically planning on for markets here. I was planning on this charting pattern that we're seeing right now. And at some point, whatever the news may be, there was going to be a breakout, and this is it. So was I planning on this? Yeah, I was planning on this from a trading standpoint. Did I know what manner in which we were going to get here or what it was going to take? No idea at all.
The bull flag foretold that the Iran-Israel-U.S. conflict would not spiral out of control because a bull flag means higher highs, and you're not going to get that if World War III starts, right, Jamal?
Yeah.
So technicals, no, I think. At least I'll make that case. We think about the calendar coming up here around the corner and why this market may just push higher. We have a July 9th deadline for tariffs for the Liberation Day ones. We have July 14th, which is the end of the EU's 90-day pause. The U.S.-China 90-day tariff truce ends on August 12th. So I don't think the administration will want that because that's just going to be it's going to be a miserable news cycle for everyone involved, right? Democrats dunking on him, Republicans explaining why it's actually okay that China has lower tariffs than everyone else, which we just don't want to go there. So that's not going to happen, is my point. We're not going to allow China to have lower tariff rates than everyone else. So July 9th, you're going to get a kick in the can of that down the road. I guess the question I got to ask you here is, first off, and this is two parts. Let's talk from the bull case right now. What's stopping this from running up into all-time highs, which feel like they are barely a stone throws away?
I would have to say the only thing that can be is the July 9th deadline. If that starts to become an issue, people get a little afraid of that potentially approaching and messing up all the progress that we have gotten to this point. I think that's the only thing that I could think of that could ruin it. What could push it higher? Maybe that getting pushed back, or just more negotiations happening prior to the July 9th deadline and markets going higher, and core PCE possibly coming in below 2%, which again, I don't think that happens. I mean, that's a big move, but if that happens, then I think along with people sort of obviously the Iran and Israel stuff getting pushed past, which again I think was kind of minimal. I know it sounds crazy to say possible nuclear war was minimal, but I just, whatever, minimal. And then if for whatever you have the idea of inflation coming in more, I think that does create this situation where people are excited for a rate cut for the good reasons, right? So those are the things that could push it higher or lower.
You know, it's really remarkable. The technicals here have really, I know people are going to say they still look overbought or there's divergence. That's just not how I look at it.
Neither do I when I see this.
I see here a market that got overbought by stochastics back at the end of April. And then it stayed overbought for a long time because, Jamal, you and I have worked together for a long enough time. You know how I view momentum. You want things to stay overbought if a market's trending higher. You want things to stay oversold in stochastic if a market's trending lower. So a market that stays overbought when it's running up isn't a problem. All right. If you know a trend is breaking, when you get a relaxation from an overbought signal, price should collapse. Price never collapsed here. Digesting the signal. So now we have this decline in stochastics. We're no longer overbought, and we're still now holding up at a new high. Momentum's just reasserting itself. MACD is just giving us a buy signal today above its signal line. That's nice. So volatility's in here. And we've been holding this 1 month moving average back here in April. You see kind of a test in mid to late May, and then once more here mid-June, and just the past 2 trading sessions prior to today. Is that not how we behaved on the way down, treating the 1 month as resistance as we continued to sell off initially? So the market is behaving very orderly once more technically. And if it's a summer where you have light trading volumes and low vol and these significant issues kicked down the road, it's kind of set it and forget it and go fishing once more. Only 661,000 contracts traded today in ES. So this is not like there's high participation. It feels like it's end of quarter chase. And if I'm a bear, that's something very difficult to contend with for the next few days.
Yeah, I could see I could see the little bit of the end of the quarter chase too. You can kind of see that coming at times. And it wouldn't be a surprise to me at all. But however it happens, I will take it. Like I said, still got the NASDAQ call spread, 23,000, 23,500, and this is exactly the action. I moved it, and I think you did too, out of the June 30th expiration. But I
sit in July 31 right now.
Yep, in July 31, and it's a beautiful thing to see it happening right now.
It is a beautiful thing. Before we get on to the bear side of this, because I think there is we need to acknowledge that volatility is about to close at its lowest level, at least in the front month futures contract, since Liberation Day. So, could we talk about a little bit of complacency here? What a wild thing to suggest. Less than 48 hours since the Sunday market open. We have a Russell 2000 here, 14.9 IVR. Jamal, I think you're in this as well on the long delta side.
I had the future contract. It expired with the quadruple wedging expiration, which is fine. Same thing with my. I had Russell and I had Dow. Those both expired. I didn't, and it didn't apply a new one.
I'm still sitting in this one right now. There's 31 days to expiration here. So will I roll this position? So I was talking about this yesterday a little bit. The typical Tasty methodology, 45 and 21 out. That's if I'm going to say sell a put spread to have a long delta perspective. If I do an out of the money call spread, I don't like rolling at 21. I think I prefer to roll closer to 28. So unless this starts to really kick up through a new high here, the June 11th high that we have at 22,010, my personal view would just be to buy a little bit more duration earlier than the 21 days out and give it a little bit more time to breathe. Because the Russell looks like it's doing that thing that it did back here in May or even at the end of April, where it hugs that 1 month for a bit before it takes the next leg up. And then it settles back in at the 1 month before taking the next leg up. And then there you go. We've been settling in at that 1 month moving average, starting to lift off again. So that steps, right? 2 steps forward, 1 steps back cadence, it remains. It's not just a NASDAQ S&P 500 story. There is broad breadth here in the market rally. Ticks look good. Volume could be better, of course, but sector rotation is nice. Semiconductors, telecom, tech, financials, banks, those are all at the top of the heap. Those are all the economy positive, growth positive names. I really have a difficult time trying to paint this, today's action at least, as being a bad thing. Forget positioning, but I was thinking that this is a rally that doesn't have legs to it. I don't know if that's something I would be buying into right now.
Yeah, it's interesting. We're talking about all these moves, and obviously a positive upside along with some lower volatility. Volatility is still kind of hanging in there, and I don't know if that's just a function of if everything is not done, or if this is the new normal when you talk about the VIX, right? When you talk about like a VIX futures of 19 in the front, regular VIX at 17 and change. We've talked about it a lot over the last couple of months of how VIX is a little bit more elevated this time around than it is in an environment where we're near all-time highs, right? So I think that's just kind of part of this new market normal environment where there's always something going on, whether it's something that's come as a result of the government or other governments. I'm not exactly sure, but it does, still seem to be, again, we're not at the average of the long-term average of 19 and change or 20, whichever, but we're just below there. And we're also not at 14, 15 VIX, right? So typically when you have, a 2-day rally like this and everything is calm and everything is over, by the end of the day, like a day like today, VIX would be down below 16, right? And steadily climbing lower. And in this case, it's still hanging around an area that implies at least 1% moves on a daily basis, which we seem to get on the regular. And I guess that just kind of tells you everything you need to know about the current environment.
So the VIX here isn't at cycle lows, but we're getting pretty darn close to the lows that we've seen post-Liberation Day. Even in the front-month futures contract for the volatility index futures here, Jamal, this would be the lowest close that we've seen going back, I believe, to now March 25th, technically. Yeah, because the 26th was 1962. So this would be the lowest close since March 25th. What's your inclination here? Do you think that vol is underpriced for equities? Or is this a sign that we have digested this 3 or 4 month news cycle? We're comfortable with the new normal. We know that we're the frog boiling in water. We might as well enjoy it. Don't worry, love the bomb. It's going to be in the background, but it's not actually going to happen.
Yeah, I think it's more the latter. I just think the market is sort of, to me, for lack of a better phrase, the market sees this environment as, well, there's always something going on, and we're going to be in the precipice of something, whether it's something with governmental deficits and bonds, or whether it's something with some geopolitical situation overseas, or whatever that may be. I think that's what you're seeing here when you look at front-month VIX futures of 19.4, even though we're almost at all-time highs, right? Like that's the only read that I can get on this.
Perhaps it's a word of advice then to no one in particular, definitely not Robert Armstrong, the Financial Times columnist who coined the term taco trade, or Megan Casello, the CNBC journalist who asked Trump about the taco trade. But we seem to have a good thing going on right now. Let sleeping dogs rest. Okay? We don't need to do anything to upset this apple cart. At least until that July 31st expiry, Jamal. Anything happens on August 1st. Who cares? But for the next few weeks, right? Like, Trump didn't chicken out in the Iran bombing. Okay? We want him to chicken out on the tariffs, so let's not provoke him into tariffs to prove that he's not a chicken again. He's already got it right. Okay, so volatility's in, stocks are breaking out. Sector rotation is great here. It's led by semis. We've been peeping semis here the past few sessions too, Jamal, because of this consolidation occurring right up against that trend line from the late January swing highs here. It was a week and a half or so. I don't know what more people need to see. This has been a leadership group. AI has been powering this market higher here in the past few sessions. Those AI basket names have been outperforming everything else. Microsoft quietly hitting a new all-time high here in today's session. Of course, with the semiconductors, you have NVIDIA that's performing quite well, hitting its highest level going back to January 24th. Volatility term structure as well. Last week, we've been discussing how the curve was really flattening out. And even though the curve was flattening out, you weren't seeing this big pullback in stocks. You didn't have that inversion in the curve to signal the fear. The spread between the front month and the back month contract got below 3. It was like 288 when we quoted it on show. It's now back to 517. So you're getting that nice contango, that steepness in the vol term structure once again, signaling that like we really just don't care about what the news flow is in the short term. We're going to just push things to the upside, as it were. It's a good day all around. There are a few names here that aren't sticking out, aren't performing so hot, like a Tesla, for example, but those are idiosyncratic, limited. Tesla obviously had a very strong start to the week with their new robo-taxis in Austin. Even if there's now stories out about regulators looking into them, it doesn't take away from the fact that this is a good day overall for stocks. And we probably still have that incentive structure where the folks who missed out at the start of April last week who were rooting for World War III, now you're forced to chase into quarter end because you can't lose money in a bull market. That's how you lose your job.
Yeah, Microsoft, man, what a move in there. It's CME, how is there not a semiconductor future? Just curious. I just said that would be kind of a cool thing if you did it. NVIDIA has been really quiet more recently. And so, yeah, today I would consider almost a little bit of a breakout for NVIDIA because I thought the stock had been fairly quiet for the last couple of weeks. And maybe it was just consolidating quite like the market, but AVGO is another one of those that's making big moves today. So, yeah, semis seem to be, look, they're still viable. They still seem to be a big part of this market. Anytime they have big days, market has big days. So looks like that has not changed at all. But yeah, very strong day overall. I really hadn't even looked at the breadth, honestly, and I hadn't looked at sort of the overall moves in markets. I mean, it does seem to be green in a lot of different sectors. Energy, obviously, is one of those areas, and I'm sure we'll get to that in a little bit. That's been down. But yeah, semis have been really strong and, again, still powering the market higher.
Still powering the market higher. The interesting equity story that I saw today, remember Monster.com, the jobs board?
Yeah.
That company just shut down, declared bankruptcy today.
Didn't know it was still around.
Me neither. I wonder what that says about the labor market. So few job listings, the company can't stay in business. Uh-oh. Okay, we can go on to bonds. Bonds are holding gains here. Lower yields today are not helping the U.S. dollar, which I suppose is one thing that's not making this the perfect session. But, bonds, they really like a Fed chair that tells you that he's not going to just cut rates. Because the economy, for what it's worth, is a bit stronger. For new listeners, one of our working theses here on Futures Power Hour with respect to the bond market has been, if you examine what happened in September of last year, you see that the Fed cuts by 50 basis points, and instead of rates going down, rates go up. The market prices in reflation. Why? You're adding lower interest rates to an economy that has above target inflation and already good growth with an unemployment rate right here, 4%. Okay, you're just adding fuel to a fire. Well, the opposite's true now. Right? The economy is running a little bit warm. The unemployment rate is 4.244% unrounded. Inflation is closer to 2%. So if you do cuts too aggressively, you probably reinflate things. So the Fed not reinflating does not add a growth premium. Does not add an inflation premium to the back end of the curve. We're seeing bonds here edge up. This has been one thing that we've been hoping for in terms of like that short put spread. We're not going to see that significant dive back down towards lows. The tariffs being away from the edge, the U.S. dollar is not being displaced. I don't know if the vols here are great for new trades, though, Jamal, and I think that's the most important factor on the board. It's a 17.2 IVR here in ZB. So I'm continuing to squeeze these short put spreads for what they're worth. It feels like this may not be place one. I'd be looking if I'm considering how much capital I have to throw around in an average retail trading account.
It seems like every time I've looked at bonds over the last 2 weeks, they've either been around 113 or 114. I mean, they've just been fluctuating in between there. So the range has gotten tighter. But like you said, IVR has kind of dried up. And so there really hasn't been much of a trade to perform in there. But you can see the steadily grind higher. At this point in time, I feel like it's kind of like no man's land. I don't really feel like I have a hold on where bonds are going to go in either direction. So I haven't had on a trade in a few weeks here. And I really don't. It's funny. I barely remember them touching 109 and change. That was a month ago. It's like I barely remember that happening. But lo and behold, it did happen. So right now, no trade for me. Again, you're right. I think a lot of it's, is still yet to be ironed out. Given sort of the back and forth between the president and Fed Chair Powell. But it does seem to be grinding higher right now. We'll just have to give it a little bit more time.
Notes here are potentially closing at their highest level since early May. The high close there was 111 and 21 ticks. We're at 111 and 20 ticks right now. We're moving into the upper half of the year-long trading range right now. I think that's worthy of consideration. So if we think about as a potential bias, I'm leaning directionally neutral. It has been a working status for us for a number of weeks, and it continues to work even on a day like today. Perhaps we're treating recent lows closer to 109 as an absolute floor. If we're laying out new positions, I'm thinking about going out to 59 days here. And so instead of doing 109, 108, if I wanted to, and let's just kick you out here real quick, 109, 108, and we go to one standard deviation on the other end, 114, 115, you might be able to squeeze this up, skew it out a little bit here, where you give yourself a little bit more room to the upside on balance. Jamal, and this is still 61% probability of profit. It's a little bit better than 3-to-1 risk to reward. It still calls for the trading range that we've been in for the past several months to be maintained, but allows some breathing room if bonds continue to gently nudge higher. I prefer that than giving a little bit more breathing room on the downside, like we have been doing moving forward. And that's simply a function of the math. We're now in the upper half of the year-long range as opposed to the lower half. So give more breathing room to the top side.
Well, now that I think about it too, you asked earlier, what would be one of the things that could derail the rally? Again, we talk about 522 and the last time we saw bonds at their lows. It would be that. It would be another revisit of 4.5%, right, in the 10-year. I'm not exactly sure what would cause that, but that would be the other thing that I think we should be a little bit worried about if that happens or whatever.
4.294% right now on 10s. So it's not exactly sitting at session lows, but you can see how this thing is kind of tilting over, sharp high, higher low, and then it takes us longer to set a new higher high. We're kind of keeling over. Momentum's picking up, those long upper wicks. Lower rates, good for stocks, of course, if it's occurring for natural reasons. In this case, it is. We're reducing inflation premiums thanks to oil coming off the board here, Jamal, which is good news. I think that notes it's a 16.6 IVR. You got to find a trade that works. And quite frankly, at something like a 2.5, 3-to-1 at 61% pop, that's close enough to make it work. Perhaps you want to get a little bit tighter here, which actually would make sense because the high that we have on April 7th, panic move in the bond market, that's 114 and 14 ticks. So Jamal, let's just go down to 114 and a half. There are ways to squeeze this trade out a little bit more and make it work, perhaps. And you know what? I kind of like it myself. Let's just get it going here.
Look at you.
And it wasn't filled right away. It wasn't filled right away.
It's a good trade. It's going to move away. I already had one of those today. I'll tell you about that in a little bit when we get to the asset. But it's interesting. I'm just looking back at this, man. 10-year yields. Let's just revisit the fact that we were at all-time highs earlier this year when the yields were closer to 4.5%. Not a problem then, but when it happened in May, big-time problem. So it's kind of interesting how that works. That's kind of year we've had.
That's not how it usually works out. I think it's worth noting. Like if I just started trading this year, it's like, okay, so bond yields up and stocks are down, and now bond yields are going down and stocks are up. It's like, usually people sell bonds to buy stocks and sell stocks to buy bonds. They shift from fixed income to more variable income, right? It's a different risk. So we're taking it with a grain of salt. Bonds are working. Long deltas, directionally neutral. There's been a little bit of that twist there, right? A little bit of sprinkle of the long delta. It still continues to work. Metals, on the other hand, I don't think we're surprised by this. I was retaining some very late gold exposure here that was out of the money, that's expiring worthless, so I saw no reason to get rid of it. Today, it's a final nail in the coffin, so despite having exposure, I think this position is out like $70, which is, it's for a 1.7% move lower in gold. That's not anything. The question is whether or not this is over.
That's the
Jamal.
question I was going to ask you today. This is the one question I've been waiting to ask you all day. I was like, I'm not going to do it. I'm going to do it on air. What do you think?
I appreciate that I have that reputation. However, consistent with what has been discussed in recent sessions, we have to think about gold. Think about all the things that drive gold higher. Central bank buying, we just got confirmation that gold is now the second most popular asset on central banks' balance sheets globally, just behind the US dollar. Well, not just behind, but it is second place. It's moved ahead of the euro, and it's moved ahead of that basket of everything else as a fourth category. So we get that news. Okay, that's nice. We have the US bombing Iran. We had a 1.1% open higher at the start of the week and couldn't hold it. Not for nothing. So with all these factors are there, and then you think about the positioning, CFTC COT report shows that gold longs are, well, very long. You look to the Bank of America Global Fund Managers Survey, it had been the most crowded long trade in the market, as we discussed last week and this week. So long in the tooth, yes. Volatility also coming back in. Jamal, precursor for gold, silver over the past almost 2 years, really since October 2023. And I would say that this particular episode we saw this weekend is really a continuation of this long-running geopolitical incident that started back when Hamas decided to attack Israel on October 7th, 2023. The decline in volatility has been a precursor, contemporaneous indicator even, for gold prices suffering. And that's again playing out because gold vol a few days ago was up in the 56 IVRs, and now we're back to 29.5. What?
Yeah.
Okay. The long-term stuff hasn't changed. Tactically, gold looks like it's been a decent short. Is this uptrend here going to hold? I'm sure is everyone's question because there's a lot of support in the area. We see recent swing lows down here. This is a decent place as ever on a risk-reward basis to look long. The line in the sand that we drew was like 33.10. And you just look down the levels, 33.10, 32.60, okay, and then 31.50. So as for someone who had an out-of-the-money call exposure, at least in this particular trade that's on the board here on the follow page, is this a good spot to initiate something with enough duration such that if we're wrong and we lose another 1% or so, there's enough value within the position that we can still get out of it? Take a small loss. Yes, Jamal, of course, we're gold bugs around here. Why wouldn't we do that? Come on. You know where we're going with this. So out at 34 days, right? Like a 3,400, 3,425, something contained. It's a little bit 37% probability of profit. If this thing goes down, I'm going to have to get rid of it and junk it right away. But it's enough there where if we're at technical support in gold, the volatility's come in enough where it's cheap to express this point of view. So if I see a 32.99 print tomorrow, Jamal, I just get out of the position. I go home. Not a big deal.
So for me, I see on my chart here, because I always use SMA, I see that gold has touched the 50-day SMA 3 times in the last 2 months. One time in April, one time in May, and that was the last time I thought about buying it were those 2 times, and I didn't. It bounced, and I missed it, and I was annoyed. Particularly in May, I was annoyed, and I thought it was it. And now it's doing it again. And so I, like you, am in there trying to buy some. I actually tried to buy a call spread this morning. I tried to go out a little further to August 26 expiration, 63 days. I'm trying to buy the 3,400, 3,450, and I'm trying. I guess part of it is. So I swung and a miss. I tried to buy for $16. Right now it's trading $17.40. Swing and a miss on that. I don't really feel the need to chase it because I still have a silver call spread. If you remember, I got that silver call spread when silver had the major breakout. Also 63 days out. I have the 40-42. I'm still holding that. And as a result of holding that, I don't feel the need to chase this gold call spread. If I'm wrong, I feel like both of them will find their way back up, even with me missing out on the gold call spread. But I don't think it's done. I just think, again, we've talked about the narrative flexibility that gold has had for a while. I thought if there was going to be a breakdown in gold, it would have really already happened by now, and this would have been the huge breakdown, obviously, as we were breaking out to the upside in equities. I thought, again, as the market started to climb back up, gold would have broken down. If it hasn't done that before, and this is the first time it's revisiting that 50-day moving average for only the third time this year, then why should everything completely be over? So that's why I'm trying to get the call spread, and I'm trying to go a little bit further out to give it some time.
I like that. I like that because it confirms my bias. we go over to silver. This is a really interesting spot for silver.
Yeah.
We take the closing high that you have on March 27th, which sure there's a gap open higher on the 28th, but we don't actually hold the prior day close. Subsequent sessions, we fail to get through there. Note that once we clear it on June 5th, that's when we reestablish ourselves back through that close high of 35. Again, it's 35,676. Okay. We're currently in at 36.10. Today's session low comes in at 35.535. That was a mouthful. 35.535. So we've tested these former resistance levels. We've bounced off of them. We're bouncing off of the 1 month moving average here. If there's a place for silver to hold, this is as probably a good a place as any for silver to hold in this pullback. And keep in mind, when Israel bombs Iran, right, we're talking about silver trading closer to 36.5. It's not like it had a huge move around this. It was fairly price insensitive to some of the war headlines here. So whatever pullback we're seeing in the metals, to me, with a weaker dollar, with lower bond yields, this is just pure risk on fuel. Folks taking profit out of the shiny rock to invest and bet on the future earnings of American companies, right? Because Jamal, isn't that the difference? If I buy NQ versus GC, one is buying a rock, one is betting on the future ingenuity and innovation of all American tech companies. So there's a different level of risk there and confidence that I'm displaying when I put my chips on those tables. NASDAQ's up 1.51% today. I suppose we're doing tech over rocks for today's show. But that doesn't mean this rally's finished. So I'm keeping an eye on this uptrend right now off the low. There's no silver exposure for me here on the Tasty Follow page, but this is kind of the kill box. This little area here needs to hold over the next few sessions. And if we can hold this here, $40 easily. I just don't think that we have to look to our North Star, that longer-term technical analysis that points to a move into the 40s before the year is out.
Yeah, this one is a little bit more noisy for sure when you're looking at the chart here. And silver usually is. So that's one of the reasons why I did go out to August on this one, because you just figured at some point if there was going to be a breakdown, it might take a little bit of time for it to come out. But what you got there on the chart shows it. I mean, this is a precarious area, and I'm just kind of hoping it can hold on to it. I do have our next friend, of course, as the sort of hedge to this. I'm still short a copper call spread, a lot smaller amount. And again, it's just kind of balancing out the two. Overall, if they both were to go to zero, then I just lose, think 700 total on the trade, which sucks, but at least that balances out some of the silver trade that I have. And that's why I'm not chasing the gold right away. Again, I want it, but it's just going to have to come to my price because I got a lot going on here anyway.
We were talking about the price insensitivity of copper in recent days, and that seems to be continuing somewhat here today, although it's up closer to 0.5%. It traded closer to 5 earlier, in fact, before pulling back in. I, like you, Jamal, I'm still leaning short deltas here in copper against the swing high that we have from June 5th right now. That's up at 5.11. While this trade has not been fantastic the past few sessions, because obviously being short a call spread is better when the market's moving down, ultimately the idea here is that we're trapped in a range and we're sitting near relative cycle highs. This is somewhat concerning, though, if I'm thinking about leaning short delta still. Even the 50-day moving average, note how it has a positive slope all of a sudden again. Right? Same thing for the 1 month, same thing for the 1 week. So momentum's building right now, and we've been catching in this little zone. The market hasn't been able to poke through that envelope of moving averages. For the past week, Jamal, when you were out, given the insensitivity that we saw in copper relative to some of the headlines coming out of the Middle East, my view was that if I wasn't already in a copper position, the short iron condor is very appealing from my eye, because you had enough vol on the board still, relatively speaking, coupled with the fact that, well, this market is basically just chopping around for the past several months. I still think that may be appropriate, although keeping in consideration the Liberation Day sell-off lows, let's just pretend they don't exist for a quick second here. I could make an argument that 450, 460 given the moves that you see in February, March, what you hear at the end of April and throughout May, that's really the floor that you want to work with if you're structuring a trade in copper prices right now. So going out to something like 63 days, this would be far, far too lenient. I would actually pull this back in and a little bit of a skip there. Let's go 464.50. Let's go 575.60 at the high end. This actually isn't that bad of a trade considering where the extremes are for price this year. And to breach that 460 low, you have to surmise that we get back into an environment where we're bleeding off like it was Liberation Day again. I don't see that happening, right? And that's the bet that we can make in this market and have a pretty decent risk to reward lined up.
Yeah, you certainly can. There's more than one way to skin a cat for sure. I personally just like having the short upside against the long upside. If the copper trade hurts me, go right ahead and hurt me. I assume that I'll be winning on the silver trade too. And maybe if gold continues to pull back a little bit more today, maybe gold will be along in that too.
Hopefully this gets on the board and it's not getting filled right away. Yes. You want to see, you would think when you place a trade, you want to get in right away.
That's what
sometimes with some of these trades, you see like, okay, there's only one contract traded in this market today. All right. Open interest 100 at these strikes. If I get filled right away, it means that the other person who made the trade today was like, you know what? I changed my mind.
Hey, if you know, you know, you know.
Okay. So we go over to oil, down another 5.39%. Jamal, yesterday on Futures Power Hour, the missiles started flying. About an hour beforehand, I had flagged on Twitter that it looked like Iran was going to attack the U.S., given all the chatter that we were seeing in the news and in various channels. And sure enough, they did. But as we learned over the course of the session, given the fact that Iran had posted something on their national television, and folks, if you're not watching Iranian state television during this conflict, you're really missing out. I'm not kidding.
Nobody's watching Iranian state television right now.
Did you see what I put in the chat with the Legos?
I think I did. I don't know. There's a million messages I had to keep up on, but I didn't really see it now.
Iranian state television aired a recreation of how Iran retaliated against the United States, and it's animated by Legos. So yesterday we noted that they were declaring victory of sorts, how it was a proportionate attack, in part because the same number of missiles that they fired at our airbase in Qatar and Iraq, same number of bombs that we dropped on Fordo and Isfahan and wherever else we attacked this weekend. Gosh, don't put me in front of Tucker Carlson. I don't know enough about Iran. But we have crude oil here sitting down now at a 44.9 IVR. Right, I think that's the story here. Vol has completely collapsed over the past few sessions. We go back to a world where we were prior to June 12th, which really June 11th, the market started ratcheting up. I don't want to say someone knew something, but someone knew something. Either way, I digress. Where were we before then? This was a market that post-Liberation Day is chopping around in the mid to low 60s. We've seen better growth data in recent weeks, so perhaps you can make a case that it should be the mid 60s. This is kind of is this a Bob Barker price for oil right now, Jamal? Is the price right? And more importantly, is this the last fleeting shot that we have to take advantage of volatility before it dissipates even further? I say that because we are sitting just below the halfway mark of this post-Liberation Day Iran-Israel war trading range midpoint. That comes closer to $66 a barrel.
Is the price right? That's the hard question because I don't necessarily know what I want to do price-wise at this point, whether to buy it or sell it. To your point, I remember we had Iron Condors on, and I remember my short upside.
Wrote it out.
Yeah, wrote
like
it out.
An idiot.
Yeah, I know.
Was not in the money until today.
Well, and I didn't. So I was short the 68.70, and I was short the like 54.52, I think is what it was, and. I remember right around that June 6th time period, it was starting to ratchet up, but there really really wasn't a whole lot of discussion quite yet and catalysts. And even then, just really wasn't much reason to be kind of fearful other than if you just look at price action, right? And I don't know. There's been so many different times before where I sort of traded my way out of a position, and I just decided not to do anything. And then sure enough, we had the big moves. All of a sudden you get, like you said, the 11th and the 12th, and then so on and so forth. And I took that opportunity to add a different iron condor with different strikes revolving around where we were at the time, 82, 84, and then I think downside might have been like 64, 62 or something like that. So at that point now I have 2 different iron condors on. And over the last couple of days, of course, I managed to butcher the trade by, again, overnight. I was a little worried about oil being at 75 and change, decided to buy a contract. Worst thing that happens, I'm going to lose on the contract, but possibly make it back on some of the vol potentially eventually coming in. Well, vol did come in, but I actually closed out yesterday the iron condor where it was short the 68.70. And I got to tell you, that would have been working great right now. I did not foresee a 2-day big time downside move. And so when you ask whether the price is right at this point, I'm not interested in buying nor selling oil. I think you're right. I mean, it is a price is right situation, at least where it's sitting right now. And the best thing you can do is just take advantage of the vol, which, again, has come in quite a bit from just 2 days ago. So if you're not already in, you could still get a chance to get in at 45 IVR because the vol is bid. But where oil goes from here, nobody knows. And hopefully it just kind of sits in this range.
That iron condor that you and I put on, right? We had mentioned previously in June, like if you cross 64, you probably want to recenter the strikes. I ended up having to ride this out, could not get filled. And so I've been riding it out. So that's one thing here that's, better be lucky than good. The short call spread that we put on last week is obviously working out a little bit better given the abject collapse in oil prices the past few sessions. And I think we read the tea leaves correctly here for myriad reasons. But at this point in time, is there much traction left in this position, right? I mean, it was the 78, 76 call spread. We're at 64 already. It feels like there's some cleaning that's necessary here. I think that just everything in oil basically needs to get off the board. Just kind of reset. Let's just reset and clear the book.
Yeah, that's basically what was my idea behind doing what I did. I just wish I had waited a day later like you did. I wish I'd done it today as opposed to yesterday.
Yeah, like when Iran is using Legos to depict what happened to sell to their domestic audience that like this is the kind of victory it was. You're using an American movie financed by a former Trump secretary member and Steve Mnuchin for your country's domestic propaganda. Like, you lost. It's over. It's done. Okay? It's done. So it's CLU5 as well, right? Like, get this out of here. Short the 76, 78. I mean, could we ride this into the ground to zero? We could. Let's ride it into the ground to zero. We want to do a short call spread, a short iron condor here too, though, right? That's the prudent thing to do. So even at 52 days, we go back down towards the swing lows. We think 54, 52, as it all kind of worked out the first time when we set these up. And then because of the grace of the market, we can still do. We're not going to go that high. We can do 72, 74. And that's decent, 50% probability of profit. I'm not loving the max profit to max loss in here, but it's a bet that the oil range holds. And if there's a break in the ceasefire, Jamal, right? Like, let's just talk about that. The ceasefire went into effect last night. If there's a break in the ceasefire, do we not think that it will quickly go back to that condition where, okay, we're not really going to go to war? We've already kind of let the cat out of the bag. Both sides are clearly trying to de-escalate. Iran called us yesterday before they shot the missiles at our airbase so that no servicemen are killed. They understand that's a red line that can't be crossed, right? It was Kabuki theater. This is done.
Really?
Yeah, it's done. It's done.
Look, we're going to be sending some bombs around 1 p.m. We just want to make sure nobody's in the base, right? We good? We good? Okay, we're good.
Yeah, we're doing it so there's no coup against us. Love those dings.
They know their ass will be grass. Everybody know that.
Everybody just Dollar down. It's a good thing today. We're running out of time here on Futures Power Hour, but in a world in which gold is off, the dollar's down, stocks are ripping higher. I mean, what more do you want, Jamal? The yen here is having the most significant bounce of the day, up 1%, which, as discussed yesterday, the yen's weakness early in the session was more of a function of what was happening to oil, insofar as Japan imports 90% plus of its energy. And so when oil prices skyrocket, all of a sudden it gets to a world where, like, okay, you're going to have to print more yen to buy every barrel of oil. And so that's bad for your currency. So oil falling apart has been historically, remains to be something that can be a catalyst for yen strength.
Mm-hmm.
That said, Jamal, one thing that we examined yesterday after the most recent release of the CFTC COT report is the fact that over the past 2 decades, yen positioning is still at a 2.93 Z-score. This long position is exceptionally overcooked right now. So yes, you have a nice little bounce here at the gap that you have coming out of Liberation Day, at the swing lows that you have in mid-May. That's a nice little Morningstar candlestick cluster, if you will. The crowded positioning to me says sell the rally. By the way, we crossed a Z-score of 3 back in late March. Notice how the rally starts to peter out in April. There's just too many people on this bus right now to drive it to the top side. So yeah, yields are off and crude oil's down. I'm actually looking for an opportunity for the yen to rally up towards 0071 and then look to get into buying some out of the money puts closer to 0068. So no position here right now, but looking to get short the yen. And broadly speaking, get long the dollar because of how bearish everyone is. I do have a short call spread on in 6E. I might take that off just because of how this looks like it's closing at a new yearly high. And that's not something I want to have a short delta on. So we'll let this wash through the system, but the dollar short, again, very, very crowded trade right now.
It is a very crowded trade, and that's the one thing. So I don't have anything on futures-wise with any of the asset classes, but I do have in TastyFX. I actually have I'm long euro dollar and I'm long pound dollar. A pound dollar. Been long those for like about 2 weeks now, and again, just it's been a crowded trade, and I feel like I've seen stuff recently that talks about how crowded that trade is. So I have wondered about taking the opposite side of it. I don't know. I just haven't yet done it. I mean, I'm just kind of like staying with what's working, but I could see a situation in a day, right, where we get a couple of days of an unwind because this is such a crowded trade. So I would not be surprised if that happens at some point. Does that immediately mean that the market gets derailed? I mean, that might be possible as well. So that's another, I guess, answer to your question earlier in the show. What could derail this rally right now? Maybe, that's another one of those situations, possibly 4.5% in the 10-year and dollar sort of bouncing back towards par or something like that. But until it does, I mean, again, the trade that I have is not taking a whole lot of capital, so I'm fine with it. But I've yet to put anything on in any of the futures here. And I've thought about it because of how crowded that trade is. And a lot of people are short the dollar.
A lot of people are short the dollar right now. Speaking of high volatility, Canadian dollar 50.2 IVR, right? Did it really benefit during oil's run up? No. Interesting. Not really behaving like a petrocurrency.
Yeah, right.
What's next on the calendar? And you know what? It does versus all the other currencies, just not versus the dollar, because the dollar is such a significant exporter of oil now, thanks to LNG and the shale revolution. Tomorrow's calendar, more testimony from Fed Chair Powell. Today was Congress, so not very informative. I mean, the House of Representatives, the usual getting the sound bites for the perpetual election cycle. Tomorrow is the Senate. That's where the real interesting stuff are, but it's probably rehashed. So net, do we?
Right.
Okay. Powell said he's not moving today. That's what we covered at the top of the show.
I'm not moving.
He thinks inflation's coming June, July, August. So we'll see you in September. And the market volume reflects it today. S&P up 1.2, NASDAQ up 1.6%, oil off nearly 5.5%. Jamal, you're back, though, with engineering the trade in a little bit. You need to take a break. I'm taking a break. I'll be back later today with overtime for Eastern. Until then, though, I suppose, folks, good luck trading. Stick around, though, because Dr. Jim Schultz is up next with From Theory to Practice here on Tasty Live.
It's option jive.
Hello, everybody. Welcome back. Jenny, I think this is our first live option jive. We do the live option jive recap, which we're going to do on Monday, and we're going to talk about how we did this today.
And I don't know if I've ever really, because again, when I hear the boys in the morning, I'm listening to them, I'm not watching. So I don't know if I've ever seen that video, and it's cute. I like the option jive intro video, and I wonder how many takes it took Tony to get that down.
So I know Cassie is standing right by my mouth right now, but all I know is that Cassie just, we get told to do random stuff sometimes. So all I know is Cassie brought Tony into the microphone studio and was like, say it like this. And he's like, all right, said it once and walked out.
Oh, really?
I think so, yes.
So
she's like, that's perfect. So
funny.
We'll see.
All right, this is a big one today. So let's jump right in.
Yeah, it's a long one, which is good. And now, once again, we got it in advance, but I didn't read through it. Did you?
I took a look at it. We got this yesterday, and I honestly, when I saw the email come in from Baby Shark, I was so excited because I know he's helping us work on some of our content for our risk management convention.
That's what I thought this was.
So when it came in, I was like, oh my gosh, Baby Shark got it done. And so I opened it up. I was like, oh, it's just the option jive for tomorrow.
It's the options jive. That's pretty funny. Okay, but this one is forming a directional bias. Key considerations for trade entry. Okay?
All right.
Got it,
all right. Fire it up. Here we go. Okay, traders tend to default to neutral strategies due to their lower risk profile and ability to make a profit regardless of which direction the stock price moves.
However, learning to form directional assumptions is an important skill as well. I like that.
And so good, talking about the first line, when you talked about FedEx and like Nikki was bearish and Mikey was bullish, the move was within the expected move. They could both be winners, even though it went down and one was bullish, one was bearish. It didn't really go beyond its expected move. So the nice thing about options, you could be wrong and still be a winner.
I know what their trades were. One won, one didn't.
Okay. Well. All right. In order to form assumptions about the trades we place, we need to develop our market awareness. This refers to our ability to assess the entire stock and option market to determine our personal assumptions.
It's interesting because this kind of springboards off what we were talking about with Dr. Jim yesterday.
Yes, and market awareness and how important is that and how valuable is that? And do you think your performance is better when you have better market awareness or more experience and a little more market awareness?
I mean, I think so, but that's just me talking my book. All right, next slide. Our only hope is to be able to make these decisions quickly and efficiently without dwelling on our decision, good or bad. We only have 100% control of one thing, trade entry. That's true.
And making decisions quickly is helpful, but quickly, sometimes I think when you're trying to make decisions too quickly, that's when you might make a rash decision. Like yesterday on the bell, at the bell, it was like 259, and I was like, 259, I gotta get one more trade in. And then I put in a trade that I immediately regretted at 3 o'clock.
What was it?
I bought some triple Q's puts because I thought, how can we be up this much? How can we be up this much? Factors to consider when forming assumptions: market awareness, liquidity, recent price action, volatility, and IV rank. And when you're trying to look real, when you're on the spot and you have a short amount of time, you might not be taking into account all of those things. So it's good to have a little bit of time.
No, but I do think that making decisions quickly is extraordinarily important. You have to be able to make those decisions. But you had made that decision, I will tell you, you had made that decision well before. Like you knew you wanted to short the market because it has gone up so much. So that's why you could make such a quick decision.
No, it was literally like I was going through my positions, tweaking them. And then I saw, oh my gosh, it's 259. And my P&L for the day was good. So it's kind of, the question was, if I didn't take off a lot of positions, how do I protect or this P&L from losing it tomorrow if the market's down? And so just like quick in a flash, bought some triple Q's puts, right or wrong. It's not working. It doesn't look like it's working out this morning. And they were just for today.
Yeah. Well, I figured as much because you're not going to spend too much on those. Let's go to the next slide. Let's go to the next slide. Okay, futures drive the underlying equity markets. True. Okay, so there's your first tier, and then there's your second tier, right?
Okay, so first tier, ES, NQ. Now all of these,
and then they have the corresponding ETFs. Yes.
Yes, and so as far as the first tier goes, you can trade those. You can trade those before the second tier is open.
You know what I find fascinating? The only thing I'm saying with second tier is they have McDonald's in there. which threw me off to the point where I was like, is that something am I wrong on the symbol for McDonald's? That's McDonald's.
Yeah. Yeah, it is McDonald's. I mean, maybe Baby Shark just had McDonald's on his mind when he was making this.
Yeah, so there is true. So the futures do drive the underlying equity market. So that is good to be aware of. And Jenny, my question to you is, with your understanding of the markets, and I ask my son's friends this all the time, what is the first thing you look at?
In the morning?
In the morning.
Where the spoos are.
Where the spoos are. And that's that first thing on that list, that ES. That's that top of our mind. And the funny thing is I mean, I do trade them sometimes, but they're not all that I trade. I'm doing it sometimes when I'm in a pinch. But that's where I want to know where those are, because that tells me what my entire portfolio is going to look like by that one number.
In my eye line kind of goes ES, NQ, ZB, CL, that's kind of Bitcoin, that's kind of my order.
Which is ironically the tasty default list within so many things.
Well, I don't really care that I don't focus too much. I'm not like, oh, where's the Russell today? And I don't really watch gold too much either, but that's because I don't have a position in gold. So
yeah. Okay.
I mean, so day to day. Yeah, but as far as the second tier, I rarely pull up McDonald's.
I know we're kind of kidding about this, but so then it says develop an awareness of what's going on in the market from a broad perspective and in different industries. Futures and major stock equities can be a part of your watch list.
Okay. Love it. Next slide. All right. Since the current market is in a low implied volatility, traders with a strong directional bias and limited capital should become well acquainted with spreads due to their lower risk and smaller buying power effect. When volatility increases, you can increase your capital allocation. So very good point. Very good point.
Yeah, that is a very good point. And the two most used spreads are credit spreads and debit spreads. So yes, this is kind of a recap for everybody there. But we talk about this on a daily basis, Jenny and I, because we have larger accounts that are our own accounts, but we trade kind of handcuffed with a bite-sized show account, right? So a lot of times you'll see us spreading things off or saying no to certain trades because it's going to use too much capital, and especially when implied volatility is low.
Right. And from our research, when implied volatility is low, that's when you should have more capital on the sidelines. How do you have more capital on the sidelines? More defined risk trades. How do you have less risk? With those defined risk trades. So it makes sense. It makes sense. And then if we get a movement in the market and increase in vol, then we could, put more capital in.
We ramp it back up. It's kind of funny. I love having these things that are given to us because we've done that naturally because of what we choose. And I like having the research edifying it, right? So we kind of have always naturally had less positions on when the implied volatility is low. Not less positions, less capital use, because your positions are different. You might have calendars or spreads or things of that nature instead of selling puts in aggressive stocks.
And I was going to say, with earnings season coming to an end, market nearing highs, vol hitting lows, and we can be back to earning setup calendars.
Oh yeah, it's going to be a glorious time in our lives. All right, let's go. Let's go to the next slide. Okay, our convention for implementation is as follows, right? Our convention. We use this protocol because it affords us the best risk-reward relationships when acting on a bias. There you go.
So credit spreads, put spread or call spread, ideal high IVR, and you're either bullish or bearish. Bullish, bearish, sell your credit spread, sell a call spread if you're bearish, sell a put spread if you're bullish, and ideal in high IVR.
And it's interesting because we kind of talked about this once again with Dr. Jim, and this is your decision tree, but there's so many nuances with this. And then it says, if you're bullish or bearish in low IV, you're going to do a put spread or a call spread debit wise. So that's just a generic, if this, then that. If the vol is low, you're going to go with a certain type of trade. If the vol is high, you're going to go with a different type of trade. But there are so many nuances throughout this whole thing.
And the reason for this, I mean, someone might say, oh, buying a put debit spread is the same thing as selling a call credit spread. And I get that with synthetics, but the reason for the debit spread is our mechanics with the debit spread is you wrap it around and you pay 50% the width of the spread. So the difference in low IVR, you're risking less, right? You're 1-to-1. You're risking $2.50 to make $2.50. You're risking $1 to make $1. So your risk is less in low IVR. And in high IVR, your risk is more. You might be collecting $1.50 and risking $3.50. So you're collecting less, risking more when IVR is high.
You know what? I'm glad you said that. There should be an asterisk on this because it isn't apples to apples. It's not just the credit spread or the debit spread. Because if you're using the same strikes, that's the same trade. It's a different strike selection throughout this process with your implied volatility.
Yeah, it's almost like the debit spreads are like the chicken, where you're risking one to make one, versus in high IVR when you're risking much more to make less, but that's
you're going to be out of the monies when in high IVR.
And that's what makes it a high pop trade. So in low IVR, they're not a high pop trade. They're 50-50. In high IVR, they're a high pop trade.
That's an excellent point. You get a gold star, Jenny Andrews. That needs a little asterisk. Okay, next slide.
All right, we like credit spreads in high IV since it gives us the largest credit for the spread width or risk that we are using.
I want to see what this is. So the SPY 20 delta, 10 delta. Okay. Credit as a percentage of width spread. So if the and this is the IVR bucket. Oh, look at the IVR of 75 to 100 in SPY. Woo. So you're getting less of a percentage with the same width of a 20 delta, 10 delta if you have a lower IVR.
Right. So you're risking more, and why, and the IVR is low. So that's why we like these spreads more, these out of the money credit spreads more. When IVR is high, you're collecting a larger percentage of the width of the spread.
I will be very curious what they think about the debit spreads if they are going to be wrapping them around the at the monies. You almost need to, right? So let's go to the next slide.
And they should all just be, okay, debit spreads are initiated in low IV due to the cheaper option price and thus larger proportion of potential to profit debit paid.
These should all be the same, in my mind.
Call spread max profit versus width, 60-40. So they're not doing like, it's pretty wide, 60 delta, 40 delta.
They're also making it directional. So they're making this a directional spread.
Yeah. Well,
60-40. Because usually
call spread, call spread, 60-40 call spread.
Yeah, so when you are when I'm doing a debit spread, in my mind the mechanics are wrap it around the at the monies. Wash extrinsic value is all we're looking to do.
I mean, if you change these delta slightly to like 80-30, then that's a poor man's covered call.
It is a poor man's covered call.
So these are directional. It is, I don't want to call this a poor man's covered call because you're not so deep in the money, but these are directional call spreads, bullish trades, but defined risk in case the market turns around. If the market keeps grinding higher, you'll make money. If the market turns around, you're not gonna. Your risk is defined.
Do you know what's funny though, Jenny? This goes into that same bucket, kind of what we were talking about with Dr. Data. You got to give them deltas, so they're giving them wrapped around. You know what I mean? They're wrapping it around 50-50 with this. They got to give them deltas instead of saying I want to wash extrinsic value, because that's what I would be doing to a debit spread. You know what I mean?
Right, or we're just wrapping a $5 wide right around where the stock is trading, or wrapping a $10 wide right around where the stock is trading.
Yeah, so, this is a good options, Jive.
All right, last slide, because then we got to get to opening bell.
Oh God, I didn't even look at the time. Takeaways: having market awareness is a foundation of success in trading, informing directional assumptions.
Small account traders can more efficiently use their capital when acting on a directional bias by using put and call spreads.
And we use credit spreads in high IVR and debit spreads in low IVR because of the risk reward relationships in place, which I do agree with.
All right. Excellent option, Jive. Thank you very much. That came from Baby Shark. We're going to take a quick break and we'll be back with the opening bell. Stay tuned.
Stay tuned. And welcome back. This feels just like the Liz and Jenny show, and we have a What's Your Assumption, Jenny Andrews?
I know. It does feel like our show feels like a Wednesday. And it is a Wednesday. It actually is a Wednesday.
True story. True story.
All right. What's your assumption? Are we on schedule? Pretty much. I'm not going to miss. I'm ending this on time because I'm not going to miss 1 minute with Jacob today, Liz. Not one.
Oh, I know. Me too. So let's hit us with slide number 1.
All right, Amazon, this is coming in from Dave from Cleveland. Hey guys, I'm looking at an iron condor in Amazon, 185, 190 puts, 230, 235 calls. This is easy. It's not an assumption. He actually gives us the trade.
Just pop in and do it. Let's see what it is.
All right, I'm going to pull up Amazon. We'll go into the platform and I will pull up this trade from Dave from Cleveland.
So it is the 185, 190 puts, 230, 235.
He's in the 23 day. He's 23 day. Yeah. So 185, that seems, well, you know what?
185, 190, 185.
Okay. But
and it took 25 days. So this was 2 days ago. So it might be pretty far. And then go to the 230, 235.
I think Amazon rallied. Yes. Amazon had quite a rally yesterday. So all these should be shifted up. Everything on this trade would be shifted up, and I'll shift it up a little, 195, 190, and then go to the 235 to 240. Well,
they wanted an 82-cent credit. What do you got there? That's 71. That's not bad.
I guess it's about right. I mean, to me, like TP wouldn't love it because you're not collecting enough of the width.
TP would hate this trade, but that's okay.
Sorry, Dave from Cleveland. But I do. I think if we did anything, we would bring both sides in and collect a little more. So here's $1.34.
Beautiful. Ship it. We need to get through these to get to Jacob. Let's go.
All right. So we tweaked it a little bit, just brought it in and collected a little more. Okay.
And when we get filled, I'll push these through. We haven't gotten filled yet. Alert me of those. Okay. So then next up, number 2 is SPX neutral, 0 DTE. Looking at selling a wide iron condors here. Thinking 30 to 40 deltas with $30 wings. Thoughts?
Okay, Jake from San Francisco. I'm gonna pull up like a Jack Tucker. Because our viewers have been doing these 0 DTEs, going with about a 20 delta, $20 to $25 wide. I'm going to start with $20 wide, 20 delta, 25, 35, 45, $20 wide. You're getting 380 and risking 1,600. This is very similar to what a lot of our viewers put on every day with these 0 DTEs.
Yeah, that is a Jack Tucker.
Now, Liz and I don't want to risk 1,600 for the day.
Well, because we're not doing it every day. So that's when and Jacob's studies have all kind of showed that. That's how it all comes out in the wash, right?
Mm-hmm. If I make this a $10 wide, what are we getting? If I make it a $10 wide, we're getting $250 on $10 wide. That's not terrible.
That's not bad.
Should I do it?
Sure, ship it.
All right, I shipped it. 20 delta on either side. We made it more of a baby trade and collected $250 on a $10 wide. So we're only risking $750. I'm going to real time get all of this pushed out. So
you know what I was just doing? I was signing in over here. You stay doing what you're doing, and I'll push them out over here.
Okay. All right. Then next after SPX, what do we have? We have HIMS. My HIMS position is growing and growing. August monthly stocks look like it'll trade in a wide range for the next month. Iron Condor or Strangle or better. This is from Derek from Denver. So Derek from Denver, I can't sell the call side. I am just short puts and long stock in HIMS, hoping for a little rebound. But again,
do we have a HIMS? Do we have a HIMS position right now? We don't, right?
No, we don't. It had a big fall. Now it's come back a little bit. Why does this say no options?
In HIMS?
There are
options, yeah.
Let me see. Let me adjust this. HIMS and hers help. Look at your platform, Liz.
Hold on one second. I just wanted to make sure I was pushing those out. That is bizarre. I'll look at mine right now.
And sometimes if I see if something like that happen, I'll log out and log back in. But
I've got options.
I just have short puts in HIMS, and if we got them, they're trying to stop us from doing something real risky, selling puts in HIMS.
Scott's in the back going, turn that machine off.
Let me see something. If I change the symbol.
Yeah, you got XPX options. Wait, you're typing in some weird. You said like spelled Sphinx. Like
Here they are.
Okay, good. There you go.
All right, and I don't even mind going out to August.
No, I don't
Let's
either.
take a look at the buying power. 38 put for 320. Mind blown.
Hit it, sister. Hit that. And get out of that SMR. Let's get back into this.
372. Now we talk about let's try to be careful about where we spend our buying power. So here I can make $335 using 372. Makes a lot more sense than trying to get $1 and risk, 900.
1,500. I know.
Yeah.
That's insane.
Yeah. So I'm going to sell these HIMS puts.
Yeah, you are. I've got both. You should see how many computers I'm running right now, Jenny. You'd be so proud of me. So I can push this through once we get filled.
All right, so I'm working that, and I like the buying power in HIMS. I like it, and it had the big drop down a couple days ago. We've bounced back a little bit. Could it go down again? Sure. But what did we sell? The 35 put? What are we working?
Was the 35, I think, right?
HIMS working the working 38 put.
Oh, that's fine. So our break even's 37. All right, let's get to the next one.
Okay.
Slide 4 of 10.
Triple Qs.
Triple Qs, neutral, July, August, considering a neutral calendar spread on the triple Qs at these new highs. July, August calendar, neutral. So that's at the money.
Neutral calendar spread. Neutral calendar spread, I might just shift it down a little because how could we get out of a calendar spread quicker? A slight boost in vol. And so that won't happen if we're just at the money. Can I shift it a little, like 40 delta?
Sure. But that's still neutral, I would say.
Yeah. August, July, 40 delta. If this is too expensive, I'm not doing it. Let's see. I have to shift it because we have $5 wide strikes. So
go to 40. Go to 540. And we'll take a very slow percentage.
Okay, so that's very neutral. That's just assuming we're going to stay.
That's what they wanted was neutral, right? Oh, that is neutral. That's too expensive.
It's expensive. It's expensive.
Listen, Brian from Reno. I'm just kidding. No, these are honestly though. This isn't bad. Look, if you're neutral in triple Qs, this is the same thing as doing an iron fly, doing an iron condor. Butterflies and calendars have the same effect. That's just a very neutral trade. We just don't want to spend $500 on a calendar.
Yeah, we'll pass. But sure. You're right. Iron condor, iron fly, a calendar.
Yeah, if you wanted a neutral trade in there, you could do an iron condor in there. Now, granted, there's only an 11 rank, so I get why he's saying calendar.
Okay, next up, because we're going to pass on that. Next up, we have IONQ from Keaton from London.
Oh,
so now we know why he was there, seeing Tom and Tony. He's actually from London. I didn't know Keaton was from London. Continues to move sideways. I want to say we got out of our IONQ puts yesterday.
We did.
So let's jump back in and sell more.
What were the puts we did yesterday? Do you remember? We can pop out the side.
Let me see.
No, you know what? We weren't just long the stock.
I don't know why I'm having these loading issues. Do you see this?
You are having loading issues, yeah.
So here, this is what we would do, Keaton. We'd sell puts in IONQ for sure.
Yes, and you know what? I'm just going to do real quick.
IONQ in the last 7 days, we had sold the 35 puts
in the 23 day.
Oh, and it was a roll. So how long have we been rolling this? So we sold the 30 puts for $1.60, rolled it for $1.88, and then bought them back yesterday for 96 cents. So
that's pretty good.
In IONQ, I would definitely sell puts again if I weren't having such loading issues.
Whoa, Jenny, you would love IONQ puts, not to rub it in.
Hold on.
So I just went to the August 15.51, went to the expected move. It's the 30 put for $1, and it's only $1.58 in buying power.
Oh, I got him. Okay,
good. Don't just go to August 15th. I was just going, it doesn't matter if you're going through earnings there. Go to the expected move. Just hit the August 30th. I just want to see what the buying power was. It's $1. You're putting up it's 300 there. That's not bad though.
That's not bad at all. Using 300 to make 100. See, we need to take off some positions that are using too much buying power, replace them with positions that don't use much buying power. But again,
load up on IONQ.
If you're in something that the margin looks really good, be mindful of the risk. I don't want to say like, oh, let's go and sell so many of these. Just be mindful that if it does go down, to take 100 shares of IONQ at $30 would use $1,500.
She's trying to stop me because I was like, we're going to load up on IONQ.
After the show, I'm just going to load up on these puts. All right. What's next, Beth?
Oh, okay. That's good.
Enphase Energy, Alex from Pensacola. High IV rank, but low stock price. Put play or covered call. Enphase Energy.
Enphase Energy. We've looked at all these energy stocks. I think we have FSLR. Do we have an energy stock in?
We've looked at these. I don't know if we got filled. So we don't have FSLR. We don't have Enphase. I don't think we were filled, but it is low price. These have gotten beaten down. I have not jumped into this like you jump in front of these, solar stocks and all the news and down move. I don't know if you have, Liz.
I have not. I do not have a solar stock in right now. I'm going in, and as far as energy goes, all my money's in nuclear.
I'm kind of staying away from these, but we're filled in HIMS.
Okay, I'm on it. You keep going into the platform.
All right, so we're just gonna pass because we don't. If I wouldn't personally put it in, I don't like to put it in on the show. I don't have a problem with Enphase Energy, but I'm not in it.
I'm not in it either. Let's pass.
All right, next.
Number 7. Rocket Lab, neutral, 45 days. I'm neutral to slightly bearish on Rocket Lab. And this is Matt from Fort Wayne, Indiana.
Matt from Fort Wayne.
I've logged so many hours in Fort Wayne, Indiana at basketball tournaments.
Oh, really?
Yes.
Okay, Rocket Lab. Let's see what neutral to slightly bearish. Ooh.
Neutral to slightly bearish, yes.
Let's go with the platform. I'm going to pull up something and see what you think. I'm going to pull up
a reverse big lizard with a fat tail.
Yes, 33.31. 33.31. Here we're getting 387.
Ooh.
This is a reverse big lizard. So I'm getting 330, maybe just $3.
Perfect. You're putting up $400 to get $300.
And to the downside, if it stays right here, I have, $1.60 a day in theta decay. If it drops down, I've collected $1.08 over the spread width.
Yeah, that's pretty good.
We're only risking $4.98. I could risk a little less.
No, I mean, that's okay.
And I didn't change my credit much. It didn't change my credit much.
Yeah, I was going to say you're fine with that. The $400 is a good buying power.
Okay. Rocket Lab.
Yeah, thank you. Thank you, Matt from Fort Wayne.
This is probably one of the only bearish positions we have in our account, so I'm happy to add it.
Currently it is, I think. Okay, let's go to the next one, 8 of 9. And this is Delta Airlines, neutral, July 18th. Good IVR and earnings in 16 days. If they have earnings in 16 days, I don't know that I'm going to do it for a neutral trade.
Yeah. Oh, and we have it here. I don't know if you do it, but we have it. We've got the.
Well, I don't mind puts. I mean, I say puts are neutral too, but if you're just going straight up neutral, meaning an iron condor, if earnings are in 16 days, I might wait. And that's what they say. Might need to wait a few weeks. Oh.
And look at this. We sold the 45 puts in Delta 14 days ago, and they haven't come in yet. I'm going to put in the GTC for 50% and hope we get filled before earnings, but my guess is we won't unless Delta has a big run up.
Well, we put it in so long ago. Now, Delta might have come down a little bit, but that's what we say about it's like running in sand. You are fighting the implied volatility increase.
If you're neutral, it's most likely not going to come off till after earnings.
Yeah.
Okay. We have two more to get to. And I know it's 9 o'clock, so I don't want to run into too much of Jacob's time.
Okay. So what's up next? Google.
Yeah. Jeff from Miami.
Okay, so let's go. You jump in the platform into Google, and I'll rate it for you. Really, really bullish on Google here. That 150 support has been rock solid. Jeff from Miami. So let's go to Google.
Really bullish. Now, are we going to go through earnings? Or are we going to keep in the 23-day?
Well, if I'm Jeff and I'm really bullish, which you and I are not, I'm going to August and I'm putting in a zebra.
Oh.
I mean, but I'm not, we can't, it's going to be expensive. But if Jeff's assumption is really bullish, that's what I'd be doing.
And I'm just for kicks, since we've been on the buffer bandwagon, the buffer here, this should work. Okay, the buffer here gives you $1,522 in profit potential and gives you about $5 in room to the downside.
It does. It gives you room to the downside for sure. It's using $3,400 in capital, but if you're really bullish, you're capped out at 185. I'm fine with the buffer there because that's the expected move for the cycle. But with your term, really, you have unlimited profit potential to the upside using $2,100 instead of $4,000.
Here's the zebra, and I understand why he's bullish in Google. It hasn't had the run that a lot of these other stocks have had. The zebra, $2,100, you'll make money 1 for 1. So if we have the zebra on yesterday, it'd be up $290 today. Every dollar Google goes up, you make money 1 for 1. I don't hate it. I don't hate it.
I don't hate it either. But I'm just jumping off his assumption, saying really bullish.
Now, we can't afford $2,000 because we don't have a lot of buying power. So we might have to go with something like a put spread. or a diagonal, or we could make it
expensive.
Here's a $10 wide diagonal. Nah, it's $9.20. No, it's the higher price product, bigger accounts. Okay.
Okay, Jenny, the last one. We made it. Micron.
Ooh, last one.
Micron, I don't know, weeklies, MU earnings coming up, and I'm leaning bearish. Jack from Philly. This is not Jack Tucker Jack JT, because he's bullish.
So we've said it a few times today, with the huge run that Micron's had up, I'm going to wait. I'll do an after earnings trade.
Agreed. You did it, Jenny Andrews. You did it. And everything we're filled on has been pushed through. And then, do you want to take a quick break?
Yes, I can't wait. Let's bring in Jacob.
Stay tuned. Hello, everybody, and welcome to what I was looking forward to all day long. We have the amazing Jacob Perlman in the house.
Oh, thank you so
That's
much.
So much more a warmer welcome than I usually get on this show.
Well, Jacob, I want to say thank you from the bottom of our hearts, from us and our viewers, because they love your SPX studies. Every week we've been doing them for a year. We appreciate them. They're great, and they're changing people's trading. People have had their set trades, and they're tweaking them and adjusting them, basing them on your studies.
And Jacob, you'll be happy to hear this. My 18-year-old son, who just got his trading account, is now doing one of your trades every single day.
I live on the West Coast, so it's a little bit harder for me. But when I get up early enough, I also do one.
Oh, okay. So if you get up and do one, what is your SPX 0DT trade of choice?
The Ironfly.
That's what I'm having my son do. I taught him one trade. It's his first complex options trade. I was like, at 9 o'clock every day, give or take 5 minutes is what Jacob says. At 9 o'clock every day, put this in.
The give or take 5 minutes is because our data collects every 10 minutes. So I have to find the closest timestamp. Sometimes it's 8:57, sometimes it's 8:04 or 9:04. It is what it is.
Okay, and if you're doing that Ironfly, you're doing the $10 wide Ironfly where you're collecting about $8.50 and risking about $1.50. What is the profit target? Because here we're getting it from the expert. What is the profit target you're setting?
I do 10 or 15.
Okay.
I've got him in at 10. So I've got him going in at 10. I'd rather
it's nice, it's consistent. You get to lose every once in a while, but the losers aren't that bad.
It only takes 2 days to make up for the losses, 2 to 3 days to make up for a string of losses. So
because a loss is 250 and a win is like 70 or 80, so it's not that bad.
Yeah. Right, it's not bad. And I like that trade, and we've been doing it on our show, but when we go back and add up on our show, it's a little tricky because our show starts at 10 a.m. Central Time, and I think that's almost a little too late. Like, I like that trade. I like it for 8 o'clock, like closer to 9 o'clock. But at 10 o'clock, I think it's almost a little too late because oftentimes, if you put it on early enough, you're all getting close to getting out of it.
Yeah, you're out by 10.
Yeah. So these are great for the open, or 9 between 8:30 and 9.
Yeah.
Long ago, I did a piece on if you slept in, what was a good trade, but I think it's worthy of an update because that was done on back when the data set was only like 6 months of data.
Okay, yeah. Just to put a pin in this, if you want to do a trade that can be done every day at 10 o'clock, or your girls.
The next couple of studies, we'll focus on 10 a.m. instead of 9 a.m.
Right. What should you sleep in?
Yeah, sleep in or live on the West Coast or.
Yeah, there you go.
Yeah.
Anything like that.
Oh wait, I do have one very important question. When is Burning Man?
Burning Man is the end of August, though. Actually, this year I may skip it.
What?
Mm-hmm.
Why?
Partially because I dislocated my shoulder a little bit ago, and I don't want to have to go and either baby it or re-injure it or.
Oh no.
Yeah, it is getting much better, but it's like it aches in the morning, and I can't do anything with strength that's out here.
Yeah.
Okay. What were you doing? What were you doing when you hurt your shoulder?
I was getting our cat out of a tree.
Oh no.
Yeah.
Well, good job being a hero getting the cat out of the tree.
Yeah. I had a little slip. I fell. I didn't fall to the ground. I fell a few feet and then caught myself. But in the catch, it just yanked.
That'll do it. That'll do it.
And it's tough. Shoulders are tough. It took my husband. He hurt his shoulder when we were docking the boat, and it took 12 months before his shoulder was back to normal.
Yeah, the orthopedist was like, well, at your age, 6 months or so probably to expect. I'm like, oh, thanks. Great. Thank you.
Yeah, it's long. It's long.
Uh-huh. But, well, and it also, the x-ray people got all scared because 10 years ago I broke my clavicle, and you can see that break on the x-ray. And so they were like, oh, no, it's all ruined. And then I saw the other piece. He's like, oh, okay, no, that's something else entirely. You're fine. That's just a heel scar.
Okay, so no surgery is required for this, right?
No. I'm good. It's healing. It's just going to be a while because I'm not as young as I used to be.
Selfishly, we're happy to have you. I thought we were going to miss you for a month when you were.
Yeah, we have
some time off because, I still want my vacation. But, it'll be a more relaxing beach-type vacation.
Okay, good.
Okay. All right, what do you have today, Jacob?
So today we're gonna also think about the zeros because I knew I had you two on, and I want to talk about zero DTE options and what I would call the square root time microscope, and how as much as zero DTEs feel very different to how people are used to trading, in a theory sense, they're really not. They're just the same thing but zoomed in and sped up, and in that sense, it shouldn't be that different. And even in one particular sense, I think that the longer dated option markets are probably more changed by the zeros than the zeros are.
It's fascinating. I know we kind
of. So yeah, I'll see if I can make that a little bit more clear and explicit as we go. But so long ago, you only really had a couple of expirations in underlying, right? You had your monthlies, you had your quarterlies.
In the dark ages, that's when Jenny and I traded.
Yeah, exactly. I'm used to having Tom and Tony, who I make fun of them for being old.
Well, we started in the 90s. We were in the pits in the 90s. So back then.
The 90s is fine.
It was the dark ages.
The 80s.
It was, we accept the dark ages.
Anyone before to me, the dark ages of options markets was before 87.
Okay, there you go. We're after
87. But before 87, before put skew, when things were just sort of, whoa, Black Scholes is probably exactly correct.
Yeah.
But people get more active. There's a lot more demand, and then the weekly started getting good activity, good liquidity, and now just every day we've got expirations that have really good markets and really good trading. And this. You can do it every day. And so I wanted to get into today about sort of just how the theory treats these differently and why we would think they might come up. And sort of in some sense, the zero DTE's exploding popularity shouldn't be a surprise. And we'll think about that on the next slide, probably.
All right, perfect.
Yeah, Brownian scaling. So here we've got a picture. So what's going on here is this is a simulated Brownian curve. And then it's a GIF, so at some point it is looping. But the point is that as we zoom in, it doesn't really look any different. And there's a technical sense in which this is the case, and it's called Brownian scaling. And it says that if you shrink a Brownian motion, right? If I take a big C, like a 1,000, so I shrink it. I have a 1 over 1,000 factor. I make all of my motions smaller and smaller, but I speed it up. I make it run faster by C squared. So if I shrunk it by a factor of 1,000, I'm speeding it up by a factor of 1,000,000.
Okay.
But if I do that, there's no change. That has the exact same distribution as the initial Brownian motion, right? What it does specifically, because it's random, won't necessarily be the same, but the probabilities of it doing any particular thing are identical. And so what this means, this is like the fractal self-similarity property. So as we zoom in, and then I have here just sort of a thought that if we were zooming in by, instead of a 45-day trade, we're doing a 1-day trade, that means you're zooming in by a factor of like 6.7. So, right, that means that you bring in all your strikes by 6.7, you move your expected moves down by a factor of 6.7, and all of a sudden the model says that these 45 DTE trades and a 1 DTE trade are no different, right? The Black-Scholes model is going to come out with the same pricing, right? You have to bring the strikes in and such, but there's no otherwise any differences between them. And that this is not like particular to the Black-Scholes model, right? The Black-Scholes model is the simplest and oldest of them, but there's not really a way to get away from Brownian motions because we have this memorylessness and symmetry, and those are the only things that will fit with the efficient market hypothesis, right? The efficient market hypothesis says how you got here doesn't matter, only where you are. And the symmetry says you don't know if it's going up or it's going down, right? If you did, we wouldn't be doing math. And between those two things, you get that it has to be Brownian motions at the base of whatever your model is. The underlying randomness has to come from Brownian motions, and because of that, it has to obey this scaling factors. And so, oftentimes when we were doing our longer dated options, we'd say we want to get out at 21 DTE or early or something, right? We want to avoid this end chaos that happens, right? The Greeks explode, everything as the sensitivities get big. And that's because in a lot of the formulas, there's a factor of 1 over the square root of the time until expiration. That's just like, it's a thing that crops up in the factors. In fact, the reason it crops up is this Brownian scaling reason. That's why the square root is there. But so those continue to apply. And it's just that what the blow up means is different, right? If you were in a 45-day option and you thought that the blow up was happening 21 days into the trade, well, then if you're trading a 1-day option, and those are your new standards, right? You've divided everything by your 6.7, everything's working out okay. Well, you're still going to get a blow up, but the blow up isn't now right when you started. The blow up is now, 3 or 4 hours in, noon, 1 p.m. Right? And so we can really.
And Jacob, we say that all the time in the middle of the SPX pit when we're looking at those options. If you're supposed to manage it at 21 days, that's probably a couple hours in. If you just take the whole time scale and shrink it down, instead of 45, you need to be out 50% of the way through the day.
Exactly, right. The 6.7 one, right? So there's a square root factor, so it's not quite 50% isn't where you want to do it. It's like a square root of 2, but it's very similar, and in a sense of the art of trading, you're not going to notice a difference. Right? If you're trying to do it scientifically, there will be a difference. But if you're
what time in your brain would be 21 days till expiration?
So I've done a couple of studies on this, and I think that it's sort of 1:30. It's closer in. Yeah.
Okay.
It's going to be closer in because of the square root factor. It takes a little bit longer to pull up its effect. But so in that sense, the theories and the models are all the same, right? We can just, because they're so much faster and so much more frequently, we get more occurrences. And so if you're an active trader trying to, thinking about your, return on capital per day, well, then the zeros make a lot of sense because you just don't have to wait as long for anything, right? If you're trying to make money over time and you're able to structure your risk in a way that's acceptable to you, then the zeros are very popular, right? It makes sense that why you would want them because they give you the same thing, but in less time. And
now, with some of your studies, we'll see a very big negative. If you no management, if you don't manage it, if you don't close it early, if you're not closing it by that 21-day mark or even earlier, it's almost like the 18-day mark. You'll see some big losses. Do you ever personally flip the cards and think, if this is over time a loss, maybe I'll buy it instead of sell it?
maybe I don't like the right. They wind up with a low win, right? You do have these big winners because right, but those big losses are because of the occasional really like large move rather than the like serial failures.
So you're waiting for like one big move. You're going to have loss, and one big move will bring back your losses.
Right, you'll have a big win to make up for all your losses. But to me, I don't know emotionally that's a much less pleasant way to like look at your account every day, where it's like down. Oh, I hit a good one. Finally.
Emotionally, I like that. Emotionally, it's a bad way to look at it. Jacob, real quick, only because I'm getting a lot of these questions coming in from the chat. When you say 1:30, you're assuming our time zone. I'm assuming you're talking. Yes. Thank you. I just want to clear that up. Okay.
Yeah, New Yorkers and Californians can adjust.
To me, 1:30 almost seems like too late to leave these on.
Yeah. I mean, I don't know exactly when it is, but it's certainly somewhere between noon and 1:30 might be pushing it.
Well, and it's funny because when I do the Ironflies and the 0DTEs, I'm usually out between like 12:30 and like 1. That's usually when my GTC hits.
Yeah.
But if you're doing the 20 deltas, or you're out much quicker. If you're doing the 20 delta, $20 wide, you're out much quicker. You can be out in an hour or 2 hours. Depends on the day.
Well, and the wider you're willing to be, the faster it'll come in too, right? Just because you're giving up less on your wings.
Yeah.
So what are the differences, right? I've just said that, in a theoretical sense, there's no differences. You look at the initial state of the options, you can zoom in and you'll see the exact same paths and it should work out the same. So what is different? And actually, I think this was an ironic, surprising result when I started thinking about it. But actually, the 0DTE options and the proliferation of more and more expirations changed the longer dated option markets more, right? It turned the 0DTE option markets into sped up, zoomed in versions of the old long dated option markets. But now the long dated option markets have a lot more flexibility in time rolling because, right, back when you only had a couple expirations, things worked by you put it on and then you had to wait until the expiration hit, right? And there was nothing in between.
Right.
And zeros are sort of the same. Market opens and there's not going to be an expiration until market close. So you've got this same period of just the market's playing out and you can adjust, you can manage, but nothing is expiring as we go. Whereas when you trade a 45-day option, all of a sudden, if you want to roll it out 2 days, you can roll it out 2 days. If you want to roll it in a couple of days, you can roll it in a couple of days. With your zeros, you can't roll in a couple hours. You can't roll out a couple hours. You can't say, I'd like to do a 1 p.m. expiration, please. And so in that sense, the zeros are now like a faster, sped up version of what the old option markets were. And the longer dated option markets are changed in that they're much more liquid in a time sense than they used to be. You have a lot more flexibility in how you want to change your adjustments there, which I think is a really neat effect, right? You take in some profits, and rather than just closing it out and having to wait for the next expiration cycle, you can put on a fresh one, just a couple, move it out a couple days.
Yeah.
So I have a question about individual products, because you do the SPX 0DT studies and they're wonderful. And we have all these strategies now for the 0DTs, but we have a lot of people trading options on equities, and those only have, and I say only have weeklies, but now, now they have weeklies. So they have the weekly expirations, and we have a lot of viewers who like trading the weekly expirations on these equities and not going out as far, but trading, weekly. And I'd be curious to know, if there could be any studies on if you're going to trade weekly, when is the best time to put them on? When is the best time to roll? Should you put them on the Friday before the week or wait till Monday? What's better with these weeklies?
Yeah. That's a good idea, right? We have all these 45 monthly studies and we have all these zero studies. I should add in some weekly studies. You're right. That's a good question. I don't know. My guess would be that they are sort of, obviously they'd be some sort of splitting the difference. You get your faster speed, more occurrences, but also you don't have to spend, every 10 minutes checking in on your position. A nice idea. The other problem is it's not a problem, but if you guys see Dr. Data around the office, you should pester him, because I want more underlyings in our 0DT data set.
Okay. We love pestering people.
I'll see you tomorrow.
Well, I'm long distance, so all I can do is type at him. All right. Beth has moved us to takeaways so you guys can get to the good time. So the explosion in available and liquid expirations for options contracts has drastically altered the market, both for the 0DTEs and our sort of traditional contracts. And this is despite the fact that in the theory, because of Brownian scaling, there really shouldn't be hardly any change. It should just be zoomed in and sped up. But otherwise, like the probability of success, the profits, the return on capitals, all these things should line almost exactly. And we've had years and years of studies and arguments and telling people that what they should really be doing to try to get up is have more occurrences, that you can get more consistently get these long-term results with less variation if you just do more independent trades. I thought that the answer was we needed more underlyings, more uncorrelated underlyings, more foreign markets, that this was going to be how we were going to help people get this. But it turns out that the answer is we could just have 0DTE options every day. And now we've got occurrences all the time for people, which is a really interesting development. But it does require that you keep pace.
And we meet a lot of people on the road who, they only trade SPX and they like to get in and out. And Liz and I talk about this, you're out at the end of the day and you don't have overnight risk going into the next day.
Well, it was funny too, because even before the 0DTEs, we'd meet people who would just wind up in the SPX. And now we've got I feel like the SPX 0DTEs have exploded the market again.
Yes. Absolutely. Well, right, because this was the other, one of the things about why we liked IBR and these sort of normalized across underlying things is because otherwise the only real way to be a informed trader was to have an underlying that you were well versed in, right? If you don't have where you could know, oh, this volatility is high volatility and this volatility is low volatility.
A very large market awareness of a certain individual product.
Right, which required, developing specialization and knowledge.
I think I went down the typical path of investing in stocks, and I was really frustrated in the sense that it was a buy and hope type strategy. And so I was looking at, different ways to learn about options, and I saw Mike and his whiteboard, and it all made sense. There's another world out there with options. It gives flexibility. It's more capital efficient, and tastylive does it again. They teach it in a way that is fun, it's easy to understand, and you're learning from people that have done it for 40 years.
I distinctly remember getting an email from Tasty that Lookback had just been released, and I was doing the most laborious back test on the face of the earth before that. And I did 2 or 3, and I saw how quick it was, and I saw how quick the data was, and basically instantaneous.
Zach, South Carolina, how are you?
Go out for free, and all you ask in return is for us to use your platform. Thanks as always for what you guys do.
Love it, man. Thanks. Thank you, man. Thank you. I really appreciate it. Very kind word.
What is going on, everybody, and welcome back to today's assignment. We're back in the classroom with Dr. Jim. Dr. Jim, blue skies, all-time highs. Going to touch on that a little bit today, some of the portfolio and whatever else that we have going on. But before we do that, how are we doing? I feel like it's been about a week. A lot has happened. We got a new basketball championship. We had a potential war. I mean, we go 24 hours without talking, and I feel like we got to catch up on so much. So how are we doing?
Man, a lot has happened. There's no doubt about that. So where are you at on? Where are you at on the OKC Thunder being your NBA champions? Are you good with that?
I don't know. It feels, I don't know the explanation, but it just feels like I was waiting for something that never happened. I don't know. It's just oh, it's already over. It's done. Shout out to OKC and those young guys. I love seeing young people achieve great things. So seeing a young squad dominate, get their rings, asterisk injury here, asterisk injury there. I get it. But I think that's pretty cool. It felt a little lackluster, not as exciting. I think Halliburton going down was kind of tough. I really wanted to see those young guys really battle it out. Other than that, I don't know. It felt very lackluster. Kind of not as entertained as it used to be on my end. What about you? What were your thoughts on it?
because he went down in like the first quarter. I didn't see the game. He went down in like the first quarter, right? Yeah.
And he was having a good game too. Yeah, I mean, your main guy goes down in Game 7 within the first few moments. Had a great start to the game too. I mean, that's just tough. It's not easy to get to the finals. So when you get there, you know, and you go down on an injury like that, I mean, that's just tough. That's really all you can put it.
Yeah, totally agree. I mean, it was setting up to be potentially an all-time classic, you know, Game 7 and maybe down to the wire or whatever. But then once he went down, I mean, I think the Pacers hung in there for a little bit, but then OKC just pulled away. So, but yeah, lots happened in the world, man. I mean, obviously the stuff abroad, you know, with wars and ceasefires and, you know, whatever else. I mean, lots happening. And yeah, I mean, blue skies and all-time highs. I mean, that's it, man. Like the Nasdaq, I think the Nasdaq is now officially at an all-time high today. It's not, I mean, it's sold off since that all-time high, but I think it actually printed new all-time highs today. ES, I think, is still got a little ways to go. And so, yeah, it's wild, man. It's super, super wild. So I'm curious, you know, we've talked about this before, just because, you know, we've been in an all-time high environment like many times together.
This is not the first time we've had a segment like this, right?
No,
this might be
not
the
at
fourth,
all.
Fifth or sixth, right?
So do you like trading all-time highs? Like, is that, well, actually, let me rephrase that. Do you feel that it's any different from what you would do on any normal run-of-the-mill day that doesn't have like the all-time high label attached to it? Is it any different for you?
Not necessarily any different, and that's probably why I've had issues trading all-time highs in the past, because naturally I lean contrarian, right? And as we know, typically, we're going to get into it in these slides, how all-time highs typically plays out. If you do lean contrarian and we continue to keep getting all-time highs, you can imagine how that might play out. So on my end, I've never been a big fan, and that's why I was excited to get into it today with you and kind of ask you some nuanced experience that maybe you've had with all-time highs. But I'm personally not a big fan. What about you? What was your experience with all-time highs and your overall perception? Because again, this might be the 7th segment we've had within the last couple of years just on all-time highs. Because when we get all-time highs, we almost always get another all-time high. So pretty common occurrence.
Yeah. You know, I have a bit of a different take on all-time highs and trading all-time highs. So I'm with you. So you and I are in agreement when it comes to, you know, being the contrarian, wanting to take the other side, wanting to fade the short-term moves, whatever. So now we're at all-time highs. So then obviously that would mean, you know, you'd be leaning, if you're going to take a directional stance, which you don't have to, by the way, and that's one of the great things about options, derivatives, whatever. But if you're going to, I'm leaning a lot more to the short side. It sounds like you are too. To me, and I don't want to use the term easy because it's not easy, but being short at all-time highs, to me, is easier. I will say this comfortably. It's easier than being short not at all-time highs. And the reason for me is actually pretty simple. When you think about selling premium, or you even think about, you know, like, I mean, you and I have had the futures discussion so many times with like stop losses and whatever. You know, you like to cut your losers pretty tight. I typically don't. And so when you think about that type of framework, like, it's like, okay, if I've got short premium out there, or I've got futures with essentially no stops, it's like, man, what is the thing that's going to do the most damage to me? It's obviously going to be the big outlier move. It's going to be the big crushing outlier move. Well, here's the thing about being at all-time highs. That is essentially off the table if you are short. Now, again, could it happen? Of course. Theoretically, is it always on the table? Yes, it is. But anyone who's traded for any length of time knows exactly what I'm saying. You might get, you know, peppered with just another 50 points higher in the NASDAQ, 95 points higher in the NASDAQ, and it might absolutely make you want to just rip your eyes out of your skull.
Yeah,
I got it.
Pretty much.
But you're probably not going to get that 6 or 7% up day, that 4% up day, even that 2 to 3% up day. That's probably not going to happen. Whereas, man, it is just ripe for the pickings on the way down, in my opinion. So because you kind of have this asymmetry working in your favor as a premium seller and or futures trader, I see it as being easier than trading from the short side specifically on just any old like normal day. So take it for what it's worth. What do you think about that?
Yeah, no,
Do you think I'm totally off my rocker? Should I take my boomer pills? Like where am I?
I don't think you've been knocked off your rocker just yet. Not at least. No, but I mean, I would say I agree in a sense too. But we're gonna get into some of the positions that I put on, and QQQ was one where we hit all-time highs. Dr. Jim, I don't think I have gotten long at all-time highs, maybe one time on QQQ. Usually I'm on a SPY, QQQ, or Russell just to express my overall bias on the market. I don't think I've gotten long one time until today. So I want to break that down to you, show you kind of how I got into that, but I'm pretty much on the same side of you, and I would piggyback right off of that.
Because again, it's like, yeah. I mean, you're in this. Well, actually, though. Well, hold on.
What's that?
It's going to be a lot different for you, though. So let's think about futures specifically, right?
Right.
So if you and I are both getting into a short futures position, like now, right? And you have a tight stop, and I don't have any stop. That's a very, very different trade for obvious reasons, a lot of which we've 100%. Talked about before. But specifically right now, that is going to be a very difficult trade for you because that natural grind higher, it's going to trip that stop a lot of the time.
That's death by 1,000 cuts whenever you
exactly. 100%. Whereas 100%. for me, I'm like, I'm going to sleep short, and I'm like, I'm not losing any sleep at all.
Yeah, you're fine.
Again, I feel like the huge outlier move to the upside, it's probably off the table. It's not really something I'm too worried about because all of that stuff is quote unquote being priced in right now. Like the market, right. That's why the market is buying. If you want to give it a reason, this is what, the powers that be in the, what's the word I'm looking for? Mainstream media is kind of telling us that, peace abroad, Trump tariffs are not as bad as they were. Eventually Powell's going to cut rates. Like all that stuff is getting baked in now. It's all getting baked in now.
Right.
So if there's more news on that front, it's not going to send the S&P 500 up 150 points. It's just not. You would need something else to do that, I think. And so, but if you get any kind of, reversals on any of those, it could send it down 150, no problem.
Yeah, no, 100%. Again, we're trading at all-time highs again. We touched on it, I think, last time. Since March of 2020, we had that really sharp sell-off. This time we had a really sharp sell-off at the beginning of April, and then we recovered all the way right back to all-time highs. So that forward drift is an absolute beast, Dr. Jim, and I should have listened to you the first time around, if I'm being honest. So,
positive drift it's the eighth world wonder, like no question.
Oh yeah. The first slide we got here today, though, Dr. Jim, all-time highs. What now? This is usually how I am whenever I open up to my platform, look to sell some premium, seeing all-time highs again, popping open VIX, and we're sitting at maybe 11, 12, whatever the case might be. Premiums tend to contract at all-time highs due to the implied volatility, especially in slow grinds up, like we've kind of seen. IV skews at all-time highs. Puts are a little bit more expensive, hedging fear. That's where we talked about the market's starting to price in that fear to the downside, especially sitting at all-time highs. So what now? And we'll just jump into the second slide here. But all-time highs trigger emotional extremes. Just understand for yourself. I think we all have different triggers, different emotional sensitivity levels. I know at all-time highs, it triggers a level of emotion, whether it's to put on more risk, to not put on as much risk, or if it just gives you a level of emotion of confusion. Like, what do I do now? Most retail traders associate all-time highs with the pending correction, but history doesn't support that consistently. And that was my natural reaction whenever we started seeing all-time highs back in 2020. Again, we had that market crash March of 2020. We start rallying to the upside and then putting in all-time highs. I'm like, well, this doesn't make sense. We shouldn't have even rallied this quickly. So let me continue to keep getting short, and the market can continue in its own direction longer than you can stay solvent. So I experienced that in March of 2020. All-time highs can feel uncomfortable to trade, but statistically, markets often perform well after making new highs. I don't know what this phenomenon is. Is it just a natural human behavior to want to see that pullback at all-time highs? Because if data doesn't support it, why is it a natural inclination? Does that just come from our natural tendency, our natural bias? What are your thoughts on that, Dr.
Well,
James?
I think that's a Tasty specific piece of information. I don't think most investors like around the world, and most investors across the board would agree with that statement. Because if you talk to a lot of average investors off the street right now, and they're aware that the market's at all-time highs, they're probably not going to associate that with a pending correction. They're probably their knee-jerk reaction is probably going to be like, man, I need to invest more. I need to get more money working for me. I've got to be a bigger part of what's going on. And I think this actually explains the pretty well documented phenomenon that most average investors are just not very good from the standpoint of they're not buying low and they're not selling high. They're actually buying high and they're selling low. Because again, back in April, I mean, everybody, again, going back to the mainstream media, I mean, they had all assured us that it was over.
It felt like
they had all. I mean,
it felt
totally.
Like
with the Trump, like Liberation Day, blah, 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 blah. S&P 500 was like 4,800 or whatever it was. And it was like, man, like it's over. That was literally the bottom tick. That was literally the bottom tick. And I know that scared a lot of people out of the market because they felt like, man, I want to get out and save my capital because I do think we're headed down to 4,000. I do think we're headed down to 4,200. And so a lot of people got out at the worst possible time. And now everything is calm. There's euphoria in the streets. Everybody's excited. This could potentially be one of the worst times to actually put more capital into the market. Now, again, I mean, the market does tend to perform well after hitting all-time highs. That's 100% correct. But if you just look at, and again, not even doing like high-level technical analysis, but if you just look at a chart, you never see a straight line higher. You never see it. And so there is going to be a correction at some point. Now, is it going to be today? Is it going to be next week? Is it going to take 6 months? Is it going to take 13 months? I mean, I don't know, but there will be something. There will be some healthy pullback at some point.
Yeah. And it kind of reminds me of this anchoring bias. And this is another thing that I had dealt with where it causes traders to believe price must mean revert. I know. Back to the mean reverting topic.
Did you say believe? Did you say believe? Because they do mean revert. Like, we don't need to believe anything.
No,
we're not talking about the tooth fairy, bro. We're not talking about the Easter bunny. Like, do I have to have this debate with you too? Like, come on, man.
No. You already know what side I'm on.
I tease.
Depending on which ears this falls on, sometimes having that subconscious bias, you'll recognize like, wow, I'm being very biased right now. Like, even though I have these entries, my risk reward is intact. Like when I look at this, like I got short 6 times, like there is a little bit of bias right there. So I think these things are just funny. And I think they really highlight a lot of those behaviors whenever we do find ourselves at an all-time high again. And then again, and then again, and then again, and again. So we'll jump to this last slide right here, Dr. Jim.
Historical. Just quickly before we get into the last slide, I think just to be really clear, I think one thing that every single person that's listening to this or watching this show today needs to remember is that not me, Jim Schultz, not you, Errol Coleman, not whoever might be watching, you have no idea what's going to happen in the market. Not a single clue. I certainly don't, you don't, and neither does anyone else. And so that's a very humbling thing. And so again, I like trading all-time highs for all the reasons I just talked about, whatever. That might not mean a rip. That might not mean absolutely anything when the EMA S&Ps go up another 200 points or the NASDAQ rips another 900 points to the upside. I mean, that could certainly happen. That could 100% happen. And so that's why having, it's fun to have a bias and it's fun to talk about what you think is going to happen. That's totally fine. But at the end of the day, you have to have something strategic in your back pocket that isn't necessarily dependent on market direction to move you forward to whatever goals you're going after.
Yeah, and like you kind of said, that uncertainty humbling, but also at the same time kind of freeing because when you recognize you can't control certain outcomes, you're like, okay, let me control what I can control and let the rest fly. So historical data insights, Dr. Jim, after hitting an all-time high, the S&P 500 has a positive 3 to 12 month forward returns 80% of the time, not all the time. I mean, we also, keep in mind, we also don't get all-time highs every year either. All-time highs tend to cluster. Once the market breaks out, momentum usually continues. So my question here now at all-time highs, Dr. Jim, a lot of the times we discount the idea that the market could stay within a range or trade sideways for a while if it wants to. A lot of the times it's like, are we going to see new highs again? Are we going to get a pullback? A lot of times we barely start talking about what if the market moves sideways? What if the market started to consolidate or trade in a range near all-time highs? I don't know. We'll see what's going to happen, but that's always a scenario. And then pullbacks from all-time highs average about 5 to 7% short-term, but deeper corrections are usually macro-driven. Anything past the 7-8%, typically that's, there wasn't a tweet that just went out. Usually something something is being macro driven to get such a deep pullback like that. So if we were to get anything like that, if we were to see a 7, 8, 9%, I don't know, I would probably think news broke on the war. We're going to war with something drastic is happening for the market to pull back that deep at least. What are your thoughts right now on all-time highs and a lot of speculation around war still, and just kind of going back and forth on that front? I know we got a little bit more clarity, but we're sitting at all-time highs. There's a lot of speculation still. There's still a lot of uncertainty, and it's just ironic we happen to be at that all-time highs, during all of this trade talk, tariff, inflation, war. Dr. Jim, that's it for the slides, but what are your thoughts on all of that? I mean, just the overall sentiment. We got a lot going on. All-time highs. VIX is down. OKC won a chip.
The VIX is down, but the VIX is it's 17. Like you were talking earlier about the VIX at 11 or 12, and I checked it. I'm like, isn't it like in the high teens? It's still 7. Excuse me, it's still 17. That's not too bad. Like when you think about, and again, like you weren't trading yet, I don't think, but like 2016, 2017, like the VIX got down to 8.5. It got under 9, dude. It was half of what it is now.
What were you up to in 2016 with the VIX?
That happened at the end of 2017, and so
okay, 2017.
I mean, I was in the studios, I was in Chicago, and we were all just looking at each other like, what are we gonna do? Like, there's nothing to do. Like, you would have some days. I can't remember. S&P 500 was at like maybe 2,000 or 2,500 or something.
Yeah.
You would have days where the S&P 500 would have like a 6-point range the entire day, entire day, and it was like, wow, this is like super brutal. And so the VIX at 17, or now it just is under 17, but that's still not too bad.
It's a great point.
No, we're only one tweet away from the VIX back over 20. There is no doubt in my mind. Right. I would say the average value of a tweet these days coming out of the administration,
the average value of a tweet is
about 3%. It's got to be 2 to 3%.
I think that's valid. Yeah.
And so I mean, could you get an outlier move where it's 6, 7, 8%? Of course. I mean, when we had the tweet for the tariff relief, it was 10% in the Nasdaq in 35 minutes. Like that's crazy stuff. So I just it's going to be very interesting to see what happens, because again, it appears that like everything is set up for greatness. Like again, you've got some type of at least temporary resolution overseas. You've got Powell kind of obviously warming up to the idea of cutting rates this year. I know he's talked about tariffs and stuff like that, but still, we're probably closer to the rate cuts than we were a few months ago, let's say. So you've got Powell warming up to the idea. You've got, supposedly, some budget bills being passed. You've got supposedly, tariff deals are going to be made here in the coming week or two. And so you have all of these things that are setting up for, it's like, man, I know a lot of people are looking at this saying, man, it's got to be even the S&P 6250, 6275. Like that's got to be like a foregone conclusion at this point. Man, it's just not that simple. It's just not that simple. And again, nobody rings a bell. Like nobody rings a bell, and it's like when if the market drops 4 or 5%, you may not necessarily get a heads up warning before that happens. So it's going to be very interesting to see how. Let's think here. It's the end of June. Yeah, we've got the third quarter is going to start here. I guess next week? I guess that's crazy.
Yep.
Yeah, I think the third quarter is going to be pretty crazy. I would be surprised if you and me come on this show at the end of September and EMEA S&Ps are 6150. I would be shocked. They could be 6400 or they could be 5550. I think it could be a significant move from here.
I mean, the VIX sitting at 17, like you mentioned, that's really not too bad relative to sitting at all-time highs right now. I think that is hilarious, though. I could just imagine in 2016, 2017, all you guys like, yeah, Jim, I can see you in the bid right now. Yeah, I see you on the ask right now. Like the market is that.
Nobody was there. There was just no liquidity.
Yeah. No, before we hop off here, Dr. Jim, I want to show you a few of the positions that we do have on here. We got a little bit of time for these to cook a little bit. Gonna have to choose to take some of these off or roll them by the end of the week. But QQQ ended up getting long here. I'm gonna stay long for a little bit. Whether the market goes sideways, I can take advantage of that, but obviously would like a nice little up move. Netflix ended up selling a call spread on Netflix, was able to collect about 223 on that, was just a call spread to the downside. Netflix has been absolutely ripping to the upside. I mean, they've been doing really well. I don't know what's been up with streaming services or what you've heard on your end, but we got Netflix. That is also 51 days till expiration. QQQ was 23 days till expiration. Lulu, 51 days till expiration. This was one we put on not too long ago. I got a pretty decent trade out of Lulu last time. Beginning of June, I believe it was the earnings. So we traded Lulu through the earnings. Now we are long on Lulu again. Sold an out of the money put spread. Was able to collect about 391. Was able to collect about 391. This one is a $10 wide, so a little bit larger of a position. Disney, man, I don't know what's been going on at Disney. This is the can't stop, won't stop every time we hop on here, Dr. Jim, but bought a put on Disney. And I mean, we haven't ripped that much to the upside, but also because I bought a put, because the market's moving sideways, it's not conducive for my type of position as well. So over here, we have Circle Internet Group. This is another one that I put on, sold an out of the money put spread, collected about $275 on that one, $5 wide. Coinbase has been popping off to the upside lately as well, getting a little bit exposure to that crypto side of the market. Sold an out of the money call spread, getting some short delta on. And some of these are just sitting around break even right now, but that's what we got going right now, Dr. Jim. That's what's new.
Yeah, I mean, there's not too much. I mean, pretty much across the board, you're in kind of a wait and see situation with all of those positions. Yeah, and so, I mean, one huge advantage of defined risk is you can be in a wait and see position as long as you essentially want to, because even if you're completely wrong and it goes against you, the risk is defined, you know, the worst case scenario. And so that gives you a lot of freedom. It gives you a lot of peace of mind, of course, that it's like, hey, I mean, if QQQ, just completely falls out of bed here, then it's like, hey, it's a short put spread. Like, it's not going to be that bad. Or if, Circle or Disney or whatever, you essentially have defined risk positions across the board. So one of the huge benefits to defined risk, even with all of their limitations, the biggest advantage is you can essentially run it all the way to the end if you need to, and your worst case scenario. So that's essentially the situation you're in pretty much across the board here.
Yeah, 100%. I can kind of just let these cook, be patient there. Some of these are 23 days left till expiration, so I'm hoping we can get a directional move within the next few days. If we don't, decide if I want to close that out, deploy the capital elsewhere, or just roll out in time a little bit and give it more time to work. So that's where we're sitting right there, Dr. Jim. Anything else standing out to you in the overall market, outside of the market? What's going on your end?
No, I mean, the only thing is, I still feel like there's so much opportunity in the metals right now. Gold and silver. Yeah, they're just so active. They're so active. If you're looking at dude, don't do this to me, bro. You had to do it to me. If you're listening to the show,
I saw you bit the bait
again.
You bit the bait,
bro.
Dr. Jim. I saw your reaction. You bit the bait.
GLD.
You bit the bait.
No, nobody's trading GOLD. Don't do that to me.
You bit
bro,
the bait.
You slid that in there like I'm not paying attention. Yeah. Oh, that's so funny. But no, if you don't want to trade the markets because all-time highs, you're not sure what to do. Hey, I totally got it. I totally understand. But man, gold, silver, there's so much to do right now, and so you can always turn to some non-equities. Ivy rank is 25. That's pretty good.
Yeah, no, absolutely. Gold, I've been taking part of. I know silver, real quick. SOV. Oh, volume's not too bad. Volume's up a little bit more in silver here. So yeah, no, gold has been absolutely popping off. I know gold was one of the first assets that I opened up on the computer whenever I heard the war over the weekend. So I don't know what's going to be going on with that situation. Just look out for some tweets. Turn on those notifications, man. You never know nowadays. Yep, so
that's right.
Anything else to add before we hop out of here, Dr. Jim?
No, it's good stuff.
Awesome. Well, that's going to wrap it up for today's segment. Thanks for taking the time to hang out with us, Dr. Jim. We always appreciate having you here, getting your insights. Be sure to stay tuned for more segments coming on next, and we'll catch you guys next time. Peace.
Peace.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
All right, Mike. All right, Nick. Do you remember the first trade that you ever made in your life or in your career?
I do. It was a long call on Twitter. This is when it was a publicly traded company. It was at like $50 a share.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Hello, everybody. Tim Knight, and it is the wonderful world of trading now. We've got another green day on our hands, although most of my shorts are down, which is pretty cool, including IWM. Small caps are still down in spite of the NQ being up, ES being up. NQ not just up, but a record high today on NVIDIA and NQ, other tech stuff. Let's jump right in. Lots of charts to get through. The spiders are very, 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 very close to a lifetime high, but not quite there yet. There's the dashed line, which represents that high. We are just below it right now. We'd made that high back on February 19. So we've got this extraordinary V going on here. Almost the exact same amount of time, too. The plunge from here to the bottom was almost the exact same amount of times from the bottom to, well, right this second. So for what it's worth. As I said, NVIDIA cutting above to a lifetime high, finally beating the peak from January. Nothing else to say. I mean, Jensen Huang richer than ever, and NVIDIA employees loving life. The cubes have noticed that. I will mention that they are still right at the trend line, the broken trend line. So this is an important decision point. Will it break free of that? Will it blast above it? Or is it going to poop out at this point? Micron this evening might inform that a little bit because the semiconductor sector is still very, very frothy. And we'll see if Micron helps add some fuel to that or splashes cold water on it. But SMH for the moment is doing very well. It isn't at a lifetime high yet, but it's getting close. Let's just drop down a horizontal to keep an eye on that. That red line there shows the distance between the lifetime high on SMH and where we're at right now. But it's been pretty much straight up since April 7. We were down at 170. Now it's at about 274. So $104 added in just a couple of months' time. AMD also shooting straight up. We still have a series of lower highs on this. This is the lifetime peak back in March of 2024. So there's the lifetime peak, lower high, and prospectively another lower high here. It would take a lot to beat that prior lower high. So that trend is still intact, that downtrend. But as you can see, it broke it here. This is a bunch of lower highs, and it eventually just shook loose of that and just pushed on to much, much higher. For anyone curious, Intel is still in the doghouse, even though it's part of the hottest sector on the planet. Intel is acting very much like a has-been, just flopping around in the lower 20s there. Amazingly, the same price they were back in the 90s. So really, really, I mean, literally biggest bull market in history, and Intel is still priced back in the prior millennium. Wow. Some stocks recently, though, just don't seem to know what a downtick is. I look at hundreds of charts every day. This is one that sticks out. Ava Technologies, AEVA, just a rocket ship. Roblox, down a little bit right now, but on the whole, it's very hard to see any downticks. So this is just almost a straight. You could put a piece of twine on your screen and it would hide all those price bars. It's so sharp and unyielding. But those kinds of things don't necessarily last forever. I mean, I've been mentioning Circle lately, which is doing amazing. But, and like I said, I don't trade this. It's way too little history. But you can see that it's just a game of hot potato because someone paid almost $300 for Circle 2 days ago, and it's lost a third of that already. I mean, think about that. 2 days ago, and it's down a third. So red hot stocks can get blue cold, I guess, is the converse of that. So yeah, Circle, and I've read some about this company. There's not a lot of there, but it was a very hot narrative behind it. And it's one of those things like a year from now, I'll be really interested to see kind of where that wound up. But it was just white hot for first couple of weeks there. A little more history to it, but also the same point. Duolingo was just could do no wrong until round about here. It got about over $500, $544 a share back a couple of months back, and it's around 400 now. Not nearly the drop that Circle. So I mean, it took over 2 months to lose much less than a third. But the point is that it is, musical chairs, hot potato, whatever metaphor you want to use with these stocks that don't have a lot of history but have a lot of chatter going on behind them. One thing, speaking of chatter and popular memes and such, I toyed for about a half a second with the idea of shorting quantum computing, QUBT. As a chart, it's really tempting because, fundamentally it's crazy expensive. I mean, there's no PE, obviously, because there's no E. It's probably not even R at this point. This is just extremely speculative. And as a chart is the gap that I like. The gap's right here because this has been going up and up and up and up. It had a gap down. And like I said, I was thinking about maybe shorting it with a stop just above that gap. And I bet it works out. But I've seen too many of these quantum stocks leap 20, 30, 40% overnight that no thanks. I don't want to risk that. This is just too crazy. But just throwing it out there. Maybe somebody who's lonelier than me who wants to give that a shot. On to more sensible matters. Here's gold miners, precious metals miners, GDX. And I pointed out yesterday, speaking of gaps, that we had fallen, and then sealed up this gap nice and neat. This was the price gap like so. Maybe we got a penny or so below it. 50.72 was the gap itself. 50.70. Okay, 2 pennies. Yeah, I guessed it right. So that was a nice seal, and we found some support there, and so we're starting to push ahead now. The junior miners, same idea. Got a little below the gap, sealed it up nice and neat, and recovering from that. What's way more interesting to me, though, is my pal, Palladium. This morning, it was looking kind of grim. Palladium was down like 1.5%, but the poor little fellow has been fighting his way back. And, this is, we're a long way away from a stop. I mean, the only real failure point here would be slicing below. I'd say $93 would be throwing the towel price. And we're at 97 now. So it's a ways off. But we did have some weakness earlier today. But as you can see by this candlestick, we've been fighting our way back, and we're near the day's highs, or at the day's highs right now. Palladium's up, getting close to 1%. So it's gone from negative 1.5 to almost +1. So yay. I've been kind of enamored with Palladium lately, and I was monkeying around with some ratio charts, and this is one that I created that I wanted to share. This is Palladium divided by the US dollar index over many decades. And as you can see, we had a nice base here, followed by a tremendous rally. Nice base here, followed by, yes, tremendous rally. And a nice base here that isn't quite complete yet. We're working on it. But it's similar in shape and size. And the distance is kind of the same too. If you sort of look here, this was back around late 2008, around the center of that base. Here we've got 2015 late, so that's about 7 years. And so 7 years after that would have been around 2022. So a little bit late for that, but roughly the same. Roughly about 8 years or so between these bases and the current base. So fingers crossed, we'll see if that works out. I sure hope so, because there's a lot of things I like about Palladium. Oil has finally stopped plunging. USO is up 0.42%. It's kind of been beaten down to a more, it's not overbought, it's not oversold, it's kind of a more copacetic level there. Although XOP is red. And I've got to say, XOP looks more vulnerable than oil does. And this is even with the chatter about BP getting bought, but XOP is down about 1%. And it's not a great setup, but I would say it's a pretty decent short setup, provided it doesn't violate the dash red line that I've drawn right there. And, on the whole, looking at crude oil for a much longer term perspective, it ain't super safe. I mean, this is still might complete that right triangle pattern, which would be kind of doom and gloom for crude oil. So yeah, definitely energy is not out of the woods. It's had some craziness the past couple of weeks, but still could work out for the energy bears out there. What else is going? Well, this is only obliquely related, but I also wanted to say I'm short XLB, the materials ETF. Tighten up my stop on this one, that red dash line there, a little bit above. My stop loss is at 88, but I like this diamond pattern that I highlighted. And so far, so good. We're also kind of teetering at this trend line right here. So there's a couple of nice items to recommend this as a short idea of XLB. Speaking of shorts, and I've kind of loaded up on positions again, and as I said, most of them are down today. Here's just 3 or 4 of them. This one I just got into, Avis Budget Car. Not a beautiful setup, but this has been just nuts because this has gone from around 55 to it's gone over 200% just since about 3 months ago. I don't know why, but this is you would think a rental car company would be a pretty dull stock. No, this thing is bonkers. And so it's blasted higher. So I've got a small short position on this, pretty tight stop on that red dash line right there. Also short, I was already short Caesars, CZR. There's the, what do you call it? Failed support right there, that red line. Fluor Corporation, FLR, like so. You can see the quick ascent on that one as well. And fond as I am of the cars, I did take advantage of the robotaxi zeal yesterday morning. I shorted Tesla yesterday morning, and yesterday was down, today's down. It's not a super clean setup. I'm not quite sure where I would exit this. I guess if we got down to the fibs here, I'd probably get out. So very short-term trade, but that's going okay. But as I said, if my data is correct here, Micron does report after the close. This gap has been sealed. No position on this. In fact, of all my positions, I think I've got one semiconductor position on semiconductor ON. It's a little too frisky for my liking, semiconductors, but there's Micron, so let's see what happens there. But more broadly, here's the ES. As I said, we're just right at the tippity top of its lifetime range. So we're pretty much matching what we had seen late 2024, early 2025. And the NQ, we're sneaking above just by a little bit the prior peak on that one. But as I keep saying on a daily basis, my main interest is our friend the small caps because it's the cleanest pattern to me. It's the cleanest analog, and it's squirrely. It seems to just leap up and down a little bit day to day, which keeps us all guessing. At the moment, it's pretty good, but you never know with this creature. But it's still unclear. So as you can see from the analog here, we're still in the green. And if you don't mind, market gods, let's kind of slip that sucker lower. Okay, well, that is it from me. Thanks for stopping by, and I'll see you on Thursday. Bye-bye.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to tastytrade. So spread the word and earn rewards. Terms and conditions apply.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Mikey, we are back, my friend, for the last call. Man, today has been a grind. We have E-mini S&P 500 futures down 3. An absolute nothing burger in the market today. Abysmal volume, 700,000 contracts in the E-minis. NASDAQ up 21. It's the strongest of the group. You got a big move in NVIDIA, up $5 and change here, almost 4%. Everything else is pretty much flat. I mean, when you look at like Amazon down a buck, you got Meta basically unchanged here. Apple's gone nowhere. Google is one that has kind of caught up a little bit. Up 2%, but it's been just a grind fest. The Dow down 160. You got the Russell down 20. The Russell really the only mover in the group today, down a little under 1%. Oil catching a little bit of a bid, but volatility has just been smacked in there. /CL up 89 cents, 65.26. Oil volatility, OVX.CGI down 5 full points here, 12%. It's gone from 75 to 42 in the span of just a couple sessions here. Volatility futures 1912 down 18 ticks. The VIX itself getting into the 16 handle today. There it is. We were in the mid 17 handle throughout the day today. It's come in here in the last 5 minutes or so. Bonds down 4 ticks, gold up $14, silver up 51 cents, and Bitcoin has remained strong at 108 on the futures, spot at 107. Have you found anything fun to trade today? Because there's no volatility, there's no movement, nothing's happening, there's no news. I mean, the E-minis have had a under 30 point intraday range today. And for the last 4 hours, basically since our show, it has felt like we've been down 2 points the entire time. Up or down 2 points.
Yeah, it's very sad.
Yes.
But I think what's even more sad is the expected range for the E-minis for the rest of the week is only 40 points. we are in the bottom of the barrel of expected ranges, at least right now. But yeah, I mean, there's still some earnings trades. We have Micron after the close today. You got Nike after the close tomorrow. So you can still cherry pick some implied volatility environments. But yeah, I closed a bunch of trades today in this non-move. So speaking of oil, closed that Iron Condor. I had a 61.60, 70.71 Iron Condor that I held through the Iran-Israel conflict. And it came back right.
Diamond handed.
Yeah. That's the nice thing about trading small is you just diamond hand it. But yeah,
you get helped by volatility though, because like that spread, your call spread, even though it was probably 5 points in the money at one point.
Yeah.
Right. What were you at? Like the 70 strike or something like that?
Yeah, we were at 75.
Yeah, but no, you had the 70 strike for the short.
The 70.71. Yeah.
70.71. With volatility exploding like that, that spread moves, just a couple ticks.
Yeah. So, yeah, got the move back between the strikes, got the vol crush, took that off for an 80-cent net winner. And then got filled in Tesla, so I sold a put spread there. The 300-290 in August for $3.50, just fading this little move here. And then I got into a tiny Micron earnings trade on the upside. So I bought the 135 call in August, sold the same strike 135 for the 2-day cycle, got into that for $3.70. So small little upside Micron play, just in case it keeps catapulting to the upside.
Yeah, I hear you there. I mean, Micron has had a astronomical move to the upside here. The whole semiconductor space is reaching new highs. Obviously, NVIDIA, the leader of the pack, up $5 and change. I don't know if the good news is already baked in here, but I didn't want to have a ton of downside risk just given this huge move. So I also played it to the upside with a crab type trade. I'm long the 130 in the July monthly and short 2 of the 135s in the weekly expiration. So I have a little bit of upside risk here, but it's certainly a manageable amount of upside risk. We can show this in the analysis mode as we move the expiration out to the end of the week. This is kind of what my risk profile would look like. So I'm playing for an inside the expected move, no craziness here in Micron, and that would certainly benefit my position.
Yeah. Still big implied volatility there.
Yes, one of the few places.
Yeah. But yeah, FedEx had earnings after the close yesterday, sold off a little bit, rallied into today's open, and now it's selling off a little bit. So we'll see what happens there over the next couple of weeks here. But yeah, I mean, there's really not much going on unless you're looking at some of these tech stocks, like Google's up $3. Tesla's down 12. So yeah, there's some single name movers, but the overall market is, 30-point range is crazy.
Yes. As the peeps in the chat would be talking about, it's the dispersion trade.
Oh, yes.
The dispersion trade.
Yeah.
Markets go nowhere today, and then you got like individual names kind of with higher volatility. Some of the leaders, obviously the semiconductor stocks, you got SMCI in there, one of the higher vols on the board. NVIDIA is up there. You got Coinbase up $7 and change. Google is in there. Eli Lilly, we put on a put spread in there today. CrowdStrike is another one that's got some whippiness to it. On the downside, it's kind of the fringe names besides Tesla here. FedEx after earnings. UAL is a pocket sector where I've seen some volatility. UAL trading at 76.66 right now. It's kind of chopping around this 75 handle. Delta Airlines is another one. Sold a naked put in there for the Johnny Trader account. It's been slim pickings though, trying to find volatility.
Yeah,
it's nowhere to be found with the VIX at 1697.
Yeah,
it's just how it goes.
Yeah, and this is the unfortunate part of having low VIX is you have to really, if you're trying to find higher IV environments, you got to go to the single name equities that carry more natural risk versus trading the E-minis of the NASDAQ or even crude. I mean, the fact that crude was, the implied volatility in crude oil was so high just a couple days ago, and now it's back down to as if nothing happened. It's nuts.
Yeah.
Nutty. Yeah. Kind of keeping the same idea here, just removing risk and booking some winners where I can. Placing new trades in a small way and just waiting for something to happen. I have a good amount of cash on the sidelines, and that's not going to change until something happens in the market. Gotta stay patient out there.
Yeah, no, I'm with you there. E-mini's down 4 right now. We've sold off 2 handles.
It's sad.
It really is. It really is crazy.
Palantir, I know, had a pretty big move recently too. Yeah. Some people were looking for trade ideas there.
This is this is straight up and to the right. Not much of a dip there. The call skew in here is off the charts. I put on this ratio spread in the August expiration, which goes into earnings. But you can do some fun stuff in here if you're doing like a 1-1-1 type thing, or if you have the capital to sell a couple extra units on the upside. I mean, when you look at this skew, this is a perfect example of just massive skew. Like if you go 40 points out of the money, and we'll say, we'll call it the 185 just to give us a little bit of a buffer on the upside. So $43-ish out of the money. And then we'll go to the 100 strike on the downside. You can see just from a delta perspective, 8 deltas on the put. On the upside, it's an 18 delta. And these are equidistant from the current stock price. You see the value of these options, $1.66 versus $3.20. So you're getting paid almost twice as much on the upside to take some risk. So these wide ratio spreads, or you could do like 1-1-1 type trades where you have pretty far out of the money risk relative to where the stock is. The stock moves, but really wide range to hit on these sort of trades. If you have the flexibility to sell extra units, you could do this 1x3 or something like that. It sets up really nice. This is a Tom type big boy account type trade here. You can see the risk profile here is pretty interesting with no risk to the downside, if that is your assumption on the stock.
Yeah. Anytime you're selling a call into the call skew, regardless of whether it's bullish, bearish, neutral, you are taking advantage of that call skew. So
yes,
covered calls, diagonal spreads, call ratios, you name it.
Yeah.
Yeah, I'm trying to see if we got any trade ideas in the YouTube chat here. How much buying power should one keep at bay for a 35K account? How about cash? So we like to, I think we've talked about this a lot, but scaling it with the VIX. So like when the VIX is really low right now, using 50% or more of your account is very aggressive, because you're not giving yourself the ability to have opportunities arise where you can throw on new trades.
Yeah.
So 35K account, I think you're probably at 10, 20%, 25%. Yeah. So
that increases as vol comes in.
Yeah. If you get a vol event, then you can throw on more trades because you have cash on the side. So
yes.
And that's assuming you don't have like bigger long-term stock positions or whatnot. So 35K account, maybe you have, maybe you're using 7 to 10K, somewhere around there.
Yeah. Depending on your risk tolerance, your directional assumption, volatility.
Yeah.
Those are all
and that's
factors.
That's a perfect world scenario where you're not like battling positions, et cetera, et cetera.
Yeah. Yes.
But yeah. The more you have on the side in an environment like this, where the VIX is just crumbling, the more opportunities you'll have when there is a reversal of that.
Yes. Micron volatility coming in already here. You've got an Ivy rank at 27. The weekly expiration volatility has come in 3 or 4 points just in the last 30 minutes or so. We were looking at it earlier today at 34, 35%, 134, 135% implied volatility. It's now at 131.9. So you got a couple points of vol coming out that position already. We also dabbled in some of the FX products today. So I've been trading some of those. We had Glenn on the show earlier this morning for Option Trading Concepts Live. So if you want to catch that, you certainly can. That might be another place that you go to because volatility is super low across the board. Maybe that's how you, find some new opportunities, some price extremes. The dollar is super, super low against basically anything. So any, if you're trading the euro, 6E or Japanese yen or British pound, anything, they are all significantly higher to the dollar. You can pull it up. $DXY is the dollar index. If you're looking to be a contrarian, being long dollars is certainly on the table. It seems to be the consensus to short the dollar to zero.
Yeah, couldn't agree more. But yeah, lots of currency movers, and like Glenn said, looking for net change over 0.5% or 0.5%, kind of gets you into those daily price extreme ranges.
Yes.
A couple of questions in the chat. How did I manage the FedEx trade for earnings? So I had the diagonal spread to the upside. I had the long 240 August, short 250 weekly. After the open, the weekly was instantly worthless, so I rolled that down to the July 240. So I now have the 240 calendar with a basis of 627. So that's pretty much all you can do. I mean, the move wasn't too crazy to the downside, which is nice, but still a losing trade right now. But what do I need to happen? I need my long option to get to a value of $6. So where does that happen in August? Need a 10-point move. Mm-hmm. So we need 220 to become 230.
Back to where it was.
Yeah, back to where it was, and we'll be okay.
Yep.
That short option will keep decaying as it's in a near-term cycle. Even if it doesn't, my long option will gain more value than the short. So yeah, we need FedEx at like 230, and we've got 50 days for that to happen.
Yep. E-mini's down 5. They sold off another point.
Ooh. Crashing?
Getting some action.
Crashing?
Big time action.
Another question here. Would you consider now to be a good time to pick up some SPX leaps to trade calendars against?
Oh. I mean, from a vol
downside leaps? Sure.
I don't know.
Are you off the downside? Is it done?
I mean, leaps are very hard to trade to the downside just because it's so expensive and, you just don't get paid on them quickly.
Yeah.
I mean, if you're playing the downside in SPX, it has to be a little bit shorter duration than that just because it's such an expensive trade. But, the one component that you have on your side right now is that volatility is very, very low.
Yeah.
So relatively speaking, it's cheap, but it's hard to now get into leaps after 1,000 points.
To the upside.
Yeah. I mean, you want to continue it. Do you want to play the upside? Maybe you do like calendar spread, shorter duration calendar spreads, 30, 60 days or diagonal spreads, that sort of thing. I don't know if I can get behind the leaps at this point.
But yeah, to objectively, yes, your leaps are now cheaper than they were from an implied volatility standpoint.
Yes.
But they are more expensive if you're playing them to the upside. But yeah, downside hedges, I like diagonal spreads in SPX, calendar spreads, QQQ, SPY, whatever. But yeah, it is certainly a cheap diagonal spread as well, relatively speaking.
So you want to see this interesting little tidbit? So the problem with, because we've had a lot of people like interested in Circle or CoreWeave or some of these other recent IPOs that have just gone nuts to the upside. And we talk about just how high volatility was. I think Circle, the Ivy rank got into like 140-ish. I remember looking at the August monthly expiration and seeing implied volatility at like 175-ish. It's really interesting that you could see Circle. So the other day, 3 or 4 days ago, it's trading 250 to 300-ish, right? If you had bought the at the money 200 strike put, and you could do this I'm looking in August. You can do this by right-clicking on the option. And if you go to view option in chart, that put basically didn't move since from 3 days ago when the stock was 100 points higher.
Yeah.
I mean, that's a 30+% drop in the stock, and that option didn't move. And that's the case for really any of these options. You look at the 175. I mean, you made a couple dollars on the 175, for a minute now, but you're talking about a move that's, huge.
Yeah. And I think another thing
and that's the same sort of thing that you get with SPX leap options. They just don't move.
Yeah.
Unless you get the crash.
Yeah. You need a huge VIX spike.
Yes.
To get paid, especially in out of the money leap options. But yeah, Circle is a good example. And I mean, this happened with like GameStop, AMC too, where even if you're so certain that Circle or whatever product is going to go down, if that's paired with a big vol crush, it's going to kill your P&L on the puts because number one, you're getting a vol crush into a sell-off, which is bad for extrinsic value. But number two, extrinsic value for a $300 stock versus a $200 stock is significantly more. So now you have a stock that's going from 300 to 200, which reduces all extrinsic value around the current stock price that's now 50% lower.
Yep.
Or a third lower. And you're pairing that with the vol crush, which also hurts extrinsic value. So yes, even if you thought it was super clear that it was coming down, it's hard to make money on those out of the money puts because when you have such high implied volatility that you're buying, when that number goes down and the stock price goes down, it just kills your P&L.
Yep.
And still make a little bit, like you said, with the 175, but you're not making multiples. If you're trying to make 7x, 8x, it's the upside before it happens.
That gamma.
Yeah.
We love that gamma.
Because on the upside, it's the opposite. The stock is increasing, which increases all extrinsic value. IV is increasing, which increases all extrinsic value.
Yeah.
That's how you make multiples, which is crazy.
Yes. E-mini's down 2. You got the NASDAQ up 30. I wish I could point to something specific moving right now. There's not much. NVIDIA is still kind of the leader in the clubhouse. Looking at Micron, it's basically unchanged here going into the earnings. They do push them out right at the close today. So you should see that movement. You think it'll move the rest of the space, or you think NVIDIA is all that matters? Seems like NVIDIA is all that matters, but
yeah. But I mean, if there's a big move in Micron, I think you might see the whole sector react.
Move a little bit.
Especially if it's a move based on something that might affect all the others too. Data trader asking about IBIT.
Oh yeah.
Good time to sell a call against the 50, or are we avoiding short delta period? No, I mean, I've got a short call in there. I adjusted this trade. I had the 60-67 in July. I moved it to the 60-70 strangle in August. But these strategies, I've had this trade on all year, and I've said I'm not having short delta in here. So what does that mean? It means literally that if IBIT rips from 60 to 70, I'm not just rolling the put up, I'm moving the whole thing up. So I would go from a 60-70 strangle to a 70-80 strangle and just shift my delta. Yeah. And you can do that if you want. The nice thing about this trade is it's behaved very well so far. So I started this trade with $500 in credit. I now have $2,000 in credit. So I can do those things and it doesn't affect me as much because I have got 20 points beyond the strike for my break evens as of right now. So, but yeah, I actually already did that once. I moved the 55-60 strangle to the 60-65 for a scratch just to make sure I don't have short delta in there. So yeah, totally possible to have the short premium on. I think it makes sense on the upside too, just because IV is decent. And you can just move the whole thing if you get tested on the upside.
Yeah. I still think the interesting trade in IBIT, if you're into the YOLO type trades, not something that we do on the show or in these accounts, but if you look at these IBIT leap options, if you're looking for leap options, tons of volatility skew on the upside, obviously, because this thing moves and you have this volatility component where it explodes to the upside, or typically does. IV rank at 5 right now. Implied volatility very, very low at 61%. And this is about as low as it gets. When you look at some of these like far out of the money leap options, the 85 strike, the 90 strike, I mean, these are they don't move on the downside and they kind of explode to the upside. You see this like when we started this move higher, which was just a month ago, you can see these double and triple type price action in these options, and that's because of the volatility component. It's not really a change much in the delta of the option or the game. Well, I mean, they change because volatility explodes, but it's the volatility aspect that really changes those options versus the price action that you're seeing in Bitcoin. It's that volatility, upside volatility skew.
Yeah.
The Ryan Grace trade.
Yes. What do you think about selling a naked call on Micron 150 strike for July? Scary.
Yeah, I mean, I don't know if I would rather do like a put diagonal and not have the tail risk.
Yeah.
Or, you know, buy in at the money, put spread, something like that. I don't know. I don't like the naked risk into earnings there most of the time. Yeah. At least have something against it.
Yeah.
Not just straight up short the calls. I am short a call in MU further out of the money, but I have some positive gamma on the upside.
And yeah, I think if you're doing this stuff for earnings, undefined risk, you have to be willing to take the stock there. So like, you're selling a call at 150, you can't be closing it out if it gets to 150 and it's $1,000 trade. Like it's got to be a situation where you're like, okay, I'm just going to roll this now forever. Maybe throw on a put and convert it to a strangle. But
yeah,
if you're doing undefined risk for earnings, you should be willing to continue that trade after earnings. If not, just define the risk.
2 minutes to close till the close on this very, very light trading day. 765,000 contracts in the E-minis. That's got to be a low.
Yeah.
For, I mean, like that's holiday. That's like,
yeah,
that's like Christmas holiday trading, Thanksgiving, you know, like that's kind of that week. E-minis down 2. You got the NASDAQ up 32, Dow down 120, and the Russell down 25. The Russell actually, the lows of the session right now with bonds kind of giving it up, bonds going lower, rates going higher. Oil kind of just doing its thing, up 85 cents. Volatility at the lows of the session. VIX futures, we might even get an 18 handle in the VIX futures. The VIX itself at 1672 here.
Yeah, this
is summer trading right here. 1 point range, vol getting smashed.
Yeah.
No volume in the futures.
This is the second lowest volume print in SPY in since May 9th.
Oof. Yeah, so. SPY only trading 55 million shares, not very much here. Going into the close here, nothing really happening. Micron not really moving here. It's down 50 cents going into earnings. NASDAQ up 50 right now. The E-minis ticked into the green 1 point. We got to pin 6150 here right into the close. What's the SPX at? 6100 on the dot? Probably. Oh, we're just a couple points away from it here. We actually do have Guess the Market coming up on Monday. So tune in for that. Tom and Tony will be back for that to give away some money. There's our bell. We got the E-minis up 1. NASDAQ up 50, a big old nothing burger of a day.
It actually offends me, market. The lack of movement. It's offensive.
It really, it's tough. It's tough. It's tough trading in the summer doldrum.
tastylive.com/guess for your quarterly markets.
Yeah, that one's already over. You can't put it.
Oh yeah, you can't do it. But you can view.
No, you can't.
Can't view.
No, you
can't do anything.
Yeah, don't go there. Don't go there. But that's okay. We'll be talking about the guests on Monday.
Yes.
But we will be back tomorrow for the live show.
We will. Friday.
And Friday. So stick around for that. But we're going to take a quick little 90-second break. Come back. We'll do this all again tomorrow in the morning. See what happens with Micron earnings after that. You're staying on. You got the Overtime Boys coming on next. You're listening to Tasty Live.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? tastytrade. Make your move. The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Do you have a long-term trading goal for this calendar year? Do you have any particular trading goal in mind for this year?
I mean, I think you always go into every trade, every year with a goal in mind. I don't put a specific number on it. Take it day by day. I mean, I've never been to one of those alcoholic meetings, but maybe it's one day at a time kind of thing.
12-step program?
12-step program, yeah, 12-step program, one day at a time. Just try to make the most each day. Some days have more opportunities, or at least you perceive more opportunities, and you go from there.
Well, I have a goal. I wouldn't say it's a long-term goal. I have a short-term goal. It's 1 year, yeah. Developmental-wise, I'm past that now. I've reached a point in my life where I can no longer learn new things. I have like a percentage, objective, dollar objective, that kind of thing.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Ladies and gentlemen, we are back. This is overtime. Your eyes do not deceive you. This is a whole other thing that we're about to do here. Dylan Radigan is entertaining Tom in Milan, as best I can surmise. And Chris is in a heat wave trying to figure out why his house is 110 degrees on the inside. So these fine gentlemen are joining me. I'm Ilias Pivac from San Francisco. That's Mr. Mike Butler and Thomas Westwater from Chicago. Gentlemen, how goes it?
We're nice and cool in here. So, I was trying to walk Chris through his AC problem, but, can't handle the heat. So,
yeah, 110 is that is rough. That is rough.
Yeah. Inside one's house at 110, I'm not sure I'd have anything cogent to say about market action either.
Yeah. And I just checked to see if there's a Mets game right now, but there's not. It's in 2 hours. So he's not there. He's not lying. He is fixing his AC.
Fingers crossed he can actually make it inside his house and see any of it at temperature below melting.
That's insane. Yeah. Stay safe out there, anyone on the East Coast. We had a little taste of it yesterday in Chicago, but the last couple days in Chicago, but it has cooled off dramatically.
It's been foggy and cool here in San Francisco, which I'm not complaining about in the slightest. Let's take a look at, by the way, view the transition here. A place where things are not cool. Micron. Mike, you were just talking about this in the green room before we got started. What in the world? What's going on here?
It's the classic meme of the thing like poking the stock saying do something, and then the green bar just shoots through his head. That's what's happening. Yeah, I mean, I did an earnings preview on Micron, and it looked like everything was good. I mean, they are investing in U.S. expansion, which I think is good for potential tariff stuff. I mean, they've just had an insane rally. Their stock had doubled from the low of April. And it just goes along with the story for the rest of the chippies. I mean, AMD, NVIDIA, very similar charts. But I was wondering if it was going to be able to continue. I mean, even when you have a stock perform like this, they still have to just crush their numbers for it to continue. So I don't have it in front of me, but I assume that they demolished numbers and they have some good news for the rest of the year.
It's interesting because if you look at the sector breakdown here, it's not what you might expect with this kind of a move. I mean, sure, tech is up a good 0.8% here, but generally not the world's most risk-on mix. Consumer discretionary and staples both down quite a lot. Discretionary down 1.25%, staples down 1.3%. Not really what you'd love to see. And if we look at sort of where we are on the overall S&P here, kind of a goose egg. And NASDAQ, not much better. I mean, there's that up, about 0.2% here as we get into the close. So it's pretty localized after we get this, oh no, war. Nope, not war. Okay, ceasefire across these two bars right here. And I mean, it's pretty evident across the various markets. What do you guys make of the pause here? I mean, if all is well and good, are we just pausing to digest, and since we've taken out the previous high, it's off to the races, or does this give you any cause for concern here that we're not finding momentum on a third day?
I mean, volume was pretty light today, so I think the market is just digesting a little bit. Yesterday was really encouraging. We broke through those June swing high levels. You know, it makes sense that the geopolitical fear subsided. We broke some levels there. Now we kind of consolidate to today. Economic calendar is pretty light tomorrow, but I think MU earnings, you know, it could help the tech sector tomorrow break through. I think tomorrow's going to be an up day. I don't think light volume here is really an ominous sign after, you know, you get a nice 2-day rally and you break some technical levels. So I think you get a little digestion, people taking off their longs, they'll reposition. I'm going to be positioning myself on the long side tomorrow morning. Kind of sitting on my hands today for equities. I was going to get long SMH to kind of play the MU earnings, but just did not happen. So I think we continue to drift higher.
Yeah, I would agree. I think just looking at volatility alone, we are back in the mid-teens in the VIX. VIX at 1677 closing print. So we are back at the lows of early June, and that was kind of the lowest we've seen since April. Yeah, swift reversal of implied volatility, and we'll see if we can break through to new all-time highs in E-minis. It's craziness.
Yeah, I mean, we're basically, we're looking all the way back here. I mean, this is kind of the floor on VIX, essentially going back to late March. So this is quite something. I took that technical break yesterday that Thomas is discussing to get myself out of short exposure on the indexes, and so this break above this high on ES, that was enough for me. Goodbye. And then on NASDAQ, of course, same thing here. That was the high. The logic was that the risk reward here, since you couldn't really get out of this range despite whatever news was going on with the US and China détente back, with the war, but then obviously yesterday the market seemed to make up its mind. And so thank you and good night. So at this point, I am on the sidelines and waiting. I think we're kind of in this strange area here. If we just take a look, let's say, at the continuous NASDAQ contract for the sake of argument. Now, and of course, this is not a tradable thing, so take this with a grain of salt. But we're basically back to this kind of digestion zone where we were sort of at the end of last year going into this year. So when the tariff implementation stuff spooked everybody mid-February, gave us this sell-off, before that, we were sort of wondering what is going to happen after we digested the election and went into the holidays. We're back to that kind of deciding line. And if you look at the same thing in ES, same spot. Now, it's not quite as dramatic looking if you look at the current contracts, but you're still in this kind of digestion zone where the highs live and where the market was attempting to kind of make up its mind about what this year is going to be all about. So I don't think the risk reward to chase this higher with new long exposure is particularly great. But I'm not prepared to continue to fade this kind of momentum. It's gonna have to convince me that it's ready to do something different for me to jump in front of it again. Thank God for articles and risk-defined positions and ETFs like SPY and Qs that let you have smaller size. That's always good. What do you guys think? Is this something that you're sort of leaning into directionally at this point? I mean, vol is pretty low, so there's really no premium to sell here, it seems. Are you laying on new exposure? Seems like you're both pretty bullish, especially going into tomorrow. Is this a reason for people to be looking at overnight futures contracts and going, I need to get long ES, I need to get long NQ before the day kicks off tomorrow? Are we chasing this thing?
That's a scary thought. But yeah, I mean, I think volatility is really low. We're kind of in this chop period. Not a lot's going on. I've been taking off trades for winners less than 50%. I've been closing scratches. I'm just trying to like free up a lot of capital as much as I can while still managing other positions and waiting for current positions I have on to let me know what I need to do. But yeah, I think right now I'm more positioned towards having cash on the side just in case something crazy happens. But at the same time, I do lean a little bit bullish with the strategies that I'm doing. But I'm doing them small, defined risk. So like the Micron calendar spread I had was a $370 debit. So very small trade for earnings. It should work out well if we stick around this 130 to 135 range tomorrow. because I've got the 135 2-day short option against the long August call at 135. So looking good there. But yeah, just trying to keep risk small and find new opportunities where they present themselves. But yeah, when the overall market volatility is low, it can be a lot harder to find those opportunities unless you're going to high implied volatility equities.
Yeah, I might do something like buying a call in SMH tomorrow. I think with volatility low, definitely keep capital on the sides in case, we get some event that causes that. I don't know what that is right now, We have durable goods tomorrow. That could move the needle a little bit. It seems like we're wanting to see that September rate cut odds increase right now. So I think, that's far away enough that if September increases, it's not signaling something like there's a dire economic, something is happening bad in the economy. It's just that, the Fed is going to shift more gradually dovish. I think that's good for markets. Whereas, if a rate cut expectations increased for a sooner meeting, that would signal something bad is happening. So I think, if the Fed starts to shift, and market rate bets have been going like this a little more dovish, I think we're going to see more upside. We got, also the PCE later this week. We got the GDP tomorrow, although that's the third or final reading. So, that number would have to change pretty substantially from the second reading to really shift the focus there. But these micron numbers are good. We've made this gap to new recent highs. Volatility is low. I think that all points to us kind of drifting higher. At the worst, I would say, is we establish a new range to carve out. But in any case, with the exception of something unforeseen right now, I think a sell-off doesn't make sense here.
Yeah, you'd need some kind of interesting catalyst, feels like.
Yeah, absolutely. As I say, I'm certainly not prepared to fade this. But Thomas, you mentioned Fed policy odds. It's an interesting thing that's happening in markets, and it's probably the thing I'm paying attention to the most. This is the SR3, so the 3-month SOFR contract for the end of this year. And this is just a sort of a benchmark for where Fed policy odds are going. And you can see this starting to look a little bit more dovish here over the past several days, which is interesting in the context of what the Fed has been saying. Powell testified for a second day here in Congress today, and it's a very familiar song and dance. We heard it in the wake of the FOMC meeting last week, and it's, we don't know what the tariffs are going to do. We're going to wait and we're going to see. We don't have a high unemployment rate. We don't have a high inflation rate. There's really no reason to do anything until the economy sets off some sort of alarm bells this way or that. And interestingly, the Fed actually dropped a rate cut from their outlook in the summary of economic projections last week. So they think they're only doing one cut next year. The markets are pointedly going in the opposite direction, as if to tell them, no, you're wrong. Actually, it's something else entirely. And you're starting to see it here in the contract for this year. So as ever, this is the price. So the way you get at the yield is 100 minus this 96.27. So this going up is yields going down. And you can see this dovish shift for this year, but the really dramatic effect is actually next year, where you see a lot more rate cuts. Even as Powell says, actually, this should be going lower, the market is saying this is actually going to go higher. And so the Fed is at 75 basis points through the end of next year, 2 cuts this year, 1 cut next. Market's at 120. So the market is essentially saying, not only will you do more than 1 next year, you're definitely doing 2, and about 50-50 shot, you're doing 3. What in the world are you talking about? And so this is a very interesting disparity here, because either the market sees some sort of an economic downswing ahead, and it's sort of looking through what the Fed is saying could be a one-off impact from the tariffs, or it's just basically doing the math that the Fed is doing differently, and essentially saying the impact of these tariffs will happen on a different timeline than the Fed is saying. It's going to happen sooner, kind of wash out sooner. So interesting to see the market very much at odds. And even for July, the odds of a rate cut have been rising. Now, they're still very low. So a week ago, we were looking at a 12% chance of a cut. Yesterday, it was 18. Today, it's 25. Now, obviously, that's still 75% probability in favor of no cut at next month's meeting. But 25 is getting a little spicy, especially when the Fed is telling you we are not doing anything. So what is it in your mind that the market is seeing here? Because it'd be one thing if the markets were saying, okay, you know what, you're slowing now. There's an exchange rate between rate cuts now and rate cuts later because you will have allowed the economy to run in the wrong direction longer. So you're going to have to do more later versus now to catch up. So, okay, we saw this, by the way, in very sort of stark relief last year, and you can see it on the chart here. So when the Fed was lagging last year, the market said, oh, well, so build more easing further out into the forecast. And you see these rates come in. Then, of course, the Fed actually cuts, and the markets go, oh, that was too many, and we correct the other way. So this could be a similar thing this time, but if it's creeping into July, it's much more immediate. What are they afraid of?
I mean, I think it was Waller that that said the July, and it's interesting because there's speculation of him being the successor to Powell, and it's like, is he playing into what President Trump wants? Is he kind of trying to juice his position up to get in line as the next Fed chair, or is he basing that solely on what he sees in the economy? But the SOFR rate, climbing pretty substantially just over the past 3 days, you have to kind of see that as the war risk being taken off. Because one of the risks was, an Iranian response to disrupting oil supply chains, which mostly through its proxies closing the Strait of Hormuz. And, when the ceasefire was negotiated, you saw those rates come up. So if there's less inflation pressure, that would open the door to an easier path of cutting rates. So that's one reason we've seen these rates, this SOFR rate increase over the past few days. So now it shifts back to how are the tariffs, when and if they're going to show through the economy. It's not just the inflation we've seen. Not through the NFP, but through some other indicators such as challenger job cuts and things like that, there is some weakness building in the labor market, but it hasn't really reared its head through, the NFP, which is ultimately what the market looks at when you're talking labor market strength or weakness. So, we're getting closer to this next jobs report, which I think is, of course, going to be a big headline event that could shift these rate cut odds. But, the fact that the market is kind of in conflict with the Fed's outlook, does the market rally on the market expectations? And if it continues to do that, and if the SOFR rating continues to increase, effectively meaning more rate cuts are coming, is the Fed going to start to push back on that in more of a visible way? It won't want the market to get too out of line with what it expects. So I think you have to do what you always do, which is watch the data as it comes in and, you know, capitalize on the divergence while it's here. And I certainly think, you know, a sell-off, like we said, isn't coming anytime soon. But if this SOFR rate, you know, if you watch this and it makes a substantial break to the downside, I think that would come alongside, you know, a reason for the market to do some selling. So I think you do what the Fed is doing, which is watching the data as it comes in, but ultimately rely on the price action in your trading.
Yeah, I mean, I think that's absolutely something I can get on board with. That the price action is going to tell you, and this is where it gets really, really interesting. To your point, Thomas, we had a kind of little pop over the past maybe few days in break-even rates. Now that oil has come off and that geopolitical element in kind of bidding up inflation, since that's unwound, those break-even rates are right back down. And one of the more interesting sort of disparities in markets here is those break-even rates basically have been falling all year until the beginning of April, where obviously there was a crescendo for all markets. And obviously stocks have since recovered, but break-even rates have not. And they're still sitting at these levels, basically scraping near the lows for where we were sort of early to mid-April, especially on the more time-sensitive, the more kind of immediate 5-year break-even. So while stocks and the break-evens were falling together from mid-February into April, stocks have obviously come all the way back. Break-evens have not, which sort of makes me think, and I'm not prepared to put any more exposure out there on this besides still being long the bonds. It seems to say that what stocks are showing is more sentiment powered, whereas what these break-evens are saying and what then the Fed funds futures, the SR3 futures are telling us is that the market still sees some kind of an economic headwind. It doesn't think that inflation is the issue. It thinks growth is the issue. And it thinks the Fed should be cutting. And it's screaming at them to do it. And the Fed is resisting, and ostensibly you get to the end of a hype cycle and the market starts to notice. But to your point, Thomas, you probably need a catalyst for them to notice. So you're through the hype cycle of the tariff regime will collapse the U.S. role in global finance. We're off that concern. We've stepped back. We're off the concern that the U.S. and Iran are going to launch World War III. We're off that. Do we think the PCE numbers at the end of this week have some capacity to get us back to looking at why the markets and the Fed are at a crossroads and apparently thinking very different things here? Because the bonds, take a look at the continuous contract here where we can actually see something. There we go. The bonds are creeping higher here to kind of echo what we just saw in SR3, to echo what we see in Fed funds futures. So the bond market is sniffing something out here that maybe stocks haven't picked up on yet. Is this data going to do anything? Or do we have it benchmarked already?
I don't think so, because we're looking at a year-over-year estimate of 2.3%. Last month was 2.1%. So even if you rise to 2.3, that's not far enough outside the Fed's target where it's going to, you know, take the focus off growth, like you said. So, you know, we have the first week of July is going to be probably the biggest week to contain, you know, any potential of a catalyst for volatility increasing, because it's the July 8th trade deadline for, you most countries that we're negotiating with. You get the NFP. So I think even if this was a little on the high side for PCE, the market's quickly going to shift its focus into the first week of July, where you get some of these, either these trade deal pauses, deadlines, these self-imposed deadlines are pushed back a bit, like what we've seen already with China, or potentially the NFP comes in really weak. That would be a trigger. If you did get that, how does the market react to that? Because on one side, yes, the labor market weakened over the past month, but that also brings in the expectation for the Fed to cut rates sooner rather than later, which would, of course, translate to economic growth, but it would be, it takes time for those cuts to work its way into the economy, but it would signal that the Fed has now started the rate cut cycle and they're ready to act. And once you get one rate cut, you're more likely to get the follow-on rate cuts because the center of gravity has now shifted for the Fed. So I don't think the PCE is going to be as big of a concern for the markets as the following week is, where trade and NFP numbers are in the picture.
Yeah, it seems like as it stands, I think the market is telling us maybe there's things that people are worrying about, but the market isn't necessarily worrying about it, and they're expecting that we're finally going to get some of these cuts, because these probabilities have shifted quite a bit over the last couple of weeks. And now looking at the December cycle, which is the last opportunity to make a decision, there is almost an 80% chance that we arrive at a 50 to 75 basis point reduction in the current rate. So, and it's actually leaning towards 3. It's leaning towards 350, 375, which is interesting. So maybe nothing happens in July, and then we get consecutive cuts in the next 3. And then that also might explain why there's only 1 for next year, if they're just front loading these based on softer data.
Yeah, I mean, if they front load everything, much like they did last year, right? So if they come out in September and go 50 basis points, and the markets go, whoa, okay, that's not what anybody thought was going to happen. Yeah, maybe that happens. I would say the biggest concern for markets here might not be a PCE number that's too high. It might be a PCE number that's too low. So if PCE comes out not at 2.3, but at like 2, then the markets would go, wait a second. Is the Fed going to see what we're saying here or what? Because we've been telling him that inflation's not the issue. We're going the polar opposite direction that Fed officials are trying to take us. Is this enough? Will they finally notice now? Or are we just going to fiddle past the graveyard here? And if we do, how much more do you need to do to then catch up later? And that'll be an interesting conversation. Obviously, I think the critical input into this, and Thomas, you alluded to this earlier, and Mike, I think that's sort of front and center of what you're saying, is there's kind of hypothetical risks out there, but clearly the markets are not concerned, and you can see just how not concerned they are, at least about the geopolitics, with this reversion in oil that has essentially come back basically to where it started. So if this was kind of where oil prices were at the end of the April spook, and they kind of established a range for themselves down here, and this is the holy moly with Iran and Israel, we're back. We're basically back to that incremental sort of fair value level. We just had some data out of the U.S. on inventories today, Thomas. I know you're watching this stuff like a hawk. It was another big decline. Almost over 5.5 million barrels from the overall inventory, and that's after over 11 million last time. those are pretty big pulls from inventory, and obviously the price could not care less here. It's looking at Iran. Should we be looking for a bounce here? Does this data tell us that maybe the whole thing is washed out now, and we can get back to supply and demand?
Yeah, so I sold the 61.62 put spread for the August 15th contract. So I see prices going back to like 65, maybe as high as 70. So like you said, we had the 11 million barrel draw last week. For this week, which was June 20th, we had 5.8 million barrel draw. That's 11% below the 5-year average. You also had distillate stocks drop again. That's 20% below the 5-year average. You had gasoline stocks drop. So we're kind of coming into this peak summer demand season for gasoline, which is the 4th of July holiday. Then you get kind of, it levels off until September, where you start to get some weakness as the summer ends. But at the same time, so you have U.S. stocks drawing far more than estimates for the past 2 weeks. Like you said today, there's a small bounce in crude oil, but the market is still focused on, the geopolitical risk premium evaporating from this wild ride we've had over the past 2 weeks in oil prices. So I think now the traders are going to shift back to fundamentals. You're trading around 63 and some change. I think that's lower than where we should be. So, you get the OPEC saying they're going to produce more, but we haven't really seen that too much, and that's being led by Saudi Arabia, which is going to unwind more of their production. But at the same time, domestic demand in Saudi Arabia is up, so they can absorb some of those barrels that they're producing. So that's less going out into the global supply. So I think we're headed back up around 65 to 70. We kind of had moderation today after this bigger sell-off on the ceasefire news. So I think the selling is pretty much done here. And you have some swing levels from, April and May around 62, 63 that you could kind of play off, if you're doing a technical trade there. So we're at a zone of support after, these geopolitical tensions come out. You had a lot of shorts get whacked out of the market, over this past 2 weeks. So, kind of now positions are going to recalibrate. So I think traders are going to start getting long again. You see prices drift back up to 65 to 70, between that range. And then, you're looking next week at the EIA numbers again, which is going to be for June 27th. So the next 2 weeks, you're really looking at the EIA numbers where there's really strong gasoline demand in the U.S. You have OPEC, saying they're going to produce more, but it's not fully materializing yet. And then you have the threat of, Iranian oil being completely taken out of the market. That's removed. So China is going to continue buying Iranian oil. We had the truth, or the tweet from Trump kind of, saying, China, you should be thanking me because you could still get your Iranian oil. By the way, we'd like it if you bought some U.S. oil as well. China hasn't really been a big buyer of U.S. oil this year, but, you've still seen the exports quite strong. So, I think playing for a neutral to bullish position here is kind of the prudent thing to do after you get the geopolitical tensions coming out of the market. You get this really quick 2-3 day sell-off that took us back to the levels where we were at the start of the 12-day war, the Iran-Israel conflict. So I think it's a good time to buy here.
So for the record, I sold MCL calls into this pullback on Monday, and that's worked great, but now it's obviously idling. So I'm sort of on the fence here of what to do next. I might just flip this off and step aside. There's still a good bit of vol here, so maybe something directionally neutral, like an iron condor or something like this, might make some sense. Mike, did you wade into these crude oil waters the past several days? What are you doing here?
I am standing by right now, but no, I did have an iron condor on through the whole thing. So I had the 61 short put spread and then the 71 short call spread in the July 17th cycle. And I just did nothing with it. I watched it fly through the call side, and then I saw the sell-offs, and now it just literally went right between the strikes at 65 and implied volatility got crushed. So that was a roller coaster, but it was a small defined risk trade. Ended up closing it for 80-cent winner. But I would like to get long oil now. If we get a little continuation of this move, I agree with Thomas. I think, in this range, 64 to 62-ish, I think is a decent buy spot. And if we get there,
It seems to be right at support, yeah.
Yeah. So I'll just get there by way of the micro crude contract and just do one contract. I found that to be a nice way to get long exposure. You can do a covered call in there. You can sell a call spread in the main contract against it. But yeah, I'll be looking to buy in that 62 to 64 range. Ideally, we get a swift sell-off closer to 62, and I'll feel more comfortable with that.
Yeah, I mean, for me, if you look at it sort of intraday, I've got a 4-hour chart on here. This kind of becomes a trigger line of sorts where we have the big reaction and then we kind of carve out this range. So if we end up poking our way through to here, let's say on a 4-hour basis, 8-hour basis, so something that takes us in here somewhere, then yeah, I'm probably looking to just roll the position over into long side exposure and just do it like that. But the vol here is expensive, so I probably wouldn't do it by buying calls. I'd probably do it by selling puts and having that kind of kicker on it, because if this thing is going to respond to these inventory numbers like this, obviously there's a little bit of latency when everybody's focused on geopolitics and nobody's really focused on the underlying. But these are pretty substantial inventory pulls, so you could, I think, reasonably get a little bit of a bounce. Shifting gears here to another place where the action is indeed continuing. In the US dollar, this has not been a happy time trying to pick the reversal here in the dollar for me. I've been short all year, and then on Friday I flipped long, thinking this is maybe a top here, but maybe not. And certainly the building Fed rate cut expectations in the markets that we were talking about are at least one element in this conversation. But it looks like the euro is breaking out here. And that's something that is showing up across all kinds of different currencies. I mean, you see the same thing in the pound here. There it is. Attempting to take out the high there. Not quite there in the Aussie, but this thing has been basically listless going all the way back to early May. Not great in the Canadian dollar, although not really making progress the other way either, and sort of anchored in the yen. So it appears to be a kind of dollar versus Europe move, and Europe seems to be winning. What do you guys think here? Am I still should I be running away from my long dollar position here? Because I am inclined. I think the price action is doing the wrong thing here. But at the same time, when I look at it over a longer term view here, there we go. Come on now. When I look at it, and let's see, maybe we can get a continuous contract here for a little more clarity. There we go. There is this big underside right here, where there was a big range, and we're sort of right there. Is this thing just attempting to stress the last bit on one side before it rolls over now? Or is it just going to keep powering higher? Are we going to 124 euro?
I was playing it, I think, the same way as you. Last week I sold the call spread at 117, 117.5. So I wasn't expecting us to breach this previous June swing high. So I'm on the wrong side right here. I think I'm going to hold on to this, though, for the levels you pointed out, and kind of perhaps a last gasp higher for the euro. On the other hand, you get like the NATO summit today, where you get this pledge by European countries to spend more on defense. So that right there is bullish. It could be bullish for the euro, because if you have more defense spending, that could feed into economic growth. It depends how the individual countries within Europe are going to do that. Are they going to try to raise more money to fuel this spending on defense, or are they going to try to find ways to fund it through cutting spending elsewhere? But that's a longer term implication, and I'm not sure if the NATO summit has too much to do with the move today. I think it's more kind of dollar weakness. But I'm going to hold on to this short call spread that I have for at least a couple more days, and hope that we reverse lower. If by Friday we keep rising, I'll just get out with a loss on it. But I've been doing long euro trades all year up until last week. I finally thought the dollar was at its point where it's bottomed, and that hasn't been the case. So I'm going to hold on to this for a couple more days, and then I'll abandon it and reassess next week if it's out. But for now, the short dollar trade is still working.
Yeah, my biggest exposure is the Japanese yen. So I'm long the yen dollar calendar spread. I'm long the 44-day 7.2 call, and I'm short the 8-day 7.2 call. That's pretty much a scratch right now, but that's definitely my biggest exposure. But wait, there's more. I also have within the tastyfx integration, I am
fun times. Welcome to the fun world of spot.
Oh yes, it's been real fun. I'm losing in every position I have. It's been great. I'm short the Aussie dollar, very small. I'm long the dollar franc, very small. I am short the dollar yen, very small. And today I got long the dollar Israeli shekel for kind of a very direct exposure. And yeah, all that's extremely small. Like all those positions combined they've all moved like 70 cents. But the Japanese yen calendar spread is definitely my biggest position. But I'm all over the place. I'm just waiting for something to move.
So here from this wonderful integration of spot into the platform is the US dollar Israeli shekel. We can see the shekel is off to the races here. Not anything I'm trading. I usually keep myself to the majors when I trade SpotFX, but I trade SpotFX all the time. In fact, all of my exposure this year to the yen has been through SpotFX, and most of it has been short dollars. Really, because you can get a lot more flexibility in terms of smaller position size, so you can manage risk a little bit more granular than the full 6J contract, which is huge. And so I've been doing that. But interesting spot here for the shekel. See if we can. Is that all the back data that we have here? Looks like it. So if we look at where we are here, we're at a pretty significant level. So if you were looking for a US dollar rebound, and for whatever reason your indicator for it was this particular exchange rate, you might say, well, hold on now. Do we maybe have a line in the sand here that's approaching right around here? So interesting to consider. As far as USD franc, let's see here if we can get that up on the screen. No, not seeing it.
Yeah, it's the USD CHF.
Right.
But yeah, that is.
See if we.
That one is.
There we go.
There you go. That one's even more multi-year extreme. The shekel was a 2-year price extreme. This one is. You got to go way further back. You got to go back to 2015. That. It's kind of crazy.
Yeah, I mean, here is a chart here of where we are. By the way, note these awesome charts now in the TastyFX tab of the platform. I'm kind of still angling to the idea that maybe the dollar has some kind of a bottoming that's occurring here. Seems to be kind of testing the last line of defense. Looks a little bit better here on dollar Swiss than on the euro, where obviously there and the pound there's already been a breakout. And maybe we're not giving this NATO summit enough due, Thomas. Maybe that's sort of why the pound and the euro are jumpier today. Because and obviously, I mean, Switzerland is not exactly expected to beef up their defenses, and they're not a NATO country, and that's sort of not their whole vibe. So maybe that's what this is. But if the Fed is right, and we're not going to have a lot of rate cuts, then the dollar seems awfully cheap. But the markets are clearly sort of screaming in the opposite direction. So it seems like somebody's going to have to convince somebody of something. And between now and the end of the week, really, it's the PCE data that's on my mind, and not in the sense that it might be higher, but rather in the sense that it might miss. That's really been the trend for U.S. economic data recently. In fact, over the past month or so, it's increasingly turned out soggy results relative to forecasts. And so kind of thinking about if the market is right and the Fed is wrong, then we're in a situation where this data might miss. The market's outlook might start looking more appropriate, and then we might hear a different message from the Fed in July, which is going to be difficult to send, Thomas, to your point, because you have these deadlines, and the view on tariffs has not clarified significantly. Anything else you guys are looking at in our last 5 minutes before the end of the week? Those of us that are macro degenerates really only have the PCE number to hang our hat on, maybe durable goods tomorrow. What are you guys looking at? And by all means, take us anywhere on the board here. What are you watching before the weekend?
So I'm watching for tomorrow nat gas. Because we have the EIA numbers for nat gas, and we've had a pretty big sell-off in the product over the past week. So we're trading kind of, we have this kind of support level, this trend line that we get off the April swing low. And we're trading right near that. The past 4 days, we've had a really good sell-off. We've gone from around 4.2, now we're trading around 3.6. So we've had a lot of retail longs washed out in their positions. We're near this support level, and we got the EIA numbers tomorrow. I think the median survey estimate is around an 88 billion cubic feet build. So, those numbers come out tomorrow. We've had this extreme heat. Perhaps the build could be less. Of course, if it comes in under, that's bullish. But is it going to be seen as kind of a risk clearing thing, regardless of what the numbers are? And are we going to revert higher and stay within this range that we've been trading in between April and May, all the way from 3.4 to 4.2? I think we stay in here. So that's kind of, I have a trade on right now. If I wasn't long, I'd get long right now. But my nat gas position, I have a short put spread at 3.25, 3.3. So I feel pretty comfortable with that, even though we've drifted lower. And I'm also selling the call spread at 4.5, 4.6, which I've been in for 2 weeks now. So that call side has been doing a lot better than the short side. But I totally expect us to stay within that 3.3 to 4.5 range, but now with upside bias, since we're near the lower end of the range here. And the thing is, there's been this extreme heat wave right across the East Coast, where a lot of natural gas demand is concentrated, and yet we've sold off. So part of that is the war resolving, but also part of that is if you look at displacement of natural gas demand from things like solar and wind, along with this heat wave, it's been really windy and really sunny. So that has displaced a lot of that demand for natural gas. And that's why these numbers may come in on the higher side, despite, a pretty substantial heat wave. So the EIA numbers, regardless of what they are tomorrow, I think we're going to find some upside pretty soon. And that's how I'm positioned. So that's how I'm playing natty gas.
Yeah, that was my first look too. But outside of that, I think it would be interesting to see if oil moves in a big way. It's not projected to, given the volatility collapse, but I think Bitcoin's another one. Bitcoin is the only thing that's like continuously moving through this rally here. This is the third consecutive day relative to the E-minis and NASDAQ. So yeah, I think there's some things that could push or pull the market, or maybe give us an indicator of what's to come.
It's an interesting thing in Bitcoin here, because you'd think the dollar is getting shellacked, there's risk on, and you're still kind of stuck in this lower highs and lower lows thing, which is a little bit interesting. Now, if you were completely price ticker agnostic and you were just looking at the chart, I think you might say, here is a digestion, kind of a pennant flag triangle type of thing. Pick your favorite technical analysis term, but it looks like a consolidation that gives way as a continuation setup, where this is the trend to continue. And so the bias normally, sort of on pure technical grounds here, would be to break higher this way. But you don't have it yet. So it's an interesting thing here, because we seem to have attempted to break out, then we didn't. So we take a look at what we did with these highs here. We sort of attempted to get north of it, then failed. And this basically becomes the line in the sand, where if you can close above 110K or so, you might have the next big run. But for now, it's kind of It appears confused.
Yeah, and I would say that aligns with the rest of the market not moving.
Yeah.
Shopping.
And generally confused there too.
Yes.
And on that encouraging note, overtime is out of time. Thank you, gentlemen, for filling in. Always a pleasure to have you. Tasty Live After Hours continues. You can cue the sexy music right there. Although nothing of the sort is coming next. It's me with macro money and a bunch of long discussion of complicated charts. So stay tuned. We'll be right back.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top yearly recap.
Breaking news on Instagram. The first segment of your line dancing has been posted. Left together, switch, turn. Right together, twirl, turn. Hip, hip, hip.
Right together, spin, clap. Left together, spin, clap. Hitch, 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 turn, shuffle, rock, shuffle, rock, shimmies. Shimmy.
I took 5 lessons for Casey's wedding, and all I knew how to do was
right together, spin it around. Yup. And you want to clap. And then like strut down, strut down, strut down, strut down. Right together, spin. Left together, spin. Hitch. Hitch, hitch, cross, turn, shuffle, lead, shuffle, rock, shimmy, lasso.
This is not good.
Hey! Oh, he's got the walk down. He's got it down.
Perfect, and you got the bed. You got everything.
That is not even close.
God, bitch stole my. Oh, it's flawless.
Look, it's beautiful.
Flawless.
No.
You're walking way too fast.
And go stick your finger in all of our lunches.
Now complain about something.
Oh, God.
You watched the debate, you knew who won, and you just didn't want to admit it.
I was in New York. I was flying home that night, and I'm so sorry that I didn't go back and tape the vice presidential debate.
First of all, I think it's hilarious that you run a technology company and you still think you think you had to tape it in order to watch it. You think you have to tape it?
He didn't have a blank VHS tape to spare for the debate. Stas, what comes up next? The opening bell. Don't look so surprised. Sadlov has been this way since 1980 when you first started trading. Wait a minute, was it always 8:30? Yes, the opening always was the same. The closing has changed.
What has changed? I don't think so. Nothing's changed. The only thing they did, I think, was add the 15 minutes.
Excuse me?
The only thing I ever think changed was the 15-minute curb session.
From 3 to 3:15, so they did change it. So it was the closing and not the opening that's changed.
For option traders, the 15 minutes.
Well, listen. We're not being traders here.
Do not engage.
Wait a minute. So
when I got in this business,
we used to open it. We used to open at 9 o'clock. Since 1980 to now, we didn't always open at 8:30 in the morning.
Yes, we did. Is that a $20?
I am going to get this $20 off of you.
I don't think so.
No matter what. Chris, how are you, my friend? Chris, your job after you get off the show here is to find out when the New York Stock Exchange opened in the 1980s, what time they rang the bell. I have a $20 bet with Sosnoff. We're going to be eating good tonight. I already decided that Sosnoff will be having cereal for dinner tonight. I said the New York Stock Exchange did not open at 8:30 Central Standard Time. It opened at a different time. Saz said it always opened at 8:30.
I already have the answer. You guys need to choose a year, and that will determine which one of you is correct.
No. I've already won this. I said from 1980 to now, 2024, we didn't always open at 8:30.
I gave him 1980, but I technically didn't start probably till 81. But go ahead. What is it?
September 1985 is when it switched to 9:30 a.m. Eastern.
Thank you very much. Thank you very, very much.
Not 1980. Not 1980.
I remember. I was on the floor. I was working because I would have to get up earlier in the morning.
In 1980, the New York Stock Exchange opened up at 10 a.m. Eastern. It closed at 3:30 p.m. Eastern Time. The schedule was in place until September 1985, when the opening time was changed to 9:30 a.m. Eastern.
Pay me,
Get the full scoop by checking out the archives at tastylive.com.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
If you had to buy and hold one stock for the next 365 days, what would it be and why? If you had to buy and hold one stock for the next 365 days, what would it be?
Aside from our own company. So if I had to buy one stock from now, 1 year from now, that might go up on a percentage wise, I think I'd buy Intel. I know you're going to hate that. I know everybody's going to hate that, but it's a $20 stock that I think is going to go to like 25. It's a nice little 25% kicker. If I had to buy another stock that's like in the same price range, I kind of like Southwest Airlines here.
Gosh, I know it's such a divisive stock, but I would say NVIDIA. It's just one of those interesting names that I think is sort of forward-looking, and the stuff that they're doing with chips and obviously the AI revolution. I've always thought that was fascinating. So it is definitely one that I think is here for the long term, and that's one that's interesting to me.
Tom said Intel. You have any thoughts?
Well, that would make sense. Tom is an Intel type of person. I mean, Intel started what year?
So I studied economics and international relations, and I wanted to do the hands-on rather than the academic version of that, and the most natural thing was global macro investing. I begin with a sense of where I think the overall direction is for the macro theme for the next 6 to 12 months, and then look at some basic response from the price action to see how it's going. I think the price itself is the purest of indicator. It subsumes within it the collective emotions of the market. One of my favorite mottos, if you will, comes from the always great Ira Harris, who said, if you're right at the wrong time, you're wrong. And so, for me, every macro narrative begins with what's the price action saying, rather than this or that economic indicator or some such thing.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Well, we have another day of testimony from Fed Chair Jerome Powell, and the dust seems to be settling on the ceasefire between the U.S., Israel, and Iran. It seems to be holding for the moment. So what are the markets look to now to animate next steps? That's what we're going to try to unpack here on Macro Money. I'm Ilya Spivak, head of global macro here at tastylive. And the thing that continues to stand out as we digest all of this tremendous volatility over recent days, with all of the various headlines from this corner and that all across the spectrum here, be it geopolitics, be it the Fed outlook. The thing that stands out here more than anything is still this disparity between what the Fed is seeing and what the markets are telling them they ought to see. And now that we've had a little bit of a settling on the geopolitics story, we have an interesting opportunity perhaps to begin to make our way toward a resolution. And the markets tellingly stall at an interesting spot here. And now this is the continuous contract on the S&P 500, just to give us a bit of a benchmark. We have basically a hold here, but of course these are not the tradable contract levels. So here we're more looking theme-wise than we are at, for example, the current active contract on ES, which would be the September U contract. So we're at this decisive level on the continuous, but more importantly, we have these 2 days of significant response to geopolitics. We start the week with a gap down after the U.S. strikes Iran. Then there's the effort to de-escalate that ultimately gives us a rally. And then yesterday, when the ceasefire is basically forced by the U.S. onto Israel and Iran, and they begrudgingly agree, we get this push higher. And that basically puts us in the same digestive range where we were since early December of last year and into mid-February, where concerns about the impact of the tariffs on business confidence and consumer confidence start a growth scare and give us a sell-off that, of course, ends in the crescendo that was Liberation Day and its prompt flip-flop right here. So we look then to a situation across markets today where the geopolitics have seemingly gone to the back burner, and the markets are unsure of what to do with themselves because they don't appear to go very far at all. S&P ends the day flat. NASDAQ ends the day with a little bit of a gain, 0.22%. Russell, the small cap index, down 1.13%, but nothing really running away. Crude oil, tellingly, down about 0.5%, a little bit less, but certainly nothing like the huge moves we've seen over recent days. Monday's was an 8.6% downswing, followed by a further 3.5% decline on Tuesday. By any kind of reasonable comparison, we're not going anywhere today, just kind of idling here around the 63.50 level on the September CL contract. Gold prices stuck here today, up a touch, about 0.25% after yesterday falling 1.65%. So the name of the game here seems to be digestion. Probably the most interesting bit on the board is a significantly weaker U.S. dollar, which against an average of its major counterparts has now fallen to the weakest level since April 2022. And the biggest moves here against the European currencies, dollar down 0.42%, 0.8% against the euro, down 0.3% against the pound, and for the most part, weaker across the board. It's a little bit higher against the yen, but even there, it's modest. Otherwise, the dollar is, for the most part, lower. And where that seems to fall is not so much the geopolitics of the story, where, again, the sensitive assets here seem to have stalled to think things over, but the second day of testimony from Fed Chair Jerome Powell, where the message is a familiar one. Of course, we had the meat of the testimony yesterday. The prepared remarks were just about the same this time around, but a few more additional comments came up in the Q&A. Probably the key thing here is that the Fed does not want to give a lot of forward guidance, and seems to think that it makes sense to move slowly amid uncertainty. This is very much the story that we heard from Fed Chair Powell yesterday. It's likewise very much the story that we heard from the FOMC announcement last week. This idea that the Fed is not sure what to do around what the impact of the tariffs is going to be. Powell, in fact, said very clearly yesterday that the Fed might have been cutting by now this year, were the tariffs not to have created a lot of uncertainty on the path for inflation and for growth. And of course, we saw this in the adjusting of the Fed's growth and inflation expectations in the summary of economic projections they published last week. We can see here growth revised down, unemployment rate revised higher to match that, the inflation outlook revised higher both for headline and core. And around this uncertainty, the Fed seems to have said that they're going to push out making rate cut decisions further. So we still have 50 basis points, down from 4.4 to 3.9 on the menu for this year. That much remained unchanged. But for next year, we can see we've shed a cut. It's now 3.6 versus 3.4, so that's one less cut, from 2 down to 1. And now we have to wait until 2027 to get to 3.4. So it's not like things pick up thereafter. It's not like there's a hump. The Fed is seeing fewer rate cuts across the outlook. And if we look at how the markets compare, and this is where that dollar weakness comes in, they are squarely moving in the opposite direction. The outlook from the markets has become increasingly more dovish. In fact, it's become more dovish both for this year and for next. For this year, for the most part, we're still in line with the Fed's forecast, a little bit more dovish, maybe only 6 basis points. But the outlook for next year is substantially removed from what the Fed is thinking. So if the Fed is only envisioning 25 basis points right here for next year, the market is saying 60. In other words, not only is the Fed likely, according to what the markets think, end up doing not 1 but 2 cuts, but they have about a 50-50 shot of doing 3. And so this is where things get the most interesting. Because while stocks were, as we just said, sort of mixed to idling, a little bit weaker on the small caps, a little bit stronger on tech, giving us an S&P 500 on net that doesn't go anywhere. We obviously have a slowdown in oil. It's cooling to digest. Gold is cooling to digest. The dollar was on the move today. And so, to some extent, were bonds. The 10-year note here closing at the highest level that we've seen since the beginning of May. So yields are coming in, and that seems to echo what's going on here, which is the market is pointedly going in a different direction. Moreover, it's not just for last year. If we take a look at the rate cut probabilities, even for this July meeting, we can see that a month ago, the markets were much more concerned. But what we look at a week ago, they were much more certain that there will not be a cut in this upcoming July meeting. But what we can see is that the probabilities are starting to shift here to where now the market actually sees the chance that there is a rate cut at this July meeting at about 25%. Now, of course, that's still 75% in favor of standstill, but we can clearly see that now the chance that you get a cut versus standstill is higher. That is, a chance of a hold is lower than it was yesterday or a week ago. And so even in the immediate layout here for rate cut probabilities, you're still seeing this sort of more dovish tone. And it gets even more significant when you look at September. Now here, of course, the cut is expected to begin with a likelihood approaching 70%. But what's interesting here is that the likelihood of a hold has diminished. And instead of that going into here, we see that the probability that you by then will have had a second cut, that's building. And we can see that this is starting to look interesting because for July now, it's over 20%, approaching 25% that you get a cut. And now you're at 20%, which is, again, small but not insignificant, that there is a second cut in September. So the markets are very clearly saying that they're not buying what the Fed is selling. And as ever, the story seems to be about inflation. I've talked about this disparity, and it's only become more festering as all of this geopolitics concern has washed out of the markets. This is the S&P 500 here, of course, in the yellow. These are inflation expectations baked into the bond market by taking the difference between nominal and inflation adjusted or real rates to extract the inflation adjustment itself that takes you from nominal to real. And that gives you a sense of what the bond market is pricing for inflation. And you can see here at the beginning of the year, we had, of course, that growth scare that we just talked about. That's this move right here. And against that backdrop, inflation expectations were falling with stocks because the concern was, oh no, the rollout of these tariffs is hurting business confidence and consumer confidence. It's going to end up in the business cycle. It's going to hurt growth. And they moved in tandem. Stocks have, of course, rebounded. Inflation expectations never did. And after this little shakeout with the spike in crude oil prices bidding up inflation only a bit, as crude oil has reversed, so too have inflation expectations. And so we're in a situation here where the Fed seems confused as to whether it should prioritize fighting inflation or cutting rates to boost the economy. The markets don't seem to have that confusion. They seem to think inflation is not a concern and that the Fed really ought to be cutting already. And the divergence there is becoming increasingly acute. Now, there's not a whole lot of economic data to try to get a catalyst for a resolution, but before the end of the week here, we're going to get the Fed's favored measure of inflation, the PCE index, where the expectation is that we're going to get a little bit of a pop. The headline rate seen rising to 2.3%. That's up from 2.1. And the core reading, and this is the one that the Fed cares the most about because, of course, as we can see here, most inflation is stuck still in core services. And in any case, the Fed doesn't have much agency over global food and energy costs. That reading is expected to edge up here to 2.6%. Encouragingly, that would still be the second lowest reading since March 2021 after April's 2.5%, but nevertheless, it would be a travel in the wrong direction, as it were. If we look at the benchmark Cleveland Fed's forecast, their kind of running tally of what inflation is likely to be, we can see it basically lines up with these forecasts. So we can see their model here is at about 2.3 for the next reading and about steady for the core. So that generally comports with what we're seeing here. It's maybe a little bit off on the core, a little bit lighter there, but for the most part, it looks like there's a consensus around these numbers. And generally speaking, the PCE report is pretty well benchmarked by the markets, because by the time they get the CPI and PPI numbers, they can extract the relevant components, reconstruct a PCE model, and get very, very close. So deviations here are not usual. Nevertheless, it is important to note that, at least in the case of CPI, it did surprise on the low side when it came out. Now, inflation still ticked up, but less so than expected. And in this case, we'll see perhaps more of a market response given how we're positioning, where the markets are leaning more dovish and the Fed is attempting to fight that. You probably get more of a response in the event of a surprise lower than a surprise higher, because it would suggest that the markets really are onto something and the Fed is off sides. Now, to give the Fed their due, we can see here that last year, when inflation had a little bit of a melt up and the Fed was concerned that it needs to stop cutting until it's clear that things are not going off course. After we saw that melt up peaking, this is March, it took us all the way here to September to actually get the Fed to cut rates. Now, we've only had 3 months off the peak here. Maybe we'll get a fourth. These up here are the 3-month and 6-month annualized changes to give us a little bit of a sense for how the Fed looks at inflation dynamics beyond just year-on-year and month-on-month readings. And so if we are anywhere in this cycle like we were in this one, then we are somewhere here. And that, of course, gives us another, 1, 2, 3, 4 months for the Fed to mull things over. And indeed, July, despite the recent shifting in the odds here, we can see the Fed is still mostly expected to hold rates unchanged. There's no meeting in August. And so by the time we get to September, we've already exhausted at least 3 more months in this sequence. So perhaps we're just following a familiar script. Likewise, in the Fed's defense here, we also see that the leading ISM index on prices would imply that PCE and CPI are heading higher with about a 2-month lag. However, U.S. economic data has tended to underperform increasingly relative to expectations. And that's, of course, a contrast with the rest of the global economy. So there is this sense that the markets are not seeing a mirage here, and that, in fact, inflation is being pressured lower by a weakening economy, which, if we consider how much the U.S. economy contributes to the overall pie, the majority, and that it is, at this point, the only engine of global growth that isn't stuck in stall mode, which is where both the Eurozone and China appear to be, hugging this 50 line, which is neither growth nor contraction on composite PMIs, whereas the U.S. at well over 50 is clearly in growth mode, gives us a story where this is the only part of the pie that's growing and also the only part of the pie that's meaningfully weakening. So the markets might be onto something here. So if the PCE numbers actually come out lower than expected, then perhaps the Fed is going to look increasingly wrong. And if that's the case, well, then we might get still more US dollar weakening, still more dovish repositioning, still higher on the bonds, and then whether stocks can finally focus away from geopolitics and on the business cycle and consider that the bond market is screaming at them that something appears to be misfiring, that remains to be seen. And with that, we have macro money for today. As ever, we are here Monday through Thursday, right after overtime, a show I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. I'll be back with Chris for Futures Power Hour on Friday. This show returns tomorrow. If you're watching on YouTube, like and subscribe. In the meantime, happy trading.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
All right, Tony, we have a big week of earnings coming ahead in a time of high volatility and uncertainty. How are you choosing to attack this week of earnings, and do you think that there's anything that traders should be aware of?
I think earnings become less important when you have volatility in the overall market, because sometimes a lot easier to find a higher probability trade in a longer dated time frame than you would for earnings. But if you are going to trade earnings, I think you have to trade it much shorter term and probably directional. And with this implied volatility being so high, it's going to be even higher in these earnings trades, which means that all options are going to be priced a lot more fatter. And if they're fatter and you're selling them, then you can get a higher probability of success and be further out. So I think you have to trade them directional, and I think you have to trade them shorter term for earnings themselves if you're using options.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
What's one under-the-radar stock that you think could have a really good summer this year?
Oh, man.
Oh, man.
Good summer, man. It's funny, immediately when you ask that question, I'm like, I don't really pay much attention to underrated stocks. And then I thought about CoreWeave, CRWV. That stock seems like it has a little thing to it right about now. I think it's one to keep an eye on.
I think Cameco, CCJ. I really like uranium mining. This administration is pushing forward a lot of efforts to cut some red tape, make it easier to invest in things like small modular reactors and stuff, so that's going to drive uranium demand. I really like Cameco.
I'm coming up a little bit short, to be quite honest. I feel like I want to get long some more stuff, but I've been having a tough time based on the recent rally that we've had. Come back and ask me that one again in a couple more weeks.
Maybe the Russell. I mean, the Russell still has underperformed the overall indices. Individual stocks, I think everything's pretty fairly priced right at the moment.
Could go a lot of ways. I'm looking at Budweiser. I'll personally contribute to their stock this summer, but that's all I can do at this point.
If you missed the live show, here's our cherry on top weekly recap.
Hola!
Look at you guys looking like spy versus spy.
I'm in the UK! Vanetta, I got in. They let me in.
So how's the vibe in London? How's the weather? What's the tea?
So Britt and I are getting off the plane. We're like, should we wait for Batistas? And I'm like, she's like, should we wait for the Batistas? It's the right thing to do. And I'm like, all right, yeah. And it's like European vacation. We are traveling with that, with that crew. So I have a little suitcase and a backpack. Britt has a little suitcase and a backpack. The Batistas, 75 bags. It's like coming to America.
We have a rule in the Batista house. The wife has to pay for the vacation when we're on vacation. So she has one suitcase full of shoes. So we need to just...
She's paying it forward.
She's paying it forward.
Then why does your son need a suitcase that's bigger than me? So anyway,
Vinny's frosted tips aren't gonna frost themselves. He needs hair products.
Against everybody else, because I didn't want to embarrass him in front of his wife. Everybody else knows the rule. If you check bags, we're leaving you.
That's right.
You get left behind.
You get left behind.
You get left behind. You get left behind. That's the rule. An hour later, we're sitting there like, oh my God. They're coming off one bag at a time.
It was about 45 minutes. I will give you that. It really was. And I was embarrassed. My wife is in this train with all these people and everything, like Tom. We're traveling with Tom. We didn't get into the concierge level. We sat in coach. We're sitting on a train.
So anyway, we made it. We took the train. Then I had to walk. Britt made me walk like a mile.
Then it should be nothing. A big, strong man like you.
You should have carried it. I've never seen it before on a train. There were women getting up for him and saying, will you please sit? Would you like my seat?
I mean
seriously.
To be fair, when he starts lurching, it's jarring if you're not used to it.
Good morning, you knuckleheads, and welcome back to the show, Tasty Live.
That was kind of low.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
All right, we're back. Tasty Crypto Show. I'm Ryan Grayson. With me today, Greg Magadini, fan favorite and director of derivatives at Amber Data. Greg, how you doing?
Doing well. Thanks for having me on again, Ryan.
Absolutely. It's a pleasure to have you on this show. I think everybody in the YouTube chat enjoys it as well. And so if you're not streaming on YouTube, get over there, type some crazy shit into the chat, or maybe more appropriately, if you have a question for Greg, maybe ask in the chat. We're going to go everywhere here today and really focus on some options trade ideas, if you will, in crypto, not necessarily just in crypto, but also in some of the recent IPOs and other stocks that you can trade here as well. So excited to have you on the show as always, Greg. Let's just get into it. We've had Bitcoin chopping around a little bit, I suppose is how you would describe it. Took a peak below 100 real quick and right back here to, well, I've got 107 on the screen at the moment, but about 108 or so, kind of flirting with those prior all-time highs. What do you make of the resiliency of Bitcoin here? There's still a little bit of a positive correlation when you look at this across assets, specifically equities. You've got just massive geopolitical risk on the rise, and maybe that arguably has been somewhat subdued recently. But typically, you'd look at what's going on and you'd think, okay, risk assets are going to be lower, Bitcoin's going to be lower at a higher volatility, and yet maybe it doesn't matter. What do you think?
Yeah, I always view Bitcoin as half kind of risk off, digital gold sort of behavior, and then other half is kind of the risk on trade. Ethereum I view clearly more as the risk on trade, but I think overall what we're seeing in Bitcoin right now is just a steady trend higher, kind of the low volatility grind higher, which in my mind is a very constructive type of market. It isn't a wild spike higher that gets faded all the way back down a couple months later. It's more of like this constructive, call it 2010 to 2012 sort of bull market, low volatility that we saw in the indices coming out of the recession. So I think this is all constructive. The fact that prices quickly bounced off that 100K level, which is a psychological level that a lot of people look at, is also constructive. And I think this sort of maturity of the asset class or the asset of Bitcoin itself coincides with that lower volatility. So to me, the trend is unbroken here. It's only reaffirmed. If I look at the chart, it looks like a strong trend. And if I look at volatility, unfortunately, volatility for vol buyers has been realized has been underperforming implied consistently here.
Yeah, we're continuing to see implied kind of leak lower here as well. I mean, do you think, and we've talked about this a little bit on prior shows, do you think that's a function of some of these new participants that are coming in and overwriting calls against positions? You have a lot of participation in the ETFs. You obviously have much, much bigger participants as well that could result in some dampened volatility just given how they, I guess, behave in the market. But what do you think, I suppose, is behind the fact that we're at a yearly low or near a yearly low in Bitcoin implied volatility? And for context for everybody, that's going to be right around 40%. I think I saw 38% depending on how you measure it on a 30-day basis. But, the other side of that, you could be back at 60%. So volatility is very low. What do you think is driving it lower here?
Yeah, I think it's maturing of the asset class. So if you think about Bitcoin volatility a couple years back, or Q4 2020 when we finally broke above 10K all the way up to 36K, the participant base back then was more retail focused, and so you had a lot more of this sort of FOMO market that you see in some of the Wall Street bet names or the meme stock names, and you had a smaller market cap. So back then the market cap was a fourth of what it is now, if less than that, if not less than that. So it takes less money to move it around. Now we have a couple $1 trillion of market cap in Bitcoin. It just takes more money to move it around. And as you pointed out, we have a different investor base. We don't have the FOMO investor base that we would have with just pure retail. We have sort of this institutional investor base as well, which, like you said, their typical trading flows are buy the asset, sell the call against it for yield, maybe buy a put for protection. All of those things are volatility dampening effects.
Yeah, your, I don't know if I'd go so far as to say nation states, but maybe sovereign wealth funds that are possibly starting to participate are going to act a little bit differently than me, just smashing the button, of course. We have a lot of people already in the chat talking about different trade ideas here, some of the different instruments, mentioning, of course, the Amber Data newsletter that you put out. And I believe you do that on a weekly basis. So everybody should go and sign up for that if they haven't. I want to hit on something that that you spent some time on in the newsletter recently, and that's the Circle IPO. You had 5 or 6 points around this. I think you have a really interesting view here. Can you talk us through the Circle IPO and maybe some related trade ideas, given stable coins are just about everywhere right now. It seems like we've got legislation that's making its way through Congress, bipartisan support. Presumably, this is going to lead to more crypto adoption. But Circle's one of the few companies that you can invest in, or at least few U.S. companies that are publicly traded. Just went public recently, to the moon, essentially. How are you thinking about it, and where do you think we go from here? Is this just IPO hype, or does this have legs?
Yeah, I do not think it's just IPO hype. It's very tempting to say that because, the price has rallied so much so fast. But to me, I think this IPO was just priced low. And so how do you think, or how I think about Circle valuation is, instead of looking at Circle as a company, I'll compare the market cap to other cryptos. So, the Circle valuation market cap today is around 50 billion, despite the massive rally we've done. If we look at Ethereum, that's about 300 billion. If we look at XRP, that's about 125 billion. The reason I look at those names is that Ethereum, again, is more of that Web3 play, while Web3 is very highly correlated to Circle or stablecoin usage. We're thinking about DEXs, we're thinking about decentralized applications. A lot of the payment mechanisms are in stablecoins on those products. And then if we look at XRP, that's kind of more of a pure play sort of payment value proposition. And again, XRP is trading almost 2.5 times the valuation of Circle. And Circle is chain agnostic. So USDC lives on Solana, it lives on Ethereum, it lives on Tron, it lives on Sui, all these major blockchains. Well, if I'm making a bet on Web3, I kind of view stablecoins as half of the equation. So that almost, to me, the proper valuation is comparable blockchains. And so if we're going to have Circle be equal to Ethereum, that's 300 billion versus 50 billion, there's a lot of room for Circle to run up from here. And that's against one blockchain, admittedly the second biggest, but still one blockchain. And then if we expand out of that, I do view Circle as more than just a Web3 play. I also view it as cash in the Web2 world. Think about buying things on eBay or on Amazon and things like that. I definitely think that that's going to be a future addressable market for USDC. And then the last kind of point here is that the main competitor of Circle is Tether, and Tether is about twice the size of Circle right now in terms of outstanding stablecoin. But the way that the Genius bill is written is actually kind of building a moat around USDC. USDC is already compliant, they're already audited, they already have one-to-one proven reserves, and then they are also barred from paying out interest to USDC holders. So that essentially kind of preserves their income from being invested in US Treasuries. And then last point here, I know I'm speaking a lot, but last point is that the U.S. Treasury funding mechanism, if the fact that Circle is essentially buying short-term paper, that makes it a partnership with the federal government, so to speak. And if we look at outstanding Treasury bills today, it's about $7.5 trillion. So outstanding USDC is 60 billion. So in my mind, there's a lot of room to grow, and it's one of those things that no one can predict how big it can get.
Yeah, I would think, at a minimum, right, you have stablecoin aggregate market cap at, let's say, about 250 billion here today. That's at an all-time high, and that's across all chains and all stablecoins. And as you mentioned, Tether is the largest. I think if you look at it from the Tether market cap dominance perspective, it's 60, 70%, somewhere around there. So possibly you'll see USDC grow. But let's just say that we go from 250 billion to $1 trillion by the end of the decade. I don't think that that's unreasonable. And what you've described here, I wasn't really thinking about it in terms of that two-pronged approach, because obviously on one hand, makes a ton of sense that if you believe DeFi is going to grow, well, that's a function of stablecoin growth and vice versa. And then also, This is a superior funding mechanism. We're about to launch stablecoin funding, both deposits and then also withdrawals on the Tasty Trade broker side of things. Again, superior funding mechanism. And I think you're going to see everybody follow suit once things are in place here from the kind of more regulatory side of things. But I'm curious, do you think that the first mover advantage, or let's consider both Tether and USDC as the first mover here. They've been around the longest. They have the largest adoption. How important is that, or how relevant is it in a world where you likely could see, I would think, a JP Morgan launch a stable coin, or you would have competition from a lot of legacy financial services providers here, given there's a framework, and they've probably just been waiting for that over the last couple of years. I mean, how important is that first mover advantage in your opinion?
Yeah, so I think in terms of the Web3 world, Tether and Circle definitely have a strong first mover advantage, and it's a lot easier for them to protect that. They're already integrated in all the exchanges, all the DeFi applications and things like that. The Web 2 world, like stablecoin payments, buying stuff on eBay, things like that, I think that's where new entrants will have more of a competitive advantage, such as JP Morgan and stuff, and maybe Visa or MasterCard or whatever it is. I think they'll have a stronger advantage there. But let's see how it plays out. I definitely think the Web3 sort of stronghold, it's going to be hard to dislodge Tether and Circle from there, but I do think Circle is going to dislodge Tether because they have a first mover advantage on regulatory compliance.
It's a great point. And I think when you look at the market today, there really isn't any evidence of other stable coins that have come out really eating into USDC's market cap or Tether. PayPal has a stable coin, but does it matter? Maybe it will in the future, but certainly isn't used in DeFi, in my opinion.
Mm-hmm.
So
yep, that's right.
That said, Greg, how are you thinking about a trading opportunity here, the setup? I'm looking at a chart here. I've got the last few weeks since the IPO. Maybe I can get down to a daily, a little bit better view. Or no, I guess it's only been around for a couple days. Let's see. Here we go. Okay. Got to zoom out a little bit. First day with my new hands, as we like to say. But basically went public at $60, ran to 300, and inevitably we've seen a little bit of profit taking here. How do you think about price action in something like this? Volatility is through the roof, pretty juicy option premiums from what I can see. If I jump over to the option chain, we'll just open up the July expiration here. $200 underlying, and the at the money calls are 10% of the price. How are you thinking about a trade setup here?
Yep. So first, I want to talk about the source of the volatility. So there's two types of kind of fundamental valuations that create volatility. One is sort of a junk stock that gets squeezed higher and it will eventually just crash back down. So that's one bucket. The other bucket in my mind is something that was underpriced that just ramps up to more of an equilibrium level. I think that's where Circle is. So I don't expect a pump and dump, so to speak, scheme with Circle. I view it as a legitimate equity. Now, the way that I like to think about that is I actually do want to own the stock, and I don't want to chase it here and essentially buy the highs. So I think really selling that cash secure put is a very interesting way to get some action here. If we look at the implied volatility, I have a term structure on Monday. I could see the 42 days till expiration about 180 vol, and then today it's at about 100 and call it 30 vol-ish. So we've come down almost 50 vol points, and that makes sense. A lot of the volatility was built on the way up, and as prices are kind of pulling back, you get that vol crush. So selling that put has some sort of built-in protection in it. If you change your mind and you want to take the position off, you sold vol at high levels, and as prices went against you, the vol went in your favor. So to me, that's a nice, interesting type of trade. It's very forgiving in the sense that if you change your mind, you could probably take it off. And if you really want to own the stock, then you get to buy the stock at a cheaper level, and sort of the return rate, like you mentioned, the July expiration paying you 10% at the money on the cash secured valuation. That's a pretty high rate of return if you're willing to take the stock. So either you get a great premium or you get to get the stock at a cheaper price. So to me, it's essentially a win-win.
Yeah, I love this strategy in IBIT. And in the event that, let's say, you do take assignment of the shares the option's exercised, you want to sell a call against it, you can do that. Or if you'd like to, with really little impact to your margin requirement or your buying power, you can turn this into a strangle once you have the put on, if you get a little bit of that movement, if that's what you decide to do. A question everybody then has around the trade setup is always, okay, makes sense. What expiration are you focused on in terms of what you see with the term structure? And then how do you think about it on a per strike basis, whether that's in implied volatility terms, or what delta would you look at to possibly sell when you're actually going in there to set up the cash secured put?
Yep. When I trade cash secured puts, I usually stop looking at it as a pure vol type of trade, and I look at it more as a return on locked up cash, like the interest earned, so to speak, setup framework. So that's kind of how I look at it. Obviously, if you do further out of the money strikes, is going to have a lower sort of carry rate or interest rate earned on your cash secure put. And if you go to further expirations, that's also going to be true. It's going to be a lower interest rate. Now, the upside there is that if you get a sign on stock, it's going to be at a better price. So in my mind, it's a little bit of both. Typically what I do, I don't just sell one strike and one expiration. I kind of ladder into it. That minimizes my variance. So instead of being all in on one particular cash secure put, I diversify across a few strikes and a few expirations. But I'm not selling anything closer than October. So I'm looking at October, January of next year, and January of 2027. So those are kind of long dated things. I like that because it also makes my income generation a lot more predictable, as opposed to if I sell something very short dated, if fall comes completely down, I don't know I'll be able to sell something that good again.
And I suppose you have a lot of gamma risk on some of that shorter dated stuff too, versus kind of what you're describing here when you think about the theta decay. I mean, a pretty predictable cash flow. Obviously, the stock price can move around a little bit, but I really love how you frame that. And I don't think we talk about this as much on the show when you come at it from the perspective of selling volatility and you think about it as a business where I have a margin requirement. It's obviously not going to be, depending on what kind of account you have, let's say. But you have a margin account. You're not going to have to put up the full capital, assuming you do want to take assignment of the stock. You need the money to be able to buy the stock with. But when you think about it in capital efficiency terms, and you compare that then against, let's say, investing that same amount of money in shorter dated treasuries or treasury bills here, you get obviously a much better return here. But for everybody that's following along, you come in here and here's how I would just mathematically size that up, right? We'll just randomly pick a strike. Let's go the 150. I want to sell this, and I can see that I've got, a $12,000 or almost $12,500 buying power requirement here. And I'm going to be taking in, we'll call it $2,400, $2,500 or so in premium. Decent return for, when you think about that risk effectively, if it were to go to zero, that's the investment. That's the capital required to generate that return. Great return for a 114-day period.
100%. Yeah. So that's like a 20% return in 114 days. You're almost looking at 60% annualized. And it gets even better because, you could use treasuries as a collateral. You could be in T-bills, or you also get interest on your cash that you receive up front as well in your brokerage. So there's extra juice to that yield. So to me, that becomes a very interesting type of trade to create a fixed stream of income. And then it's all in my trading account, so I can still trade in my trading account. So I have essentially a draw from these types of trades and structures, and I still get to trade my account for capital appreciation.
Greg, before I let you go, one last thing I want to ask you about Circle here, and appreciate you coming on the show today. A lot of people are obviously familiar with the risk that exists in terms of a stablecoin depegging from the value of the fiat currency. We saw that in, I think, 2023 regional bank crisis, momentary 10% depeg. I don't think you're going to see that as frequently, if at all, going forward with something like Circle. That's my personal opinion. But I'm curious, how do you think about the interest rate correlation here? When I look at the fundamentals of the business, it's driven by adoption, but it's a fantastic business in that, given the way the regulations are being structured, they can invest in treasuries and then can't share any of that income with the end user. So the company gets to keep it themselves. People have definitely seen how profitable Tether is, as an example. Do you think that's a risk to this in terms of how you analyze the business, right? Is it really just the interest rate risk here, where if in the event rates went to 50 bips, and I think that would be following some sort of emergency, as we've seen historically, but if that were to occur and you have lower rates, I mean, does that make you think any differently about Circle as a company or its valuation?
Yeah, absolutely. Interest rate risk is a big risk for Circle. To me, in context of our portfolio, this is the perfect risk parity trade. Risk parity is when equities go down, fixed income goes up. When fixed income goes up, equities go down. This is a direct inverse correlation between Circle and treasuries. I would structure trades like that. I would own fixed income bonds or fixed income future options or something like that as sort of the upside on rates going lower. And then on the other side of the equation, something like Circle on rates going down. That's a very kind of interesting structure. If I'm just isolating the analysis around Circle, I do think, yes, interest rate sensitivity is something that will affect the equity. But on the flip side, Circle has a lot of levers it hasn't started playing with yet in terms of, redemption or creation fees, for example. There could be something like that. Or wrapping USDC Circle into some sort of RWA convertible type of structure. That can be a fee as well. Or swapping the Circle to a different FX Circle, like so we have Euro Circle versus USD Circle. That can be a fee there, which is cheaper than traditional FX swaps from banks. That can be done in small micro scales. So once the adoption sort of grows, and when we're betting on fiat, USD is the fiat I'd like to bet on. That makes the most sense. I think there's a lot of different levers to pull and push here.
Awesome. Well, Greg, we'll leave it there. This is on my watch list for sure. Probably going to put this trade on myself because I don't have a position in Circle yet. But as always, thank you for coming on the show, man. Appreciate your time. Before we let you go, though, for anybody that wants to sign up for the Amber Data weekly email, you got great thoughts, insights, and trade ideas in there. How do they do that?
Yeah, absolutely. So you can go to our Substack, which is located at amberDataDerivatives.substack.com. And here we share our weekly analysis on crypto vol and crypto-related vol equities as well.
Awesome. Well, Greg, thank you again. We will hopefully speak with you here soon, a couple of weeks or so. So tune in for that. We'll let everybody know when Greg's back on the show. But that's going to do it for the Tasty Crypto Show tonight. Victor Jones is up next with The Price of Truth. Until then, I'm Ryan. Peace.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. CBOE is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the CBOE's SPX pit. Watch Liz and Jenny live from the CBOE, only on Tasty Live.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
The beauty of Thinkorswim was that we were different. From the name to the front-end technology was clearly what we wanted as traders. Second time around, I think we did a better job.
Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
If you missed the live show, here's our cherry on top weekly recap.
Hola!
Look at you guys looking like spy versus spy.
I'm in the UK. Vanetta, I got in. They let me in.
So how's the vibe in London? How's the weather? What's
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Oh, yeah, it's Wednesday, June 25th, a little bit after 5 p.m. Central Time, the best time. You know what that means. It's time for Tasty Live's Evening Show, a little podcast, a little podcast called The Price of Truth, the show where we like to explore the incentives that govern our world. My name is Victor Jones. Let's see if I can fix this. There we go. My name is Victor Jones, and we got a lot to talk about today. Shout out to everybody watching on tastylive.com. Shout out to everybody watching on the Tasty Trade desktop or mobile applications. If you don't already have both, go get them. Do yourself a favor. Make your life easier. But if you want to be part of, am I going to do this right? Yes, this finger. If you want to be part of this little chat on your screen here, come on. There we go. If you want to be part of that little chat, there's only one place to do it, and that is on the evil Google YouTube. So head on over to Tasty Live's YouTube channel, subscribe to the channel, and your thoughts will be streamed in real time on this little live stream of ours. Shout out to everybody that's already in the chat. Who do we got in here? Ooh, you guys are rocking and rolling. Donna, how are you? Catan, great to see you. Lone, what's up? Data Trader, Emmett, Brian Watson, the YouTube goat. Mark, how are you? Great to see you. As always, Cato, what's up? Oh, I just lost my spot. MP, John Stein, D-Chat, Gregor, how are you? So many more. Great to see all of you. Without further ado, let's get cracking here. 6147 on your screens, number one in your hearts. The S&P 500, everybody, a whole bunch of squadoosh, ended flat on the day. The NASDAQ up about 1/5%. The Dow Jones down 1/4%, and the Russell down a little bit more than 1%, about 1 1/5%. Vol still somehow down. I suppose that makes sense because realized volatility was so low. It's about time, quite frankly, that implied vol catches up to realized vol. Realized vol was in the toilet, and we kept making that statement here. But implied vol was still juiced at like 22 or something like that coming into the week, and now it's catching up much, much closer to where realized vol is and has been. So even though we had a scratch day, when you don't move at all, implied vol should probably come in a bit, especially if you're in the 18s or in that range, 17s. So 1676, where we are now, /VX, still high at 19. If we take a look at the VIX term structure real quick, a little bit more slope. That was looking a little bit more flat for the last couple of days. It's now got a bit of slope, but between 19 and 22 out from now until February, that's still a decent amount of, I want to call it nervousness, trepidation, uncertainty, I suppose, out into the next, half a year, something like this. So even though all's well in sort of equity pricing world, la la land, we shall call it, vol just continues to signal that the market is concerned, as well probably you should be, right? You could get anything coming out of the Middle East. You can get anything coming out of the White House or Mar-a-Lago. You can get anything coming out of these trade negotiations. So I suppose moving higher in terms of equity prices while also keeping vol bid, while also keeping gold bid, I suppose some of that makes sense in a recipe together in the short run. Let's get a little of this glow, if I can. But it seems like, man, if you're a vol seller and you stayed mechanical, the market is paid in spades. This week, for the last couple of days, those that are taking directional bets, it's a bit of a mixed bag. If I'm being honest, a bit of a mixed bag this week. We'll get into that in just a bit. In terms of bonds, I'm kind of loving it. Not much action here. A little bit of a gentle float higher in yesterday's session. A decent range here today in terms of 1 full point, a high of 115, closing somewhere in the middle, 114 and 18 ticks. I'm okay with this. I'm okay moving up slowly, even though my gamma's or my position sort of positive gamma. If we slowly make a climb to 117, at least if we get there, I'll take it. A win is a win. I'll take it. Would I love a little bit more speed here in the upside? Yes. But a win is a win. I will take it. Japanese barbecue sauce. Good God. That's how you know vol's low. When everybody coming in here and you're screaming at each other and you're like, stocks are going up, stocks are going down, vol's too high, vol's too low, bonds should be 10 points higher, 10 points lower. That's when you know the markets are rocking. You know how you know you've got 11% at the money vol? When people come in here talking about barbecue sauce recipes. I'm telling you. I tried to tell you guys long ago that it's painful trade through 40 or 60 VIX, but it's way better to go through those periods where the market is scaring the shit out of the children and coming in here talking about barbecue recipes with 11% at the money volatility. I'll take it any day of the week. I cannot stand summer doldrums where we come in here and just try to pretend like things are rocking and rolling, I don't like doing that. In fairness, though, I only have a 90-minute podcast. If I was like running a 24/7 news network and I had to somehow pretend that there was always stuff to talk about, and now there are things to talk about, right? If I go way off the beaten path, the New York City mayoral election, we could just stick to the Middle East conflicts and its potential impacts on crude oil. There's so much in that to unpack. You could still talk about our debt, which we seem to not. It's somehow moved from front page news to somewhere near the opinion section in the back of the newspaper. Everyone's forgotten about that. And I don't know what it'll take to move that back up to the front page. Maybe a failed auction at this point. But at this point, it seems like the market has sort of absorbed that. Yes, we're fiscally irresponsible. Next headline, please. But at 114.20, I'm okay with this. 114 seemed to be this point of control, plus or minus 3 points, and I'm down with us going back and finding the previous sort of point of control or line in the sand, which was 117. Drift 3 points higher. I'm totally down. In the front end of the curve, I don't have a meaningful position on anymore, but my thought process is that once we got to around 39 basis points or about one cut price for the next year, I thought that was too low. I thought the market would eventually work its way back. The market would put more cuts in. Whether or not we see those cuts in reality, whether or not Jerome Powell's going to play like a total badass on his way out of the door, and then all of a sudden try to pretend to fight inflation. The arsonist becomes the firefighter, as they say. That is possible, but it seems like the market is getting a bit more dovish. I have this weird feeling that when the Fed starts saying we have no idea, what they're effectively saying, and I'm just making this up, so don't follow me on this. This is like, what they're effectively saying is markets guide us. It means every 3 months we'll come in here with an SEP that's going to tell you what effectively the bond market is telling us. When they have an opinion and they wear that opinion, God help us. But when they come in, they say, we don't know, 2 meetings in a row. I think when that kind of indicates is they're going to listen to the bond market. But there's some part of me that says, all right, if that was true, then why'd they pull a cut? Because I don't think that's necessarily what the bond market was telling them, at least in the short end. But maybe that's telling them in the long end. If you don't start protecting purchasing power, we're going to light this thing on fire, and you're going to have to refinance government debts at 5% plus. So, we're in a big game of liar's poker, and the game here is figuring out who's lying, because everyone's lying. The game is to figuring out who's lying and to what extent. At least that's how I think the game is being played. I think there are a lot of people that come in and they read the headlines and then they try to interpret how to play those headlines. And I think everything's a big damn lie. And the game here is to figure out who's lying and to what extent, and then how to play those lies. Perhaps the better question now that we've had movement in the short end of the curve, is whether or not, how do you play it from here? So we've got one more meeting in July that the market does not feel like we're going to have a cut. This is sort of these aggregated meeting probabilities mean 75% we stay where we are. So this column is where we are now. 75% we stay where we are. 25% probability we drop by 25 basis points. So the highlighted blue for each one of these meetings, your meetings are on the left, is effectively where you would expect the Fed funds rate to be at the end of that meeting. So you can tell July, the market expects on a 3 and 4 chance that we stay where we are at 4.25 to 5 to 450. In the September meeting, they've got about a 90% chance, rounding up a bit, that we do drop 25 basis points, and we're at 4 to 4.25. At the very next meeting in October, the market has priced about a 75% chance from there that we drop another 25 basis points, and we're at 375 to 4. In the December meeting, it's a coin flip. Right now, it's about a 50-50 probability that we stay, but it is possible that we have a third cut in December. So that's sort of the way to read this. I won't go on to 2026. I suppose I will. If we go on to 2026, you've got a high probability of a cut in January, high probability of a cut in April, high probability of a cut in July. So 3 priced in 2025, 3 priced in 2026. That's nothing anywhere close to what the Fed just put in front of everybody. But as we all know, the bond market price is what it wants, not what it's told. And so at some point, what's interesting about these moments, in my personal opinion, I love these moments. I love the moment when the bond market gets too far away from where the Fed is, because that at some point, one of those things has to be wrong or both of them have to be wrong. So at one point, either the Fed needs to capitulate to where the bond market is, the bond market's got to capitulate to where the Fed is, or both have to come meet at some happy medium. But in either case, that means movement. When there gets to be a decent spread between what the Fed just told you, and it's not like they told you in March, they just put an SEP in front of you a few days ago. And so when that spread gets wide, I personally like those instances because we are all playing a game of liar's poker. So either the Fed's lying or they're playing this big game of Mr. Magoo. Either the bond market is getting too giddy about pricing what they always want, which is this heroin addiction, this heroin trip of cheap money, or both are just smoking crack, and both need to come to a meeting of the minds and meet somewhere in the middle. And I think we're slowly getting to a place where there's putting some distance. We're putting some distance between the two, and I like that because that means movement. And I'll go back and I'll show you the SEP. I talked about this at length a little bit yesterday with our good friend Ilya Spivak. But what the Fed is effectively saying is 3.6 by the end of 2026, and the Fed Fund futures market is putting us somewhere at 3 to 3.25 by the end of 2026. So you can see there's a healthy spread being built in between what you just literally saw in the SEP. Hey, we're not going anywhere below 3.6. And the market's saying, yeah, you are. Go F yourself. The market's saying GFY. And again, I'll show you. Same thing for 2025. 2025, the market is saying you're going to be between 3.75 and 4. No. The market's saying you're possibly going to be between anywhere. The spread is 350 to 4. Let's say it's a bigger spread, so 350 to 4, 375 middle. And that's kind of close to where they are. It's one cut more than the Fed is saying. Fed saying they'll be at 3.9, maybe one cut more. But you can see market's getting much more aggressive in 2026. I like this. That means we get to take some bets here. Who's right and who's wrong? We'll see a little bit of movement, likely in the 2-year. And so I think we keep playing this 2-year. I think we keep playing this 2-year. It's funny, the administration is screaming at the top of its lungs. They are screaming for a cut. But you know what? If you wanted a cut, man, it seems like the path is clear. If I was part of the administration, the path here is, on one hand, I want to continue these trade negotiations. And for whatever reason, I kind of understand it, but for whatever reason, the administration wants what they've called strategic uncertainty. Okay, here's what strategic uncertainty means. I can't tell you what my goals are, because if I tell you what my ultimate goals are, I give the competing player, I give them an opportunity to play around my goals. And I don't want them to know what my goals are or to be able to play in a way that block my goals. So they don't want to tell their opponents, or their counterparties, I should say, in negotiations what their goals are, which means they can't tell you, the public or the media, what their ultimate goals are. So everyone's sort of locked in this. You got to kind of guess what the goals or the outcomes are. And so that means they can't tell the Fed. And the Fed's saying, well, if I don't have a goal here, if I don't have an understanding of what the end game is with tariffs, then it's hard for me to plan monetary policy around that. So we're stuck in this weird little game of chicken. We're stuck in this weird little game of chicken. And I don't know how long it takes to get out of this game of chicken. Likely you've got to get as many of your deals done as possible. But I also think what could also be happening, I said a lot of alsos, I think the Fed could just be using this as an excuse. They have an opportunity here to just hang it all on tariffs and the uncertainty that it created. And so they can finally do their job without being blamed for the outcome. I was under the impression that the reason we have an independent central bank is so that they could do what the politicians would not. But it seems like it's just as political of an entity as both sides of the aisle, at least from where I'm sitting. And I don't mean political in that the Fed wants one side to win or to lose, to do better or worse. I don't know. Some people have made that charge. I'm not going to go that far. All I think is like, they're operating politically instead of just in the two mandates, which is, maintain stable prices and maximum employment, whatever maximum employment is. And it seems like we're doing a whole lot of other things. A whole lot of other things right now. I did read today. Let me pull this up on your screen. One of the most interesting things I read today was like I'm going to give you here's the no duh moment brought to you by Sunkist. I loved those Sunkist commercials. Here's the no duh moment. This sort of tickled me a bit. Schmidt suggests replacing core inflation with a measure that includes food. I'm going to read this again to you. So if you understand, there's an inflation measure, okay? Then there's a core inflation measure, which strips out food and energy. Why do they strip out food and energy? Well, they say it's because it's volatile, and you wouldn't want a central bank making too many changes in monetary policy based on these volatile measures. Though to you, it matters because most people spend most of their money on food and energy. But what I think is hilarious here is suggesting the idea that we should come up with a new core inflation with a measure that includes food and basically only strip out energy. This was your no duh moment of the day, brought to you by Sunkist, our fake sponsor. If there's any funny writers out there, I would love to do a fake sponsorship every episode and do a fake podcast read for a fake product. I don't think I'm clever enough to come up with that. I've tried to do this a few times, but we never had sort of a listener that was clever enough to come up with like really funny podcast reads. And I'd love to do that. But to keep cruising here, I think bonds are going to continue at least for a little bit of time. Long end of the bond curve will be boring. I could totally see it moving higher. I'm continuing to stay long deltas in the long end of the curve. I know there's a bunch of reasons not to. But I think the sentiment on bonds right now is so washed out that I don't mind stepping in. I might be picking up pennies in front of a steamroller. I don't know, but I don't mind that risk. And I've done it in a super risk-defined way. I'm just effectively betting on 117. Though I do think ZT, I think this one's going to be where it's going to be more interesting in the front end of the curve. Just because that spread between what the market is currently pricing and what the Fed is saying, I think that spread is growing. I think it will grow. And then at some point, somebody's got to tell the truth. And that when that happens, that's good vol for us as traders. I've said that before. I will leave it there. Last time I'll say it. Let's take a quick look at the 210 spread. This thing is like everything with the bond market right now. It's like not going anywhere for a while. Grab a Snickers. The 10-year Treasury, or the distance between the 10 and the 2 is about 55 basis points. It was up to about 67 basis points. We flattened out to about 45. We found now a healthy medium somewhere in the middle at 55 basis points. And I don't think there's a bunch of edge to betting either direction right now. You're right in the middle of its range. I think if we steepen out, which I think if I had to pick which one of the directions we go right now, maybe I give it a 1 to 2% edge to steepening. Maybe. But I would say it's, I kind of like the push more than I like the anyways. So 55 basis points, where we at? I don't think there's edge, so there's no trade there. Let's keep cruising. Let's see what you guys are saying for a second. I'll go on to the next topic. Victor, break glass and use Taylor rule. The ham is making the call from inside the house. Oh, you guys are talking dinner. Everything else. Spam is like gold. You're crazy, Catan. What are you, Asian? I should have read the name. There's no, but my wife, like, I didn't eat that stuff as a kid. It's just Impossible meat. It's the first version. Impossible beef 2.0. It's just a fancier rebranded Spam, is it not? But my wife is so into that stuff, which I thought was wild. Donoski says you could probably retire off 10 shares of Apple if you bought way back when Apple was that cheap. That's this game that marketers play. It's the hindsight bias. So you'll see a bunch of these ads in like Instagram and things of this nature. Well, they'll put a chart of how if you would have invested $10,000 in this instrument in 1982, right? They pick the bottom. And how much you would have now. It's all this thing of like predicated on hindsight bias. It's like, yeah, okay, which is the one I should put my money into now to do the same thing going forward? You don't know. Okay, then what does this message do for me? I always hated that. That's how I knew when I'm like looking around and I'm just evaluating like the brokerage landscape. If I see that, I'll go, okay, this marketing department or this brokerage firm has no idea what this game is actually about. Or they do, and they just don't care that they're using this cognitive bias to try to build this mousetrap to capture new accounts. There's certain places will just go for anybody with they call it a pulse and a purse. If you're alive and you got money, we're going for you. And they don't really care about the integrity of the game. So if you see that, I don't know, you can do whatever you want. But whenever I see that stuff, I'm like, either this brokerage firm has no integrity or they have no know-how into what this game is all about. It's a gigantic red flag. The problem is you don't realize it's a red flag until after you're no longer a first-time trader. That's what they always get you with this line. Whether you're experienced or a first-time trader, it's like that's another red flag that you're just throwing out of wide-ass net for anybody with a pulse and a purse. I hate that line. Whether you're experienced or a first-time trader. How about you pick? How about you pick which one you're talking to right now? Why hasn't RFK banned spam yet? I don't think that's our problem. I don't think people are lining up to buy barrels full of spam in the U.S. You know what I mean? I think we are shoveling Red Dye 40, Skittles, and taffy into our mouths and sucking back 10%. I think the number I saw, 10% of food stamps, or it's not food stamps anymore. What's it called? Gosh, I'm forgetting the acronym. SNAP. 10% of the SNAP money goes to soda. So in a weird way, you could look at that budget, right? You look at that annual budget, you cut out 10%, and you go, this is the subsidy to Coke and Pepsi that the American taxpayer is paying. And then if you take it further, you go, okay, well, what are the downstream impacts of paying N amount and billions of dollars in soda subsidies? You can go down the line to the health impacts, the health cost, diabetes, and these other types of things. So I would imagine if you're going to ban something, you ban something with, you're not just banning the thing, you're preventing sort of additional cost for the taxpayer in the back end. Because at the end of the day, let's not pretend this is about, it is about health, but it's about cost. We're drowning in debt. We can't afford to be sick. That's the truth that nobody wants to say. It's like, yeah, we don't want to be sick, but we can't afford to be sick. I think in a way it's the same thing with some of these prison systems. Oh man, why do you do this to yourself? In a way, I think the reason you defund police and the reason you increase your felony theft from $500 to $1,000, as a lot of cities across America has done, is you can't afford. You have a system that's broken, and you have a lot of people that will resort to desperate measures in desperate times, and you can't afford to throw them all in jail. So yeah, the defund movement sounds great. It sounds like it's a humanitarian thing, and I don't know. I'm a cynical guy. I think it all comes down to cost. I think trying to make Americans healthy is sounds great, but I think it all comes down to cost. I think we can't afford to be sick. We can't afford to take off sick days and pay for sick days. We can't afford to be paying people's health care expenses anymore. I think it all sounds great, man. All this stuff gets wrapped in pretty bows. The pretext for going to war, it gets wrapped in these pretty little bows. And like, we're the good guys going out to save the rest of the world, man. But like, I don't know. I stopped reading. I stopped believing. The hero's journey is nice, right? But it really only applies to fiction. Reality rarely follows the hero's journey. And I think reality rarely has a single protagonist and a single antagonist. I don't know, but we read a lot of comic books and we watch a lot of movies, so our politicians can feed us this hero's journey's nonsense and we'll eat it up. I'm sorry, I don't know where that came from. Somehow that was my take on spam. Did someone say NVIDIA new all-time high? Yeah, NVIDIA and Palantir had great days. Oh, I didn't see Palantir backed off the high. We did make a new high. Haven't backed off. I'm telling you, you guys, some of you guys should be way more nervous about. I bought NVIDIA at like $8 2 years ago. Some of you guys should be really nervous about what the world looks like with Palantir at $150. I'm not saying it's bad necessarily for all the people. I'm not saying there are some conveniences or positives that come with this. I don't know. Am I the only? I know I'm not the only one who's skeptical. But it's like everyone loved to cheerlead Facebook higher and higher and higher. Then you realize, like, oh my God, this is a direct main line into the hearts and minds of the people. And with this, you can microdose these people with thousands of messages, impressions every single day. And those impressions could just be, buy a bottle of Coke. You'll feel better. You'll feel more refreshed. Those messages could be, and started off as, buy this pillow. You'll get more comfortable sleep. And I think over time, people sort of recognize that, hey, this app radicalized my grandmother. She's a political zealot all of a sudden, and she wasn't until you made this app, and she just got on it to figure out when everybody's birthdays were. And now she's signing up to blow up Teslas. Like, what happened? I'm telling you, it's how it starts, with convenience. It always starts with features and convenience. This is how I sort of think about AI. I don't know. People, you might be down with what I'm saying, might not. That's what I think about AI. I think all this stuff is going to start out really powerful. You're going to get really powerful aspects of these features. I think they're going to be super cheap. And at some level, you'll get consolidation. You'll get winners which will emerge in this LLM game. I think the power then starts to get tiered out. So then there'll be a free version of AI, which will just be, straight propaganda, one way, not, then there's maybe a premium version, which will give you more nuance, more research. And then there's sort of like this professional version, which will probably be more likely to what it is like now. I sort of think I see that world in the future where today I think everyone gets a lot of benefit from this stuff. And then over time, it becomes like this cesspool, like Facebook. It's not even worth getting on anymore, but it becomes too entrenched. It's sort of like YouTube, you try to watch YouTube without the premium or the red version. You're watching ads every 10 seconds. That's how I see AI evolving, I think. But you can't put up those paywalls today, those really meaty paywalls, because you actually need to train the model. So they got to keep you asking questions. So they can't put up a pricing structure that will create too much friction to keep you out of these apps. So they put up just enough so that the value outweighs the price. In some cases, it's free. And they get to train these models until the point that they don't need your silly questions anymore. They don't need your silly questions. And that's when the paywalls go up. And if you want access to the real knowledge, you're going to have to pay. It's coming. You like that? D-chat like the radical grandmother line. Radical apps are the new hippies. Palantir looks like $1 million multi-generational investment, please. I'm not saying it's not. I'm just saying, what good does it do to have a generational wealth investment if you are locked in your home for the rest of your life? What good does it do if you're now living in a police state? AI will take out all back office functions. They have no choice. Let me ask you guys this question. Tom Banjo made that point. I'm curious. So there's this line that people will say, the optimists will say, and I do think over time, you get paid for being an optimist. Very few times in history do you get paid for being a pessimist, though I'd argue over the last 4 or 5 years, betting on the erosion of the standard of living of just generally people across the world, it was a good bet, and it's still paying off. But generally, I think being an optimist pays. And there's this, I would say, this nervousness about AI, about what that will mean for people, the general employment of the people, the general purpose and productivity of the people. And the optimists will say this is going to create more jobs. I wouldn't want to say the pessimist. Some part of me wants to call him a realist, or but the group on the other side will say this is clearly going to have an impact, and that less people are going to be needed to do more things. And I am genuinely curious. We got, a decent number of people. We got a decent number of people here. And I'm curious, how many of you believe that when all's said and done, let's call it 10 years into the future, that we have a higher labor force participation rate than we do today? How many of you feel that we're going to put more people to work in the next 10 years versus less? How many of you have the glass half full perception of the impact to AI on the workforce in the next 10 years? I'm very, very curious. Because when I have these conversations with Tom, and to his credit, I think he's a lot of the contrarians I've met just generally they're just cynical people. They're not really contrarians, they're just cynical. I think Tom is an ultimate optimist and a contrarian at the same time. And I know that because his views very rarely always align that way. They're always optimistic on a long enough time frame, but they always run short-term counter to what people believe, but usually for a different reason, not because of any cynicism. It's because of generally ways of thinking that people haven't thought of, or at least I hadn't. But on this particular issue, I find it really hard to get in the camp where AI is somehow going to create more jobs. It's somehow going to create more jobs in the next 10 years. I hold two thoughts at the same time. One, I do not think we're as close to generative AI as people say. I have no real reason. It's not like I'm deeply read or deeply studied in the subject matter. From the people that I read, and I read a diverse set of minds in this space, I would bet that we're not as close to AGI as sort of people think. But I feel like over the next 10 years, the goal here, the very clear goal is I think we'll have a higher rate of unemployment, higher natural rate of unemployment. I think people will drop out of the labor force or they will drop down in the labor force. I think a smaller amount of people will move up, so their value will increase. I think more people's value will decrease in the labor pool. And I think margins actually go up. Because you get more productivity on less cost. So I think generally, as a generalization, I think margins go up. So I think while people are going to be in this mode where they go, oh my God, unemployment's going up, here comes the recession, I think they're going to misread everything. I think, yes, you are going to get unemployment going up, but margins are going to expand because of that. And the government is the one who's going to get stuck holding the bag, trying to pay these higher costs. And so we're in this weird position where corporations are in a great spot. Governments are in a horrible spot. And I think ultimately some portion of workers, some majority of workers end up suffering. They get less labor leverage in the marketplace. Some their skills won't be needed anymore. And so that's the way I see things happening. But I don't know if I'm overly pessimistic on this. Tom Banjo says, agreed. Mark says, I'm actually an AI bot. I died years ago from bad stock trades. I remember, this is maybe a decade ago. Maybe it's decade to 15 years, somewhere in that ballpark. I remember reading an article. And the article was about one day, because we had all these disparate technologies, right? At the time, we had emerging proliferation of social media. We had some aspects of automation. And then like Siri and those types of things were in their very, very early iterations of beta and release, those types of things. And I remember reading something close to 15 years ago. And the idea is we're going to be able to connect these technologies together. And there is going to be an ability for when our generation, the millennials, pass away, the next generation will be able to sort of keep us alive because we would have contributed so many of our thoughts on Twitter or Facebook or all these social media platforms. And we will have, in the near future, artificial intelligence coupled with sort of this ability. We have so many pictures that we would have contributed. We'll have an ability to sort of to guesstimate what you'll look like. So the article was about how we'll eventually be able to couple automated audio, video, AI, and all of our social media sort of contributions and couple that into sort of this living digital being even after we're gone. And I thought, how wild. And I thought the probability of that was high, but I was curious how long it would take. And here we are, like 15 years later, and the automated video, the AI videos have gotten so good. The audio's gotten so good. Its ability to mimic has gotten so good. So we're effectively there. We are effectively there that we can keep anyone digitally alive as long as possible. And I don't know that a lot of us have processed it. Like, there's a part of me that goes, my son and my daughter are going to be able to talk to some AI version of myself. And I don't know if I'm happy about that or if I should be very concerned that there's no way that that thing could be saying what I would be saying. You know? And if it is saying what I'm saying, that's almost even more depressing. That I can be predicted to that extent. Let's see what you guys are saying on this AI thing. Increased. Hold on, let's see. Oh, you guys are way on the other side. Less by a lot. Tom Banjo says half empty. I believe it's less, but I don't think it's because of AI, says Lone. Interesting. Expand on that, Lone. Someone has to oil the robot. Labor PR will keep dropping. I think so too, Brian. Lower, but I think that's good. People will have more free time to do things they actually want to do. Absolute beginner, I totally disagree. Okay, so what has to happen, Absolute, in order for this has always been, what should have happened when we shipped all the manufacturing jobs out of the country, that was the sell. The sell was we would all move up the value chain. The problem, though, is that our education system does not create a bunch of people that come out of school with the ability to move up the value chain. So my issue with this argument is it's theoretically possible, but you need a system designed to create that outcome. And we have not created that system. And it doesn't seem like we're anywhere close to creating that system. So a bunch of people with more time, but no productive use of that time, is, what's that saying? Idle minds turns to idle hands or something of this nature. I don't think a bunch of idle time is great, and I don't know that we have an education system or just a social culture that's going to move people up the value chain. I don't think that's the case today. I haven't lost hope that that's possible, but we need to get moving if that's what we want the desired outcome to be. Otherwise, I think we end up with more crime, more social unrest, more bad policy at the end of the day to try to pacify sort of this a continued populist movement, which will just beget worse and worse results. So yeah, I mean, I do think that's possible. I do think more time to know how to use that time. I think there are a few people, absolute beginner, that's going to be helpful to. I think you were likely one of them. You know, giving yourself the ability to be twice as productive with half the time will likely only create more productive output. But can you say that about 350 million people? A robot, a worker, and a dog to watch the worker. Successful robo-taxis will take away a lot of rideshare workers. Trev, you have no idea. I've been trying to put together the numbers. Just Amazon drivers alone, and this is just direct, not even the indirect exposure, but Amazon said they're going to be working on humanoid robot deliveries. That's 275,000 jobs, just that alone. And now let's expand that to all delivery services, all driver services. I've been trying to put it together, both the direct and indirect. It's a gigantic number. Donna Ski with a little bit of optimism here. I think we need that sprinkled into this gumbo. I think we'll employ more people in the future, but the nature of jobs will change. Donna, God bless you, my friend. I hope you're right. And it is the optimist ultimately that owns tomorrow, I believe. So everyone give a round of applause to Donna for giving us a little optimism here. I'll do a few more of these and then we'll move on to the next one. BLS has elder care, the top 5 jobs in 5 years or less. Interesting. NX says higher unemployment with even more people working less hours. I think so too. I think that's the end result. A bunch of part-time workers, a bunch of full-time workers that drop into multiple part-time workers. All right, we had fun with that one. You guys, that one got you guys focused. Tax robots at 200%. Night moves, I thought about this too. I thought about this, and I think that's ultimately it's going to be a debate in the future for sure. The problem with this night moves is it's really hard to do without making your economy less competitive. So if you're going to tax robots at 200%, but Saudi Arabia is not, guess where they build the factories and the robots? So it's just that's the most interesting thing that I always come to, that you sort of are allowed in a sort of quotations, you're allowed to affect change in one legal jurisdiction. But the problem is you're competing for capital. You know, you're competing to prevent capital flight, not only on how good of a consumer you are, right? If you're a great consumer, you're good at labor, then money flows here. But if you want to tax, money flows elsewhere. You'll get some goods, but you lose jobs and you lose capital tax base. And so there's like the concept of unions is you want to, or just general like politics is you want to get a big voting block together. But when your voting block, even if you get past the divisions, which we can't seem to do here in America, we subdivide ourselves into units that are politically meaningless. They have no power. But let's imagine you could. Your power would be limited by the jurisdiction, but capital goes to where it's treated best, which means its capital is making jurisdictions compete against each other for the capital, whereas you are competing for laws only within your jurisdiction. And I think that's the limitation. We don't really talk about that. So to your point about like taxing robots at 200%, the only way that works is if you somehow get a global tax, which means you can't have capital flight. Now the problem with this is you're now talking about a global governance, which you probably don't want either. You're damned if you do, damned if you don't. That's the little game of that's the little game theory game you got going on, politics. How do you solve for that one? Theta traders. We're at the point where people are dumping in lyrics into the chat and seeing if I'll read them. Seeing if I'll catch on. And either I'll read them or not. Soon you guys are going to be putting fake names, those like those Bart Simpson fake names in here and seeing if I'll read them. Bitcoin back at 107. They gave you a little discount, man. Sub 100,000. How many of you took it? I'm curious. 107, 100. In fairness, though, we are making lower lows and lower highs. I don't know how much of that I'd read into, but we are in a little bit of a downward consolidation phase. I guess somebody might call that like a flag or something like that. I don't. Me personally, I don't do much of the technical analysis patterns and stuff and Japanese candlesticks. Don't get me wrong. I know them like the back of my hand. I had to That was my whole thing. At one point in time, I effectively just programmed. I programmed technical indicators for people or pattern recognition for people. So not only do I know those patterns, but I kind of had to devise math around them. So I know this stuff, but I never found that they helped the people that I was building these indicators for. I never found that there was a meaningful edge in them for others or myself. And when I just started thinking about this as a poker game, me personally, I had more success. When I started playing it like poker and reading more game theory and trading from that perspective versus like some magical crossover, I had better success. I think I'm wired for that. Depends on how you're wired, man. Victor, can AI save us from ourselves? No. That answer's no. I don't think so. And, all right. Damn it. I'm putting this on you. Who asked that question? I kind of like that question. I've got a big beef. As many of you know, I have a big beef with that big, stupid, ugly bill. The big, beautiful bill, as it's known. I have a big beef with it. I think it's one big, beautiful broken campaign promise. And one of the things that I didn't catch on to in my first read was this idea that for the next 10 years, federal law will supersede the states' rights and their ability to regulate AI. And I think some part of me, as much as I'm upset about the lack of fiscal discipline that's built in this bill, much as I'm upset about it trying to raise the debt limit $4 trillion, even though I think the debt limit itself is sort of a funny, stupid thing, it at least gives the leverage to the minority party to come back in and have conversations. So I do see it as partially useful to the minority to keep us somewhat centered so we don't go crazy on one direction or the other. But the idea that you can slap something in this bill that says states are unable to regulate AI for the next 10 years is insane. It's insane. And I cannot believe there's anybody that's down with this concept. First of all, let's imagine, okay, let's play this out. If you're the Republican Party, right, if you're for free markets and all this other shit, if you're a state that regulates AI, whatever benefits there are from AI job creation, you're going to lose that benefit, right? You know, if Illinois decides to crack down on AI regulation, well, what that means likely is they lose a lot of the job creation in Illinois from AI companies, which means a brain drain somewhere else, which means the free markets will say wherever you have less regulation, you're going to get more job creation. And those states would be successful or more successful, and those that choose to highly regulate it will be less successful. Theoretically, that this is the way it could play itself out. And perhaps that the state that chooses to regulate, they're okay with that, but they want to protect either the consumer or some sort of social fabric, and they're okay with the trade-off that they're making because their constituents want that. The other possibility is that regulation creates a better social order than maybe a place with no regulation, and that creates the demand for that same type of regulation. That's possible, less likely, but possible. I think the idea that we have no idea where AI is going over the next 10 years, that we have no safeguards really in place right now, and that the only limiting factors right now is capital and materials. Those are the only limiting factors right now. And that we want to put something in a bill that says we cannot regulate something over the next 10 years that's moving at the speed of light that we don't fully understand, and that we don't know what state it will be in 2, 5, 7, 10 years. This is insane to me. It's absolutely insane. And it's the greatest example of a handful of people with market access and capital creating this barrier around their business. Imagine a government that it's creating a law that says there can be no laws. Think about that. Think about what the purpose of a government is. And the government itself, a government who theoretically is down for deregulating things, is creating a law that says thou shalt have no laws. To me, this is insane. And I don't know if I'm crazy, if I'm just seeing this through the wrong lens, if somebody can explain this to me. But why you would want to take away a state's right to regulate is insane. Am I in left field here? Grumpy Mike says, if you guys don't stop dumping Whitney Houston lyrics in the chat. Gregor says the big beautiful billionaires bill. Yeah, bro, like I don't understand. There's a bunch of people. I was talking about this with Chris the other day in a different context. And I know I talk about cognitive bias a lot, but I think I see it everywhere. There's a sunk cost fallacy to when people make a vote. So when you vote for somebody, you are not obligated to agree or to justify 100% of things that elected politician does or says or enacts. You do not have to do that. Even though there will be people who may have voted for the other person, and they will do the same. They will do a different cognitive bias. They will do counterfactuals for 4 years. They'll say, "Oh, this is what you voted for," or "If you would have voted for this other person, it would be so different." They'll do counterfactual arguments, which is just a bad debate tactic to begin with. So they're out in left field. But then there's the people that suffer from sunk cost fallacy, which they believe that because I put so much effort into this that now I have to fully justify it. I have to keep riding with this. And you don't, man. You don't. No, all political representatives are generally a coalition of people who do not agree on everything. And what's hard about a coalition that somehow has billionaires and a working class is that their desires are going to come into conflict with each other. And you're a bozo if you think that if you're part of one or the other class and you're siding with stuff that doesn't benefit you, it benefits somebody else, and you're siding with that stuff. You don't have to do that. You don't have to get yourself in a world of sunk cost fallacy. And I think this bill is one of those things. It's just like I'll talk to people. And it's just like, oh, trust Donald Trump. Trust. Like, what do you mean? No, I trust my own ability, my own reasoning, my own logic, I sat down and read this big stupid thing, and these big stupid ideas, and this big stupid grift, and it's a bad idea. There's a couple of decent things in there, but this is just generally a bad idea. Lawrence Markle, Peter Thiel, and the Silicon Valley VC bros own JD Vance. Yeah. There's a... I don't know, man. Sometimes you want to believe that where a person comes from matters, If you come from a small town in Ohio and you grow up with this shared experiences of other people, that no matter how high you ascend in life, that there's something inside of you that knows where you come from, that knows the plight of those people. And like, how can you let power allow you to betray your own family or the people you grew up with? Who can do that? I guess only the people that seek power have the ability to do that, I suppose. Donoski says, I had no idea there was a provision preventing states from regulating AI in the budget bill. Yeah, they don't talk about that, huh? Funny how that never shows up on Fox News or CNN. Why is that? You guys are getting gritty in here. Yeah. Cass saying it's a sitcom at the end of the day, politics and the NFL. 100%, man. That's the funny thing. Seeing it for what it is, like this giant elaborate production. You know? But then you look like a crazy person. Yeah, you look like the crazy person. And you tell everybody the nightly news is just, it's a soap opera. And some of those people know it's a soap opera. They're participating in one. And some of those people are just so brainwashed that they think they're purporting the news, actually. Crude oil, 65.25. Seems like we're done. Seems like this move is over with to the downside. Maybe a little bit of consolidation here around 64. And maybe it's time to take a stab. Time to take a stab at all. If you've got some, let me not say that. Not tell you what you should do. For me, the things on my energy list, I think I'm taking a stab now. I think it's probably the crude oil move seems to have exhausted itself. I could be wrong, but it seems to have exhausted itself down here around 64. A lot of these energy stocks have taken a little bit of a discount here. I like energy, famous last words, and I think it might be time to take a little bit of a stab. What was the one else? UHC, that's it. UHG, nice try. There we go. There we go. All these healthcare stocks left for dead. They got to get growth to come down. Growth comes down, then maybe we get a bid to these bad boys. NX saying sometimes they get too far removed and they no longer associate with it anymore. I see it in my work when people go from the front of the line to the corporate level. They forgot the ones on the front line. Damn, man, you just opened up a can. I don't know if I'm able to talk about this, though, without getting a little bit emotional. So I see this in my world, too. So I see this in my world a lot. There's a lot of people that get into financial education because they want to help people, because they somehow figured out how to acquire wealth, and they see either the mindset or the methods that can be used, and so they go, okay, I want to start this financial education thing. So people will create these platforms, and they'll give these inspiring messages and whatever. And then one of two things happens. Either they are successful and they transform completely. Their message completely transformed. The platform transforms. It loses whatever like character and integrity or sort of mission statement that the platform has at its beginning, because ultimately there's no test of a person's character. Like I think people have gone through trials and tribulations. I think those are a test of character, but they are learning experiences more than anything else. And as long as you learn to overcome adversity, it's a lesson that, like, you don't learn it more than once. As long as you learn to overcome a failure, to learn from failure, then it puts you on a path of sort of this growth loop that Ray Dalio sort of explains, of failure, learning from failure, creating a new system, trying again, and growing, running into a new failure, so on and so forth. Sort of this path of growth and knowledge is just this process, this loop of failure, learning, designing new systems, trying again. But I think once you learn that, it's just the thing you keep doing. But the true test of character is when, like, you run into success, when you're given the things that you've most wanted, and you can never have. When the limits of your own consumption or gluttony or all those things are completely removed, and now you're left to your own devices. That's a true test of character. There's no limiting factor on who you are as an individual. You can donate to people. You can use your time to make communities better, to make people better, or to give them more knowledge. You can, there's no limiting factor, or you can just totally, pig out on all of your desires. And so what's interesting about, the last 5 years to watch a bunch of this stuff happen is I've seen some people that have found success. They've stayed true to whatever their mission statement is. More people that find success, and you see what it does. You start driving fancy cars, wearing fancy clothes, going to fancy places, being seen with fancy people. And you can sort of tell, like, what that person had always secretly valued, but they use this other message to reach a populist audience. And then there's the people that maybe don't find success, and then they find something to blame it on. But I see that all the time. Like, you come from a place, you find success, and there's your true test of character. And I'm not going to act like, I've personally been put in those tests. I don't know, I'd like to think I'm 50-50. But I've failed as many of those tests as I've passed. But I'd like to think I'm passing the important ones. All right, let's keep going. Let me guess, XHB, Emmett says. No, I'm not going to go there. I did put it up on the screen. Just a quick heat check, that's all. I always hope I'm wrong on these, by the way. I always hope I'm wrong. Then you get these guys. Then you get these little guys, and I'm just like, well, I spent 6 months telling everybody about the setup. Nobody listened. Then everyone's just watching it like, should I buy it now? Why didn't you buy it? Why didn't you do a little something when it was down in the dumps and nobody cared about nuclear energy and everybody only wanted to buy NVIDIA at all-time highs? It's kind of the way this game works, man. You buy the stuff that nobody wants and you wait until everybody wants it. That's the way I play the game. Other people play the momentum game. They're just trying to see, what does everybody want? How can I buy that and then pitch it at the exact right moment when everyone stops wanting it? I don't love that game. I don't think I'm fast enough for that game. Oh my God, that's the best comment. Who said that? D-Chat? Get this stupid bubble message away from me. I can't see the chat. There we go. Yeah, it was D-Chat. That's human nature, Victor. That's why markets keep working. God, that's the truest thing you've ever said. Human nature is exactly why human markets keep working. I'd argue that they're not working to the extent that they've worked in the past, though. I hope the markets are never completely run by AI. I've thought about this too, whether that's even possible. If you can neutralize information so that the only information edge anyone has is the point at which an order reaches the marketplace, I don't think there is a point where AI can quote unquote totally run the market. I don't think it's possible. I don't think it's possible, but you have to neutralize information. Otherwise, AI can become very, very powerful with asymmetries in information. It increases the edge of AI, the more asymmetry of info you have. And there are some parts of market structure that at some point in time, as AI becomes more powerful, we're going to have to deal with as an industry. I don't know if we've reached that tipping point, but we are going to have to deal with it somehow to neutralize asymmetries of information. Gold sort of staying in its consolidation range between 3,300 and 3,400. I don't think that's much of a surprise here. Silver, though, was lower at the beginning of the session by a decent amount, I think 1/3% or something like that. We had a pretty decent downside wick before recovering to 36 and change. I think my guesstimate, this is my bet, okay? My bet is we're going to stay in this new range above 35. That's my bet. That bet is going to be wrong if gold breaks to the downside. If gold does break this consolidation range, I think I'm going to be wrong about silver too, and I'm going to be wrong very fast. I think silver will move with a greater beta to the downside than gold if gold breaks the downside of 3,300. But I think for now, I've got some long deltas on in silver, much smaller position than when we got that upside breakout, but I'm going to hold it on. It does seem like a lot of this move, I thought, when silver runs, it runs crazy. We went from 30 to 38. That is a pretty decent move, all things considered. But I thought the move might be more extended. It looks like we want to consolidate here, and a lot of that momentum, that high beta momentum, may be dying out here, and it's going to die out without the exchange needing to change the margin requirement, which I thought would ultimately be the thing that would end silver's upside move here. That doesn't look like it's going to be the case. Looks like it's just normal market function at 36, 37, which means it could potentially leave stuff like this, PAAS, Pan American Silver, a little bit vulnerable. I'm long both, so I'm long silver and Pan American Silver here. Phenom says, and I hope you don't mind me reading this out loud, my wife already got laid off from being replaced by AI. If this bill passes Congress, then I'll likely lose my job too. I don't see how the economy is going to survive what's coming our way. My sister, I'm not sure if I say it, a family member, I've gone too far, a family member of mine is going through the same thing. And whether it's AI or whether it's just downshifts in expectations of growth, or whether it's sort of business climate uncertainty, I think there's been a lot of labor hoarding for the last several years, and I think it's clear to me that businesses are going through a process of shedding that excess labor. And that's brutal, man. But yeah, it's like, I'll leave you with this thought. I'm not anti-AI. Like, I don't think once you have a technology, you can put it back in the bottle. And I'm not saying that we should, regulate ourselves out of the AI competition and quote unquote allow other nation state players to take the leadership mantle. That's not what I'm saying. But what I am saying is pretending you don't have a labor problem until the labor problem shows up and you have to deal with a crisis, that's not smart governance. But it seems like we like crisis because we use crisis to our advantage. Because in a moment of crisis, the people don't think logically. They're scared. If we were to start thinking about our problems before they turn into crisis, like for example, Social Security 100% is a crisis. It is a cliff we're going to run over. We're going to run off like Wile E. Coyote in 5 years. But instead of talking about this logically and planning for it with responsible foresight and governance, we're pretending like the problem doesn't exist. We run off the cliff. Now we have to deal with it in a moment of crisis, which inevitably means you're not going to get a good, solid plan. You're going to get stuff slipped in there for the benefit, not of the benefit of the majority, but for those that have the ability to take advantage of the crisis. So same thing with the labor market. If we were smart, right now we would be coming up with plans to upskill the labor force, to move us as a society up the value chain. And we'd start to think about what we need to do at a societal level, all the way K through 12, how we need to potentially think about reforming higher education, how we need to think about reforming sort of like job training programs and get access to people who need and want those things. We'd be thinking through those things. And we'd be delivering on plans before we run off the cliff. So that's my beef. My beef is we're pretending like we're not going to have structural or frictional unemployment. We're pretending like it's not going to happen. And that's my beef. My beef is we are trying to put in a poison pill into a bill that says you cannot regulate AI for 10 years. That's craziness. Like we're doing things that are the opposite of smart or good governance.